Theory. I don't like it. I avoid. Well, if you're also a CA final or a CMA final student who thinks of skipping theory for the subject of AFM, well, this video is for you. Yes, everyone. So, hello, hi, namaskaram, and good morning, students. I hope you guys are having a crazy, amazing day. If not, let us make this a crazy, amazing day, my dear warriors. Now, this is going to be a beautiful video, the best video ever that you are going to see with respect to theory for CA Final AFM or CMA Final SFM. Now, you guys know that theory is going to constitute 16 marks in your CA Final AFM paper, close to 10-12 marks in your CMA Final SFM paper as well. And 95% students leave it as option. But you know what? Theory is going to be one of the simplest scoring areas. Don't believe me? Just give me 1 to 2 hours. Please watch this video for 1 to 2 hours. Ensure that you guys understand theory. To ensure that you guys understand in the simplest way possible, in a fun oriented way. Ensure that we revise it. Ensure that you guys retain theory. You guys remember theory. I take up that responsibility. All you'll have to do is have a piece of pen and paper, give your full attention, give me 1 hour of your time. Watch this. Trust me, you will not be in a position to pause and go to another video. That is going to be my promise for you guys. So what we have done, we have recorded theory portions as a part of our CA Final AFM regular batch. Yes, same is applicable for CMA Final students as well. So we thought students were continuously telling, sir, theory is very difficult for us. So we thought whatever is the recording that we have done as a part of our regular batch, we will make it available absolutely free of cost for all our students on YouTube so that they can watch that, take benefit out of the same. So before you go ahead and watch the lectures, couple of things for you guys. First one, whatever notes that I will be using here, whatever revision charts I will be using it here, I am making it freely available for you guys. Sir, where do we get it from? Just go to our Telegram group, Think with Tabish. Point number. Point number two, for revision of practical chapters, you guys would already be knowing we teach the entire subject of AFM without having the need to touch a single formula. Not even by hearting a single formula. Students tell there are 100, 200, 300 formulas. Not even a single formula. Everything logically using simple relatable stories. No unnecessary complications. We will understand it together. Now, either you can be purchasing the regular batch full-fledged, or we have a detailed, beautiful, amazing revision series, marathon of practical chapters as well. That is also available on our YouTube channel, Think with Tabish. So please do have a look at the same. Now, this is applicable for CA as well as for CMA students. Now, one more very important thing. You guys are going to be our only promotion. So if you watch the class, if you love the class, what I want you guys to do, yes, if you have to purchase classes, you can consider us. Or if you are having your juniors, they're asking, where do we purchase classes for CA Final AFM, CMA Final SFM? Boss, you will have to recommend our name. Okay. If you fall in love, and I'm sure you will definitely fall in love. So to purchase the classes, you can visit www.thinkwithtabish.com. For CA Final, AFM classes are available. For CMA Final, I take the subjects of SCM as well as SFM. Now for CA Final, all the subjects, best combos of best faculties in India is also available at a discounted prices. So for that also, you'll have to go and check our website, thinkwithtabish.com, with the classes, mentorship, all those things will be provided. That will be telling in a separate video. Now, yes, one very important thing for you guys. Now, I have turned off monetization for all the marathon discussion related videos so that you guys have a seamless learning experience. Otherwise, as students, you guys are watching the class in 15-20 minutes, an ad will come. After 15-20 minutes, one more ad will come. So I have turned off the monetization so that you guys can have a seamless learning experience. But boss, there is one disadvantage of turning off the monetization. Sir, you will not be making money. That's not the disadvantage. Money was anyways not going to be the primary intention. YouTube will not recommend the video more. Sir, what is it, sir? Simple. Imagine there is a video on which we have turned on the monetization. YouTube can play ads, YouTube can generate money. So YouTube is having an advantage. So YouTube will share this video more. But if there is a video on which monetization is off, YouTube cannot be putting ads, YouTube cannot be earning money. So YouTube will generally not share much. So what I want you guys to do, if you guys watch the video, if you guys enjoy the video, trust me, it is my promise, you're going to enjoy this. I want you guys to like the video, Share it to all your friends. Tell them crazy discussion, theory discussion is there. You cannot miss it out. Put down your valuable comments so that when new students come here, they watch it. They get to know, boss, it is adding value. So that accordingly, they will also see. So please do share it with all your friends. Only you will watch, you will get the benefit, you will pass. What is this? You'll have to share it to all your friends as well. And if you have loved it, I would really appreciate if you guys can put in your valuable comments. And if you want me to make similar videos on other topics for CA Final AFM, CMA Final, any other topics in general, please do let us know in the comments. We will do that as well. Now, one more very important thing. Right now, I'm providing CA Final AFM, CMA Final class, SFM classes in English only. But I have a dream plan that I want to provide classes in Hindi as well. But till now, I have not taken any classes in Hindi. Sir, can you teach in Hindi? Yes, I can teach in Hindi. I can speak Hindi as well. But I should know that there are students who want our classes in Hindi. So if you are a student from North India and you want me to come up with full-fledged classes for CA Final AFM or CMA Final in Hindi, please do put a comment. AFM classes in Hindi so that I get to know there are students so that accordingly we will come up with a batch, my dear warriors. So that's all. So please do download the notes from the Telegram group Think with Tabish. Watch the lectures. If you like it, if you have not subscribed, I know till now you have not subscribed. Pause. Subscribe the video. Do like it. Do share it with all your friends. And wishing you a happy learning, my dear warriors. Happy learning experience, my dear warriors. Take care. Bye. The theory discussion video is going to start from here. Yes, everyone. So, hello, hi, namaskaram, and good morning, students. I hope you guys are having a crazy, amazing day. If not, let us make this a crazy, amazing day, my dear warriors. Now it is time for us to take our discussion forward. We are having a beautiful, interesting discussion, my dear students, which is going to be theory. Now, pay attention, everyone. We are having a separate booklet for CA Final AFM Theory. Yes, it is called the CA Final AFM Theory booklet. Now, yes, first page I have written down the preface wherein I have written everything about theory that you should be knowing. Now, every student will be having a fear, point number one, or will ignore theory. What is there in theory? But trust me when I tell this, theory is the most scoring area when it comes to AFM paper. Same is going to be the story for CMA Final SFM as well. Now, particularly with respect to CA Final AFM paper, how theory will be coming? What is it that we should be doing? What our approach should be? That is what I'll quickly tell in 2 to 3 minutes, my dear students. Pay attention, everyone. Now, theory is going to carry 16 marks in our CA Final AFM paper. And trust me, it is the easiest 16 marks for us to score. Okay. Our intention is not to ensure that, okay, maximum 1 or 2 marks we'll get, 3, 4 marks we'll get. No. But we will prepare in such a way that if a theory question comes, we will ensure that we are going to score 16 out of 16. You guys know how much efforts we put in terms of practical. The same equal efforts we are going to put in terms of theory and ensure that we bag 16 marks out of 16 marks. It is going to be my responsibility. To ensure that I explain is my responsibility. To ensure that you guys remember is my responsibility. To ensure that you guys retain till end of your examination is also my responsibility. I'm not going to tell that this is theory you guys study by yourself. No, boss. We are going to ensure that we understand it logically, we remember it, we repeat it in the examination, we go and we write. Now, understand one very important thing, my dear students. There is a difference between theory in AFM versus theory in other papers, say audit. Sir, why are you reminding us audit, sir? Again, sir, headache, sir. Understand. Audit is a theory paper. There, scoring is slightly difficult. You also know that. But theory in practical papers, say in FR, you will be having 4 to 8 marks theory question. Scoring it is. Yes. Theory in AFM paper, scoring it is. Why? Full of reasons. Point number one. ICAI will be asking only repetitive questions. ICAI will not come up with something great. If they want to confuse you, make the paper complicated, they will make it complicated in practical area. They have so much options there. So questions will be repetitive. Point number two, evaluation is going to be very simple. The only thing you should be remembering is the keywords, headings. Inside that, whatever story you write, it is going to be sufficient. Trust me, I've seen students' papers wherein they've got 15 out of 16, 16 out of 16 in terms of theory as well. Very normal average answers. So theory is not something to be afraid of. It is something, if it comes in the examination, it will be coming in your examination, you hit it for a 6. Is this clear, everyone? So that is what we've written. Yes, proper headings are sufficient. Yes, most questions are going to be repetitive. And understand one thing, every question of theory is going to be for 4 marks only. That means how many points are sufficient? 4 proper points are sufficient for us. Yes, sometimes there will be 8, 9, 10 points. Yes, in a particular topic. When I'm explaining, I'll explain all of them. But for examination, 4 points are going to be sufficient. Now, how our AFM paper is structured? You guys will be knowing that. Yes, first we are having MCQ for 30 marks. Yes or no, everyone? 15 questions, 30 marks. Then we are having descriptive. Yes, even in descriptive questions, just a minute, students. Even with respect to descriptive questions, we will be having 6 questions of 14 marks each. Question 1 is going to be compulsory 14. Question 2 to 6, we need to attempt any 4 out of 5. Every question is going to be for 14 marks. This much we know. Now, how is theory going to come in this? Question number 1, compulsory question. In that, part number C, generally it is seen that it is going to be theory. Question number 2, again part number C is going to be for theory. Question number 3, part number C again is going to be for theory. Question number 4, again part number C is going to be for theory. This is how our theory will be in your question paper. You get your question paper whenever you are writing your examination. You open, you see question 1C will be theory, 2C will be theory, 3C will be theory, and 4C will be theory. Again in 4C, you will be having 2 questions. You need to write one of them. Say for example, randomly write down the features of securitization or explain venture capital fund. So one of the 2 theory questions we need to be right. This is how theory will come in our examination. Is this clear, everyone? So one thing we have understood, we cannot eliminate theory. Second thing, we've made a promise. I've made a promise. It is my duty to ensure that you guys understand, you guys retain theory till the end of your examination. The only thing I want is an open mind, students. I don't want you guys to be having that fear or that ignorance that we will leave theory. No, boss. We are here. Our intention is to ensure that we attempt for 100 marks properly, beautifully. You know how much effort we have put in, how simple we've made practical topics for you guys. Trust me, theory also, we're going to make it that simple for you. Is this clear, everyone? So this is how theory is going to come in our examination. Yes. Now, in our smart theory notes, yes, what we have done is all concepts as well as all questions from past paper RTP, MTP from 2018 till date, everything beautifully we've arranged. Okay, all keywords are highlighted for quick retention. Yes, we have prepared it in a very simplified language. Yes, we've retained the institute's essence, but in a slightly simplified, shorter, yes, sentences we've framed it. Okay, yes, powerful mnemonics we've created so that quickly we can remember. Crazy stories we've done for you guys, and additional important topics are included even if they are not yet tested for us. Okay, now free resources on YouTube. This video will be available on YouTube subsequently for the information, for the use of all the students. So what all free resources are available? Yes, completely free theory discussion. Yes, theory rocket revision also will be coming up, wherein in 2 hours complete theory will be doing a quick revision, so that one day before exam, on the day of exam, again you can refer to it. Chapter wise AFM concept notes, all those things will be there. Yes, to get the theory notes, you need to go to our Telegram group, Think with Fish. Okay, to purchase classes, yes boss, you guys know it already. Visit our website www.thinkwithtabish.com. Okay, so let us convert AFM theory into a sure shot scoring area. Now this is going to be the past paper analysis. If you see, there are 4 clear chapters in theory wherein every attempt there is a compulsory question. So this is what I've marked it as the A plus category chapters. All others are less important. Maximum, if it comes, 1 question may come from all balance chapters combined together. So at least these 4 chapters properly we need to prepare, my dear students. Which are these chapters? Securitization. You check 4 marks, 4 marks. Question did not come. 4, 4, 4, 8, 4, 4, 4, 8. To 8 marks from a single chapter. Startup finance 4, 4, 4, 4, 8, 8, 4, 8, 8, 8, 8. Crazy. Yes, financial policy and corporate strategy again 4, 4, 4, 4, 4. Not there, 4, not there, 4, 4. Risk management 4, 4, 4, 4, 4, 4. So even if you do only these 4 chapters properly, yes, Sometimes 16 marks of theory will be coming from this. If not 16, at least 12 out of 16 will definitely be coming from this area. So our first priority, properly in the most beautiful way, the way we have done all practical chapters beautifully, we need to give attention, time, focus, and do these chapters. Once this is done, balance chapters, we will be doing it as well. Balance chapters, there are not much questions also. Yes, not much tested in the examination. Still, it is there in our question bank. Yes, maximum possible questions from these areas also we've picked. That also will be doing it. Don't. Is this clear, everyone? So I hope now everything is clear. Any doubt till now? Give me a confirmation, students. Yes, everyone. So, with this introduction, let us start with the first chapter, beautiful chapter, scoring chapter, simple chapter, which is going to be securitization. Now, in all the theory chapters, this is a chapter which is very practical in nature, which is a bit technical as well. All other chapters, even if you just study it once by yourselves, you will be understanding. Don't worry, we will do it as well. But nevertheless, this is a chapter which requires you guys to understand properly as to what is securitization. Securitization seems to be a new word for you guys. So first let us try understanding what exactly is securitization. Once we've understood that, solving question is something, we are going to do it. Yes, everyone. So let us come here. Now this entire chapter of securitization will be understanding in three different phases, three different segments. Segment 1, we'll get to know the basics. Segment 2, we'll understand blockchain and tokenization. Segment 3 is going to be additional topics. So first, let us try understanding the process of securitization. What is securitization? Why do we do securitization? And how does securitization work? Let us quickly try understanding this. Phase 1, let us try understanding the bank's world. Imagine, my dear students. Once and for all, I decided that I'm going to quit teaching. Sir, why, sir? What happened, sir? No maja only in life. Da. Yes, I want to do something which gives me the power to control the entire economy. So, sir, what is it that you have decided, sir? I decided that I am going to start a bank. Yes, everyone. So, there is no maja in teaching only. I decided that we are going to quit teaching. Sir, what is it that you're planning to do? We decided we are going to start with the bank. So, we started a bank called Maja Bank. Crazy it is. Yes or no, everyone? No tension only. No need to take classes, upload revisions, solve doubts. No tension only. Simple. People will come to you. People are bringing in their money. They're telling we want to put FD. We will tell, okay, take 7% interest. People want money. They're telling, boss, we want loan. Okay, yes, 10% interest. Easily 3% profit we are earning. Yes or no, everyone? We are receiving money from people. FD. We are giving them 7% interest. We are giving money to people. Loan. Whatever be the loan. Yes or no, everyone? Because of cold stuff, voice is completely gone, but we'll manage it somehow. So whatever be the loan, home loan, car loan, vehicle loan, business loan, credit card loan, etc., etc. Yes. Assume we are giving 10% interest. Yes. So we are making a profit of 3%. Yes or no, everyone? Perfect. Now tell me. Yes. Bank's business model is very simple. We will be receiving deposit. How much interest will be getting? 7%. Yes. We will be issuing loans. How much interest? 10% interest. Okay. Let us make the initial balance sheet of Maja Banks. Initially, we have decided that we are starting the business. Okay. People who are watching it on YouTube, I will take some 15-20 minutes, explain the concept. We will go through that entire story. We will understand why exactly this concept is there. Trust me, once we've done that, this entire chapter is going to become very simple for you guys. So, let's wait for 10-15 minutes. That's all. Yes, everyone. So, initial balance sheet of Maja Banks. So, in order to start business, we want fund. Yes or no? Initially we have to be giving loans. Otherwise, also to start business, we want fund. From where all fund we can be getting? Either we'll be having our own fund, equity, or we'll be having borrowed fund, debt. Okay. Imagine we have raised our own capital, which is equity share capital of 50 crore. Imagine I had 50 crore rupees. I put my own capital of 50 crore rupees. With that, I have raised a debt of 50 crore rupees. 50 crore debt also I have raised. So tell me total how much capital is there with me right now? 100 crore of capital is there with me right now. Yes or no? Yes, sir. Imagine. RBI has put a condition that was bank, you are lending money. Yes, you lend money. Crazy. But ensure that the maximum debt ratio is 50% only. That is, your debt should not be more than 50% of the total capital. Tell me total how much capital we have raised? 100 crore. Yes, maximum how much debt can be raised? 50%, 50 crore. How much we have raised? 50 crore only. So tell me, is it possible for me to raise more debt? No. Is this clear, everyone? This is the imaginary condition that I've put here. Okay, why have I put here? Subsequently, we'll get to it. Okay. So now let us try seeing the initial balance sheet. Yes, we are having equity share capital. How much is my equity capital? 50 crore. Yes, we are having debt 50 crore. So total 100 crore. How much cash is available with us? 100 crore. Accordingly, we will start with the business. Till here, whether things are clear. Give me a confirmation, everyone. Accordingly, we'll proceed further. Yes, everyone. So let us proceed further with our discussion. So we are Maja Bank. We started with our business. Yes or no? What is our intention? Simple. Cash, panam, duddu, money. Yes or no, everyone? We want to make money. Simple. Any person is coming with their money. Yes, they're telling your boss, we want to put FD. We will receive the money. Yes, give them FD at 7%. Yes, any person is in need of money. They want to, yes, build a home, buy a car, start a business, etc. We'll be giving them loan. Loan primarily we have told 10%. If there is more risk, accordingly, more rate we will be charging. Simple, boss. Okay. Now look at this. Maja Bank starts its business. What is the business of a bank? We will accept a deposit from people. We will be issuing loan. Okay. Cash inflow. When am I receiving? We are the bank. When am I receiving money? When someone comes with the money and puts FD. Say for example, you are a customer. You are having too much money with you. Presume you are having 1,000 rupees with you. So too much money. Like you are doing articles. How much more will you be having? Yes. Imagine you come up with 1,000 rupees. You are telling boss, I want to put an FD. I will tell, okay, give me the money. I receive the money. I will tell you, yes, I will be paying you 7% interest. Is this clear, everyone? Okay. So when will I be getting cash inflow? I will be getting cash inflow from FDs. Yes, or balance from savings accounts, etc., etc. Now, majorly we are only looking into, yes, the long-term things, either a loan or I am talking about FD. All other are just, yes, day to day savings bank account. You are having balance. Any day you can be removing the balance. Okay, boss. Imagine. We have accepted FDs at 7% interest of 100 crore rupees. So day one, tell me how much balance I was having with me. Tell me how much balance I was having. Already 100 crore of capital I was having. 50 crore equity, 50 crore debt, 100 crore was there. Yes, extra a customer came with 100 crore cash and he put an FD. We told okay. So tell me now total how much cash I'm having. 200 crore I'm having. Yes or no, everyone? Now, slowly from this, we will be incurring cash outflows. We will be issuing loans. Yes or no, everyone? I am sitting there. Cash, Pannam, Duddu, money. Yes or no? Whatever loan you want, we will be giving you the loans. Yes or no, everyone? We have issued loans by taking some collaterals. We will be taking some collaterals and accordingly we will be giving loans. Sir, why do we take collateral? So that if in case any default occurs, yes, we bank, we are protected. Yes or no, everyone? Okay. Different loans are there. Imagine home loans is there, car loans is there, business loan is there, education loan is there, credit card loan is there. The basic interest rate assume is a 10%. Housing loans I am giving at 10%. Okay, boss. Total 100 crore worth of housing loan I have issued. Okay. Car loan I am issuing at 11%. Okay. Housing loan, anyways, house is available as a mortgage. Sir, for car loans, car is also available now, but understand car's value will depreciate with time. So that is why we are charging slightly higher interest. Okay, fine, boss. Business loan. We don't know whether business will work or not work. So that is why more risk. So we are charging more interest rate. Imagine 12%. Education loan. Say for example, a person has come, he wants to do, yes, pursue further education. For that he wants a loan. Assume we are charging 10 to 12%. And then we are having credit card loan. In case of credit card loan, there is no collateral. There is a high risk. That is why they are charging a high rate of interest. You will be knowing the interest on credit card. Yes, they will be charging somewhere around 25 to 35, 40% also. Let me take simple 25%. All these loans we have given to people. Is this clear, everyone? What is the amount? Let us try seeing. First, tell me total how much amount is there with me. 50 crore equity, 50 crore debt, 100 crore was there. 100 crore FDI received. So total 200 crore cash is there with me. Now, what all has happened? 100 crore of housing loan I have issued. 20 crore car loan, 20 crore business loan, 20 crore education loan, 20 crore credit card loan. Tell me total how much loan I have issued. 100, 120, 140, 160, 180 crore of loan I have issued. Yes or no, everyone? Perfect. That means tell me how much cash is right now available. So total 200 was there, sir. 180 we issued, na, sir. Only 20 crore cash is there. Perfect. Imagine, where do we do our business? We want some fixed assets at least. Imagine I purchased, yes, property wherein I'll be carrying out my business. Imagine I have purchased a PPE, property plant equipment. Yes, for which I've incurred 20 crore. Now tell me 200 crore cash I had. Did I fully utilize my 200 crore? Yes, boss. 20 crore for PP, balance 180 crore. I've issued a loan. Till here, is this clear? So let us prepare a revised balance sheet of Maja Bank. Look at this, everyone. I am having equity of 50 crore, debt of 50 crore. I am having my liability. Yes, deposits which have accepted from the customers, FD, 100 crore. So total how much cash I had? 200 crore. Now where all we've invested? Yes, PP 20 crore. Now financial assets. In that loans given, financial assets FR. Yes, it is cash or the contractual right to receive cash. I have given a loan to you. Yes, I am having the contractual right to receive cash. So it will be coming under, yes, your financial instruments. Yes, India is 3210 and all those things. Yes or no, everyone? This is how presentation will come. For us in AFM, that is not important. Chumma, we can write loan also. Still, I just told. Okay, loans given, housing loan 100, car loan, business loan, education loan, credit card loan. Total 180 crore worth of loan I have given. Tell me, am I having any cash with me right now? No, boss. 200 I received. Yes, 20, 180 completely, 200 I've issued. Yes or no? The cash which is available with me is zero. Till here, whether things are clear. Give me a confirmation if you. We started with the bank. Yes. We issued our initial capital, is equity as well as debt. Then we received deposits, yes, issued loans. Right now, we are not having any cash available with us. Till here, we have discussed, my dear students. Yes, everyone. If this is clear, let us continue with our discussion. Now, let us try understanding the bank's problem and what all possible solutions we can come up with. Tell me, students, why is a bank established? We have established a bank so that we can receive money from people, accept deposit, give them interest, issue loans. People who are in need of loans, we give them loans. Yes or no, everyone? Imagine today a new customer comes to me. He is telling, boss, I am in need of funds. Please give me a loan. Tell me, am I having cash with me to give the loan? No, boss. Total, whatever cash was there, I've already issued loans. Yes or no, everyone? Perfect. Now, imagine. Yes, one day, yes, I am in this situation. That is, the cash balance at bank is zero. Yes, who comes to me? Yes, Rocky Bai comes to me. Yes or no, everyone? He is coming. He is telling, yes, I am going there and introducing, I am CEO of Maja Bank. He is also telling, I am also CEO. I'm asking which one? India. Sir, enough, sir. Come back to topic discussion. Okay. So Rocky Bhai is coming. He is telling, boss, I want a 10 crore loan in order to make improvement in KGF. So please give me a business loan for 10 crore rupees. Now Rocky Bhai has come to us. He is coming for a loan. Tell me, is it okay if we, yes, cancel our customer, ignore our customer? No, boss. We have to give him a loan. Yes or no? So I tell Rocky Bhai, please give me 1 week's time. I will arrange and give you a loan of 10 crore. Rocky Bhai told, okay. He went back. Is this clear, everyone? So he is telling, I want a 10 crore rupee loan to make improvement in KGF. I will tell, okay, Rocky Bhai, I will give you a 10 crore rupee loan. Perfect. Yes, still here story is clear. Now tell me. Common problem with the bank. Yes, bank is in the business of lending money. In order to lend money, they should be having money. Tell me, in this case, am I having money with me? No, boss. I am having absolutely zero money with me. Why? Because whatever capital, how will bank be getting money, boss? Tell me, can they sit and print money? Can I sit and print money? No, boss. They should either be getting money. How? Either my own capital equity or by debt or some FD that I've received. Yes or no, everyone? At some point in time, I've issued loans and all these money got over. Now I want to be issuing more loans. What is it that I should be doing? Yes or no, everyone? So I am lacking fund in order to give additional loans. Yes. If I do not give loans, I am not continuing my business. I am not improving my business. But boss, in order to improve business, I need loan. I need money. I'm not having money. What is it that I should be doing? That is what we are trying to understand here. Is this clear, everyone? So let us sit and try and understand and brainstorm solutions. I was thinking, yes, boss, I want money. 10 crore I want. Yes, Rocky Bhai is asking, I have to give. How to give? How to give? I had absolutely no idea. So I did one thing. Yes, my friend is working in JP Morgan as an investment banker. I called him. Sir, what is the name of the friend? Imagine the name of the friend is Rajnikant. There is nothing Rajnikant. Yes or no? Yes. So Rajnikant is there. He's working as an investment banker in JP Morgan. So I tell, yes, there is no fund to give loan at all. Tell me what is it that I can be doing so that I can give loans, additional people, so that I can improve my business, continue my business. He is telling, okay, boss, let us think of all possible solutions that we can be doing. Tell me, we had our balance sheet, yes or no, everyone. Tell me what all I can be doing in order to get more fund. Option number one is I can raise more equity. Owners, I am the owner. If I have more fund with me, yes, I will issue more equity. Or say I've raised capital from different people. I've gone through IPO route. Yes, raise further capital. That could be one possible option. Yes or no, everyone. Imagine I am not having fund with me at all. Equity holders are telling, boss, we are not going to give you extra fund. With this fund only, you carry out the business. So this option is wiped out. Now tell me what is the next option which is available. Yes, go for additional debt, extra debt we raise. Yes or no, everyone. Long term debt. We issue debentures, bonds. Through that we raise additional funding. Tell me, initially I had given you guys a condition. Imagine RBI told that maximum debt can be 50 percentage only. Tell me right now, debt is already 50 percentage of the total capital. So tell me, is it possible to raise more debt here? More debt raising is also not possible. Yes or no, everyone. Unless I raise more equity, raising more debt is also not possible. So this option is also not possible. Yes, or else one more option. Try getting more FD from people. Tell me, is it in my hands to get more FD? No, people are coming, I can give them FD. But people are not coming at all. Is it in my hands? No, boss. All these options are not in my hands. Yes or no, everyone. Now let me come to the other side of the balance sheet. What else I'm having? PP. So what I can be doing? I can sell my PP. I can sell the PP that I'm having. Yes, I can sell the property, plant, equipment, the building, accordingly get cash so that I can continue my business. That is also one more option. We are just discussing options available. Tell me, if I do that, I am selling my fixed asset. Can I continue my business? Oh, boss, I want my PP. I want my building to carry out my business. By selling this, how can you continue your business? That option also I tell, boss, Rajni, it is not possible. Tell me some other option. Tell me, I took my balance sheet, equity, all these things I discussed. None of them was possible. Now tell me, what is the only option left? Loans are there. Yes or no, everyone? Tell me, I am having loans that I have issued to my customers. These are my assets in my balance sheet. These are my assets, receivables. But boss, I will be receiving the money slowly. Yes or no? Throughout the next 5, 10, 15, 20, 25, 30 years. Across the next 30 years, I will be receiving the money. I'm telling boss, I want the money today itself. Yes, sell these receivables and raise extra cash. That is what we will be doing in this particular concept. So securitization in simple terms means, yes, I am selling the loan receivables. Yes, I am the bank. I am having loan receivables. I will sell that and raise extra cash. Is this clear, everyone? Till here things are clear. Look at this, everyone. What all possible solutions are there? Either I can raise extra equity, but imagine equity shareholders are not having fund. I can raise further debt. In this, what all challenges are there? Firstly, ratios will be impacted. Point number one. Point number two, it may be prohibited. I told you the condition. Imagine RBI has put up a condition that maximum 50%. Yes. And the third thing is cost of debt is going to be higher. Look, imagine we are raising further debt. The cost of debt is going to be higher, students. Tell me, students, simple. Imagine there are two friends who want money from you. Okay, friend number one, yes, he is having a reasonable income every month. He is having absolutely zero EMI. Yes, friend number two, he is on the verge of losing his job. He had a job, he is on the verge of losing his job. Every month he is having a 1 lakh rupee EMI. Yes, both these people come to you and both these people ask, yes, Macha, I want a 50,000 rupee loan. You are having money with you. Tell me, to which friend you will give your money. To which friend you will give your money? You will be willing to give your money to the first friend. But boss, this person is in more need of fund. But boss, there is a higher risk that you will be losing your fund here. Yes or no, everyone? Perfect. That means if you are giving a loan to this person, imagine you are giving a loan at interest. Yes, you will be charging a higher interest. Why? Because there is a higher risk. Boss, he's on the verge of losing his job also. Yes, he's already having too much debt piled up. Yes or no, everyone? Now understand. Yes, this is the balance sheet of Maja Bank. We've already raised 50 crore of debt. If I'm raising extra debt, extra loan, yes, the people who are investing money, they're telling, boss, already 50 crore of loan is there. Now he is raising extra fund. What if the business doesn't work out? There is a higher risk. So they will be requiring a higher return. So the cost of debt is going to be higher there. Is this clear, everyone? All these challenges are there with respect to raising further debt. Or the third option is I can try to sell some assets. Either I can sell PP, but boss, if I sell my building, then how can I continue my business? Yes, or the last option is I can sell my financial assets, which is the loans. Yes or no? I will be selling my loans and receiving cash. So what we will be doing? Okay, boss. So now conclusion, main point. Yes, we decided that we will be selling a pool of assets. That is, tell me what all loans I am having. Different loans I am having: housing loan, car loan, business, education, credit card. I will take some pool of assets. Imagine I took housing loan and credit card. Tell me how much is housing loan? 100 crore. How much is credit card loan? 20 crore. Yes, I took a pool of assets. I am telling housing loan, credit card loan. 120, 120 crore. Yes, this I am selling, and in exchange, I am receiving cash. Is this clear, everyone? This is what we will try doing in this chapter. So look at this, everyone. What we will do? We will sell a pool of assets. That is, we have taken housing loan, credit card loan to receive cash. This is what we will be doing in this chapter. Is this clear, everyone? Look at this, look at this, look at this, students. Yes, meaning of securitization. For understanding purpose, not important for examination. Yes, it is the process of bundling and selling the illiquid financial assets. What is it that I'm doing? Bundling. Firstly, I took housing loan, credit card loan. I created a bundle of 120 crore. Yes or no? Bundling and selling. I sold illiquid financial assets. That is my loan. Tell me, loan is a financial asset. I'm having the right to receive cash, but boss, currently they are illiquid. Tell me, in a normal day, is it possible for me to sell my loan and receive cash? No, boss. Generally, it is not liquid. Yes or no, everyone? Cash is liquid. You are having, say, for example, your investment in stocks. It is liquid. If you want, in one day, you can convert it. But boss, these are illiquid investments. Say, for example, you have invested in, yes, real estate, illiquid. In one day, you cannot convert it. These loans also, across 30 years, you will be getting money. But boss, today itself, I want. Yes, these are otherwise illiquid financial assets. Yes, you are bundling and you are selling these illiquid financial assets. So why? In order to generate cash, because we want extra cash. This is the meaning of securitization. Is this clear, everyone? If you guys want to see what is it that institute has put as a meaning, yes, it is the process of rebundling the illiquid assets. Rebundling, basically bundling. You're creating a bundle of illiquid asset. What is my illiquid asset? Loan. Yes, into marketable securities in order to generate cash. Tell me, I have bundled my loan. I want to raise cash. How will I raise cash? I will convert it into, yes, some securities. I will issue some more securities to people. Through that, I will be raising cash. What exactly this is, we will understand it. Don't worry. Till here, whether things are clear, give me a confirmation, everyone. Look at this concept and definition. This is taken from the institute study material directly. Yes, it is a process of rebundling illiquid assets into marketable securities. Is this clear, everyone? Till here, whether things are clear, everyone give me a confirmation, students. Yes, everyone, if this is clear, then comes the next phase. Okay, boss, how do we do it? So I ask Rajni, who is my investment advisor, who is working at JP Morgan. Okay, boss, I am ready to do this. I want to raise funds somehow. Yes, 120 crore of, yes, illiquid financial asset. I am willing to sell and raise cash. Tell me, how do I do it? Yes, he's telling, boss, first you need to do one thing. You need to create a separate trust, which is called as SPV, Special Purpose Vehicle. It is a separate trust which you have incorporated. Why? So that you can sell these loans and generate cash. Is this clear, everyone? So I am asking how to do it. Okay, boss. First, create a separate trust, an SPV called as Maja Trust. Yes or no, everyone? Yes, the objective of the trust is to sell the loan and raise cash. Tell me, what is the objective of the trust? I will be selling these illiquid financial assets, which is basically a bundle of loans. Yes, and issue marketable securities to people and receive cash. Okay, what is this process all about? Try understanding, students. Simple. Yes, the same process of raising a debt only. I am raising further debt only, but in a slightly other way. It is not happening through the main balance sheet. A separate entity is formed for that purpose. Yes, what Rajni is telling is, boss, your main balance sheet is for your main business. There you are giving deposit, yes, issuing loans, doing all those things. All those issues are there. Now, what you want to do is you want to sell some loans and generate cash for that. Don't mix it with the main balance sheet, main business. Create a separate trust for that. Title, okay. What is the name of the trust? Maja Trust. So, what is the objective of the trust? The objective of the trust is very simple. It is formed for a special purpose, for an extra purpose. What is the purpose? I want to sell my loans and raise cash. For that purpose, we have incorporated this trust. Okay, boss. Now, what is the process of securitization? Understand, students. Yes. Step number one, transfer a bundle of assets to the special purpose vehicle. Yes, we are Maja Bank. We created an entity called as Maja Trust. Who created? We only created. Why we created? Because we want to sell these loans and generate cash. Yes or no? Sir, how do we generate cash? We'll tell you. Okay. So step number one, what is it we should be doing? Transfer a bundle of assets to SPV. We are Maja Bank. We are having so many loans. We transfer a bundle of loans. Imagine in our story we told housing loan 100 crore, credit card loan 20 crore. Total 120 crore worth of loan, we transfer it to the special purpose vehicle. We tell boss, I am selling this 120 crore of loan to you. You issue securities, you raise money and give me the cash. Is this clear, everyone? Okay. Transfer bundle of assets to SPV. Imagine we are transferring housing loan as well as credit card loan, total 120 crore loan. Okay, is this clear? Yes, boss. Now, what SPV will do? What Maja Trust will do? Yes, Maja Trust, which is the special purpose vehicle, will unbundle and create various marketable securities. Tell me, students, what all I gave to the Maja Trust. I gave them housing loan also, credit card loan also. Yes, housing loan is for total 100 crore rupee. Tell me, is there an investor who is willing to put 100 crore, a single investor? No, we need to split it. So, what we do is housing loan, yes, we check and we bifurcate into two different categories. First category is that category wherein there is adequate collateral. Obviously, yes, once we are giving a housing loan, we would have taken some collateral. The own property itself will be the collateral. Sometimes the collateral will be adequate, sometimes it may not be adequate. Yes or no, everyone? So I bifurcate this entire housing loan into two different categories. Housing loan with adequate collateral, assume it is 70 crore. Housing loan without adequate collateral, it is assume 30 crore. Yes, credit card loan, anyways, there is no collateral, so I keep it as it is, 20 crore. Is this clear, everyone? So what I did, I received this 120 crore loan. Yes, now we are the trust. I unbundle and break it into different categories. I tell housing loan, yes, adequate collateral, 70 crore. No adequate collateral, 30 crore. Credit card loan, 20 crore. This way I bifurcate. Is this clear, everyone? Okay. Now tell me, what is the Maja Trust going to do? Maja Trust will be issuing securities to people and raising money. I've told it is formed for a very simple reason. They will issue securities to people and raise money. They're telling everyone, boss, I am having loan, 120 crore worth of loan. That is, today you give me the money. Yes, periodically you will keep on getting the return. Yes or no, everyone? Understand what is happening. Now imagine you are the investor. You are having, say, 1 lakh rupees. You purchase one security. What is it that you will be getting? Simple, boss. Imagine originally I am the bank. Yes or no, everyone? What I had given a loan to my customer, what I will be receiving? Every period I will keep on getting my EMI. In that EMI, principal was also there, interest was also there. Now, what I did as a bank, I transfer this loan to SPV. Yes or no? That means SPV will be getting. SPV is raising money on whose behalf? On your behalf. So every month, periodically, the EMI money will now you will be getting. Is this clear, everyone? So periodically, whatever is the income, you will keep on getting. Okay, boss. Now understand. So what the special purpose vehicle, the trust will do is, first it has unbundled, yes, broken down into maximum possible chunks. Okay. Now face value of the instrument. Imagine. For simplicity sake, I am telling, yes, face value of every instrument is 1 crore rupees. That is, every instrument is having a face value of 1 crore. We are telling we don't want small investors. We just want big institutional investors, like say mutual funds, insurance company, etc., etc. Okay, so face value of every instrument is 1 crore. That means tell me how many instruments I will be issuing. Tell me, I am having the three different buckets. First, I am having housing loan wherein I am having adequate collateral. How much is the value? 70 crore is the value. Yes, face value of the instrument is 1 crore. That means tell me how many securities I should be issuing. 70 instruments I will be issuing. Next one is housing loan without adequate collateral. 30 crore. Face value is 1 crore. That means 30 I will be issuing. Now tell me, you are the investor. You are having two options. First is you invest in a housing loan wherein there is adequate collateral. Second is you will invest in a housing loan without adequate collateral. Which one you want to invest? Here, yes, wherein there is adequate collateral, because here there is less risk. Here there is more risk. That means to make this attractive, what the special purpose vehicle, what the trust has to do, it has to give slightly higher return. Yes or no, everyone? That's a simple philosophy in life. Higher the risk, higher return should be there. So obviously here for the investor there is no risk because properly collateral is there, boss. So here it will be giving them lower return. Yes or no, everyone? This one is having slightly higher risk. So yes, boss, it has to give higher return. Now then comes credit card loan. Total 20 crore is there. Imagine face value of every instrument is 1 crore. That means how many instruments will be issuing? 20 instruments. Tell me, in case of credit card loan, there is no collateral at all. That means there is even more risk. That means to compensate for that, even more return we should be giving. Is this clear, everyone? Perfect. So this is what we will be planning. So what will the special purpose vehicle do? Imagine we are Maja Trust, that is the special purpose vehicle. First, yes, we will receive the loan from the bank. Okay, we will unbundle them and break them into marketable securities. Yes, maximum. Yes, breaking we will do. Yes, we'll divide by, yes, the face value. We will arrive at the number of instruments to be issued. Now, third point is SPV will sell the instruments to the investors and raise money. Now, tell me, we are having, yes, how many instruments we are having? Three different instruments. Housing loan with adequate collateral, without adequate collateral, credit card loan. We will sell these to investors. We will go to every different investors, small investor, big investor, tell them, boss, crazy instrument is there. You have invested in equity. They are telling yes. Imagine you are the investor. I am coming to you. Yes, I am the trust. I'm telling you have invested in equity. Yes. You've invested in debt also, bond also. Yes. You've invested some money in crypto also. Yes, boss. Now you want to diversify your risk further. Yes, boss. One more instrument is there. You're asking what is that instrument? Yes, they are telling loan. As an individual, is it possible to enter into, yes, business wherein you are giving loan like in a proper regular, yes, legalized way? Was not possible. Yes or no? Yes, we are a bank. Yes, we have issued loans. Now we want to sell that loans. Basically, whatever cash flow we are getting from the loan, you will be getting that too. Yes, you just need to invest in this instrument. Is this clear, everyone? Now, what all different types of instruments can be issued? Special purpose vehicle can be issuing one of the three instruments. We will discuss it later. The various types of instruments issued. It can either be P2C, pass through certificate, or PTS, pay through security, or stripped security. Sir, what is a stripped security, sir? First two you did not ask. The moment you see stripped, oh, crazy energy has come. Don't worry, we will discuss all of this later. Okay, yes, perfect. Now, what is it that SPV will be doing? Yes, SPV has broken it down into marketable securities. Now, it will go pitch to investors, raise money from the investors. Imagine I got the investors who are willing to put the money. Imagine you guys are the investors. Yes, some doubt you guys are having in your mind. Don't worry, we will solve that later on. Yes, we will raise the money. Imagine, for now, for simplicity's sake, tell me what was the total value of loans? 70 plus 30, 100 plus 20, 120. Imagine SPV has raised 120 crore of loan. Okay, SPV has raised 120 crore. Is this clear, everyone? Now tell me, students. This is Maja Bank. Okay, here we are having the special purpose vehicle, which is the Maja Trust. What Maja Trust did? Initially, we have transferred loans. Yes or no, everyone? Step number one. What is it that we did? Yes, transfer housing loan, credit card loan, 120, 120 crore. Yes or no? Yes. What did the special purpose vehicle do? It broke it down into three categories: housing loan with collateral. Yes, without collateral, credit card loan. Divided by face value, we arrived at number of instruments. Yes or no, everyone? It goes to the investors. It tells, boss, these instruments are there. Do you want to invest? This is the return you will be getting. Obviously, higher the risk, there is no collateral, means higher will be the return that they are offering. Okay. Investor is telling, boss, I am interested. So investor will invest the money. Yes or no, everyone? Perfect. Imagine full 120 crore, different set of investors, small people, they invest. Who all will be the investors? Generally, either mutual fund companies will be taking this. Why, boss? They are getting a diversification benefit, or insurance company will be there, or will be having PF company. Yes or no? Provident fund companies which are giving provident fund. Those companies will be there, or there will be big HNIs, high net worth individuals. They want to diversify their risk. So generally, these people will be investing in securitized instruments. Sir, is it happening in reality? All these things are happening in reality. That is why we are discussing this. Is this clear, everyone? Now tell me, a special purpose vehicle has now raised 120 crore. Yes or no, everyone? Tell me, we are Maja Trust special purpose vehicle. Yes. Can we sit with this 120 crore and do party? No, boss. Why did we raise the money? For a specific purpose, to give money to our bank. Yes or no, everyone? So what this SPV will be doing? SPV has raised the money. Now it will transfer the money to the bank. Yes, transfer 120. Is this clear, everyone? So special purpose vehicle will transfer the money to Maja Bank. Yes, this is how Maja Bank will be receiving 120. Is this clear, everyone? The entire process. So yes, we are Maja Bank. We wanted extra fund. So we decided, boss, we are having some illiquid loans, illiquid financial assets. Let us sell them and raise cash. Is it possible that we do it directly? Not possible, boss. For that, we need to create a separate entity called a special purpose vehicle. It is a trust. We have only incorporated that, Maja Trust. What we will do? First, we will sell a bundle of loans to them. Yes, housing loan, credit card loan. What they will do? They will unbundle them into various packages, different things. Housing loan, yes, with adequate collateral, without adequate collateral, credit card loan. Yes, they will break them into marketable securities. Yes, 70 crore, no individual investor is willing to invest. Yes, we break it into 70 instruments of 1 crore each. Yes, they will market and then they will be raising the money from the investors. Investor is putting money because he is getting diversification benefit. Yes or no? They have now raised the money. Now, whatever money they've raised, they will transfer it back to the. Is this clear? This way, for the bank, what has happened to the bank? Bank has raised 120 crore. Is this clear, everyone? Till here, whether things are clear? Give me a confirmation, everyone. Yes, everyone. So have a look at this. This was our balance sheet before securitization. Yes or no, everyone? Equity was 50, debt was 50. Yes, FD was 100, PP was 20, and we had our loans of 180, cash was 0, 200. Now, after securitization, what will happen? Tell me, we are Maja Bank. We sold two loans. What all loans we sold? Yes, housing loan and car loan. So this will go outside our balance sheet. Yes or no? In return for this, we received a cash of 120 crore. We will be receiving cash of 120. This will go. Yes, what is left will be 60. Yes or no? So 120, 60, 180 plus 20 will make it 200. Yes or no, everyone? This is how our balance sheet is going to look. Look at this, students. Yes, equity 50, debt 50. This is going to be 100. No issues. PP will be 20. Now loans. These two loans will not be there. So my loans will be 60 crore only. Okay. Yes, in its place, 120 crore assets I sold. In return, I have received a cash of 120 crore. Is this clear? So this way, my balance sheet will be 200 crore. Yes, from this, now I generated further cash. From this, I can give further loans. Yes or no? Rocky Bhai was waiting. He wanted a 10 crore loan. From this, I will give a further. Is this clear, everyone? Okay. Let us have a look at the balance sheet of the trust. Yes or no, everyone? Now, what is it that we have done? We sold our assets to the trust. What all assets we had? We had our loans, housing loan as well as credit card loan. These two loans, we sold it to the trust. So, if you see the trust balance sheet there in financial assets, you will find loans. Yes, housing loan as well as credit card loan 120. Now, in return for this, yes, what did the trust do? It has issued securities to the investors. Tell me what all securities can be invested. I have told three different securities could be there. Sir, we don't remember the name. Okay, try remembering the PTC, pass-through certificate, PTS, pay-through security, or stripped security. Yes or no, everyone? Perfect. Yes, we are issuing instruments, one of the three, 120. Yes, once we issue the instruments, what has happened? Yes, we received cash. Yes, we received cash of 120 crore, but boss, immediately we transfer the cash back to our bank. Yes or no? Because ultimately it belonged to them. So cash we transferred. So ultimately we are left with a cash of 0. Yes or no, everyone? So in the asset side, I'm having 120 crore, which is the loans, the assets. Yes, liability side, we have issued instruments of 120 crore. Is this clear, everyone? Perfect. Now you guys will be having a doubt. Sir, now this process basically meant bank directly did not raise debt. This is again going to be a form of debt financing. Yes, for the people who are investing, it is debt only. Yes, they're getting periodically fixed interest as well as principal repayment. Yes. Now understand what is happening. There are two options. Either you can have food like this, or you can have food like this. This is the second thing. Yes. Either Maja Bank was there, directly they could have issued debt. They could have raised money. They could have run the business. But they did not want to. Why? Firstly, there are some RBI conditions which will get impacted if they raise. Secondly, if they are raising debt directly, the cost of debt is higher. So what they did for this purpose, to escape this, they created a new trust. They sold these assets to the trust. Now they're telling, boss, this is a separate entity altogether. Yes, they're having the loan receivables. Against this receivable, they're raising the money. So against that, they raised the money and accordingly they brought. Now, what is the benefit for Maja Bank? Boss, they raised the cash. Yes. The ratios are also not impacted. Tell me, yes, in the books of Maja Bank, whether loan has come? No. Loan is still, yes, only existing loan of 50 crore is there. Yes or no? Debt. So debt has not increased. So my ratios are not impacted. Point number one. Still, I have raised further capital. Yes or no, everyone? Is this clear? Is this clear? Is this clear? Now, one more additional practical insight. Just a practical insight for you guys, not for examination. Now, how much money will generally be raised by bank through securitization? Say we are Maja Bank. Yes, I have transferred a loan of 120 crore to the special purpose vehicle. Housing loan 100 crore, credit card loan 20 crore. 120 crore worth of loan I have transferred. In exchange of that, how much money I will be receiving? Generally, our common perception is that, boss, if you have transferred 120 crore worth of loan means we will be receiving less than 120 crore only cash. It is the common perception. But boss, that is wrong. Why? We will be receiving more than 120 crore cash. Sir, if you do that, what is the benefit for the investors? Don't worry, da. That is why I'm here to explain to you guys. Now, understand, if Maja Bank transfers loan of 120 crore to SPV, yes, generally they will be receiving, yes, more than 120 crore cash. Sir, how will it happen? Simple logic. You guys are not understanding the logic. Okay, 120 crore is the loan amount. When the investor will repay, is he repaying only the loan amount? No, he will repay the principal plus the interest. So investor is anyways getting the interest. Yes or no, everyone? Perfect. So that is one logic. Now understand the second thing. Imagine, simple example, students. Mr. A wants to borrow 100 rupees from Maja Bank. You are the person, you are in need of 100 rupees. So you come to me, Maja Bank. You are telling, boss, 100 rupee loan I tell, okay, yes, I will give you to buy a car. I will give you a loan at 12% interest. He is telling that, boss, the entire principal as well as interest I will repay by end of first year. That means, tell me, students, if I am drawing it on a line, yes, 0. How much loan I am giving? 100 rupees. First year, when I am receiving money back, how much I will be receiving? 100 rupees loan amount I will receive. 12 rupee interest I will receive. 112 I will be receiving. Yes or no, everyone? So imagine at 0th period, today I gave you a loan. Today the year ended. So today I need to prepare my balance sheet. How will I prepare my balance sheet? Balance sheet of Maja Bank. Here financial assets, loan given, car loan. How much value I will be showing? 100 rupees only I will be showing. Yes or no, everyone? Yes. If interest has accrued, that I will show. Otherwise, I will not be showing. Why? My interest is future income. I will not be showing it today. Simple logic. We know this basics of accounts. Yes or no, everyone? So tell me, this loan I transferred. So when I transferred my loan, I have only transferred the, yes, the value is only showing the principal. But when the person is receiving principal also, he will be receiving interest also, he will be receiving. Is this clear? So investor is willing to pay 100 rupees to get the loan, because when he is getting back, he will be getting the time value interest anyways. Point number one. Point number two. Yes. Why bank will be receiving more than 120 crore only in terms of cash? Imagine I am a bank. Okay. Yes, I am carrying out this entire business. Yes, the customer came to me. He told, boss, I want a loan. I tell, okay, 12% interest. Imagine same customer, you come to me, 100 rupees loan you take. Okay. I tell 12% interest. You tell, okay, yes, 100 rupee loan I give you. Yes, at the end of first year, you will be paying 112 rupees. Now I don't have this fund with me. So what I do, I sell this asset. Yes. through a trust to a third party. Through that, he'll be paying me the money. Imagine he is telling, I will pay you 100 rupees. I tell, okay. Now think and tell me, what on earth did the bank do? Bank brought the customer. Yes. Bank gave him a loan. How much loan did bank give him? 100 rupees. Okay. Bank was not having money. It sold this asset, received cash. How much? 100 rupees. Whether bank made any profit in this? No. 100 rupee it received, 100 rupee loan it gave. Whether bank incurred any loss in this? No. But still, boss, why on earth is bank there for? Whether bank is there for charity? No. Bank wants to do some profit. Yes or no? So what is bank telling? Investor, boss, if I give a loan, I will be getting 12% interest. Investor is telling, I also want 12% interest. We are telling you start a bank. Now 12% I will not be giving you. 10% return I can give you. You give me 102 rupees, I will give you this loan. Is this clear, everyone? So generally bank will be receiving more than the loan value, because some amount of return also they will be receiving. Is this clear? Investor is happy to pay 102. Why? He's telling 102, even if I pay at the end of first year, I'm receiving 112, right? So I'm still getting close to 10% rate. Is this clear? This is additional practical insight I've told you. If you have understood, great. Otherwise, anyways, it is not going to make a difference. Is this clear, everyone? So with this, creation of trust and all those steps are clear for us. Trust me, everything that we are discussing here is important. Once we finish it off, then you see how everything is going to be very simple, very quick, my dear students. Is this clear, everyone? Give me a confirmation. Accordingly, we'll proceed further, students. Yes, everyone. Now we have the final phase of discussion. We are understanding every person's perspective. Okay. This is between the trust and the investors. Say we are Maja Trust. Maja Trust is there here, special purpose vehicle. Yes, it has received the loans, it has unbundled them, and it is issuing securities to the investor. Investor has to give money. Yes. So, yes. Maja Trust is telling, yes, what is the plan? All these loans, bank was there, bank is not in a position to hold these loans, because slowly, periodically only they'll be receiving money, but they want the money upfront. So they are selling these assets. We will be holding these on your behalf. Yes, you pay us the money. Yes, what we'll do, periodically you will keep on getting your money. Yes or no? Whenever customer is paying EMI, that money will come to us directly. From this, what we will do is periodically we'll keep on paying you the money. Now, investor is having some fear in his mind. What all fear he will be having in his mind? Yes, firstly, who all will be the investors? Either mutual fund company or insurance company or pension funds, provident fund. Yes, high net worth individuals, big individuals, like say for example Warren Buffett, Jeff Bezos, etc., etc. Now tell me what all is going to happen. Firstly, what is the benefit to investor? Why investor is interested to invest here? Firstly, it gives him diversification benefit. Portfolio management chapter we have understood. Diversify. We need to diversify our risk. Till now, investor was investing only in equity market. Now he has got a chance to invest in the banking sector as well, wherein he is getting cash flows periodically, which is the cash flow that bank would have otherwise got. So basically, he has entered into the lending business. Diversification is the biggest benefit. Okay. Now, what all doubts the investor will be having in his mind? Imagine you are the investor. Tell me what all doubt you are having in your mind. You are telling, boss, bank is transferring his loan. Could be that it is a bad loan. What if it turns out to be NPA? How do I know? How do I trust the bank? They would have randomly given some loan and they would have transferred, because they knew they're anyways going to transfer and receive money. Yes. So how do I know? How do I believe that the loans are good? How do I believe that I will be getting my money back? That is the first and the foremost fear you will be having. Yes or no, everyone? Think of yourself as an investor. First fear is, okay, boss, I will invest. But what guarantee is there that I will be getting the money properly? What guarantee is there that customer will not default in terms of paying the EMI? Okay, fear is there. For that purpose, what we will do is we will get a credit rating done for the loans. That is, we will go to credit rating agency. You will be knowing credit rating agency like CRISIL, ICRA, etc., is there. So what we will be doing is, yes, the trust will take these loans. Housing loan is there, credit card loan is there. Yes, it will go to the credit rating agency. It will tell, boss, these are the loans. Please make a credit rating and tell how good or bad these loans are. They will rate the loans into different categories. Different categories are there. Triple A means best loan, proper, nothing, no fear at all. Then you have double A, then you have A, triple B, double B, B, etc., etc. It goes on. Is this clear, everyone? Yes, best loan means properly, yes, the customer is paying, proper adequate collateral is there, all those will be getting triple A loans, triple A category. Double A means slightly lower than that. Okay, so for this purpose, what we will do, we will go to credit rating agency. Yes, they will rate the loans as AAA, AA, etc., etc. So we go to credit rating agency, they will rate the loans, and then they will tell boss, don't worry, this is the category. So before investors invest, they themselves will be knowing, okay, yes, which are these loans, and they will make different bundles. Say proper collateral is there, AAA loan is there, 70 crore housing loan. Yes, AA slightly less collateral, 30 crore. So that way they will bifurcate. And obviously, yes, if there is a loan with good collateral, very minimal risk, they will be giving very less return. They're telling, boss, you're not having any risk, so we'll be giving you less return. Yes, there is a security loan wherein there is a slightly high risk. That means to compensate for the high risk, they'll be giving you a higher return. Say, for example, credit card loan is there, there is no collateral at all. Suppose the customer did not pay. Yes, investor has to be taking the risk. So there is a higher risk. So that gives them the highest returns. So that is why they're 25, 28, 30% up to that the interest will be there. Yes or no, everyone. Perfect. So this is the first question. How do we believe your loans? Second question. Okay, boss, you did a credit rating done. Yes, I saw that my loan is a AA or AAA. Still fine. Still, is there still a risk? Yes, it is a good loan only. Good customer only. Still, is there a risk that he will still default? Yes, boss. Now, yes, the second question is, okay, what if the loan holders do not pay? Okay, boss, if in case he defaults, if he doesn't pay, what is it that I need to be doing? Now, understand, students, when the originator, that is the bank, Maja Bank, is transferring the loan to SPV, transfer will happen in one of the two ways. Either it can be a transfer on recourse basis or on non-recourse basis. Sir, we've heard this term somewhere. CA Inter factoring chapter, you would have heard. What is the recourse basis? Recourse is very simple. Bank is telling, boss, I am selling you the assets. Yes, you will receive money. Yes. Investor is asking, what if I don't receive money? Bank is saying, don't worry, come to me, I will give you the money. Basically, investor is having a zero risk here. Either he will receive money from the customer directly, otherwise he will come to the bank, bank will pay him. That is a recourse basis. Non-recourse basis means, yes, we are telling boss, I am transferring the loan to you. Yes, you take care of it. You receive money, great. You don't receive money, it is your risk. Is this clear, everyone? Obviously, if bank is transferring on a recourse basis, bank is taking up that risk of default by the customers. Yes, so for the investor, there is no risk. So the return is going to be low for that. If the transfer is happening on a non-recourse basis, yes, the investor is directly taking up that risk. Risk is higher, accordingly, he'll be getting a higher return. Ultimately, everything will be balanced out in terms of returns. Yes or no, everyone? Perfect. So if transfer is happening on a recourse basis means, yes, the loan will be transferred back to the originator. Who is the originator? Bank. He is the person who originated the securitization process. He started the securitization process. It will be transferred back to the bank. So bank will take care of it. So tell me, for the investor, is there any risk? There is no risk at all. No fear. But if the transfer is happening on a non-recourse basis, that is, bank is telling, boss, I am transferring you the loan, you take care of it. Customer will pay. You have done a credit rating, he will pay. But if in case he doesn't do, that is the inherent risk, you take care of. Now tell me, investor is afraid. He's telling, boss, in case of non-recourse basis, is there something I can be doing? Yes, boss, you can be doing something. What is it? You can be taking an insurance. Yes or no, everyone? It is called as credit enhancer insurance. So SPV, trust is telling, don't worry, boss. Either transfer will happen on a recourse basis, bank is there. Yes, or even if it happens on a non-recourse basis, don't worry, we will take an insurance and ensure that you are not having any risk. Is this clear, everyone? This is a second fear investor might be having. Third thing, third doubt investor might be having on the back of his mind. Okay, boss, loan is transferred, housing loan as well as credit card loan, you have transferred to the trust. How do we receive money? Because for the customer, think of the customer. Rocky Bhai is there. Rocky Bhai was a customer, he took a loan. Yes, the only thing Rocky Bhai knows is, boss, I have taken a loan from Maja Bank, I have to pay to Maja Bank. But right now, who is the owner of that loan? Is it the Maja Bank? No, boss, it is the trust. So who will take care of the money? Who will receive money? If in case customer doesn't pay, who will take care of all of that? Who will follow up with the customer? All those things. For that purpose, we will be appointing a receiving and paying agent. Yes or no, everyone? Who will collect money from the loan holders? For that purpose, we will be appointing a RPA. RPA means receiving and paying agent. What is his duty? Simple, boss. He will be receiving the money from the loan holders. Loan holders are there who have taken loan. From them, he will be receiving the money. Yes, he has received the money. Now, what he will do? Yes, he will distribute the money to all the investors. Simple job. Yes or no? Now, generally, who are going to be the RPAs, receiving paying agent? Generally, bank only will be RPA because bank is having the infrastructure already. Bank will only receive the money. Yes, they'll be receiving a small percentage fees on that. They will transfer the money to the SPV, through that to the investors. Or else we can be appointing a third party also. Yes or no, everyone? Is this clear? All different phases we have understood. Yes, now try understanding, my dear students. Pay attention. Yes, securitization, a pictorial representation of this, as well as the detailed understand. Once this is done, yes, complete crux of the chapter is in your hands. So pay attention, everyone. Last 2-3 minutes. Now, properly using a pictorial representation, I've understood, and steps till now, whatever we have discussed, in short, we have kept it here. Now, look at this. We are having different parties here. First is Maja Bank. Yes or no? It is also called as the originator, because Maja Bank is a party which is originating the securitization. They did not have money. That is why they wanted to sell the loans and receive money. So they originated the securitization process. Okay. Then who are coming? Loan holders, people who were in need of funds. Loan holders are there. Yes or no? Rocky Bai was there. Other people who have taken loan, housing loan, car loan, etc., etc., etc. Okay. Then who came? The trust came, special purpose vehicle came. Yes or no? Yes, we transferred the loans to the special purpose vehicle. Now, what did special purpose vehicle do? It issued securities and raised money from the investors. Yes or no, everyone? Investors were having a fear. What if they don't receive? What is a credit rating? For that, additional two people came to reduce the risk. Credit rating agency came, CRISIL. They rated the securities AAA, AA, etc. Credit enhancer insurance company came. Yes or no, everyone? Okay, fine. Now, once this is done, tell me, to receive the money, who did we appoint? We appointed a receiving and paying agent, bodyguard. Yes or no? Who will go collect money? If the loan holder is not paying, he will smash his head and collect money and come back. Yes or no? Gunda he is. Yes or no? We are having receiving, paying agent also. And then we are having the structure. Tell me, who is the person who structured this entire transaction in our story? Yes, investment banker was there. Rajni, there is a nothing. Rajni can't. Yes or no? Investment banker is there. He is telling, okay, this is how the entire process will work. Yes, you create a separate trust. This is a process you should be doing. This is the steps you should be following. Yes or no, everyone? So try understanding the entire crux of this quickly in 2 minutes. Yes, first step. Yes, bank has given multiple loan to different people, housing loan, car loan, etc., etc. Now they are not having cash. That is the first thing written here. Look at this. Maja Bank has granted loan to many borrowers. Borrowers are called as obligers. Borrowers are called as obligers. People who are having an obligation to pay. They are having an obligation to repay the loan to the bank. Yes or no, everyone? Perfect. Yes, its funds are locked in long-term loans. We have given loans, so my funds are blocked in long-term loans. So it needs immediate cash. So what is it deciding? Yes, Maja Bank is deciding to sell a pool of existing loan receivable to raise fund. We decided we will sell a pool of loans. Category, some loans we will sell. What are loans in our example? Housing loan as well as credit card loan. First one. Okay. Now, second transaction, what is happening? For that purpose, we are creating an SPV. Yes or no, everyone? Maja Banks forms a separate entity called Maja Trust, which is an SPV, special purpose vehicle. The identified loan pool is transferred to SPV. Yes or no? We have transferred housing loan as well as credit card loan to SPV. Yes, Maja Trust raises money from the investors and passes the cash to the Maja Bank. Yes, what will trust to do? Yes, it will issue securities, raise money from the investors. That money, 120 crore, it will transfer it to Maja Bank. Yes or no, everyone? Okay. Then comes third, investors. What are investors going to do? Yes, Maja Trust will convert the loan pool into marketable securities. It has received total 120 crore of loan. It will unbundle, break them into different categories and break it into marketable securities, securities which people are actually willing to buy. Yes, different category of securities can be either PTC, pass-through certificate, pay-through security, or stripped security, and issues them to investors. It will issue to investors. What will investors do? Investors will be paying cash to Maja Trust. Yes or no, everyone? Which is transferred to Maja Bank. Yes, investors will pay cash to Maja Trust. Maja Trust will transfer it back to Maja Bank. Fourth one, to improve the investor confidence and pricing. Yes or no? Investors are having a fear. What if they don't pay? For that purpose, we do a credit rating. Yes or no? We go to credit rating agency. Credit enhancer insurance also we will be doing. Yes or no, everyone? Yes, enhancer insurance company provides protection against default. Okay. Then we appoint a receiving and paying agent. Why? To receive money from the loan holders, obligers. Yes, what is the duty? Yes, loan holders are there periodically. EMI they should be paying. Yes, they will collect money from them, transfer it to the trust. What will trust do? It will pay to the investors. Yes or no, everyone? Yes. Then we are having a structurer, which is the investment banker. In our example, Rajnikant. Yes, who will design and manage the entire securitization process. Is this clear, everyone? Till here, things are clear. Give me a confirmation. Yes, we'll take a break of 1 minute. Let this sink in. Then we'll take our discussion forward, my dear students. Yes, everyone. So let us continue our discussion. So with this, the major chunk of discussion, that is understanding what is securitization, is over. Now, trust me, 95% people will not be knowing what exactly is securitization. Now, one more additional practical insight, just giving you guys 1 minute of gyan, not important from the examination perspective. Now, all of you would have heard about the 2008 financial crisis, Lehman Brothers. Now, that financial crisis is somewhere linked to the concept of securitization. What exactly is it? Quickly, in 1 to 2 minutes, I will try telling you guys. Okay, this is the quick summary that I've taken. Quickly, in 1 to 2 minutes, not much, you guys can do your research by yourselves. Now, what has happened? Somewhere 2006-7, there was a housing boom. So what used to happen is every banking company would give a loan to the customer. Build a house. Imagine you're a person in US, you want to build a house. So yes, bank would give a loan to the customer. Yes, take build house. Collateral anyways would be the property. Now what bank would be doing is, bank will not be receiving money from the customer. They will transfer it through the securitization process. Third party investor will be buying those securitization. He will be receiving the money. So for the bank did not have any tension at all. They're telling, yes, collateral is there, collateral is less, collateral is more. It did not care at all. They just went on issuing loans after loans after loans. And it was a housing boom. Everyone wanted to purchase loan. So many customers are coming. Bank went on giving loans. Why? Bank did not have fear of recovery. They are anyways transferring it to the securitization, through the securitization to the investor. Okay, perfect. Now investor is purchasing. Now the structure of the loan was so complicated that credit rating agencies could not actually identify and understand how much risk was there. Now, Lehman Brothers was one of the investment banking firms. It is one of the oldest investment banking firms. It had purchased a lot of securitization instruments. So all these, yes, instruments which bank was selling, Lehman Brothers, yes, they are one of the investment banking firm. They had purchased so many of those securitization instruments. Okay, 2008 came. What happened? Yes, there was a global financial crisis. People are not having money. They are not in a position to repay the loans. Yes or no? So they're telling, boss, I will not repay the banking loan. You do one thing, you take away my home. Yes, when they're taking away the home, the value of the loan, the value of the home is much lesser than the value of the loan that they had. Because of that, yes, for the people who have invested, say for example, loan value is 100, but the value of the collateral is 50 rupees only. So tell me, for the investor, he was expected that 100 rupees he will receive, but he is receiving 50 only. So he is having a lot of loss. Yes or no, everyone? So what happened? Yes, so many of these issues complicated, compounded, and then yes, Lehman Brothers investment banking firm, they filed for bankruptcy. Yes, the government, US government did not help them. So throughout, yes, this issue got complicated. Okay, yes, now, yes, I am not telling securitization is the reason for the 2008 financial crisis, but one of the factors which complicated, amplified, was this securitization, wherein bank, they had this thing on the back of their mind that anyways, boss, whatever loan we will give to customers, no problem at all, because we are anyways selling it through securitization. So they did not have adequate checks. They did not try putting in extra efforts to see whether customer is actually in a position to repay or not. They went on issuing loans, thinking that anyways collateral is there. But boss, when the financial crisis came, nobody is having money. The value of the collateral came down. Nobody is willing to purchase the property. Value of collateral is less. Yes, people are not willing to pay money also. So the people who have invested in that, they are not getting back their money. Okay. In short, I've kept all these things here. You guys can check it, or else you can put to Chat GPT, Gemini. Yes, it will also give you a idea of how exactly these two things are linked. Additional practical insight is, if you want, you can see it. Anyways, not important for examination. Now, from examination perspective, what all will come? Sir, whether this entire process will come? No. So then why did you explain? Because based on this, everything else will follow. First question, trust me, understand how simple it is. Participants in securitization process. So many times question has come for 4 marks. Participants in securitization, we can bifurcate into two. Primary participants, secondary participants. Primary participants are the most important participants. Without them, securitization is not happening at all. Secondary means additional participants. See this and tell me, students, who are the primary participants in securitization? Without that, securitization will not happen. Tell me, first party is going to be the bank. Yes or no? Which is called the originator. They are only the party who is starting the securitization because they want fund. This is the first party, primary participant. Tell me whether bank can raise fund by itself. No, boss. For that purpose, it has to create a SPV, special purpose vehicle. So the second participant is going to be the special purpose vehicle. Tell me from whom SPV will raise money? Investors. So the third party is going to be investors. So three primary participants. Yes, bank, which is called the originator. Then we have the special purpose vehicle. Then we have the investors. See this, how simple it is. Yes, originator, which is the bank, special purpose vehicle, and investors. Yes or no, everyone? Originator is also called as a securitizer. Now understand all the keywords we've highlighted and kept. Tell me, what will bank do? Bank is in need of fund. It will initiate the securitization deal. It will tell, boss, let us start the securitization process. What will bank be doing? It will sell a pool of assets to the SPV. Look at this. It sells a pool of assets to the SPV. Yes. And in return, what it will do? It will receive cash. It will receive the sale proceed cash. See, simple. Through that story, every keyword also we know. We will be selling our pool of assets to SPV. In return, we will be receiving cash. Okay. Now comes SPV. Yes. Why did we form SPV? Only for securitization purpose. So no other purpose at all. For this purpose alone, we have formed. Now, what will SPV do? SPV will receive the pool of assets. Yes or no? Housing loan, bank loan. It will receive the pool of assets. Step number one. Yes. Convert them into marketable securities. Step number two. Yes. Raise cash from the investors. Step number three. Give the cash back to the originator, which is the bank. Step number four. Yes or no, everyone? Yes. Originator will transfer all the rights in the assets to SPV. That is basically SPV will receive the assets. Point number one. SPV will issue securities to the investors. Okay. Raise fund and make an upfront payment to the originator. Yes or no? From that, they'll be making a payment to the originator. See how simple it has become. Everything we know. What will SPV do? Yes, first it will receive asset from the originator. Point number one. Point number two, it will convert them into marketable securities. Point number three, it will issue securities to the investor, raise money from the investor. Point number four, it will repay the money back to the originator. That is a bank. Yes or no, everyone? Okay, fine. Simple. Yes or no, everyone? Third is investors. What are investors going to do? These are the buyers of securitized paper. Yes, these are the people who are buying these securitized paper from the SPV. Okay, fine. Yes, they can be individual or institutional investors. Yes, individual means there will be high net worth individuals or institutional investors, mutual fund, insurance companies, etc. Yes, they will be receiving return in the form of interest and principal. Yes, as per the terms agreed. Yes or no? Why these people are buying? Because, boss, as and when the loan holder, original loan holder, is making payment of EMI, na, that principal as well as the interest we will be receiving. For us, it is an investment opportunity. Investors, three people. Tell me, is there a need for us to buy heart or remember? No, boss, we know. Now comes the secondary participants, additional participants. Tell me who all additional participants we can see here already. Tell me, firstly, I am having my loan holders, obligers. That is basically for bank, Maja Bank. Whoever had taken loan from the Maja Bank, they are the obligers, loan holders. They are also participant to securitization. How? Because periodically investors have purchased the securitized paper from where they will be receiving money from these people only. But tell me, are they main people? No, main are these three people. Yes or no? So they will be forming under the secondary participants. Point number one. Then we have the receiving and paying agent. He will receive money, pay money, all those things. Then we have a credit rating agencies. Then we have credit enhancer. Then we have structurer. Tell me 5 points we have completed. Yes or no, everyone? Look at this, how simple it is. Other parties involved are, first one is obligers. Obligers means loan holder. They have taken loan. Yes, it is the party who owe money to the originator. To the originator, bank, Maja Bank, they are owing money. They have to pay money. Their dues will appear as assets in the balance sheet of originator. Yes, Maja Bank, if you open our balance sheet, whatever amount they have to pay for us, it will be asset. Simple cost. Okay, they just. Then we are having rating agencies, credit rating agency, CRISIL. They will rate the securities, AAA, AA, etc. Yes, they will assess the credit quality of assets and rate them. Yes or no, everyone? Rate the securities. They will tell how good these securitized assets are. Then comes receiving and paying agent. Yes or no? That strong person. What he will be doing? He will receive money from the loan holder, obliger. Yes, pay it ultimately to the investor. Yes or no, everyone? Yes, receiving, paying agent. Yes, other name, they are also called as servicer, administrator. These names sometimes will be important. Yes, receiving and paying agent is also called as servicer. He is servicing the entire thing, administrating. They collect the payment from obligers. and pass it to the SPV, give it to the SPV. What SPV will do? Ultimately pay to the investor. Yes, they will follow up with defaulting obligors. If any loan holder is not paying money, they will follow up with them. Yes, go back, follow up with them. Yes, hit them. Yes, threaten them. Yes or no, everyone. Yes, and initiate legal action if required. Still, they are not paying means take legal action. Yes or no, everyone. Yes, then comes agent or trustee. This point I have not written here. Tell me, students, this entire securitization process is happening. Yes or no? Who is the person who is actually putting the money? Investor. So there should be someone to see, to manage, to ensure that investors' money is safe, investors' interest is protected. Otherwise, this SPV, who has only created SPV, bank has only created SPV, if they do any fraud there, yes or no? So to ensure that investors' interests are maintained, for that purpose, we'll be appointing an agent as well. Yes or no? Who will see that okay, investors are paid payment properly, whatever decisions are taken, they are in the interest of investors, all those things. For that purpose, agent also will be appointed. Agent or trustee, they're appointed to safeguard the interest of investors. Is this clear? Then we are having credit enhancer, insurance company. Yes or no? Yes, they provide additional comfort to investors. They also improve the credit rating. Yes or no, everyone? Yes, credit enhancement can be provided by originator or third party. Yes, credit enhancer insurance may be provided by originator. Originator is only telling, boss, let us transfer on recourse basis. Yes, if he doesn't pay, I will only repay. Yes, originator is only giving credit enhancer. He is only giving that comfort, don't worry. Or else it can be a third party insurance company is giving. Yes or no, everyone. Finally, we are having the structurer. Tell me who is the structurer, students. In our example, we have, yes, Rajnikant. Yes or no, the investment banker who is structuring the entire deal. Yes or no, everyone. Perfect. So look at this. Other name is also called as arranger of deal. He brings together all the parties, designs the securitization process. He ensures that it complies with the legal regulatory requirements. Is this clear, everyone? Now understand one beautiful thing with respect to theory in AFM or any practical paper for us is the only thing that is important is this, the headings. Headings we have written down. Yes, explanation in your own language you can write whatever you want, you can write. Trust me. Yes, you are having marks for this. And here, secondary participants, I have given you 1, 2, 3, 4, 5, 6. Trust me, a question will come for 4 marks. You only need to write 4. That's all. Nothing more is needed. Is this clear, everyone? And only the headings. It doesn't mean that you just write heading and leave. You give the heading, you write some explanation in your own language. Yes, for that keywords also we have put here. But trust me, everything, even without seeing here, you guys now know. Tell me, say for example, originator. He is initiating securitization. Yes or no? What is he doing? He is selling a pool of assets to SPV. Why? Because he wants money. Yes. In exchange of that, he will be receiving money. Simple. SPV, what will SPV do? It will receive assets from originator. Okay. Convert them into marketable security, issue security, receive money from investor, transfer money back to the originator. Yes or no, everyone? This way, in a very simple way, we know exactly how to do it as well. Is this clear, everyone? So let us quickly try closing our eyes. And without seeing, yes, I want you guys to tell me what all are the participants in case of a securitization process. Tell me, students, we have a primary participants, secondary participants, yes or no? Just imagine the story, yes, the character, the pictorial representation, you will get to know. Primary, majorly 3 people I want. First is the originator, bank. Yes, I want you guys to scribble down, yes or no, everyone. Yes, with that, I have the special purpose vehicle. Thirdly, I have the investor. Yes or no, everyone. Now, additional, who all additional is there? Firstly, yes, yes, originator has given loan to whom? Yes, obliger. Yes or no, everyone. Then, yes, in order to improve the confidence, 2 people are coming. One is credit rating agency. Yes, next is credit enhancer, which is the insurance. Yes or no, which gives the additional comfort. Okay, boss. Then to receive money, we have the receiving and paying agent. Yes, then to ensure that the investor's interest is protected, we have the agent. Then there is a person who is structuring the entire securitization process. Structurer. Yes or no, we have done all of this as well. Yes or no, everyone. Still, I will give you guys a crazy mnemonic to remember this also. Participants in case of securitization. Look at this, students. Yes, participants in case of securitization. Our mnemonic is, yes, you guys know iOS. Yes, Apple phone is called as iOS. Yes, iOS has received an Oscar award. Tell me what is the mnemonic, students? iOS has received an Oscar award. Sir, Oscar is given for acting. iOS people are also doing acting only. Every year they'll come up, they'll tell this is the best iPhone ever. Yes, the latest, most upgraded. So many changes are there. No change will be there. Chumma camera position they would have changed. Yes or no, everyone? Yes. So what is going to be our mnemonic? I want all our students to tell. Yes, mnemonics, we will not keep a very simple mnemonic. We will keep a crazy mnemonic, which we will remember, which is a bit different. If you are keeping a mnemonic, the simple rule for mnemonic for us to remember is it should be slightly different, slightly crazy, so that we remember it. Yes or no? If it's a very simple mnemonic, say A, B, C, D, you will not remember it. Yes or no? So it should be slightly different so that we remember it. Yes, what is our mnemonic, students? iOS has received Oscar. iOS has received Oscar. Look at this. iOS is winning Oscar award. Yes, primary participants is iOS. I goes for investor. O goes for originator. Yes, S goes for special purpose vehicle. Yes or no? iOS wins Oscar. O, secondary participants. O stands for obliger. Yes or no? S stands for structurer, investment banker who is structuring the entire deal. Structurer. C, in C, we are having credit rating agency as well as we are having credit enhancer. Yes or no? A is the agent or trustee. And then finally we have R, which is the receiving and paying agent. Simple. So what is a mnemonic, students? Yes, participants in securitization process, a 4-mark question in the examination. Simple mnemonic. iOS wins Oscar. iOS. I stands for investor. O stands for originator, that is a bank. S stands for special purpose vehicle. Wins Oscar. O stands for secondary obliger, loan holder. Yes on S, structural, structuring the entire deal. C stands for credit rating agency as well as credit enhancer. A stands for agent and R stands for receiving and paying agent. Yes or no, everyone? Now look at this, students. Yes, we will come to the question bank also. Look at this in question bank as well. Okay, just a minute. Yes, everyone. So, welcome back after the break, my dear warriors. It is time for us to take the discussion forward. We have understood beautifully the entire process of securitization. Point number one. Point number two, the first question we have tried understanding, which is basically the participants in case of securitization. We've understood it logically. Again, I've given you guys a crazy mnemonic to remember. That is iOS wins Oscar. Primary participants iOS. I stands for investor. O stands for originator, which is the bank. S stands for special purpose vehicle. Wins Oscar. O stands for obliger, which is basically the loan holder. S stands for structurer, investment banker who structures the entire securitization process. C stands for credit rating agency as well as credit enhancer, which is basically the insurance company. A stands for agent. And finally, R stands for receiving and paying agent. Yes or no, everyone? Perfect. We have understood this. Now let us try opening our question bank and see how exactly questions have come from this particular topic. Every point we'll see, respective questions we'll see. Questions are going to be very simple, my dear students. Yes, everyone, look at this. Question number one, it had come in Jan 21 exam for 4 marks. Participants are required for success of securitization. Discuss their roles. We'll have to write down the participants and write down, yes, one line explanation. Now here in the suggested answer, all points are there. We need to write any four. It is sufficient. Next question 1A. Secondary participants play a vital role in strengthening the securitization transactions. Explain. RTP May 25. Secondary participants Oscar, obliger, structurer, credit rating agency as well as credit enhancer, agent as well as receiving paying agent. Obliger, rating agency, receiving paying agent, agent, credit enhancer, structure. Is this clear, everyone? 1B, briefly explain the role of special purpose vehicle. It had come in MTP for 2 marks. We'll explain what exactly SPV is going to do. Yes, it will first receive a pool of assets from the originator. Okay. Yes, unbundle them, issue marketable securities to the investors, raise money from the investors, transfer it back to the originator. Yes or no, that is given here. Perfect, everyone. So questions also then and there we are finishing it off. Yes, everyone. Now let us continue our discussion. Pay attention. One discussion is over. Now comes the second discussion, which is mechanism of securitization, which is basically the securitization steps. Again, very simple, students. We've understood the flow already. Tell me, how will securitization happen? First, there is originator, Maja Bank in our story. What will Maja Bank do? Yes, they will transfer a bundle of assets to the SPV. Yes or no, everyone? Yes. Step number one, we will create a pool of assets. Yes or no, everyone? Yes, we are Maja Bank. We created a pool of assets. So many loans were there. We created a pool. We took housing loan as well as credit card loan. Okay, boss, we took a pool of assets. Then what we did? We transferred to the SPV. Step number two is transfer it to the SPV. Okay, boss, we transferred it to SPV. Now, SPV wants to issue securities and raise money. But investors are having a fear, boss, are these securities good or not? Will we be receiving money or not? For that purpose, what we will do? We will get the credit rating done. CRISIL is there. They will rate the securities. Okay, these are good securities. Triple A, double A, triple B, etc. Step number three, credit rating to the instruments. Yes or no, everyone? Okay, so step number one, we have created pool of assets. Once we created pool of assets, then what we will do? Yes, we will transfer it to SPV. Yes, SPV wants to issue securities, but investors are telling, boss, we are having a fear. For that purpose, what we did, we got a credit rating of instruments. Yes, we've given credit rating to instruments. Any instrument which is having a lower rating, slightly higher risky, we'll be giving them a higher returns. Yes or no? Now what we will do, we will issue the securities. Yes or no? Step number four is sale of securitized papers. That is, we are selling these securitized instruments. Okay, step number four is sale of securitized papers. Yes, these four steps, I will call it as the initial process. That is, in case of securitization, first set of process, these four steps I should be doing. What? Bank will create a pool of assets, bundle which all securities we want to sell, which all loans we want to sell, a pool of assets. What will bank do? It will transfer it to SPV. What will SPV do? SPV will first get a credit rating for the instruments. Then it will sell those securitized papers. Four steps are clear? Yes or no, everyone? Perfect. Now comes the ongoing process. This is just the initial one-time process. Then we are having ongoing process. Now tell me, students. Yes, SPV has issued securities. Investors has paid the money. Yes or no? Now what is needed? Regular administration is needed. Agent has to administer. Okay, boss. Whether people are paying properly, whether the amount is properly transferred to investors, whether investors' protection is being withheld. Yes or no, everyone? Fifth step is going to be administration of assets. Yes or no, everyone? Ongoing process. Administration of assets. Periodically we will administer whether yes money we are receiving or not. Yes or no, whether everything is happening properly. Say for example, one of the obligers, which is the loan holders, defaults. He doesn't make payment. What we will be doing? One of the two things: either recourse to the originator. If transfer has happened on a recourse basis, we will ask the originator, Maja Bank, that boss, it is your customer, he is not making payment, you give us the money. Yes or no, everyone? Recourse to originator. Yes or no? We will administer properly, everything is happening properly or not, whether customer is paying us or not. Customer is paying, great. Customer is not paying, recourse to the originator. We will tell originator, the bank, boss, your customer, he is not paying, you may pay us the money. Yes. Suppose the transfer happened on a non-recourse basis. Tell me, can we go to the originator? No, boss. In that case, what we will be having? We will be having credit enhancer, which is basically an insurance. We will go to insurance company, Macha. Yes, you have given me insurance that he will make payments. He is not making payment. You make me the payment. This is clear. Step number 6. And then finally, we are having step number 7. Yes, whatever money SPV has received, SPV has administered everything. If in case they do not receive, they yes go back to the originator, recourse to the originator. Once they have received the money, what they will do? They will have to repay it to the investors. Yes or no? Final step: repayment of funds. Is this clear? Very simple, students. Repayment of funds. 7 steps. Yes or no, everyone? There is a reason why we spent 1 hour there. Trust me, everything becomes very simple. Now, this one time, if you want, you can see. Otherwise, headings are sufficient for us. We'll have to give an explanation. It is not that we should not, but once we know the story, we can give explanation. Creation of pool of assets. Securitization begins with segregation of assets. They are pooled based on similar type of mortgages: housing loan, credit card loan, etc., etc. Transfer to SPV. Once we have pooled asset, they are transferred to SPV. Yes, how much ever we want, we can write. Then credit rating. Credit rating is done before sale of securitized instrument. Assess the risk of the issuer. How much risk is there? To understand that, credit rating is done. We give it to CRISIL, they will give us the ratings. Okay. Then comes the sale of securitized paper. SPV designs instruments based on the interest, risk, etc. They will bifurcate into different categories. We are done. Housing loan 100 crore was there with the proper collateral, without proper collateral. Credit card loan, everything we bifurcated. Yes or no, everyone? Yes, the instruments issued may be PTC, PTS, or stripped securities. We will understand that also. Then comes administration. Yes, we'll have to collect properly principal and interest. Okay. Then comes a recourse. Yes, in case of default, receivables go back to the originator. If it is happening on a non-recourse, we will be having insurance company. Okay. Final step is going to be repayment of funds. Yes, SPV, whatever fund it has received, it will repay to the investor in the form of interest and principal. Is this clear, everyone? Question number 2. Yes, if question asks, what are the mechanism for securitization or steps for securitization? 7 steps. Tell me, students, how are we going to remember? Simple. Initial process, 4 steps. Ongoing, always will keep on doing it, 3 steps. Yes, let us try doing it together. Yes, I want you guys also in your mind to do it together. First, what is the originator doing? They will create a pool of assets. Okay, so step number 1 is creation of pool of assets. Once we have created a pool of assets, what will we do? Transfer to SPV. Yes or no? We transfer to SPV. Now, SPV wants to issue securities. Can they do it directly? No. First, they have to get a credit rating. Step number 3 is going to be credit rating for instruments. Yes, once they have got the credit rating, now what they will do? Sale of securitized papers. Yes or no, everyone? This is the initial one-time process. One time I need to do. Once I've done this, now ongoing throughout, what SPV needs to do? SPV has to administer the process. Yes or no, administration of assets. Yes, we are administering the process. We are receiving money, great. In case we are not receiving money, what we need to do? Recourse to the originator. Hello, originator, Macha, you make the payment. He is not making paying me money. Yes or no, everyone? Recourse to originator. Yes, and then finally we are having the final steps. Okay, boss. Once we have received the money, SPV has received the money. What it has to do? Repayment. Is this clear, everyone? 7-step process. I hope it is clear. Yes or no, everyone? Okay, fine. Yes. Here I've kept a separate space called as mnemonic time. Yes, here I want you guys to be writing it this way. Initial process is 4, ongoing process is 3. Let's pause and write it down, students. Now let us have a look at the question bank. Look at this. Question number 2. Briefly explain the steps in securitization mechanism. It has come in MTP. It has come in exam for 4 marks. Look at this. 1, 2, 3, 4, 5, 6, 7. Now, 7 steps that the institute has written, it is in a slightly haphazard way. We have broken it down properly in a logical structured way, but it is a same 7 steps. Creation of pool of asset, transfer to SPV, credit rating, sale of securitized paper, administration, recourse, repayment of funds. Is this clear, everyone? Okay, fine. Now, this question has come 2 times in the examination. Second point is also over. Now, we are proceeding further to the third point, giving you guys a minute to let this sink in. Then we'll take the discussion forward, my dear students. Yes, everyone. Now let us go ahead to the third point, which is benefits of securitization. Now, this is a small chapter. Every area which is there has been tested in the examination. That is why everything becomes important to us. Now comes the next point, which is benefits from securitization. What are the benefits for securitization? Let us try understanding, students, two different people's perspective. One, there is the originator. One more, there is the investor. You will only tell me. Tell me for the investor, firstly, let me try doing it. Pay attention. Investor. Tell me who are the investors. Tell me originator was Maja Bank. They were in need of funds. Yes, they created a SPV, special purpose vehicle Maja Trust. From that, yes, securities were issued to the investors. Imagine you guys are the investors. Why do you want to purchase securitized paper? First and the most important thing is diversification benefit. Right now, you as an investor, you have purchased equity shares of a company. You've invested in crypto. You've invested in commodities, say gold, etc., etc. But boss, now you're getting an opportunity to diversify. Yes or no, everyone? Point number 1, the biggest benefit is diversification of risk. In that also, what is happening? Understand, students. Imagine, is there a risk? Say, for example, yes, there is a loan. Bank has issued a loan to a customer. Imagine this is a person for whom bank has issued a loan. Is there a risk that this party will default? Yes, boss, there is a risk. He may not pay, yes or no. But when bank is transferring asset, is it transferring only a single loan or is it transferring a pool of asset? Pool of asset, housing loan, say 1,000 different housing loan we have transferred. 1,000 housing loan we had, the complete pool we have transferred. 1,000 different housing loan is there. Yes, individual customer may default, but overall 1,000 people are there. So can it happen that all 1,000 people will default? No. So the risk gets minimized because of diversification. We've learned in portfolio, same concept it is telling. Look at this. It gives diversification of portfolio resulting in reduction of risk. Okay. And anyways, we have told we would have otherwise invested in equity, commodities, yes, crypto, etc., real estate. One additional form we will get through which diversification happens. Next thing is protection against default. We are getting a protection against default. Say, yes, you are the investor, you are investing, you are telling boss, what if the customer doesn't pay? Loan holder doesn't pay. Maja Bank, I am telling boss, if in case he doesn't pay, I will pay you. Transfer happened on a recourse basis. Tell me, as an investor, are you having a fear? No, you're not. Suppose transfer happened on a non-recourse basis. Still, SPV would have gone for credit enhancer insurance. So even if the customer doesn't pay, the insurance company will reimburse. Yes or no, everyone? Second, protection against a default. In case of recourse arrangement, originator will compensate. Yes, additional protection through insurance is also available. In case of non-recourse, insurance company will be paying. This is going to be the second benefit. Yes or no, everyone? Now comes a third benefit, which is the regulatory requirement. Now understand who all will invest, who all will purchase these securitized paper. Suppose Maja Bank is there. We have created a Maja Trust SPV. Through these instruments we are issuing, who all will buy? Firstly, mutual fund company will buy. Diversification. Insurance company will be buying. Yes or no, everyone? Then some PF company will be buying. Okay. HNIs will be buying. Okay. With that, other banks will also be buying. Oh. Other bank will also purchase these securities. Sir, why sir bank are purchasing? They have no other work in the world. Understand regulatory requirement. Now RBI would have put some norms on the banks. Suppose RBI is telling that if you are giving a total loan of 100 rupees, now at least 5% of the loan should be given in rural areas. Imagine this is a condition. RBI is telling boss 100 rupee loan you are putting means at least 5% of the loan should be in rural areas. Okay, great, crazy. Imagine we are HDFC Bank. HDFC Bank is not operating in any of the rural areas. Now, I come from a very big village called Uppinangadi. It's a small village. Okay, it's a rural area. Yes, here you don't have private banks. Why? They're telling boss, customers do not locate in rural areas. We want in urban areas. People are having a higher spending power. But tell me, RBI's condition is telling at least 5% of your loan should be for rural areas. Tell me whether HDFC can comply with this condition. No. Now, either one option is they set up a complete bank in a rural area, or else option number 2. Suppose there is another bank in a rural area, say for example SBI. SBI is there in every rural area. Yes, they are having their securitized papers. Yes, they are selling. Yes, full of assets. Whatever rural loans are there, they transfer it through an SPV. What HDFC will do, instead of setting up a branch in rural area, opening a branch, incurring all the cost, giving a loan, instead of doing all that headache, simple boss. Yes, SBI has anyways given a loan. I will just buy that loan. So in my bank, in my books, yes, I will be having that record. Yes or no, everyone? So regulatory requirement. Sometimes bank, in order to meet the regulatory requirement, also will be investing in securitization. Is this clear, everyone? Look at this. Investment in asset-backed securities of specific sectors help bank to comply with the norms of RBI. Is this clear, everyone? 3 advantages for the investor. Diversification is there. Protection against default is there. Next is sometimes it will help us to meet the regulatory requirement. Now from the perspective of originator. Who is originator? Maja Bank. Tell me what are the benefits for Maja Bank? Firstly, off balance sheet financing. Yes or no, everyone? Yes, we wanted to raise funds. We have raised funds also, but without showing debt in the books. Yes or no, everyone? It is called as off balance sheet. Yes, we have raised money, but without adding extra debts in the books. In our books, debt previously was 50 crore, our first example. Now also is 50 crore only. Why? What we did? We sold some assets and raised money. Yes or no, everyone? Yes. First point, off balance sheet financing. releases a portion of capital which is tied up and improves the liquidity position. Okay, point number one is done, done, done. Yes, second point is more specialization in the main business. Tell me, what is the main business of bank? Is to give loans, receive deposit. Yes or no? Once we have given the loan, whether party is paying or not, all that is subsequent. So what some banks decide is, boss, we will give loan to customer. 10% is interest, we will be receiving 10% interest. What we will do is, we will sell these, yes, loans through a special purpose vehicle to the investors. We will appoint a receiving paying agent. He will collect the money. If, yes, payment is not being done, he will take care of it. He will run behind. He will file complaint. We will transfer it on non-recourse basis so that we need not worry about collection of money. Some banks do this as well. Yes or no? What banks are telling, boss, our primary business is lend money, yes, receive money. We will focus on that. Once we have given money, whether customer is paying or not, if customer is not paying, running behind customer, mortgaging his assets, recovering the money from him, filing a complaint, all those headache, who will do? We will do one thing. We will transfer it to SPV. From that, they will take care of it. We will focus on the main business. Yes or no? That is also a advantage, which is specialization in the main business. Is this clear? First one is off balance sheet financing. Second one is specialization in the main business. Third advantage for the bank, boss, our ratios will be improved. Yes or no, everyone? Previously, I told you guys that, say, RBI has put up a condition, simple fictional condition. I've told that debt should not exceed 50%. So we had already raised 50% debt. It was not possible to raise more debt. If I raise more debt, debt percentage will increase. So that means overall risk appetite seems to be high. Yes, investors will not be having confidence. Yes, it is exceeding the RBI norms. Yes, but now we have raised the fund, but we have not increased the debt portion. So our ratios have improved. Yes or no, everyone? Help us to improve financial ratios. Helps us in better management of capital to risk weighted asset ratio, capital to risk adequacy ratio. Yes or no? Simple, helps us to improve our ratios, because in our books now we are not showing extra debt. Yes, we have received cash, but we are not showing extra debt. Because of that, my ratios will improve. Simple story. Imagine original position, yes, equity was 50, debt was 50. Tell me, debt was how much percentage? 50%. Imagine I wanted to raise 100 crore extra. Imagine I issued a debt of 100 crore. So now debt becomes how much? 50 was already there, 100 I've issued, 150. So now tell me, debt is how much percent? 150 out of 200, 75%. Debt is too high, yes or no? But now if you go for securitization, what will happen? My equity will be 50 only, debt will also be 50 only, just that I will sell some assets, through that I will receive a cash of 100. Yes or no, everyone? So my debt ratio is still maintained. It will help us to improve the ratio. Yes or no, everyone? Third benefit. And fourth benefit is reduced borrowing cost. I've told it already. Imagine originator, that is a bank, would have directly gone for additional debt. Yes, what investors are telling, boss, you have already raised some debt. Now you are raising additional debt. There is extra risk. We want extra return. Yes or no, everyone? I've told you already. Yes, two friends are there. One friend is not having any loan. One friend is already having a monthly EMI of 1 lakh. If you are giving a loan to a friend who is already having a monthly EMI of 1 lakh, you will require a higher interest rate. Same, bank is already having a loan. Bank is already having a debt. On that, periodically, already it is paying interest. So if bank only raises extra funds, now investors will ask additional return. They're telling, boss, already you've raised funds. Already you've raised debt. More risk is there. Give us more return. But now you've created a new entity altogether. It is having a separate, its own set of cash flows. It is a separate entity. So for that, investors are investing. Investors are telling, for us separately assets are there, boss. So yes, we will be getting a lower interest rate. Is this clear, everyone? Reduced borrowing. Perfect, everyone. We've understood everything. How do we remember, sir? Reasonably we'll remember. For investor, what all benefit? For investor is investing. Diversification. Yes, he's having protection also. Anything happens, originator is there or insurance company is there. And then regulatory requirement also, it will help us to meet. Yes or no? Now, for the originator, which is a bank, Maja Bank, what is the advantage? Firstly, financing. We will raise money off balance sheet financing. Yes. Then what we have done? Yes, think. Off balance sheet financing. It will help us to improve our ratios, reduce borrowing cost. Yes or no? And one more thing is, it will help us to focus on specialization of core business. Yes or no? Sir, but still, sir, we are remembering reasonably, sir. Something crazy, sir. Okay. Something crazy we have done for you guys. Look at this so that you guys remember. Yes, you guys know these people. Who are these people? Sir, crazy couple, sir. Oh, sir, we also want to be like this. Divani, Divani, Mastani. Come back here. Yes or no? Ranveer Singh, yes or no? And Deepika Padukone, yes or no? Deepika Padukone and Ranveer, whatever it is, yes or no, everyone? Yes, they decided, boss, filmy world is very risky. Yes, today you're getting a film, tomorrow you're not getting a film. Too much risk is there. They decided, boss, we don't want to pursue films further. So then what they decided, sir? They decided, let us do one thing. CA is less risky. They are thinking, they don't know. Yes, sir. Sir, you ask us, sir, how much risk is there, sir? Yes, no morning, no evening, no boyfriend, no girlfriend, hair fall, problem, depression, frustration, attempt. Sir, you ask us, sir. They don't know. Yes or no? They are thinking, CA is chill. So what they decided? Yes, Deepika Padukone and Ranveer Singh decided that, boss, we will do CA. So for that purpose, they have taken an SRO number, student registration number. If you are from South, means you will be having SRO, NRO. So they have taken SRO number because Deepika is from South. From South, they have registered SRO number. Sir, what this story is, sir? Everything I'm saying has meaning. Yes or no, everyone? Look at this. Deepika Padukone and Ranveer, they took SRO number. Benefits for the investors. Deepika Padukone and Ranveer. Deepika Padukone and Ranveer. Investors. Deepika, D for diversification. Yes, Padukone, P for protection. Protection against default. Yes, and Ranveer, R for investors. Regulatory requirement. Bank has to put some money for that they're investing. Yes or no, everyone? Regulatory requirement. Is this clear, everyone? Yes, Deepika Padukone and Ranveer. Yes, it is a benefit for investors. Yes, for originator, they get their SRO number. S for specialization. You try to specialize in your main business. Yes or no? R for it is ratio. We will improve our ratios and reduce borrowing cost. Yes or no? Improve the ratios, reduce borrowing cost, and originator, off balance sheet financing. Yes or no, everyone? Off balance sheet financing. Crazy mnemonic, yes or no, everyone? Perfect. Third question is also done, done. Yes, everyone, let us quickly scribble it one more time. Yes, for my satisfaction, one more time. After that, we will not scribble, we will see the chart. In the end, we have one page chart. Trust me, in 2 minutes, we will revise the entire chart. Trust me on that. Okay, people who are watching it on YouTube, you're coming, you're watching, you're not liking, you're not sharing, you're not commenting. It's a point now. Yes, we have decided to put it on YouTube, boss. You'll have to share it to your friends. Tell crazy theory discussion is there. Crazy. Yes, we're having crazy practical chapters discussion also. Please do have a look at that as well. Tell me what is the advantage? Deepika Padukone and Ranveer. Yes, they decided to do CA, so that is why they got their SRO number. D for diversification. E for protection against default. R for regulatory requirement. Yes or no? They decided to get their SRO number for the originator. S for specialization in the main business. R for improve the ratios. Yes, reduce borrowing cost. Yes, O for it is a source for off balance sheet finance. Yes or no, everyone? Perfect. Yes, here we are having the charts. Don't worry, in the end, using the chart also, we are going to revise it. Okay, everyone. Yes, now come to the question bank. Let us quickly have a look at the questions. What all questions can be there? Yes, what are the benefits of securitization? 22 examination, 4 marks. Originator, off balance sheet, specialization. Yes, improve ratios, reduce borrowing cost, investor, diversification, regulatory. This one. Yes, 3A, 4 marks. It has come in MTP also. It is December 25. Yes, identify benefits of securitization from the angle of originator. For originator, SRO, specialization. Yes, R, improve the ratios, reduce borrowing cost. O, off balance sheet financing. Yes or no, everyone? Yes, perfect. This is also done. Yes, everyone, this is clear. Giving you guys a minute to let this sink in. Then we are going ahead to the next point, my dear students. Yes, everyone, let us proceed further to the next question, which is their next topic, which is features of securitization. We have understood participants, then we have understood steps, we have understood benefits. Now we will understand features. Sir, what is this feature, sir? From a time pass, it is. It is a shitty question. Tell me, students, what kind of question it is? It is a shitty question. Sir, what, sir? She, what and all you are telling? There is a reason for everything that I tell. This is going to be our mnemonic. Okay. Now, chumma for time pass sake, they've asked this question. What all is there in securitization? Some 5, 6 points they've given. Look at this, students. First one is bundling and unbundling. Yes or no? In securitization, what all we are doing? Firstly, we are bundling and unbundling. Sir, what is bundling? Maja Bank, they had different loans. In that, they have taken housing loan, credit card loan. They have a bundled and they have transferred to special purpose vehicle. Yes or no? If you, yes, bundling. They're grouping loans. Okay. Now, special purpose vehicle, it received these two loans unbundled. Yes or no? Into separate different segments. Okay. Housing loan with adequate collateral, without adequate collateral. Credit card loan. It has unbundled into different categories of securities. Yes or no, everyone? That is what they have given. Bundling means we are combining multiple yes loans into a single asset pool. Originator, Maja Bank had done it. Unbundling, breaking it into marketable securities. Yes or no? It is called as unbundling, breaking. First feature, yes, boss, we understood. Next is a structured finance. It is a form for raising money in a structured way. Bank wants more money. How do we raise more money? They go for the securitization. It is a route for raising additional fund in a structured way. Yes or no? Securities are tailor-made to match risk return preferences. Hence, these are best examples of structured finance. Yes, we are structuring. And again, when we are issuing also, na, yes, when SPV is issuing to the investors, they will again structure it. Yes, more risky, that is housing loan with proper, yes, collateral, without proper collateral, yes. High lifetime is spending, say 30 years is spending, only 1, 2 years is spending. So they will structure it, break it down into proper structured way. Say, for example, an investor wants to invest, but he wants to receive his money in 5 years. That option will also be available. Investor wants to invest, he is happy getting his money across 30 years. That option is also there. Structured, we are structuring it in different way. Properly. Is this clear, everyone? Yes. Next is homogeneity. Yes, securities issued under each tranche are homogeneous. This is another feature. Tell me, students, SPV had received two different loans. One was housing loan, one is credit card loan. Yes or no? In housing loan, again we bifurcate into two. Yes, with adequate collateral, without adequate collateral. Imagine randomly I'm telling it is 70 crore, 30 crore. Yes, credit card anyways collateral is not there, 20 crore. So this way bifurcated into, say face value is 1 crore means 70 instruments, face value is 1 crore means 30 instruments, face value is 1 crore means 20 instruments. Yes or no, everyone? Now, I have issued housing loan with adequate collateral. Now, all these are homogeneous. Yes or no? All loans coming under this. All these are housing loans also, plus there is sufficient collateral also. So under each trench, we will bifurcate into different trenches. Trenches means different yes, baskets, buckets, group. Yes, we received pool of assets, we bifurcate into different groups. Under every group, every category. Now it could be possible that total, yes, 100 crore is there means, say for example, altogether 1,000 different applications could be there. 1,000 different people are there. But in this bucket, yes, every loan holder who is coming, yes, they are having a homogeneous risk and payment structure. Yes or no, everyone? That is the next point, which is homogeneity. Securities issued under each tranche, each basket, homogeneous in nature. Yes or no, sir? How do we remember? I am there, don't worry. Is this clear, everyone? What all we have discussed? First one, yes, what all we are doing in securitization. Firstly, bundling and unbundling. Next, it is a form for raising money in a structured way, structured finance. Next one, homogeneity. Yes or no? In every, yes, trench, in every basket, in every bundle, whatever securities are there, they are homogeneous. Okay. Next is I. I stands for instruments, creation of financial instruments. We have created extra financial instruments. Tell me, previously for an investor, what all options were there? Yes, he could have invested in equity or debt or say commodities, yes or no, gold, silver, etc., or real estate, or say for example he could have invested in crypto. Now he got extra instruments. Boss, securitized papers are also there. In that also you can be investing. Yes or no? It leads to creation of additional financial instruments. Okay, boss. Next is a T. T stands for tool for risk management. Yes, in case of non-recourse securitization, risk of default is transferred. This is talking from the perspective of originator. I am Maja Bank. Suppose I have given loan to people. Yes, I'm having all these loans, they are lying as assets. I transfer it to SPV and investors buy. And imagine I make this transfer on a non-recourse basis. That means I have transferred. Now you cannot come back to me. You get the money, you get the money. You don't get the money, you go to insurance company. Don't come back to me. Tell me, for me, yes, as a bank, one of the biggest fear is the fear of default by my counterparty, by my customer. That default is completely eliminated. That risk is completely eliminated because yes, I have transferred, yes or no, that completely to the investors. Is this clear? So it is a tool for risk management. So using this, yes, bank can focus on the main activity without worrying about whether the party will make payment or not. That, yes, SPV, special purpose vehicle, the trust will take care of. Is this clear? In case of non-recourse securitization, risk of default is shifted. Is this clear? Last one is T, trenching. Trenching means I am creating a bucket, a basket of, yes, homogeneous similar securities. Portfolio of loan is split into several parts called trenches. Every part is called trenches. Every trench carries a different risk and return. Yes or no, everyone? Tell me, here we have bifurcated into three. Housing loan with adequate collateral, that is one trench. Yes, here risk is less because firstly housing plus collateral is there. Yes or no? Housing without adequate collateral, risk is slightly higher. Collateral is there, but it is not sufficient. So return is also going to be different. Then I'm having credit card. There is no collateral only. So risk is high. Anyways, return is also going to be high. Yes or no? So we are doing trenching. We are bifurcating into different buckets. For every trench, the risk as well as the return is going to be different. Is this clear, everyone? So all features we have understood. Simple only, sir. Understanding is not a big deal. But the question comes, how do we remember? I've told you this is a shitty question, right? So yes, the mnemonic for this is going to be, where is this? Features of securitization. This is a question we had. Features of securitization. The mnemonic is features of securitization. It is a bundled shit question. Any students? It is a bundled shit question. Sir, what you're telling, sir? Chichi, sir. The mnemonic. It is a bundled. You have bundled all the shit questions. It is a bundled shit question. Sir, what you're telling, sir? Bundled shit question. Bundled. First feature is bundling and unbundling. Next, shit. S stands for structured finance. Yes or no? Now, one very important thing I want you guys to have when we are creating mnemonics, the only intention of creating mnemonics is to ensure that we remember. Okay, so I have gone over the way, yes, yes, spent so much time to come up with something which is a bit unique as well as which will help us to remember. Don't tell, sir, what you are telling, sir. Sir, it doesn't make sense, sir. Yes, doesn't make sense, but still we'll have to remember. If you can remember directly, great. If you can't remember, I'm explaining. In the meantime, I'm also giving you some shortcuts using which we can remember. Is it clear, everyone? Okay, fine. So look at this. It is a bundled shit question. Bundling and unbundling shit. S for structured finance. It is a means for raising fund in a structured way. H stands for homogeneity. Yes, we are bifurcating in every tranche. Yes, the securities are homogeneous. I, yes, instruments. We are creating additional financial instruments. Creation of additional, yes, financial instruments. Yes or no? T, we had first one is a trenching. We are bifurcating into different basket. Every trench has a different risk and return appetite. Yes or no? Then the final T is tool for risk management. Yes or no? When the transfer is made on a non-recourse basis, yes, originator's risk is being managed here. Is this clear, everyone? These are the features of securitization. Trust me, this has also come in the examination. Look at this. Question 3 we have seen. Now 3A also we have seen. Now come to question number 4. See how many times it has come in the examination. Yes, RTP May 23, Jan 21 exam for 4 marks, November 22 exam for 4 marks. Yes, the process of securitization can be viewed as a process of creation of additional financial product. Yes, additional financial instruments. Yes, in the market backed by collaterals. What are the other features described? That is one feature they have given, creation of financial instruments. Other features you'll have to tell. Or what are the features of securitization? Look at this. Financial instruments, bundling, unbundling. Yes, all these things. Yes, here what is given, it is exactly institute's wordings. Yes, in our concept notes, it is exactly institute's wordings only. But yes, heading, sometimes I would have given heading, I would have rearranged wordings, I would have made it simpler, better, crisp. Is this clear, everyone? With these features of securitization is over. Tell me, everyone, features of securitization. It is a bundled shit question. Bundled, bundling and unbundling shit. S for structured finance. H for, yes, homogeneity. I for instruments, creation of additional financial instruments, T for trenching, as well as T for tool for risk management. Is this clear? With this is also over. Sir, how many more things are there, sir? One or two more pointers are only there. Yes, one is securitization instruments. What all instruments are there? Next one is going to be problems in securitization in India. With this, securitization as a concept will get over. Then we have tokenization and blockchain. Yes, that's a small concept. Giving you guys a minute to let this sink in, then we'll take the discussion forward, my dear students. Yes, everyone. So whatever we've discussed till now, quickly let us try revising. Pay attention. First, participants in case of securitization. I've told iOS wins Oscar. I for yes, investor. Yes, O for originator, which is the bank. S for special purpose vehicle. Primary participants. Secondary participants. Oscar. O for obliger, loan holder. S for SSS, structurer, investment banker. Yes or no? C for credit rating agency as well as credit enhancer, which is an insurance company. A for agent, R for receiving and paying agent. Yes or no? All points we've understood. Then comes securitization mechanism steps. I've told ongoing, yes, one time, 4 steps, ongoing, 3 steps. One time, what we will be doing is creation of pool of assets we create. Okay, then what we will do? Transfer it to SPV. Okay, what SPV will do? First, it will get credit rating for the instruments. Okay, and then we will sell the securitized paper. 4 steps. Ongoing process is going to be 3. We will administer the assets. Yes, if in case payment is not done, we will go back to the originator, recourse to originator. Once payment is received, repayment of funds, we will be repaying it to the investors. Yes or no? Yes, all these questions, only 4 points are sufficient, but we will try ensuring we remember at least 5. Yes or no, everyone? Yes. Then comes benefits for of securitization. We have told, yes, boss, what is it? Yes, Ranveer and Deepika Padukone. Deepika Padukone and Ranveer, they get SRO number. Yes or no? Yes, Deepika Padukone and Ranveer. For the investor, first one is diversification. Second one, P for protection against default. Yes or no? Next, O for off balance sheet financing. Yes, sorry. Deepika Padukone and Ranveer. Yes, we are doing it for the investor. Ranveer are for regulatory requirement. Yes or no, everyone? Obviously, if you are just remembering the mnemonic, you don't know the concept, it doesn't help. Okay, firstly, you should know the points, then mnemonic will help you remember all the points. If you know at least one, accordingly, you can remember everything. Yes, get SRO number for the originator. What all will happen? Firstly, originator, bank. Okay, Maja Bank. Specialization, S. R. Yes, ratios will be improved. Yes, it help us to get it at a reduced borrowing cost. And O, it is a means to get off balance sheet financing. Yes or no, everyone? Yes. Then we had the next point, features of securitization. Features of securitization. It is a bundled shit question. Tell me, students. At home, you'll have to tell, people have to hear. If you're not repeating, means it will not make sense. It will not go and register in your brain. I'm telling you, yes, crazy thing so that it will register. Bundled shit, bundled, bundling and unbundling shit. S for structured finance, H for homogeneity, I for instruments. We are creating additional financial instruments, T for trenching, and T for tool for risk management. Till here, everything is perfect. Yes or no, everyone? Now let us go ahead further to the next point, which is securitization instruments. It's important. Yes. Yes. We are SPV. We are issuing the instruments to the investor. Investor is paying money. What kind of instruments we can be issuing? Can we issue equity shares? No, boss. Yes, we'll have to be issuing debt instruments, bonds. They can be 3 different types. Either it can be a PTC, which is the pass-through certificate, or a PTS, which is a pay-through security, or stripped security. Sir, nothing we understood, sir. Only one thing, one word we understood, sir. Strip, sir. Don't go there. We will understand. Is this clear, everyone? First, let us try understanding PTC as well as PTS. Pass through certificate, pay through security. First, we will try reading. We will not understand. Then I'll give you a story. Then everything will make sense. Pass through certificate. Originator transfers the entire cash flow, principal and interest from the securitized assets to the investors. Investors will have a direct claim on proportionate interest in the asset pool. Any prepayment is also immediately passed on. Yes, securities terminate simultaneously on the final payment. Pay through security, SPV issues debt securities backed by assets, which allows a structuring. Yes, cash flow from the assets and servicing are desynchronized. Surplus cash due to early repayment is reinvested for short-term yield. Sir, nothing we understood. I told you, you will not understand anything. But I told you it is my duty to ensure that I teach you guys. Yes, understand, understand, understand. Very simple. Here we have a Maja Bank, which is the originator. Yes, we transferred assets to the Maja Trust, which is the SPV. Here we have investors who are buying. Here we have obligers. That is a loan holders, yes or no, everyone? Yes, we had our loan holder. Yes, Rocky Bhai from KGF. Yes or no, everyone? Perfect. Now understand what is happening. Maja Trust is issuing security. Okay, boss, issuing security. When we are issuing security, investor will give money. Yes or no? You are the investor, you have paid money. Why are you paying money? Chumma, because you have a lot of money? No. Yes, you are purchasing an asset because you will keep on getting cash flow from the asset. Yes or no? How you will be getting cash flow? Because this is against a loan. In a loan, what all cash flow you will be getting? Principal, interest. So you will also be getting the principal as well as interest cash flow. Okay. How will you be getting? Three different types can be there. First is a pass-through certificate, which is basically a passing. Tell me, in a loan, who will make the payment? Obliger, loan holder. In our example, Rocky Bhai will make the payment. Now, pass through certificate. Pass. Yes, what Maja Trust will do, whatever Rocky Bhai will pay, directly it will pass to the investor. Rocky Bhai has paid 100, it will pass 100. Rocky Bhai has paid 500, it will pass 500. Rocky Bhai has paid 1000, it will pass 1000. Is this clear? Pass through. Directly it is pass through. Is this clear? Pay through security. Yes, whatever Rocky Bhai is paying and whatever we are paying here, it need not be same. Means we will structure and plan it in such a way. Sometimes it could be possible one of the loan holders did not pay. Yes, in that case, I will not be paying less. I will ensure I manage my money in such a way that every month you get the same amount. That is pay through security. We'll give you guys a very simple example. Look at this, students. Yes, imagine, go back to your good old days when you guys were kids. Sir, crazy days they were, sir. Yes, sir, chumma we wanted to grow up, sir. And we wanted to become CA, sir. Now we are realizing, sir, how problematic a life it is, sir. Childhood was best days. Yes, you've gone to school. Yes, evening you are in first standard, second standard. Evening you have come back home. Yes, the moment you have come back home, the first question, the biggest question for you is, sir, mom, what do we have for snacks? Mom would have prepared something for snacks. You eat that, then you play. Yes, you study a bit, you sleep peacefully. Sir, crazy life it was. The only burden in life was our school bag. Yes or no, everyone? Okay. Now understand, evening we are waiting for snacks. Now imagine, simple story I'm telling. Dad is bringing the snacks. One of the two ways it can happen. Either option number one is daily dad is bringing snacks. Yes. So dad brought the snacks today. It's what mom is doing. Dad has brought the snacks, all the snacks. Yes, mom is distributing. Three kids are there. Mom is distributing to all the three kids. Now, how it can happen? First one is a pass through. That is whatever dad is bringing, now mom is directly distributing. Today, whatever dad brought, assume dad brought two sweets, yes, mixture, chips, yes, whatever it is. Everything mom is giving to eat. Today itself you eat. Don't save anything for tomorrow. Why? Tomorrow dad will again bring. Yes. Today, whatever, yes, dad has brought, mom is just transferring, passing it to you. You eat as much as you want to eat today itself. Yes. Do you have to keep anything for tomorrow? No. Why? Tomorrow again dad will bring. Next day again dad will bring more food items, more snack items. Again you eat. One day dad brought more snacks. You eat more. One day dad brought less snacks. You eat less. One day dad did not bring snacks at all. You do not eat. Why? Because you have not saved anything. Yes or no, everyone? That is my pass through certificate. Yes, whatever dad has brought, mom is just passing on to you. Dad has brought more, mom is passing on more. Dad has brought less, mom is giving you less. That did not bring, you do not. That is one option. Or else one more option is pay through security, wherein what is happening is dad will together bring 1 week's snacks and give it to mom. Dad has brought 1 week snack, dad has given it to mom. Now what mom will do? Mom will not pass on everything to you. Mom will plan properly. Yes or no, everyone? Yes, you would have seen this at your home. Yes, Monday, one packet of biscuit. Ah, only one packet. No, inside you're not supposed to touch that. And you guys know, mom is having so many hiding spots. Yes, you will think afterwards, once mom will go outside, I will have. You will try searching, you will not get it at all. Yes or no, everyone? Crazy things. Yes, childhood memories. Yes or no, everyone? Yes, what is happening? Pay through. Yes, mom has received, mom has stored. Daily she is giving you. Yes, Monday, one packet of biscuit. Tuesday, one packet of chips. Wednesday, one packet of sweets. Thursday, something else. Yes, she will schedule it in such a way that every day you will get the food. Yes, every day will you get more, less? No. Every day you will get more or less equally only. Yes or no? This is my pay through security. Whatever we are receiving, we will plan in such a way that investors will get same money throughout. That is my pay through security. Is this clear, everyone? Give me a confirmation. Crazy example for us to give a connect. Yes or no, everyone? Okay. One more story I'm telling you. Yes, imagine there is a building with 4 flats. Okay, and there is a water system. Now, Suppose option number one is there is just a pipeline, that is basically water tanker will come, whatever water the tanker is bringing through the pipe, it will go for 4 houses. Suppose the day one water tanker has come, these houses will receive water. Yes, they do not come, they do not receive water. Yes, they come, they bring more water, they stay there for a longer time, they will receive more water. Yes or no? What is this? This is the first thing, pass through certificate. Whatever we are receiving, it is just passed. Or pay through security means what we will do? Yes, there is an overhead tanker. Simple story. Yes, whatever water tanker will come, first it will go to the overhead tanker. It will store and daily assume they are telling that daily 100 liter water we will distribute to each of the houses. Yes or no, everyone? Suppose water tanker has come, great. It has not come, we would have saved it. From that, we will be distributing. Now you would have got an idea regarding what it means. Pass through certificate. Yes, the SPV is just passing on. Look at this simple story, students. Yes, we are having obligers, Rocky Bhai, yes, who has taken the loan. We are having Maja Trust, that is a special purpose vehicle. We are having the investors. Simple, pass through certificate. Whatever loan holder has given, we are passing on to the investor. Say for example, first month. Yes, loan holder, Rocky Bhai has paid, imagine monthly EMI is 10,000, Rocky Bhai paid 10,000, it will transfer 10,000 to investor. Second month, imagine Rocky Bhai had extra money, he told, yes, 10,000 you take. With that, 20,000 extra money I am having. Take this prepayment. He is prepaying his loan. Yes, pay this. Tell me how much money. Yes, the trust has received 30,000. Pass through whatever we have received, we will transfer. 30,000 will transfer to the investor. Third month, imagine. Yes, Rocky Bhai was having a very difficult time. Yes, KGF, it is not making money at all. He is not in a position to pay. So he is telling boss, third month, I am not paying any EMI at all. Tell me, we did not receive any EMI at all. Will we transfer anything to the investor? No, boss, we are transferring zero to the investor. Is this clear, everyone? This is pass-through certificate. Whatever we are receiving, we are transferring it to the investor. Or pay through security. Here, what is happening? We are planning and periodically, properly, we are transferring it to the investor. Look at the students. Loan of 10 lakh, EMI is 10,000. Yes, pass through certificate, pay through security. Okay. Yes. Pass through certificate means whatever is received, we are transferring it to the investor. Pay through security, what is received and what is transferred is desynchronized, de-linked. Suppose 10,000 I received, not necessary 10,000 only I should be transferring. I will plan and ensure that periodically same amount I transfer it. Is this clear, everyone? Imagine we have decided to transfer 10,000 every month. Imagine first month, yes, from Rocky Bhai, we received 10,000 rupees EMI. What is passed to telling boss, whatever I receive, I transfer. We transfer 10,000. Second month, we receive EMI as well as prepayment of 25,000. So total 25,000 we received, 10,000 is EMI, 15,000 prepayment. Yes, what pass through is doing? Yes, pass through. We are passing whatever we receive, we transfer to the investor. Imagine third month. Yes, Rocky Bhai is having so much financial difficulty, he did not pay EMI at all. Yes, he did not pay EMI. EMI is zero. What passed to his link boss? I did not receive anything. So I'm transferring zero. Is this clear, everyone? Now comes pay through security. Here, what we are telling, every month we will transfer 10,000. If we receive more than 10,000, now what we will do? Does it mean that we will eat that money? No. We will invest that money and keep. Sir, why are you investing? Yes, Trust is telling, boss, we are investing and keeping so that in future, if any customer will default, at that time we will repay that. Is this clear, everyone? This is more smarter. Every month 10,000, 10,000 will be it. Yes or no? First month we received 10,000, we will transfer 10,000. Second month we received 25,000. Yes, what pay through security? What trust will do? Trust will transfer 10,000 only. Yes, and balance 15,000 we will invest in short-term securities. Is this clear, everyone? Yes or no? Yes, perfect. Third month, we did not receive EMI at all. Why? He's telling last month I paid extra now, or I'm not having money. Yes, in case of past two, we will not be paying anything, but paid through, we have planned properly. Yes or no? Previously, whatever 15,000 extra was there, that we have invested. This month, now I have to pay 10,000. So still, I will be transferring 10,000. Yes, detailed mechanism is not important, not necessary for us, but still a gist of what these two instruments are is going to be important for us. Is this clear, everyone? Perfect. Yes, now look at this. This is what we have to know. Now, whatever is important, I have written some more notes here. Whatever is important, look at this. Pass through certificate. Originator transfers entire cash flow to the investors. Yes or no, everyone? We transfer the entire cash flow to the investors. Okay. Yes, the investors are having a direct claim on the proportionate interest. Yes or no? In the asset pool. Investors are having a direct claim. Say, for example, SPV has collected 1 lakh. Yes, I am an investor. Yes, I have purchased 10 percentage securities. Total 10, yes, securities were there. I purchased one. That means 10 percentage of that I can receive. I am having a direct claim. Whatever trust has received, 10 percentage I should be receiving. Pass through. I should be receiving. I have a direct claim on that. Yes or no, everyone? Yes. Any prepayment of principal is immediately passed on. Yes. Investor has made some prepayment, extra payment he has made. Yes. Whether trust will hold anything? No. Immediately it is passed on. Yes or no, everyone? Yes. Early prepayment may cause skewness of cash flows. Yes. In case of early payment, there can be skewness. Say, for example, every month 10,000 we should be receiving. But 1 month we received 25,000. So in that case, what will happen? This is normal case, 10,000. Yes, in 1 month we receive 25,000, 10,000, 25,000. Fourth month we receive 0. So there can be skewness in the cash flows. Is this clear? Not very important. It's first 3 points also, if you remember, it is sufficient. Firstly, entire cash flow we are transferring, point number 1. So point number 2, investor is having a proportionate interest. Point number 3, in case of prepayment, that is also transferred. This is a pass-through certificate. We are passing whatever we are receiving. Is this clear? Next is a pay-through security. Here we'll have to just remember one point. Cash flow from the assets and servicing of securities is desynchronized. Yes, whatever cash flow I received from the assets, that is from the obligors, loan holder, from Rocky Bhai, whatever I receive and whatever I give to investor, it is desynchronized. It is not the same. Yes, I received 25,000, not necessarily full 25,000 I should be transferring. I am transferring 10,000 only. Yes or no? It is a desynchronized. Point number 1. Point number 2, surplus cash on early repayment is reinvested. Yes, early repayment customer has made. Yes or no? Yes, in that whatever extra cash was there, that I will be reinvesting. So that in future, if in case money is short, that time we will be paying that. Is this clear, everyone? Two things are clear. Yes, pass through certificate as well as pay through security. Yes or no? Now we have the third one, which is stripped security. Giving you guys a minute to let this sink in. Then we'll take the discussion forward, students. Yes, everyone, we have the next security, which is the stripped security. Sir, what is this, sir? Stripped security means, sir, whether the security is stripping us, sir. Yes, sir, what, sir? Shantam Bapa, what and all you are telling, sir. Understand. It's beautiful discussion it is going to be. Now, understand here itself in this pictorial representation, you guys see this. Okay. Yes, we are having the special purpose vehicle, Maja Trust. We are having the investors. Yes, from whom Maja Trust is going to receive money periodically. Friend, from the investors, they are receiving money. Investors are paying money. Why? Periodically they will be getting cash. From where? Boss, we are having loan. From that customer will be making payment. Yes or no? Imagine obliger is making payment. Rocky Bhai is there. Yes, he is a loan holder. Every month he is paying an EMI of 10,000. Yes or no, everyone? Now tell me, when we are making payment of EMI, there are two different items which are there. One is the principal which is being repaid. One more is the interest which is being repaid. Yes or no? Every month, if 10,000 is the EMI, how much is the principal, how much is the interest? That calculation will be there. Yes or no, everyone? First interest will be there, balance will be principal will reduce, all those things we know. Yes, in stripped securities, what we are doing, the securities that we are issuing now, we are stripping them into two. We are stripping them into the principal only securities, interest only securities. That is, we are giving the option to the investors. Imagine you are the investor. We are giving you the option. Yes, two securities is there. One is the principal only security. One is the interest only security. If you want, you can purchase the principal only. In that you will only be receiving the principal. If you want, you can purchase the interest only. In that you will only be receiving the interest. If you want both, you can purchase. Yes or no. So extra option we are giving to the investor. Now, how will it impact? How will it help the investor for decision making? Simple, students, understand practically how things will work. Imagine, say, you took a loan of, say, 100 lakh, basically 1 crore at 10 percentage. Is this clear, everyone? Imagine the EMI, random number I'm giving. Yes, 100 lakh means 10 lakh it will be. Yes, EMI yearly is 20 lakh. Yes or no, everyone? Okay. Imagine the first month. Tell me, 100 lakh is your loan amount. 10 percentage is the interest. So tell me how much is the interest? 10 lakh. Yes or no? How much EMI you are paying? 20 lakh. That means tell me, yes, first month, how much interest you paid? This is interest only. Interest 10 lakh you paid. Yes or no, everyone? Principal, how much you paid? Say, imagine EMI is 15 lakh. Principal also 10 lakh you paid. After that, yes, your principal balance 100 lakh minus say 5 lakh. It becomes 95 lakh. Simple point is initially interest will be high. Then slowly principal value will keep on reducing. So interest value keeps on reducing. So my interest only cash flow will look something like this. From high, it will keep on reducing, or else this way I can show. Yes or no, everyone? Yes. Principal payment, principal payment. Initially, there is a big loan amount. So whatever you are paying majorly goes for interest only. So principal is very less, which is being repaid. But slowly, value of loan reduces. So interest is less. So whatever EMI is paid, yes, principal is going to be high. Yes or no, everyone? Perfect. So in this case, what will happen? Principal is going to be high. Yes, this is how the cash flow will be in case of interest only and principal only. In case of interest only, upfront high cash flow will get, slowly less cash flow will get. In case of principal only, initially small cash flows will be there, subsequently more cash flows will be getting. Sir, what is the point, sir? Explain, sir. Imagine you are a young person who is in your 20s. You want to invest right now. Is this clear? You are in your 20s. You've started earning. You want to invest your money so that after you reach 30, 40, 50, you can keep on getting additional source of income. Now you can purchase the principal only strip. Why? Now you will get some money, but now you will be getting small money. Slowly, as and when the time crosses, yes, you will start reaching 30, 40, 50, 60. That time, the amount you start receiving keeps on increases. Yes or no, everyone? This is beneficial for you. You are planning for your retirement. That time you should be getting money. Yes or no, everyone? Okay. Imagine as against that, there is a person who is already in his 80s. He's already in his 80s. He is completely retired. He is thinking, boss, I have some 5, 10 years of life with me right now. I want to invest in a security which will give me high amount now. Subsequently, even if I get less amount, also it is fine. Is this clear? Yes, there could be people. In that case, you can purchase an interest only strip. Right now, upfront you are receiving more money, then subsequently you'll keep on receiving lesser money. Yes or no? Depending on what is the requirement of the investor, we can accordingly plan. That is a stripped security. Yes or no, everyone? Perfect. So let us have a look at the concept book. Look at this. Cash flow from the securities are split into two different securities. First is interest only security. Yes, here they will be receiving interest only. Principal only securities, they will be receiving principal. Is this clear, everyone? These securities are highly volatile because if the interest rate changes, accordingly these values will also change. And the prices will be depending on the interest rate movements and the prepayment behavior, making them less preferred by investors. These are less preferred by investors because they are highly volatile. Is this clear, everyone? Now, one more thing we should be knowing, my dear students, pay attention. This one we have understood. Now, how is valuation, pricing of these strips done? Look at this, students. Simple example. Maja Bank has issued a 10,000 rupee loan at a floating interest rate for 3 years. The floating interest rate is 8%. Yes, assume we are repaying the entire principal at the end of third year. Imagine I am Maja Bank. Rocky Bhai had come to me. He told, I want 10,000 loan. I told, okay, I will give you a 10,000 loan at floating rate. Sir, what is floating rate? Interest rate risk management basics. Fixed rate, floating rate. Floating rate, whatever is the rate prevail. I gave him a loan at floating rate. Imagine today's floating rate is 8%. So I gave him a loan at 8%. I told, if my floating rate changes, accordingly interest will change. Okay. He told, yes, every year interest I will repay and the entire principal of 10,000 I will repay at the end of third year. Imagine, in real life, in case of loans, yes, we will keep on paying EMI wherein principal plus interest both are paid. But imagine, for understanding one simple point, we told, okay, tell me how my cash flows are going to look. Yes, first year I will receive 8% interest, 800. Second year also I will receive 8% interest, 800. Third year also I will receive 8% interest, 800. At the end of third year, principal 10,000 I will be receiving. Yes or no, everyone? Perfect. What is value of asset? Present value of future cash flows. If I discount it, I will arrive at the value of the asset. Yes or no? Tell me what is the discounting rate? 8%. Tell me now there are two cash flows. One is interest. Every year 800, 800, 800 is interest. One is principal. Third year 10,000 is a principal. If I discount interest only, I will arrive at the present value of interest. That is the value of the interest only security, interest only strip. Tell me 800, 800, 800. Discount it at 8% for 3 years. Yes or no? You will arrive at the value of interest only strip as 2062. 1 divided by 1.08 equal MRC into 800. Yes. Yes. 10,000 you are receiving in the third year. Bring it to present value. Divided by 1.08 to the power 3. You will arrive at the value of principal only strip, which is going to be 7,938. Yes or no, everyone? Perfect. Now, there are two different investors. Investor A, he has purchased interest only strip. Tell me how much he is paying today for that. 2062 he is paying. Yes or no? What all he will be receiving? 800, 800, 800 he will be receiving. Yes or no? There is investor B. He has purchased principal only strip. Tell me how much he is paying. 7,938 he is paying today. Yes, how much he will be receiving at the end of third year? 10,000 he will be receiving. Yes or no, everyone? Perfect. Now, what is going to be the expectation of these people? Understand, important it is going to be. Yes, nobody will tell you the students. But trust me, recent, yes, there has been an RTP and an MTP question wherein this was being asked in a case scenario question for 10 marks. Trust me on this. Okay. Interest only strip, when a person is purchasing, he is expecting that the interest rate should rise. Sir, why, sir? Yes. We have given a loan to Rocky Bhai at floating rate. Yes or no, everyone? Perfect. Imagine you are the investor, you have purchased interest only strip. So what you will be receiving? Interest you will be receiving. Tell me, if the interest is 8%, you will be receiving 800, 800, 800. Imagine the interest becomes 10%. So how much you will be receiving? 1000, 1000, 1000 you'll be receiving. Yes or no, everyone? Tell me, interest rate increases. Yes, my interest only stripe value will increase, security value will increase. Yes or no, everyone? So a person who is purchasing interest only security, what is his expectation? His expectation, he is praying that, boss, yes, let the interest rate increase. Because if the interest rate increases means I will be receiving higher interest. Yes, I will be receiving more cash flow. Yes, that is the expectation. Is this clear, everyone? Principal only is going to be reverse of that. He is praying that, yes, let the interest rate fall. Yes, why is he expecting that let the, yes, interest rate fall? Because say the interest rate has increased. Today he has paid 7,938. He knows at the end of third year he'll be getting 10,000 only. Yes. This is giving him 8 percentage. Yes or no? Imagine the interest rate becomes 10 percentage. Yes. Tell me, that means he would have invested a lower amount to receive 10,000. Yes or no? Simple. I am telling, first year end I am getting 100 rupees. If I invest 95 rupees today, how much return I'm getting? 5 rupees only, close to 5 percentage approximately. But if I put 90 rupees only, how much return I'm getting? 10 percentage return I'm getting. Yes or no, everyone? Simple. Yes. So investor B, he has purchased principal only strip. He is expecting that interest rate should fall, because if interest rate falls means, yes, this value will, yes, reduce. So accordingly he'll be getting a benefit. One more example I'll give you to understand this, because it has come. Yes, look at this. This is going to be the relationship we should know. If interest rate increases, interest only strip, interest only strip, they will go in the same direction. Interest only strip value will increase. Yes, principal only strip value will decrease. Is this clear, everyone? Yes, I will prove it to you guys. Yes, simple. Now at 8 percentage, what is the value I have seen? Yes or no, everyone? Perfect. Now imagine tomorrow, today itself, yes, Rocky Bhai has taken a loan. Tomorrow interest rate changes and the floating interest rate becomes 10%. So we'll tell Rocky Bhai, you have taken a loan of 10,000 at floating rate. Today the loan rate is 10%, so you should be paying 10%. So accordingly, tell me how much Rocky Bhai will be paying. First year 1,000 interest, second year 1,000 interest, third year 1,000 interest, at the end of third year 10,000 principal. Yes or no? Now if I bring it to present value, tell me what is the rate of interest prevailing today? 10%. So I will discount at 10%. Yes, 1,000 at 10%, bring it to present value. Tell me what is the value? 1 divided by 1.1 equal. Yes, do a grand total. Yes, into 1,000. Yes, calculation of present value. I need not tell again here. Yes, you will get 2,487. Yes or no, everyone? Yes, principal, third year end 10,000 principal I'm getting. Yes, bring it to 0th period present value. Yes, divided by 1.1 to the power 3. How much you are getting? 7,513 rupees. Yes or no, everyone? Now look at this. At 8%, interest only value is 2062, principal only is 7,938. At 10%, interest only is 2487, principal only is 751. Tell me, when the interest rate increases, What happens to interest only scrip from 2062 to 2487? Interest only scrip increases. What happens to principal only scrip? Principal's value from 7,900 to 7,500. Principal only value decreases. Yes or no, everyone? Now, it is just a theoretical point. Just one line is given in the study material. Trust me, no one will be explaining that as well. Still, I've spent so much time to explain this. I hope you would have understood. Otherwise, simple relationship we should be knowing. Interest rate, interest only, same direction. Interest rate increases, interest only increases. Principal only is going to be opposite direction. Interest rate increases, principal only decreases. Is this clear, everyone? So let us write this also and keep it. If interest rate increases, interest only security increases, principal only security decreases. Is this clear, everyone? Yes or no? This is going to be the stripped securities. Is this clear? So with this, yes, different types of securitization instruments also we have discussed. First is pass through certificate. Whatever we receive, we will pass it on to the investors. Pay through securities. The receipt of money and the payment of money is desynchronized. Yes or no, everyone? Next is the stripped securities. We are bifurcating the securities into principal only security, interest only security. Principal only will be receiving principal only, interest only will be receiving interest only. If interest rate increases, interest only increases, and principal only will be decreasing. Is this clear, everyone? Yes or no? Give me a confirmation, students. Okay. Now, if this is clear, now let us come to this question bank. Yes. Features we had seen question number 4. Yes or no, everyone? Now, question number 5. Distinguish between pass-through certificate and pay-through security. Same. You need not distinguish. You just need to write what is PTC, what is PTS. Yes or no, everyone? Next, again, May 23, 4 marks. Pay-through securities are in the nature of participation certificates that enable investor to take a direct exposure. Tell me whether pay-through securities give you direct exposure. No, they will plan, they will desynchronize. Yes or no, everyone? Yes. Not agreed with the statement. Accordingly, they have told what is PTC, what is PTS. Okay. Securities are created by dividing the cash flows associated into two or more securities. Cash flow I am bifurcating into two: principal, interest. What is it? It is a stripped security. RTP it has come, principal only, interest only. Yes, accordingly, this has come. Yes or no, everyone? Perfect. Yes. Now, this is also over. If this is over, now we have one more question. It is a case scenario based question. Yes, using this, I think we should be in a position to do it. Yes, boss. Yes, it has come in RTP. Yes, two times it has come in RTP, and I guess in MTP also it had come. Yes, I guess it is missed to put MTP. I guess December 25 also it had come. Is this clear? Good likelihood that it can come in your examination as well. Quickly, let us try seeing the question. Pay attention, students. Growmore Limited, an NBFC, is in need of funds. Tell me, Growmore Limited is in need of funds. Okay, crazy. Yes, and hence it sold its receivable to Mac Financial Corporation for 100 million. Okay, MFC created a trust for this purpose called the General Investment Trust, through which it issued securities carrying different level of risk and return to the investors. Further, this structure also permits GIT to reinvest surplus fund for short term as per the requirement. Okay, I'm just reading, we'll come to it, don't worry. MFC also appointed a third party, Safeguard Private Limited, to collect the payment due from the obliger and passes it to GIT. Will also follow up with the defaulting obliger and if required, initiate proposals. Yes, legal action. Okay. Securitization instrument issued falls under the category of PTC, PTS, stripped or debt fund. Who is the originator? Yes, General Investment Trust is what? Safeguard Private Limited is what? Yes, which of the following statement is okay? Fine. So let us try doing a pictorial representation of what this story is trying to tell. Pay attention, students. Simple. Yes, Growmore Limited is an NBFC, is in need of funds. So it sold its receivables to Mac Financial Corporation. Yes or no, everyone? Perfect. So there is okay. Growmore NBFC, Growmore Limited NBFC, sold receivable. To whom it sold its receivable to? Mac Financial Corporation. Okay, now what is happening further? Yes, MFC, Mac Financial Corporation, it created a trust for this purpose called the General Investment Trust. It created a trust called the General Investment Trust. Yes or no, everyone? Okay, fine. Through which securities are issued. Okay, further structure permits GIT to reinvest surplus funds. Reinvest surplus funds for short term as per the requirement. This sentence itself is telling that, boss, yes, as and when GIT will issue to the investors. Yes or no? Here there are loan holders, which are basically obligors. Yes or no? To collect money from the obligors, who is appointed? MFC also appointed a third party called Safeguard Private Limited to collect payment. Safeguard Private Limited to collect the payment. Is this clear? This is how the story is going to look like. Now, pay attention, students. Just a minute. Okay, pay attention, everyone. Yes. Growmore Limited NBFC is in need of funds. It sold its receivable to Mac Financial Corporation. What Growmore did? Growmore just sold its loans to Mac Financial Corporation. Growmore received money. It went back home. Growmore's story is over. Now, who started the securitization process? Mac started the securitization process. Yes or no, everyone? Perfect. What Mac did? Mac has created the trust. Yes or no, everyone? Tell me, who is the originator for securitization? Mac is the originator for the securitization process. Yes or no, everyone? Perfect. Yes, they were in need, but did they start the securitization? No, they just sold the receivable. Yes or no? They were in need of funds. There was another party. They were telling, okay, you're having your loan, give it to me. They just sold and they went off. Yes or no? They're not doing anything else. Who started the securitization process? Mac Financial Corporation, they started the securitization process. Yes, Mac, they created a trust. Yes, they issued securities. They raised money. They appointed a third party. All these things, who did? Mac did. So, who is the originator? Who started the securitization? Mac started the securitization. Is this clear, everyone? Okay, first. Now, tell me what kind of securities Mac has issued. Yes, this structure also permits GIT, which is a trust, to reinvest surplus funds for short term. Yes, if I get surplus fund, extra money, if I get, I can reinvest. That means the kind of securities I'm issuing, it is a PTS, pay through security. If it was a pass through certificate, means whatever I receive, even if it is extra, I should have transferred it. Pay through means if I get extra, I will reinvest. Yes or no, everyone? So first one, security issued is going to be a PTS. Yes or no, everyone? Option number B, it is going to be. Next, in the above scenario, who is the originator? Yes, Mac Financial Corporation is starting the securitization process. So they are going to be the originator. Again, option number B, it is going to be. Yes, Chumma, to confuse you guys, one more story is given here. Yes, they have directly sold the receivable. They did not do securitization. They just sold the receivable. I'm having an asset. I don't want the asset. I just sold the asset. My story is over. So the other party started the securitization process. Okay, that is also done. Now, general investment trust. It is, what is general investment trust? It is a special purpose vehicle. Yes or no, everyone? Special purpose vehicle should be option number C. Okay, in the above scenario, Safeguard Private Limited. Yes, Safeguard Private Limited. Who is Safeguard Private Limited? Receiving and paying agent. Yes or no, everyone? Yes, it is a receiving and paying agent. Option number 4D. Yes, which of the following statement holds true? Yes, this is just about the relationship between interest rate and interest only, principal only. Tell me, if interest rate increases, interest only will increase, principal only will decrease. Yes or no, everyone? Tell me, if YTM increases, interest increases, principal only increase. Is it true? No, boss, it is false. If YTM increases, principal only falls. Yes, interest increases, principal only falls. B is true. I need not even see C and D. B is true. Still I can see. Yes, if YTM falls, yes, obviously principal only should rise. Principal only fall. This is again false. Yes, YTM falls, interest falls. Principal only remains the same. This is also false. So this should be option number B. Yes or no, everyone? Now let us try seeing the answers. This is DB, DB, CDB. Yes or no, everyone? CDB. 10 marks. Case scenario question. It has come 2 times in RTP, 1 time in MTP. Good likelihood it can come in your examination as well. This also we have done properly, students. Now, only if you logically understand, we will be in a position to do it. Trust me, yes, once it comes in the examination, students will be like, sir, from where this question has come? Because it was coming in your RTP as well as MTP. Yes, you should have given enough stress to the theory chapters as well. Is this clear, everyone? Till here, things are clear. But all the students who have purchased our classes or are referring our revisions on YouTube, you guys will be scoring 10 marks. Yes or no? So put on the comment section. Crazy maja is coming. Yes or no, everyone? Giving you guys a minute. Then after that, we have the final point. With that, securitization concept will be over, my dear students. Yes, everyone. So we have one final point in terms of securitization, which is problems in securitization in India. Sir, you told securitization is a great way, everything is great, sir. Then, sir, why, sir, till date we have not heard of securitization only? It is because securitization is famous in American countries as well as European countries. It is not that famous in India. Sir, why, sir, it is not famous in India? Yes, there is a reason. What all problems securitization as a concept is facing from the Indian perspective? That is what we have. The final point, the sixth point, which is problems in securitization in India. What all are the problems? Okay, yes, following are the main problems faced in growth of securitization, especially in Indian context. Why securitization could not be a big success in India? Yes, some 5 to 6 points are there. Let us try understanding them. First one is inadequate debt market. We all know that in India we have a good equity market. Yes, equity shares you want to buy and sell. NSE is there, BSE is there. Yes, active buying and selling is there. So many people are buying, selling shares. Yes or no? But similarly, for debt market, it is not there. Imagine you are an investor. You purchased securitized paper. HDFC was selling or Maja Bank was selling. You purchased that securitized paper. Okay, you purchased, you invested, say for example, you purchased a security at 10 lakh rupees. After 1 year, you want to sell. Yes, in order for a trade to happen, there should be a proper market wherein buying and selling is happening. Yes or no, everyone? For debt, there is no market. You'd have heard equity market. People who are investing in equity, so much investing, they are investing in equity. You're having NSE, BSE, you're having different trading platforms. Zerodha is there, Upstocks is there, Grow is there, Motilal Oswal is there, etc. etc. For debt, what is there? Yes, India doesn't have a debt market at all. So, because there is no debt market, that is why investors are not buying and selling. There are not much people who are buying and selling. So, when a person is buying, he is thinking, boss, if I cannot sell only, what is the point? So, that is why securitization is not that famous in India. Is this clear, everyone? Yes or no? Obviously, whenever you are buying, you will think of selling. Subsequently, if there is no seller, there is no market to sell at all, you will be afraid of buying. Yes or no, everyone? That is the first point. Look at this inadequate debt market. Debt market is inadequate. India lacks overall well-developed debt market, which restricts the growth of secondary market for securitization. Okay, you purchased, then you want to sell. There is no market only, so it becomes difficult to sell. Is this clear, everyone? First point. Yes, there is inadequate debt market. Don't worry, we will remember. Second thing is ineffective foreclosure loss, law related problem. Tell me, yes, securitized papers are there. Okay. Trust is there, Maja trust is there. Yes or no? You are the investor, you purchased. Say there is a loan holder, Rocky Bhai has defaulted payment. He does not make payment. Now, what we need to do? Yes, we will ask him to make payment. He's telling, I don't have money, I will not make payment. Boss, we'll be having assets, we will confiscate the assets. Yes or no, everyone? But understand, it is not that simple to confiscate the assets. He's telling, boss, I thought that we'll be having a good business. Now we are not having a good business. Because of that, I cannot make payment. I'm not telling that I will not pay. I will pay, but boss, right now I'm not in a position to pay. Please give me some more time. Court will tell, please give him some more. He will tell, this is the only home that I'm having. If you take this home, if you confiscate this home, where will I stay? I'm having 2, 3 kids. They will become orphans. They do not have a place to stay. So please do not take this home. So, yes, in books it is very beautiful that boss, you are having assets, you can confiscate those assets, accordingly you will receive money. But in reality, it is not that simple. Because, yes, if in case you will have to take over the mortgaged assets, you will have to go to the court. Firstly, court process is lengthy. Secondly, yes, the obliger, the loan holder, he will be having some genuine serious problem because of which he is not paying. In that case, court will favor the obliger only. Court will tell boss, give him some more time. Yes or no? So recovering money is not that simple. Yes, laws are not that stringent, not that easily prone to the investor. Yes, the law doesn't say that investor has put so much money. Law will see that, okay, boss, person has taken a loan, he is not in a position to pay right now. Yes or no? And people like Vijay Mallya will, yes, take the loan, fly. Yes or no, everyone? This is what is given. Yes, weak foreclosure laws make recovery difficult for the lending institution. This reduces the attractiveness. Yes, boss. When we are telling, we are promising that, okay, boss, customer will pay the loan. If he doesn't pay the loan, we are having mortgage. You can sell the mortgage, receive money. But boss, selling the mortgage property is not that easy. You'll have to go through the court, and court most of the times will be in the favor of the loan holder only, because they'll be having their personal assets, personal properties, home, etc. as a mortgage. Yes or no? So it is not that easy to sell it. Secondly, they'll have to sell your home. You'll have to wait for a long time. All those procedures, everything will have to be done. That is the second problem why securitization is not that famous in India. In India, laws are not there properly, yes, to help securitization. But in American countries, proper laws are there for it. Okay, second is law. Third one is going to be accounting. How exactly accounting should be done? Say, for example, we are Maja Bank. Yes, we transferred a loan of 120 crore to Maja Trust. Yes or no? Housing loan as well as credit card loan. So from my book, should I remove or not? In case of non-recourse, what should I do? In case of recourse, what I should do? Yes, revenue recognition, Ind AS 115, how it will apply? All those things are still not very clear. There is no proper guidance which is given. Is this clear, everyone? Accounting and reporting of securitized assets in the book of originator is a concern. Bank, should I remove from my books? Should I still keep it? In case of non-recourse, in case of recourse. In case of non-recourse means anyways it is transferred, risk and reward is transferred. Okay, you remove from your books. In case of recourse means what is it you should be doing? There is still no proper guidance. That is again another problem. Is this clear, everyone? Next one comes stamp duty. Stamp duty on transfer of mortgage debt in India as per Transfer of Property Act is very high, which goes as up to 12% in some states, which will hamper securitization. Yes. Stamp duty, whenever you are transferring properties, now stamp duty will come into picture. Here, Maja Bank is there. Maja Bank is transferring the loan to the trust. Yes or no? There is a transfer happening. So stamp duty will come. Yes, the states as well as the central, they'll be collecting the duty. Yes, sometimes the stamp duty will be very high as 12%. Imagine if the stamp duty is 12%. Tell me, yes, suppose 100 rupee loan is there. How much is the stamp duty? 12% means 12 rupees the stamp duty. Imagine the rate of interest is 10%. That is, by transferring it to the special purpose vehicle, from that to the investors, they will only be getting from this entire securitization 10 rupee income. 12 rupee government, Nirmala Tai will only come and take and go as stamp duty. What will these investors get? Yes, because of high stamp duty, majorly, yes, people are afraid to enter into securitization transactions. This is another big challenge. Is this clear, everyone? We are telling, boss, we are transferring the assets to the trust. When we are transferring, stamp duty will come into play. Stamp duty in some states are very high as 12%. So whatever profit investors will be getting, that much more than that, stamp duty only they'll have to be paying. So nobody is interested. Is this clear, everyone? Next is the lack of standardization. Every originator follow its own documentation and administration process. HDFC Bank, SBI Bank, HSBC Bank, yes, Canara Bank. Every originator who is transferring to SPV, they are following their own steps, their own procedure. So there is no standardization. So when an investor has to compare, investor is telling, okay, boss, I want to purchase a securitized instrument. Imagine PTS. From whom should I buy? Should I buy from HDFC, SBI? From whom? From which company I should be buying? It is not standardized. Because of that, decision making is difficult for the investor. That is again one more problem. All these are the problems. And the final thing is a taxation. Yes, in whose hands it will be taxed? Say, for example, income, interest. Say securitization is over. Yes, we have transferred the assets to the trust. Yes, now from there, yes, trust will be receiving the interest. It will be transferring to the investor. Yes, will the interest ultimately, loan holder has paid EMI. Yes, loan holder has paid 10,000 EMI. In that, imagine 1,000 rupees is the interest. In whose hands this 1,000 rupee interest will be charged? Will it be charged in the hands of the originator because he was the person who has originally given loan? Or will it be charged in the hands of the trust because right now trust is receiving? Or will it be charged in the hands of final investor because ultimately he is receiving the money? Clarity is not there in the law. Income Tax Act has still not given clarity. Because of that, yes, whatever treatment you do, yes, income tax officials will come, they'll tell, this is wrong, you should have paid. Imagine we charge it in the hands of trust. Income tax officials will come and tell, originator, you should have charged it in your hands. Yes, pay extra. So banks are thinking, why nonsense, unnecessary, we should get into this. We will not do this at all. Is this clear? These are the problems which are there in India for securitization. Yes or no, students? What all problems are there? First, debt market is ineffective in India. Next is law. Yes, ineffective foreclosure laws are not there properly. Next is accounting problem is there. Yes, next is a tax related problems is there. Next is a standardization is not there. Next is stamp duty is very high. Reasonably we have understood. Yes or no? Now if you have to remember more, means remember your CA final papers. Accounts related problem is there. Yes, AFM, debt market is not strong. Yes or no? Then you're having law related problem is there. Then you're having taxation related problems are there. So this way you can be remembering 3 to 4 points. Then you're having stamp duty and lack of standardization. This way also you can be remembering. Or else, don't worry, I have a small story for you guys to remember this as well. Crazy? Yes, pay attention. Give me a minute if you want. Yes, everyone. So we have understood the problems with the securitization in India. Understanding part we have done already. Yes or no? 6 pointers we have discussed. What all are the 6 pointers? Point number one, debt market. Debt market is inadequate in India. Buying and selling in debt doesn't happen. Point number one. Point number two, yes, laws. Yes, inadequate foreclosure laws. Laws are not proper. Yes, in case of recovery, we have to go to the court. It is a lengthy process. Okay. Point number three, accounting. Accounting is still not clear. Point number four, stamp duty is very high as 12%. Point number five is standardization. There is a lack of standardization. Every originator is accounting differently. Point number six, taxation. Taxation rules are still not clear. Yes or no, everyone? Yes, one more time. Problems with the securitization in India. We have discussed 6 different problems. Problem number one is debt market is still ineffective, inadequate in India. Problem number two is loss. There are ineffective foreclosure laws. Problem number three is with accounting. Accounting is still not clear. Problem number four, stamp duty is very high as 12%. Problem number five, standardization. There is still lack of standardization. Problem number six is taxation. So we have understood this. Now comes the important question. Sir, whether questions like this come in exam? Yes, dear. For 4 marks, it has come multiple times. Sir, that means we have to remember. Yes, dear, we'll have to remember. Sir, how do we remember, sir? We are not remembering it at all. Don't worry, I am there. A crazy story I've created for you guys. Is this clear? Are we ready for the crazy story? It is going to be a crazy story. 18 plus story. It is going to be crazy. It is top secret, only between you and me. You're not supposed to tell anyone. Promise? Crazy it is. Okay, now some things I tell just to ensure that you guys remember. So the only intention is to remember. Is this clear, everyone? Now imagine. There are two girls. Okay, one girl is going through a breakup. Breakup is a phase every person in life has to go through once. Yes, at one point you would have told, my boyfriend is the best boyfriend in the world. Yes, if it wishes me good morning, feels as though my entire day has brightened. He listens to each and everything that I tell. Yes, his day brightens up when I wish him good morning. He's the best boyfriend I could ever have. From that phase, no, yes, he's the worst decision I ever took in my life. There is that phase, that journey which every girl will be having. Even a boy will also be having a phase of breakup, yes or no, everyone? So there is a phase of breakup, but understand there is a difference. Yes, in case of breakup, yes, in case of boys, now, yes, his friends doesn't know how to treat him, what should be told. They'll tell, Macha, don't cry, it'll be okay. That's all. But girls, they listen to him, her. Yes, they'll conceal her. They'll tell, oh, you deserve a better, you deserve a better boyfriend. You do one thing, you come out of this. You're a princess. So many things girls will tell, yes or no. So, yes, girl was going through a breakup. So her friend is asking her, yes, you told you are having the best boyfriend in the world. Then why did you guys break up? Okay, you told you are having the best boyfriend in the world. Then why did you guys break up? So she is replying, pay attention, everyone, very important. Yes, she is replying, yes, he is a very nice guy. Yes, he is kind-hearted person. He listens to me. He takes care of me like a princess. Everything is fine. His parents are also loving. But there is one small problem. She is asking, what is the problem? Yes, the girl tells, yes, there is one small problem. Yes, the problem with my boyfriend is his D doesn't last. What is it? What is it? What is it? His D doesn't last. Uh, uh, uh. What you guys are thinking da? Shantam Papam. Don't think something nonsense. D means dil. In Hindi, yes, dil means heart. His dil doesn't last. He might be having some heart related problems. What double meaning and all you are thinking? Shantam Papam. Yes or no, everyone? Tell me, what is the problem? Yes, she tells. Yes, he is a nice, kind hearted gentleman of a person. But there is one problem with him. Yes, the problem with my boyfriend is his D doesn't last. D means dil. Don't think anything else. Yes or no, everyone? This gives us the mnemonic to remember. Yes, problems for securitization in India. Yes, D stands for, look at this here we are having already. D stands for debt market. There is inadequate debt market. Last L stands for, yes, loss. There is ineffective foreclosure loss. A stands for accounting. Yes, there is no still clarity in terms of accounting. S stands for stamp duty. Stamp duty is high and standardization is not there. And T stands for taxation. Taxation is still a problem. Yes or no, everyone? Yes, even though you may feel, sir, what is this, sir? Nonsense, sir. 18 plus, sir. Still, you have remembered. If it comes in the examination where everyone else is thinking what to write, will you be in a position to write? That's all that I want. Is this clear, everyone? Tell me the problem with my boyfriend is his D doesn't last. D means will. Yes or no, everyone? D is debt market is inadequate in India. Yes, L law. There is ineffective foreclosure loss. A. There is a problem in accounting. S. There is stamp duty is high and there is no standardization. And T. There is a problem with respect to taxation. Yes or no, everyone? These are the problems of securitization in India. With this, phase number one, securitization is done. Let us have a look at the question bank. Pay attention, everyone. Yes, multiple times it has come in the examination. November 19, 4 marks. July 21, 4 marks. November 23, 4 marks. What are the problems for securitization in India? Problems for securitization in India. Yes, lack of well-developed debt market is a problem. List down other problems. Yes or no, everyone? Yes, we know how to write. Yes, the problem with my boyfriend is his D doesn't last. Yes or no? D for debt market is inadequate. Yes or no, everyone? Where is it? Yes, other points are there. Yes, debt market is inadequate. Yes, LAST. Yes, law ineffective foreclosure loss. A for accounting. S for stamp duty as well as standardization. T for taxation. Is this clear, everyone? Yes or no? With this, phase number one, securitization is done. Done. Giving you guys a minute to let this sink in. Then we'll go to phase number two, which is a small phase, which is blockchain and tokenization. Yes, everyone, let us proceed further. So we have told the entire chapter of securitization we will learn in three phases. First is going to be securitization, done and dusted. Second phase is blockchain and tokenization. Small phase, three questions only are there. Third is additional points. Those are not yet tested in the examination and are less important, but still we have put it in our concept notes. Quickly, we'll just revise it, read it one time. Okay. Yes, everyone. Now we are going ahead to the second phase, which is blockchain and tokenization. Blockchain is a buzzing word. You would have heard it once. You will be having a small idea of it as well. Now, here my intention is to give you guys a quick glimpse of the concept of blockchain. I will not be explaining in much detail. Trust me, hours and hours and hours and hours and hours we can discuss. Still, the concept discussion will be less only. Quickly to give you guys a gist and to ensure that we attempt questions in the examination is going to be our duty. Okay, it is a IT related concept, but still here in our AFM, in FR also it is there, AFM also it is there, some points. Yes, in audit also, I guess blockchain, crypto, etc. is coming. Okay, now look at this. This is the meaning which is given. Blockchain, sometimes referred to as distributed ledger technology, is a shared peer-to-peer and decentralized open ledger of transaction system with no trusted third parties in between. Yes, it has every entry as permanent as it is an append-only database which cannot be changed or altered. Yes, all transactions are fully reversible with change being recorded as a new transaction. So nothing we understood. Here in our book, we have made it slightly simpler. And once I explain, everything will make sense. Look at this blockchain technology. First is basics and meaning. Yes, other names it is also called as a distributed ledger technology. Now, what is blockchain? It is a shared peer-to-peer and decentralized ledger of transaction. Three things. It is a shared peer-to-peer, yes or no? Yes, me to you, peer-to-peer, and a decentralized ledger of transaction. It operates without any trusted third party. Okay, yes, this ledger is an append-only database. Yes, every entry is permanent. I can add entries, I cannot delete. So in case of reversal, what I need to do? Yes, For reversal, I need to be creating a new entry, reversal entry. Is this clear, everyone? Sir, still nothing we understood. Simple story. Through this, you will understand. Imagine. Finally, you guys have cleared your CA examination, and now you guys are going for your long-awaited Goa trip. Sir, crazy, sir. Yes or no? Imagine you and your 5 friends. All of you guys are together going for Goa trip. Yes, beach, bottle, and bungee jumping. Three crazy things which you can be doing in Goa. Other things are also there, but that I'm not telling right now. Yes or no, everyone? Okay. You go to the beach, you enjoy, you dance, you sit the whole night. Yes, you see the sea waves coming close to you. So much peacefulness. Yes or no, everyone? So much peaceful. Okay. Then you try doing bungee jumping. Then you open some bottles. Yes, have fun as well. All those things you do. Now, once the trip is over, you've enjoyed a lot. But boss, one important point is pending. How do we distribute or split the cost? Yes or no? Because every person would have incurred some cost. We need to distribute. There are some people who will come for the trip. They will not spend anything at all. For them also cost apportionment we should be doing, right? So how do we do that? Yes, that is the problem. Yes, cost is not yet settled. So what happens is one friend tells that boss, you do one thing. Yes, whatever cost you have incurred now, you send it to me. I will prepare an Excel. I will distribute the cost and I will tell you how much every person has to pay. Is this clear? So one person tells boss, you share all your invoices. I will prepare a statement accordingly. I will make an Excel and I will tell each of you how much you have to be paid. Okay. So he prepares an Excel. Yes, he tells every person A has to pay 2,000, B has to pay 5,000, C has to pay 10,000, D has to receive 5,000, E has to receive 10,000, whatever it is. Excel he has prepared. Yes or no? Simple. How that Excel could be A, B, C, D, E. Simple. Imagine food bill A has paid is 1,000 rupees. Tell me who has paid A. So first I will show the payment entry 1,000. Then I will show the distribution entry for all the 5 people 200, 200, 200, 200, 200. Yes or no? Similarly, imagine yes, petrol bill B has paid 500 rupees. First I will show the payment entry of 500. Then I will show distribution entry for every person 100, 100. This way all the transaction will flow. In the end, totaling will come. Tell me yes, A has to incur a cost of 300, but he has paid 1,000. That means he has to receive 700. B yes has paid 500. He has to incur a cost of 300. That means he will receive 200. Everyone else has to pay 300. So C, D, E has to pay 300. Yes, A will receive 700. B will receive 200. This is how generally statements are prepared. Yes or no? Either on Excel or you will tell, sir, now we are having apps, sir. Apps like, yes, what is the name of the app? I used to be using it. Sharing cost splitwise. Okay, good old days, our article shift days. We also had time wherein we were using splitwise and other related applications. Now you can be doing it in phone pay, Google Pay also. Okay, all these options are possible. But wait, yes, in this current process, there is a problem. So what is the problem here? Firstly, it is a centralized ledger. Tell me who is preparing. One of your friend is preparing a ledger. So he is only having the right to add the entries, remove the entries. Yes or no, everyone? Yes. Second, imagine you have very low confidence on your friend. You know your friend. You know he would have done some scam. Yes, whatever cost is to be distributed to him, he would have not put only. Whatever he has paid, he would have put 10 times of that. Whatever others has paid, he would not have distributed to him only. Yes, for his girlfriend, cost he would have reduced. All those nonsense things he would have done. You are having a fear. But tell me, is there a way for you to verify? No. You can ask him, but in friendship, if you're asking boss, your friendship will be ruined. Yes or no, everyone? Point number one. Point number two. Yes, it is a centralized ledger. Only one person has prepared. One person is having the access. He has prepared. Yes, either you don't trust him or you're telling boss, he's a nice person only, but mistakes could be possible. He could have committed mistakes. So now what you tell, you don't want a centralized ledger. You don't want one person to be having control. You want a decentralized ledger. Everyone is having control. Shared ledger where everyone can add the transaction. So what you come up with, you tell boss, this is not a good idea. So what you guys do, you come up with a new idea. You create a Google sheet. Now tell me, what is a Google sheet? It is a distributed ledger. Yes or no, everyone? Distributed. Yes, if I want, I can add one transaction. You want, you will also add one transaction. Third person wants, he can also add a transaction. Yes or no, everyone? Yes, I am using Google Sheet as an example to understand blockchain. So we create a Google Sheet wherein everyone can add. So point number one, it is a distributed ledger. It is shared to everyone. Everyone can add on a real time basis. Yes, it is shared on a peer-to-peer basis. You can also do, I can also do. So the three keywords I got: decentralized, it is shared, it is a peer-to-peer. Yes or no, everyone? Yes, everyone can add their respective transaction. Everyone can attach their noise. They can tell, okay, boss, I have paid 1,000 rupees food fee. Yes, food bill. This is a bill. Accordingly, it will get distributed. Is this clear, everyone? Distribute the respective cost to everyone. And imagine one more condition we had, that whatever transactions we are adding now, it cannot be edited. In Google Sheet, generally you can delete off the line items also. Imagine for a time, just for us to understand blockchain. Google Sheet is not blockchain, but for us to get a feel of blockchain, I'm telling you. Imagine that in Google Sheet, whatever we are creating, we've added an extra feature. That is, whatever transactions we've created, now we cannot edit it. Say, for example, a friend has added a false entry. Chumma he added so that he can get some claim for himself. Yes, now you cannot delete it. What is the only thing you can do? You can just add a reversal entry. Yes, now if all these features are added, now it becomes a blockchain. Yes or no, everyone? Yes. Now let us try reading the meaning of blockchain again. Pay attention, everyone. Blockchain is also called as distributed ledger technology. The ledger is distributed to everyone. Everyone is having access. Yes or no, everyone? Perfect. What is blockchain? It is a shared. Tell me whether the Google Sheet we have shared it to everyone. Yes. Peer to peer. Yes, it is shared peer to peer. Amongst the peers, we have shared it to all the people. Yes. And a decentralized ledger of transaction. Tell me, is it a centralized ledger where one person is only having access? No, it is a decentralized ledger. Everyone is having access for the transaction. Yes or no, everyone? Three words. What is blockchain? It is a shared peer to peer decentralized, yes, ledger of transaction. Is this clear? Yes, it operates without any trusted third party. Yes, in order to operate a blockchain, now we don't want any trusted third party. Otherwise, generally, any transaction is happening, we want a third party. Banking transaction has to happen. We want the banking channel, yes or no, bank, HDFC, etc., etc., etc. We want a transfer of property. We want government agent, yes or no, registrar. We want a transfer of, say, vehicle. We want a person. Yes, you want to do voting. You want the representatives. There is always the third party. In blockchain, the biggest point is there is no third party at all. You are directly doing this. Is this clear, everyone? Okay, fine. Now, this ledger is an abstract database. That is, I can only add the transaction. I cannot delete. Yes, where every entry is permanent. Once you put an entry, it is permanent. You cannot go back and delete it. But boss, if there is a mistake, what you need to do? You need to pass a reversal entry separately. Yes, it cannot be altered. Correction is recorded as a new transaction. You have to make a correction, new transaction I should be creating. Is this clear, everyone? This much point is what we want for examination. That much I've explained. I am not getting into too much discussion. Is this clear, everyone? Blockchain technology, also called as distributed ledger technology. This name is important. Sometimes they will ask, explain distributed ledger technology. Don't write and come out of syllabus. Blocks, boss, it is blockchain only. Now, what we will be writing? Blockchain is a shared peer-to-peer and a decentralized ledger of transaction. Three keywords. Is this clear, everyone? Yes, it operates without any trusted third party. All these are going to be the keywords. Okay. It is an append-only database. I can only add the transaction. I cannot be deleting the transaction. Every transaction is permanent. In case of reversal, new entry I should be making. Is this clear, everyone? Okay, fine. Now, some additional pointers are there from a practical perspective. Should I be explaining that? Okay, quickly in 2-3 minutes. Quickly, let us try explaining this. Pay attention, students. Additional points. Every transaction is created as a block. Now, in a blockchain, every transaction that is happening, now it will be created as a block. So, what will happen is first transaction is a block, second transaction is a block, third transaction is a block. So, it becomes a chain of blocks. That is why it is called as blockchain. Simple example: A paid 1,000 rupees for the food bill. 5 people have gone. Yes, one block will be created for every person. Telling A has paid 1,000 rupees, it will be distributed to everyone. 5 people. This is one block. In every person's ledger, A can see that, okay, A has paid 1,000 rupees, it is distributed to everyone. B can see it, C can see it, D can see it, E can also see it. Imagine second transaction. B has paid 2,000 rupees, but it has to be distributed to B and C only. Imagine B and C together went to have a spa. Sir, some crazy massage they got in Goa. Imagine. Who all went? B and C. Who paid? B paid. So this cost is paid by B. It should be distributed only to B and C. So now ideally it should have come only in B and C's ledger. But boss, blockchain, it will create a block. and that block will appear in every person's ledger. In every person's ledger, it will be visible. The transaction will be visible. That was, yes, B and C together, yes, they went for a spa. 2000 rupees was the cost B has paid. It should be distributed. Yes, here amount will not be distributed, but that block will be there. Is this clear, everyone? Yes. Next, whatever has happened. So there will be a chain of blocks. So why is this explained? Firstly, how the name came, blockchain. Yes, every transaction is a block. We are having a chain of blocks. Yes. Second, what is the advantage here in case of blockchain is transparency. Any transaction that has happened, yes, will be available in the blockchain. Whatever transaction from start till now, whatever has happened, everything will be there. Now imagine, yes, after all these things, now ultimately A has to pay. All these transactions are there. Yes, imagine A has to pay 1000 rupees. Finally, imagine A is not having the money. Yes, A is telling his dad, there was trip expenses 1000 rupees. Yes, please pay 1000 rupees. Dad is asking, how does it come to 1000 rupees? Otherwise, yes, A had to tell, okay, first we went for the car, this was the cost. For the stay, this was the cost. For bungee jumping, this was the cost. I paid this much amount. Ultimately, 1000 I have to pay. Now he need not explain anything. Yes, because in the blockchain, yes, the block of all transactions are there. Yes, using an encryption code, using a decryption code, they can see all these transactions. Is this clear? Okay, dad can only see, okay, all these transactions are there. It will obviously be encrypted, not that any person can see. It will be encrypted. If you are having the key, you can see all the transactions. Accordingly, you can make the payment. Is this clear, everyone? Okay. Now, what is the application of blockchain? Yes, first, buying second-hand property or car. Say, for example, you are the person. You want to buy a second-hand car. Yes, I am a person. I am having a second-hand car. Imagine this is the car I am having. Yes, you want to buy. You make payment to me. I will give you the right for the car. Yes, we will be transferring the property in your name. Yes or no? You are purchasing, you are making the payment, but you are having a fear that, boss, what if this is not my car? What if I have stolen this car from somewhere? I do not have the possession, the ownership only. Randomly, I've stolen the car from somewhere, whatever the, yes, registration copies are there. I have forged it and now I'm just making money. Is there a possibility? Yes. Has it happened in real life? Yes. Multiple times it has happened in real life. So you're having a fear. So you go to registration, you check there, all those things you need to be doing. If you're having blockchain, there is no fear at all. Why, boss? Yes, in blockchain, all prior transactions are available. Yes, originally when it was manufactured, to whom it was first sold, from there to whom it is sold, after that to whom it is sold. Now it is in whose name? Okay, if it is in yours name, okay, accordingly you will make payment. Blockchain, all previous transactions are available. So there is no scope for fraud to happen. Or say, for example, second hand, yes, property registration. Building is there. You are transferring the building. You'll have to go to registrar. They'll have to see in whose name it is. Then they'll have to transfer it. It will take time. All those things. Blockchain, immediately it will happen, and there is no fraud because that entire block of all transactions relating to that property is available. Is this clear, everyone? On practical application? Yes. One more practical application of blockchain technology comes in e-voting. Tell me, students, currently how voting is happening. You go to a voting booth, you cast your vote. There is a EVM machine. Now, this is a very sensitive topic, so I'll have to be very careful with respect to my words. Okay. Then, yes, the EVM will record your vote. Whoever you vote, it will record the vote. Okay. Yes. Then, yes, totaling is done. Based on that, the candidate is selected. Now, recently, so many people are complaining that EVMs are being tampered. Whoever you vote for, ultimately it will go to one person only. Yes, democracy is at risk. All those things you would have heard. And yes, people will tell that, okay, to some extent it is true. Now, whichever party you're supporting, now I'll have to be very neutral here. Whichever party you're supporting, either you're supporting or you're opposing. If you're opposing, you're saying, no, no, EVM scam is there. If you're supporting, you'll tell, no, no, what EVM scam is there? Somewhere at some level, some things are happening. Things were happening, things are still happening. It is a fact. You also know that. Even if you're a supporter, you will know that. If you're opposer, anyways, you will tell. Even if you're a supporter, you will tell. Okay, that is happening, but still, who is there for opposition? All those things are there. Okay. But e-voting can help you to eliminate all those things. Okay. I am not getting into any of the political parties, none of those discussions I'm going. Yes, we are just restricting ourselves. Boss, I want to live. I'm a papa person. For my father, I'm the only first son. Then second and third, small kids are there. Yes, sir, everyone. Yes. So for my papa person, papa small stomach, I have to earn something. So I'm not telling anything. Okay, so how e-voting will happen using blockchain? Now, for every voter, registration will happen. Say, I'm a voter, for me, registration and one ID will be assigned. A block will be created for me. Okay, now what I will do? Yes, first they will check the eligibility verification. If this person exists, is he from India? Is he alive? Or some other random persons? Yes, name you are creating a block. All those things will be checked. Yes or no? First, yes, ID check, verification will be done. Then vote will be casted. I will cast my vote. Yes, it will get encrypted. Yes, it will get added. Next, it will be broadcasted to the network. Yes, in the network, every person's vote will be there. Yes, everything will be encrypted. So all those votes are there. Yes, then network will validate. Yes, what all things network will validate? Firstly, is this person there? Is he eligible to vote? Has he voted already? Is he alive or is he dead? Or is he a person from some other country whose name is being put here? Although so many things have happened. So all those things, is he eligible? Yes, one person is having one vote only, whether signature is valid, there is no double voting. All those things will be checked using the network. Okay. Then that vote will be added to the block. Yes, based on that, yes, counting will be done. And even when counting is done, say for example, you are having a doubt. Yes, you can, yes, it is encrypted, you can see, yes, every person's vote where it has gone, and you can openly see that it is transparent. There is no case for tampering. E-voting also is one more practical application where blockchain can be used. Is this clear, everyone? Just practically I told you, yes, how your blockchain can be used. Okay, my dear students, now we'll have to come from the exam perspective. From exam perspective, don't write, yes, what is there, yes, what tampering is happening, all those things. If you write, you will be thrown. Institute will come after 4 months. Okay, for exam, what is it that we need to be writing? Pay attention, students. Yes, everyone. Now, applications of blockchain technology, one, two, three, four, five. Five things are there. First is government. Yes, government related whatever works we need to do. Yes, we need to do registration of land. Yes, transfer of property, etc., etc. Land registration, vehicle registration, e-voting. In all those cases, blockchain can be used. Yes or no, everyone? I have already explained to you guys. Second is financial services. It enables automated trade life cycle management and maintains transaction log of transfer of assets and property. Say for example, buying and selling of shares. Right now, buying and selling of shares. If I purchase a share today, yes, its delivery will be given after 1 or 2 days. T plus 2 is a settlement cycle. Yes, if you are using blockchain, immediately it will happen. And a block will be created for every security. Yes, first who has purchased, then for whom it is transferred, then for whom it is transferred, today in whose names it is. So for them only will be paying the dividend. Yes, all those things will be happening. Is this clear, everyone? It will be used in financial services also. So 2 points. First, government related works. Second is the financial services. Yes or no, services, financial services also will be using. Third one is a travel industry. Say for example, you decide to go on a trip. Sir, where, sir? Imagine Thailand. You and your friends go to Thailand. So crazy trip, sir. Okay. Imagine what all you will have to be doing. First, you'll have to get your passport verified. Yes. Then you will board the plane. Then you will get down there. Yes. You will be doing the immigration. Then you will go to hotel. Yes. At every point, you will have to show your ID. Okay, you belong. You are the real person only. All those things. But if you are using blockchain, means at one place. Say for example, when you're boarding from here, when you're doing your passport entry itself, using blockchain, your ID is verified. Okay, then subsequently there is no need for verification. Using that only, it will be connected throughout through the system. Okay, yes, at the boarding also it will tell boss this person is there. The immigration also they'll get to know. Yes, when you're entering to the hotel also, there also it will be linked. So completely everything will be linked, yes, through blockchain. Is this clear, everyone? So in case of travel also, yes, it will help us. Is this clear, everyone? Yes, strong important documents, yes, all those things, it will be helping us. Okay, next comes economic forecast. Now it enables financial and economic forecasting through decentralized prediction markets. Now understand, till now, whatever is the forecast of the economy that we are doing, it is based on the centralized forecast. Say for example, simple example I'll give you. You see the news. News will tell. Now every news will tell you a different story. The story that they want to sell. There are some news which are telling, oh, India is doing great under the leadership of our prime minister. One line of thought. There is other line of thought which is telling, oh, India is doing very pathetic under the prime minister. But what is happening in reality, no one knows. Why? Because all these are centralized. Whatever story is being sold, they are just broadcasting it. Okay, the biggest lie of the 21st century is that okay, media is free, every media is sold out. I don't want to tell much here, okay, because the video will be out on YouTube. Okay, fine, but still, so what is happening is all the forecast that you're doing now, it is not independent, it is centralized. There is some level of information that you're getting from the central agencies. It is obviously skewed, it is obviously flawed. So based on that, you're doing a forecast. Yes, what blockchain will do? Blockchain will help us, yes, analyze the forecast on a decentralized basis, not on the centralized basis, on a decentralized basis. In reality, what is the situation? Based on that, we'll be doing a forecast, how economy will perform. Now, how economy will perform in the next 5 years? Sir, why does it matter? Say you purchase the share. Economy is doing good means share will also do good. It will give you a good return. Yes or no? The value is good. That means you can buy. Economy is doing bad means company will also be doing bad. Share will not be giving you return. It is not worthwhile to purchase the share. So for that, you want a forecast of how the economy will perform, how the company will perform, what is the relationship between the company and the economy, all those things. Right now, also you are getting the data. But right now, there is a biasness in the data. You can get the data in an unbiased, decentralized way. The forecast we can get in a decentralized way. That is the point here. Yes, forecast we can be getting in a decentralized way. Is this clear, everyone? Okay, fine. Then the final thing is healthcare. Say, for example, yes, healthcare. You go to different hospitals. Say, for example, initially you went to a hospital for scanning purpose. Okay. After that, 5 days later, you have to get admitted. You have to get an operation. Yes. Again, you go there. Again, they will tell, okay, let us check your blood. Let us do some basic reports, all those things. But if you are having blockchain, yes, suppose you are a patient. Yes, all transactions of yours. Yes, initially when you are born, when all last, yes, hospitalization has happened, what was the reason, what diseases you are having, what all things are there in your blood. Okay, are you having cholesterol, all those things, when was the last test done, when is the last TT injection given, whatever I know in terms of medical, I'm telling all the terms. All those things will be available there in a single block. So you need not do tests again. Yes, doctors will be having full history of the patient. Through that, yes, you know, suggesting treatment, knowing what all diseases are there becomes easier. So in healthcare also it is useful. Some theory they have put, we need to remember it, read it once, remember the keywords, write it in the examination. As simple as that. Yes or no? It enables to secure healthcare data sharing by improving privacy. Yes, whatever healthcare data sharing is there, it becomes better and privacy will also be there. Is this clear, everyone? Okay, fine. Now we have understood 5 points. Now, how do we remember that in examination? Very simple, students. Yes, you know this person, Nirmala Tai. Yes, Nirmala Tai is coming and telling that was GST. Yes, I've come up with GST. Yes, GST has improved the economy and healthcare. What is it, students? GST has improved economy and healthcare. That is going to be a mnemonic. Yes, GST has improved economy and healthcare. Now understand what are the applications of blockchain. GST has improved economy and healthcare. G stands for blockchain can be used for government related services. Yes, S, services. Yes, financial services. Yes, share trading, etc., etc. There also blockchain can be used. T is travel industry. For travel related case also we'll be using blockchain. Yes, next E, economy. Economy is economic forecast. We'll be getting decentralized, unbiased economic forecast about how economy is going to perform. And healthcare, yes, we are going to use blockchain in case of healthcare also. Is this clear, everyone? 5 pointers. GST has improved economy and healthcare. G for government related transactions. S for services, financial services. E for travel. Yes, E, economic forecast will be getting unbiased, decentralized. T is going to, sorry, H is and healthcare. Healthcare anyways. Or else you guys can remember the main thing. Yes, government is there. Yes, main sectors. One is healthcare sector. Yes, one is a travel sector. One is financial service sector. 3 sectors you remember. This will also will be getting 4 points. Is this clear, everyone? These are going to be the application of blockchain technology. Is this clear, everyone? Okay. Then we have one final point, which is going to be the risk associated with blockchain technology. Okay, boss, you're doing transaction with blockchain. Is there a risk? Yes, boss, there is risk. What are the risks? First risk is information overload. Yes, every transaction will become a block. So there are 10,000 lakhs and lakhs of transactions. So much blocks are there. At some point in time, if the infrastructure is not great, it may lead to information overload. So processing may become difficult. Point number one. Is this clear? It is going to be a challenge. Next one is the data tampering. Was ultimately the entire thing in blockchain is a data. If someone tampers the data only, Yes or no? You tell, oh, yes, EVM is having a problem. Yes, you come up with e-voting. That data itself is tampered. What will you do? Nothing can be done. Yes or no, everyone? If data is tampered, the entire blockchain technology becomes a failure. So, yes, data tampering is again a key risk, a key concern, a key problem. Yes or no, everyone? Yes, third one is going to be lack of accountability. Tell me, otherwise, at least there is a centralized authority. Say, go back to our example. Yes, five friends are going for a trip. One person prepared the Excel. If any mistakes are there, you can go to that person and tell, Macha, you had prepared the Excel, there is this mistake. If it is decentralized, there is no central authority. Who will you hold accountable for? Yes or no, everyone? Yes, you cannot be holding anyone accountable, and there is absence of central authority. Both are more or less same points only, but they have been written them as two different pointers. Is this clear? Lack of accountability and there is absence of central authority. Now, yes, risk in case of blockchain. 4 pointers only are there. We'll have to remember 4 points. How do we remember? Simple. We can remember this way. Yes, data related 2 points are there. We are having total 4 points. Data related 2 points are there. Accountability related 2 points are there. Tell me, data related, what all points are there? Firstly, data can be tampered. Data tampering. Yes. Next thing regarding data, there is too much data. You don't know. Yes, processing is difficult. We don't have the infrastructure. Yes. Then information overload. Yes or no? And accountability related. There is a lack of accountability. Why? Because there is a lack of central authority. Yes or no, everyone? Now, whatever question comes, yes, even if question asks risk associated with blockchain, first I will write the meaning of blockchain and then I will write the risk. Question asks, yes, application of blockchain. I will first write the meaning and then I will write the application. Let's quickly see the question bank. Questions have come on this pointers as well. Blockchain, various areas where blockchain can be applied. GST is used in economy and healthcare. Yes or no? Financial services, healthcare. Multiple times it has come. MTP October 24, November 25, explain blockchain as well as risk. September 25 exam it has come, MTP it has come, MTP. Risk. Yes or no, everyone? Here, yes, we have written, given headings and accordingly written explanation. They have just written paragraphs. If you are having a heading, at least remembering becomes easy. Data related 2 points. Data can be tampered, information overload. Accountability related 2 points. Lack of accountability, lack of central thought. So ultimately 4 points only are there, but instead as given in the form of paragraph, we will write the heading and accordingly give our own explanation. Is this clear, everyone? Yes, still here things are clear. Now there is actually one more small point as well, which we have added it in the third area. Look at this, students. Not very important, but it is relating to blockchain only. Yes, working of a blockchain transaction. Yes, not important. That is why we have added in third point. Yes, third additional topics. Yes, these are less important for examination. These are not tested, but still because it is there in the study material, we are just putting. Working of any blockchain technology. Just there is a chart in the book. I've just inserted it. So a transaction will happen in the blockchain. Firstly, transaction will be initiated. Say for example, five friends have gone for a trip. Yes, after that in Google Sheet, we'll have to distribute the cost. How we'll have to do? First, we have to initiate the transaction. I will tell, okay, boss, I have incurred 1,000 rupees for food. I will initiate a transaction. Yes, once I initiate a transaction, this transaction will be shared, broadcast to the network. In the network, for everyone, this transaction gets broadcasted. Okay, second step is it gets broadcasted to the network. Then third step is validation. It will be validated. Every person will tell, did he pay? Yes, 1,000 rupees. Yes, everyone will tell, yes, he has paid. So the transaction is validated. Third step. Fourth one, creation of a block. Once the transaction is validated, yes, it will get added as a block. Every transaction becomes a block. Yes, one transaction will get added as a block. So transaction will be initiated, then it will be broadcasted to the network, then it will be validated. Then once it is validated, it will be added as a block. Fourth point. Then once we have created a block, yes, existing blocks are there, it will be added to the blockchain. Yes or no? All existing blocks are there, for that this transaction will be added. Yes, then completion. With that, the story is over. Not very important. Yes, we are not going to revise it again, but just one time we will initiate a transaction. It will be broadcasted to the network. It will be validated. Yes, it will be added as a block. It will be added to the existing blockchain, and then finally, yes, the transaction will be complete. 6 steps. Is this clear, everyone? Okay, fine. Now we have, yes, risk associated with blockchain is also over. Giving you guys a minute to let this sink in. Then we have the final point, beautiful, crazy point. Yes, point from the future, new age future point it is, which is the concept of tokenization. Crazy point. We'll just spend 3 to 5 minutes and understand that. Beautiful point, my dear students. Yes, everyone, we have practically the last point in this particular chapter, which is a concept called tokenization. Now, before we understand the tokenization, we need to first know what is a token. Sir, token is something we already know. Yes, imagine, go back to your good old childhood days. Yes, you want to go, yes, have that tasty pani puri. So you go to a pani puri shop wherein pani puri, masal puri, pav bhaji, all those things are available. You go to the pani puri shop and you tell, yes, 1 plate pani puri. What will he tell? Yes, go and get a token first. So you will go to the cash counter. Yes, you will pay, imagine 50 rupees. He will give you a token for pani puri. You will come back and give this token. He will give you a pani puri. Yes or no, everyone? The same is a concept of tokenization. Yes, now you purchased a token for Pani Puri. What is the value? Yes, you paid 50 rupees, you purchased the token for Pani Puri. What is the value of the token? It is the value of goods or services you are going to get from that. 50 rupees. 50 rupees Pani Puri you can be getting. Yes, you don't want this token. You can give it to another person. Your friend is waiting. Yes, you are in a hurry. You don't want to have Pani Puri. Your friend was waiting. You will give him the token. You will tell, give me 50 rupees, Macha, take this token. You can transfer it easily to another person. Yes or no, everyone? Same is going to be the concept. So first, yes, what is going to be a token? Yes, basically, yes, the token is giving us the right to purchase goods or services. Is this clear, everyone? Now my iPad is low on charge. Quickly, let me get the charger. Give me a minute, please. Yes, everyone, if this is clear, now let us come to tokenization. What is tokenization? More or less same process. It is the process of converting tangible and intangible assets into blockchain tokens. Oh. Now understand what is happening. What is tokenization? We will read the meaning again. Don't worry, it is my duty to explain. It is the process of converting tangible, intangible assets into blockchain tokens. Basically, I'm having my tangible, intangible assets that I'm converting into tokens. Okay, the way previously to purchase, yes, Pani Puri, yes, I'd purchased the token. Similarly, to purchase, yes, and share in the tangible, intangible assets, we are having a tokens. So we are converting tangible, intangible assets into blockchain tokens. This is going to be the future. And trust me, if you don't know this, you're going to miss out on something for the future. Forget your examination. Trust me, next 10, 15 years down the line, this is going to be one of the biggest things. The way we are having shares, etc., equity shares, 10, 15 years down the line, tokens is going to be the big thing. Trust me, students, in US and other European countries, it has already become a big thing. Okay, so 5 minutes only, let us try understanding what exactly it is. Now, simple example I'm giving, real estate property. Imagine you're a crazy rich person. Too much money you're having. Kasha, Parna, Dundu, money. Yes or no, everyone? Yes. So what you did, yes, you had purchased or your, yes, father had a, yes, big 10-acre property, which you got it as inheritance. Sir, you don't have that much luck, sir. Imagine. So you got a 10-acre property. Now you want to sell that 10-acre property. You have put your 10-acre property for sale. So many people are coming, they are seeing, they are going back. Why they are not buying? They're telling, boss, 10-acre is too big. Firstly, we just want to build home. We don't want 10-acre. Secondly, the price is too high. Yes or no, everyone? Two main problems I'm having. Firstly, it is too big. Firstly, I don't want 10 acres. Secondly, the price becomes too high. I'm not willing to pay this much price. Because of this, nobody is purchasing this. So currently, it is lying as an illiquid asset. That is, you're not in a position to convert it into cash. You're not in a position to sell and convert it into cash. So what to do? What to do? What to do? You're just thinking. Suddenly, you came up with an idea. Yes, people want the land. It is just that they don't want 10-acre land. They want smaller land of 10 cent each. Now, yes, how land is measured, it will be different in different places. In villages, people who are doing farming, they will measure land in terms of acres, 1 acre, 5 acre, 10 acre. Yes, people who are just building homes, yes, sometimes they'll be measuring land in terms of cents, 5 cents, 10 cents, 15 cents. Yes, in cities, it is measured in terms of feet, 30 by 40 side, etc. Yes or no, everyone? Yes. Simple. I'm just using acres as well as cents. I'm telling boss, 10 acres is too big. We don't want 10 acres. So what I do is, what you do is, you split that 10 acres, yes, into every part of 10 cent each. Is this clear, everyone? So now what you have done? Yes, a big real estate property of 10 acres. You have split it into 10 cent each. Perfect. Now what you do is you issue tokens. Yes, imagine I am a person. I want to purchase 20 cent land. You are telling 1 cent. Yes, one token is for 10 cent. You want to purchase 20 cent means you'll have to buy two tokens. Imagine one token is of 10 lakh. So that means I will pay 20 lakh rupees. Yes, I will be getting 20 cent land. Is this clear, everyone? Now what you have done successfully is an illiquid property was there. You have split it and converted into a liquid property. Yes or no, which people are willing to buy and sell. Is this clear? This is one end of. Okay, you convert into 10 cent land. Okay, 10 cent land. Yes, I have purchased, different people have purchased, you sold it off. That is one thing. Or there is another thing which can be done. You can be tokenizing it. Yes, now what is a tokenization as a concept? Basically, you have split 10-acre land into 10 cent each. Yes, you are telling what we will do right now is, boss, in each of these we will build a home. Okay, we have taken this property, we have built home, we are getting rental income already. Now, yes, this entire property we are splitting into, imagine, simple, imagine say 100 tokens. Random numbers I am taking. Yes, one token is for 10 cent land. Yes, so we have split it into 100 different tokens. If you want, you can buy one token. Yes, if I buy one token, imagine one token is for 10 lakh. I am a small investor. You are a big person. You are having 10-acre land. Yes or no? I purchased one token. Now, what is the advantage I am getting? Am I getting the land in this case? No, I am not getting a land. Yes, I will be getting the earning from that land. Tell me, yes, from that land, what they are doing? They have built home, they are giving it for rent. Yes or no, everyone? So every month rental income is received. Yes, end of the year, whatever is the rental income received, I will be getting a proportionate share in that. Yes or no, everyone? So I am getting income from that. After 2 years, I want to sell it. I can sell it off also. Now, this solves a very big problem, my dear students. It is liquidity in case of real estate. So many people want to invest in real estate, but the biggest problem is it is illiquid. What tokenization does is it converts it into liquid. Now, understand what we are doing in terms of tokenization. There is a big builder. He takes a big land, 10 acres. Okay, he constructs a building in that. Whatever is the total cost he has incurred, say for example 100 crore. Yes, he has divided into different tokens. Imagine he has split it into 100 tokens. That means every one token is of 1 crore. Yes, I am a small investor. I used to be purchasing equity share. I purchased equity share of Reliance. Similarly, I can now buy a token of this real estate property. So if I purchase a token, if I purchase equity share, I have to make payment today. Yes, boss. But what I will be getting? I will be getting dividend. At the end of the period, whenever I want to sell, I can sell also because it is liquid, it is trading in the market. Same thing has happened here. Firstly, I have purchased the real estate property, a token portion. Yes or no, everyone? Yes, every year, the real estate person, he will be receiving rentals. Yes, I will receive a portion of the rental income. Yes or no? That is one cash inflow. Yes, after 2 years, I feel I don't want this property. This is not lucrative. I can sell it off. Yes, there is another person. Yes, there is a trading happening. Yes or no? The way shares are being traded, tokens are also being traded. So I can sell it off to another person. So now it has become marketable security. Yes or no? This is the concept of tokenization. One final time. Yes, there is an illiquid property. Yes, land. What a builder does, he constructs a building. Yes, he has incurred a cost. Either he can sell it off to different people, or one more option he is having is he can convert it into tokens. In case of tokens, what a investor is getting is he is getting the proportional interest in the property. Can he come and get? No, he'll be getting the income from that. Suppose you have purchased the share. Can you go to Reliance, sit in Ambani's cabin and all? No, but whatever income they're generating from that, you will be having a share. Same thing tokenization is doing, but for other securities, not for equity shares, for illiquid assets. Say, for example, real estate. Is this clear, everyone? Total 100 crore was a project cost. We have split it into 100 tokens. Every one token is of 1 crore. So I paid 1 crore, I got one token. Yes, yearly, whatever is the rental income, proportionately I will receive. Point number one. At any point I want to sell, I can sell. Point number two. Is this clear, everyone? Okay, fine. Now, investors can buy one or more tokens. Tokens are tradable and can be easily sold to others. So basically, here also what I did, I converted my non-marketable security into marketable security. I had my real estate land which was non-marketable. Yes or no? That I have now converted into freely marketable securities. Suppose we are having a trading platform. In India, we don't have. In USA, we are having a trading platform. Yes, any person can buy and sell these tokens also. Yes or no, everyone? I hope you guys got a small gist of what tokenization is all about. That is all that we want. Look at this, everyone. Now I am going to give you guys a crazy example. Crazy, crazy, crazy example. I have given you guys one example of real estate. Tell me, imagine I am an investor. Where all I can be investing? Traditional sources of investing, we know. Yes, stocks, mutual fund, bond. Okay, fine. Yes, securitized instruments we have learned now. Yes or no, everyone. That also we can be buying. Land, building, etc. Real estate property I can buy from that. I'll be getting rentals, capital appreciation, or commodities, gold, silver, copper, etc. etc. Yes, or crypto also I can be investing. Yes, with that you would have heard. You would have heard. Okay, that boss. There are some rich people who invest in, yes, paintings, in expensive watches, yes, in antique items. You would have heard, or at least in movies you would have seen. Okay, you purchase a watch of say 10 crore rupees, Rolex gold studded. Yes, after 20 years it becomes 20 crore. All those you would have heard. Yes or no, everyone? Paintings. Yes, today you purchase a painting worth of 1 crore. After 10 years you can be selling it at 2 crore. You would have heard in movies all those things. Yes or no, everyone? Yes, it is true also. They are also considered as investment. Painting, artwork, antique items, watches, bullions, etc. etc. But tell me, as a normal investor, Papa person, you and me, do we have that much money to buy those items? No. But still, we are having a desire that was, I also want to invest. Yes, in a drawing. Yes or no, everyone? So that whatever is a capital appreciation we are getting from a drawing, I also want that. But tell me, I am not having that much money. What to do? Tokenization helps us there. So pay attention, everyone. Simple, simple, simple example. Imagine the world famous drawing of Mona Lisa. Imagine it is a trading at 100 crore rupees. That means there is a person who has purchased it. Yes, it is there in an art gallery. He is now telling, I am willing to sell it at 100 crore rupees. So what can be done? Either imagine, assume I am a rich person, I am having 100 crore. I will throw 100 crore, get the Mona Lisa painting. Imagine after 10 years, the value of Mona Lisa painting becomes 200 crore. I will sell it at 200 crore. I have made the profit. That is one option. Yes or no, everyone? Or else, what can be done is this painting can be tokenized. What can be done? This painting can be tokenized. Say, for example, I am telling, yes, what is the value of the painting today? 100 crore. Imagine I am splitting it into 100 different tokens. Yes. For that also again separately a special purpose vehicle will be formed. All those things will happen. Yes or no, everyone? Tell me that means the value of one token is how much? 1 crore. So we come up with an announcement, an advertisement that was you have an opportunity to invest in the great Mona Lisa painting. Yes, one token is worth 1 crore. Altogether 100 tokens are there. 100 people are interested. Imagine I'm having 1 crore. So I purchase a token like that. 100 people purchase 100 tokens. Tell me now, yes, together we have pooled the money, 100 crore rupees. We have purchased the Mona Lisa painting. Yes or no, everyone? Perfect. Again, obviously, a separate trust will be there. Yes, Mona Lisa painting is there. It will take care of that. Yes or no, everyone? Now, all these tokens, there is a separate market. For shares, we are having NSE, BSE. Similarly, there is a separate market wherein these tokens will be bought and sold. Suppose I purchased one token at 1 crore. Yes. On what basis the value of the tokens will vary? Based on the value of the asset, the underlying. Here it is the painting. Say, for example, after 5 years, is the value of the drawing is 200 crore. That means tell me how much will be the value of the token. Tell me value of the drawing is 200 crore. That means it is for 100 tokens. Every one token is for 2 crore. Suppose after 5 years I want to sell, you want to buy. I will tell Macha, take this token. You are having, yes, 1%, yes, proportionate. What is it called? You're having 1% proportionate ownership of this drawing. Yes, you give me 2 crore rupees. Yes or no? It is again one more investment opportunity for the investor, through which, through tokenization, we can now invest in illiquid assets. Say there are patents, there are music rights, there are real estate properties, there are these paintings, bullions, drawings, etc., etc. All these things are there. Is this clear? You would have heard a term called NFT. Yes, it's the same thing only, tokenization. Is this clear, everyone? So if tokenization is done, yes, we are splitting it into tokens. Every token is of worth. Yes, after that, you can sell it to the other person. Is this clear, everyone? So basically in tokenization, what we have done, an illiquid asset. Yes, painting is otherwise an illiquid asset. It is not daily traded in the market. Now, because we have tokenized it, we have made it into tokens. These tokens can be bought and sold. Yes or no, everyone? Now it has become marketable security. Is this clear, everyone? Yes or no? Give me a confirmation. Yes. Now, practical applications of tokenization. So much I've told. Trust me, no one is going to tell you this much. Yes, there is an app called Realty. It is an app in USA. It allows people to buy fractional ownership in US rental property. US, these real estate people are there. Yes, they will build, developers. They will develop. Yes, they'll take a land. They will develop a building. Yes. So whatever they have developed, either traditionally what developers used to do, they used to sell it off. Now what they do, they convert it into tokens and people will buy those tokens. So for investors, periodically they'll keep on getting the return, but liquidity problem is also not there. Why? Because now if I want any day, I can sell the tokens to another person easily. It is freely trading. Is this clear, everyone? Now one more point is the tokenization of music rights. Because we have spent so much time, just 1-2 minutes. Pay attention, students. Okay, this is again a crazy concept. Okay, imagine we have our superstar Dhanush from Tamil industry. Yes. Why this Kolavari, Kolavari, Kolavari day? Crazy song. Every person who is going through breakup at least once should have heard. God, I am dying now. She is happy. How? Tell me how? This is a song for some boys. Yes or no? Yes, come back to the topic. Now, he has sung a crazy song. Yes or no, everyone? He has put it on YouTube. He has put it on Spotify. He has put it on Apple Music, Ghana, every streaming platform. Now, what will happen to Dhanush? Periodically, based on how much people are seeing, he will keep on getting the income, royalty income. Suppose in first month in YouTube, 10 people saw. Imagine YouTube is paying 1 rupee for every person who is watching. Dhanush will be getting 10 rupee from it. Similarly, from Spotify, Ghana, Apple Play, every streaming platform he will get. Same story will happen in second month, third month, fourth month, fifth month, first year, second year, fifth year, 10th year. Throughout, he'll keep on getting the cash flow. Yes or no, everyone? Perfect. So throughout, periodically, he is getting the cash flow. First, second, third, fourth, fifth. Throughout, he is getting the cash. Is this clear, everyone? But Dhanush is telling, boss, yes, this is a great thing, but I want the money today itself. Today itself, I want the money. I don't want money in the future. Today, I want the money. Today, I want to purchase a big home. For that, I want the money today. What I can do? Yes, one option which is available with Dhanush is, yes, the music rights. He is having the right to the music. He can sell it to a big team, say T Series, or say, for example, you are having Red Chilies, which is Shah Rukh Khan's. Yes or no? You sell it to a big music house. I don't know much names of music house. You sell it to a big music house. They pay him an upfront. They are telling him, okay, 50 crore rupees I'm willing to pay. You transfer this music to me. Whatever income, yes, you are going to get in future, I will be receiving. That is one option which Dhanush can do. Yes or no, everyone? Yes. Sell it to a big investor or a music company. Okay. Or one more option that he is having now is he can convert it into tokens. Yes or no? He can tokenize it. This has started. Trust me, in US it has started. Wherein big, yes, some music artists have tokenized their songs. The royalty income, they have tokenized it. So basically what will happen? Imagine the total royalty income is 50 crore. What Dhanush is telling, I don't want to give it to big music companies. I will sell it to the common people. Common people like you and me, we can purchase the tokens. Imagine simple, we have converted, yes, this into 5 lakh tokens. Tell me total value of the music right is 50 crore. We have split it into 5 lakh tokens. That means every token is 50 crore divided by 5 lakh comes to 1000 rupees. That means if I pay 1000 rupees, I will get one token. Yes or no, everyone? Perfect. Imagine I am a Papa investor. I am having 1000 rupees. I will pay 1000 rupees. I will get one token. Yes or no? Yes. Now, in the future, what will happen? Every month, yes. Otherwise, Dhanush would have received the royalty income from YouTube, Apple, yes, Apple streaming, Apple Music, Ghana, etc., etc. Yes, that still he will be receiving. But now, who is owner of that? We are owner. So we'll be getting the proportionate cash flow from that. Is this clear? After 2 years, I decide I don't want this. Its value will also appreciate, depreciate. Accordingly, I can sell this as well. Is this clear, everyone? Yes. Otherwise, what was an illiquid asset? Tell me, otherwise, as a normal individual investor, it was not possible to purchase music right. It was not possible. Yes, to purchase a painting. So tokenization, it has become possible. Is this clear, everyone? Perfect. This is the concept. Again, here also same procedure is followed. We will create a separate special purpose vehicle. Suppose in case of Dhanush, Dhanush is there, he will float a separate trust special purpose vehicle. Yes, what it will do, it is formed for the sake of tokenization. Yes, it will receive the money. Yes, it will distribute the money to all the investors. Is this clear, everyone? Yes, this is going to be the, yes, concept of tokenization. Now, tokenization to a great extent resembles the securitization. Why, sir? In securitization, what we did, we had illiquid financial assets. Loan was there. Yes, they were not liquid. I could not easily sell. What securitization did? Yes, it converted the illiquid loans into marketable securities, which can be traded. Yes or no, everyone? What is tokenization doing? Tokenization is also converting illiquid assets, tangible, intangible assets into tokens so that it is becoming marketable. Yes or no, everyone? So both are having more or less a similar objective, similar steps. So question will come, what are the similarities between tokenization and securitization? So 4 mark question has come multiple times. First we'll write the meaning of tokenization. It is a process of converting tangible, intangible assets into blockchain tokens. Okay, similarities is first, 4 similarities we are having. First one is a trading. Tell me, previously there was no trading happening. Now, yes, because they are converted into marketable securities, they can be traded. Yes or no? In case of securitization, after securitization, I can buy, sell easily. Tokenization also, buying, selling is happening. Okay, both are tradable, hence it helps to generate wealth. Okay, point number one is trading will enable. Yes, second is going to be diversification. As an investor, why do I want to purchase tokens? Most I've already purchased shares, debentures, gold, etc. I want to diversify my risk. For that, new tokens have come or securitized instruments are there. Yes or no? It will help us to diversify the portfolio. Now, new opportunities. Yes, all these equity shares are old concept from 50, 80 years. They are there. Yes, tokens is a new concept. Yes, so whenever there is a new concept, there is a chance that few people are there. So there is a chance of getting higher wealth. Yes or no? So new opportunities. Is this clear, everyone? And fourth one is liquidity. Yes, why companies have gone for this option? Say, for example, bank is there, Maja Bank. Yes or no? Why did it sell? Why did it come up with the concept of securitization? They were not having fund. They wanted extra fund. That is why they went for securitization process. Dhanush is there. Yes, if he is having fund with him, okay, periodically he'll keep on getting royalty income. He wants cash today. For that purpose, what he did, he went through the tokenization. Yes or no, everyone? It will inject liquidity into assets that are otherwise illiquid. Is this clear, everyone? Beautifully I've explained. Trust me, no one will explain in this much detail. Trust me, tokenization is going to be the future. 10, 15 years down the line, this is going to be the big thing. And I want all our students who have purchased the classes or watching it on YouTube should know this. If a question comes in the examination, yes, 99 percentage people, trust me, including the people who are teaching, yes, they don't know what exactly it is, how big a concept this is. This is that big a concept, students. Yes, India has not brought in regulations for that. That is why it is not famous in India. You see Europe, you see USA, it is already become a big thing. Trust me, 10, 15 years down the line, it will be a big thing in India as well. Is this clear, everyone? Now we've understood it. How do we remember it? Simple mnemonic, simple mnemonic. Yes, this is me. Students are telling, sir, yes, Tabish sir is the best. Tabish sir is the best faculty for AFM as well as costing. Yes, Tabish sir is a pookie. Yes, this is a recent trend term which students generally tell. Yes, Tabish sir is our doll. Yes, or no, everyone? Baby doll, Tabish sir is a doll. Sir, what nonsense is it, sir? Yes, Tabish sir is a doll. Yes, T for Tabish, T for trading. Yes, tokenization helps us in trading. Yes, doll, DOL, D for diversification, O for opportunity, new opportunities are open, L for liquidity, it will inject liquidity. Is this clear, everyone? So 4 pointers are there. Yes, this also you can remember, or else yes, logically also, if you know, okay, what all will happen through tokenization. Firstly, liquidity, cash will be getting. Secondly, as an investor, for investor diversification as well as new opportunity will be created. And then yes, trading will be enabled. Yes or no? Simple. You can see from the company's perspective, liquidity, cash they will get. From investors' perspective, so diversification is there, new opportunity is there, as well as trading will be there. Yes or no, everyone? This will also you can be remembering. Yes, with this point is also done, my dear students. If you guys see this here in the question bank, it has come multiple times. Okay, MTP, past exam, MTP. This tokenization and securitization. What is the similarities? First you write down the meaning, yes, as well as 4 points you write it down. Is this clear, everyone? Perfect. If this is done, we have one final point, my dear students. Pay attention. Yes, not very important, but still, yes, because it is there. Additional topics, these are less important from exam perspective. Yes, in that working of blockchain, I've explained already. Pricing of securitized instruments. Now understand, yes, at what price the securitized instrument should be sold. Yes, Maja Bank is there, originator, Maja Trust is there, and then we have the investors. Yes, Maja Trust will create the securities and issue. Yes or no? So, at what price the yes securities should be issued? Obviously, investors have to buy the security or else there is no point. Tell me, imagine you are the investor. You can purchase a bond. Okay, bond will also give you fixed income, fixed return. Yes, bond is giving you a yield, YTM, of 8%. Imagine. Yes, YTM security valuation you have learned. Yes or no? Return. Bond is giving you a yield of 8%. Yes, this securitized instrument is having the same risk as bond. That means tell me how much return you will be expecting as an investor. You will tell me bond is giving me 8%. If this is also giving me 8%, I can invest here as well. Or else assume this is a slightly more riskier. That means how much you'll be expecting. You'll tell bond is giving me 8%. This is slightly more risky. If it gives me slightly more than 8%, suppose 8.5%, I will invest. Yes or no? So investors' investment psychology is simple. They will see what is the YTM on similar investments. That much they want from this. That way it should be priced. Yes or no, everyone? Pricing of securitized instruments from investors' angle. Yes, it is priced by discounting the future cash flows using YTM of comparable security. Whatever is a comparable security, how much return it will give. If this cash flow is, if this security is also giving me similar cash flow, how much it is. Simple, boss. We can do a calculation. Simple. Suppose an investor purchases this bond. Yes or no? This instrument, say PTS, pay through security. How much cash flow we are promising? Imagine every year we are promising 1,000, 1,000, 1,000, 1,000. Assume YTM is 8%, comparable security is giving 8%. So I will discount it at 8%, whatever is the price, that much investor is willing to pay. Is this clear, everyone? Okay. Now comes from the perspective of originator, bank's perspective. Yes, trust is telling that, look at the students, how bank will think. Trust is telling that, okay, boss, I can issue the instruments, investor wants 8% return. That way I need to be priced. Now what originator is thinking, bank is thinking. Yes, bank will receive that money. Yes or no, everyone? Perfect. Tell me, yes, investor is paying the money. Yes, the money will first go to the trust. From that, ultimately, it will come to the bank only. Yes, what bank is thinking? Yes, tell me why bank wants the fund. Because there are loan holders. Yes, who want money. For them, we have to be giving them loans. So, what bank is thinking is, boss. Yes, right now, yes, I'm giving. Yes, he is giving me fund at how much percent interest? 8% interest. Suppose I received that money here. I received that money, say 1,000 rupees or say 1 lakh rupees or 1 crore rupees. Simple. Yes, this I can give it to the loan holders. And imagine I can give a loan at 10 percentage. So what is bank thinking? Bank is thinking simple, boss. Yes, I can get my fund at 8 percentage and using this extra fund. Anyways, otherwise I was not in a position to give loan. Go back to the first story. Maja Bank is there. Yes, so Rocky Bhai has come. Yes, he wants to do improvement in KGF. He wants, yes, say 10 crore loan. I am not having money. I am not in a position to give loan. But boss, if I go through securitization route, na, they are giving me money. They want 8% only. I will receive money. I can give the loan and get 10 percentage return. That means, tell me, will I still be making some extra profit? Yes, boss. So if I'm making extra profit, means bank is also happy here. But imagine, suppose, yes, investors want to say, for example, 10% return, assume, or 11% return. Investors are telling for the risk we are taking, we want 11%. Yes, bank is telling if I give a loan, I will be getting 10 percentage. Tell me whether bank is interested in securitization. Yes or no? First, we will see how much investors want. Okay. Then bank will see, okay, boss, if I pay that much to investor, will it still be making sense for me? If it is making sense for me, means only then we'll be going ahead for the securitization. That is what is given here from the originator's angle. Yes, it is priced at a rate at which originator has to incur an outflow. Yes, boss, I have to incur an outflow. Yes, they are charging. My investors want 8%. Yes, even if I'm paying 8%, still means when I give a loan, I'll be recovering 10%. That way, yes, I'll be pricing it. Is this clear, everyone? Pricing of securitized instrument. This has also come 1 or 2 times in the examination. Not very important, but still this also I have explained. Then there is one final point, which is risk in securitization. It has not come in the examination, not important, but still one, two small things are there. What all risk can be there in securitization? Quickly, I'll explain. First is credit risk or counterparty risk. Say, for example, obliger is there, loan holder, Rocky Bhai, he doesn't make payment only. Investor is having a fear. Is that a risk? Yes, boss. Next is the legal risk. Say, for example, right now there is no proper judicial, yes, conclusive thing. Yes, judicial present as to how securitization should be treated. Yes, who will treat it as income? Yes, who has to be paying tax? There is no proper law for that. When there is no proper law for that, Yes, there are officers, income tax officer, GST officer, they're telling you also pay, you also pay, you also pay, or else they'll chumma yes, put notice, issue summons. Why? They want to make some money. Yes or no? So people are not very happy with that. That is also a risk, legal risk. Yes or no, everyone? Yes. Next thing is going to be market related risk. In that again, macroeconomic risk, prepayment risk, interest rate risk. Yes, just you guys can read it once. Not very important, but still it is there. You guys can read it once. Then final point is securitization in India. How securitization has come in India? Initially, Citibank was a yes bank which has brought securitization to India. Outside it was there. For India, Citibank was a bank which first brought securitization. Okay. So by bundling, yes, auto loan receivables, that is car loans, yes, they have bundled, they have transferred it to SPP. Then subsequently many institutes have come, okay, to promote securitization and address NPS. Yes, government has come up with SURFACE Act 2002. Previously in law you used to be discussing. Right now, okay, for you anyways it is SPM, you will not have learned. Yes, now, yes, mainly in securitization market it is dominated by few banks, say ICICI, HDFC Bank and National Housing Bank. Not very important, but still, yes, a paragraph was there in the study material. That is why I have inserted this in our yes books as well. Is this clear? Yes, point number 3, additional topics is least important, but still once quickly I have explained it to you guys. Okay, you guys can just read it once more time. Yes, it will be clear for you guys. Okay, based on that, in the question bank also we are having one simple thing, pricing of securitized instruments. You guys can read it once, my dear students. Is this clear, everyone? Yes, next one more question is there. It has just come in MTP. Although rating agency is a secondary, but it plays a pivotal role. Explain. Rating agency, credit rating agency. They're telling credit rating agency is a secondary participant. Still, it is important. Why? Yes, because yes, rating agency, what are it assess? It assess the strength of cash flow, whether we are receiving cash flow or not. Yes, mechanism to ensure timely payment. Yes, credit quality of obligers, whether obligers are having a good quality or not. Liquidity support, strength of legal framework, all those things they'll be analyzing. Chumma time pass sake it is there. You guys can read it once. With this, all questions of securitization we have seen. The entire chapter properly we've understood, beautifully we've understood, each and every point we've understood, my dear students. Now it is time for one final revision. We are having a chart. Trust me, this entire chapter of securitization, now even though we have spent 3 hours, in the next 3 to 4 minutes we will revise, we will ensure that each and every point we remember. But before that, giving you guys a minute to let this sink in, then we'll take the final discussion on this chapter, which is the final revision, my dear students. Yes, everyone. So let us have one final round of revision. Trust me, with respect to theory, this is the only technical chapter. All others are going to be very simple chapter. Here we had so many things to understand, so much extra from a practical perspective. Also, we've understood. Trust me, irrespective of how much time we have spent. Right now, in the next 3 to 4 minutes, the entire chapter we will revise. Are we ready, everyone? Yes or no? So in 3, 2, 1, let the maja begin. So we started with the chapter called securitization. The entire chapter of securitization we understood in 3 buckets. First is basics of securitization. Next we have understood blockchain. Next was additional topics, which is not very important for examination. So first was securitization. We've understood the entire process of securitization. Yes or no, everyone? Perfect. Quickly, let us try seeing the yes securitization process through this flow chart. Yes, there is an originator bank. Yes, bank has already given so much loan to the customers. Now, yes, people are there, they want more loan, but bank is not having money. What to do? Yes, bank comes up with an idea. What they do? Yes, they bundle some of the loans and transfer it to a trust, a special purpose vehicle. In our example, we have a bundled yes, our housing loan as well as credit card loan, transferred it to the SPV. Now, what special purpose vehicle will do? Special purpose vehicle will unbundle them into different trenches, different categories. Housing loan with adequate collateral, without adequate collateral, yes, credit card loan, yes, convert them into marketable securities, issue those securities to the investor. Investor will pay the money, the trust special purpose vehicle will receive the money and transfer it back to the originator, that is the bank. Yes or no, everyone? Investor is telling, why should I be making payment? Yes, is there any, yes, is it a good loan or not? How do I know? To enhance the confidence, 2 people will come into play. One is a credit rating agency, CRISIL. They will rate the securities, AAA, AA, etc., etc. Then you have the credit enhancer. It is going to be the insurance company, which will tell in case of default, we have them. Okay, boss. After that, say for example, they have made payment. Yes, periodically from these loan holders, we need to be collecting money. For that purpose, we are going to appoint a receiving and paying agent. Receiving and paying agent will collect money from the loan holders, transfer it to the trust, Yes, the special purpose vehicle, the trust will be paying to the investors. Yes or no, everyone? And then we have the structurer who is taking care of the entire process. Yes, everyone. Yes, let us have a look at the participants in case of securitization. We have created a crazy mnemonic. Yes, iOS is winning an Oscar. iOS, primary participants. I is investor. Yes, O is going to be originator. Yes, S is going to be the special purpose vehicle. Yes or no, everyone? I investor. Investor is buying the securitized paper. It can be either individual investor or an institutional investor. O is originator. Who is originator? Bank. Yes, what is originator doing? Originator is initiating the securitization process. He will transfer pool of asset to SPV. Yes or no, everyone? Then we have a special purpose vehicle. What will special purpose vehicle do? It will receive the pool of assets from the originator. Yes, it will unbundle them into different tranches of marketable securities. It will issue securities, receive cash, and pay it to the originator. Yes or no, everyone? iOS received Oscar, secondary participants, Oscar. O is the obliger, which is the loan holder. S is the structurer, investment banker, who is structuring the entire transaction. C is the credit rating agency, CRISIL. C is the credit enhancer, insurance company. A is the agent who is appointed to ensure that investors' interests are protected, and R is going to be my receiving and paying agent. Yes or no, everyone? Yes. Next is the securitization mechanism or steps. I have told one-time process for ongoing three. What is a one-time process? First was we are creating a pool of asset, creation of pool of asset. Yes, we are transferring it to SPV, transfer to SPV. Before investors are investing, they're telling what is the guarantee. So we do a credit rating of the instruments. Point number three. Fourth one is going to be sale of securitized papers. Yes or no, everyone? Okay, 4 points. Now, ongoing process is going to be three. Throughout, what we need to do? We need to administer the assets. Okay. Yes, if in case obliger is not making payment, where do we go to? Recourse to the originator. Yes or no, everyone? Yes. And finally, once we receive the payment, we'll have to repay it to the investor repayment. Yes or no, everyone? Then we have told benefits of securitization. We've told a simple mnemonic. It is Deepika Padukone and Ranveer. Yes, they told, oh, film is very risky, boss. They decided to do CA. For that purpose, they got a SRO number. Yes or no, everyone? Yes, Deepika Padukone and Ranveer, they get SRO number. Benefits. Firstly, for the investor. For the investor, what is the benefit thing? Why is he investing? Firstly, diversification benefit. Yes or no? D. Then is P, which is protection against a default in case of recourse transactions. Yes, Deepika Padukone and Ranveer are regulatory requirement. They have to invest in case of banks, etc. Yes or no, everyone? Okay. For the originator, what is the benefit? SRO number. S for specialization, they can focus on the main business. Yes. R for ratios, the ratios will be improved. Example, CRAR, capital risk adequacy ratio. Yes, as well as reduced borrowing cost because they're getting it through the special purpose vehicle, not directly. And the next thing is O. O is off finance. Yes, off balance sheet financing. Yes or no, everyone? Okay, this is also done. Yes, the next thing is features of securitization. We have told, oh, this is a bundled shit question. Tell me, students, this is a bundled shit question. Bundled, bundling and unbundling. Shit. S for structured finance. H for homogeneity. I for creation of additional financial instruments. Yes or no? Yes, instruments. Yes, T, trenching, and T is tool for risk management. You do it one time, two time, it will remember automatically. Crazy mnemonics we have done. Yes or no, everyone? Then we have told problems for securitization in India. Problem. Problem with my boyfriend is he is a kind-hearted person, nice person, but the problem is his D doesn't last. What is a D? Dil, heart. Yes or no, everyone? Yes, problems with securitization in India. D. Yes, D is going to be debt market. Debt market is inadequate, doesn't last. L for law, there is ineffective foreclosure loss. A, accounting, still no clarity. Yes, S is stamp duty is very high. S is standardization is not there. T is taxation. Yes or no, everyone? Perfect. Then finally, we are having securitization instruments. First one is pass-through certificate. Whatever we are receiving, we are passing it on to the investor. So whatever trustee is receiving, we are passing it on to the investor. Investor is having a proportionate interest. In case of early repayment, that also he is receiving. Yes or no? Originator is transferring entire cash flow to the investors. Investor is getting the proportionate interest. Repayment is also immediately passed on. Yes, pay through security. Yes, we are desynchronizing whatever we receive, whatever we pay. We are desynchronizing. We are periodically planning. In case of early repayment, that we will invest for short term. Yes or no, everyone? Cash flow from assets and servicing is desynchronized. In case of early payment, that surplus cash is reinvested. When we are having a stripped securities, cash flow is split into two. Yes, interest only, principal only. In interest only, we will receive only interest. In principal only, we will receive only principal. And then there was a relationship. My YTM interest rate increases. Interest only increases. principal only decreases. Is this clear, everyone? Securitization is over. Then comes blockchain technology, also called as distributed ledger technology. First comes the meaning of blockchain. Yes, it is a shared peer-to-peer decentralized ledger of transaction. Three things: shared peer-to-peer decentralized ledger of transaction. Okay. It operates without a trusted third party. There is no third party. Yes, it operates on a epoch only mode. That is, I can only add a transaction. I cannot delete the transaction. Yes or no, everyone? In case of changes, yes, in case of reversal, correction, yes, we'll have to record a new transaction. This is the meaning. Then comes, okay, application of blockchain. We told, yes, GST. Nirmala is coming and telling GST has helped us in economy and healthcare. G for government related services, blockchain will help. S for services, financial services, yes, share, etc., etc., it will help. S T for travel, yes, travel industry, yes, blockchain is going to help. Economy, economical forecast, will get decentralized forecast, yes or no, that will help us to take better decision. Healthcare, in healthcare also it will be useful. Is this clear? Risk associated with blockchain, I told, okay, data related to risk and lack accountability related to risk. Yes, data related, there is data can be tampered or information overload can be possible. Yes, boss. Yes, responsibility related to things. Yes, there is a lack of accountability because there is a lack of central authority. Yes or no, everyone? Okay, fine. Then came the final point, which is similarities between tokenization and securitization. First, we need to write the meaning of tokenization. What is tokenization? We are converting tangible, intangible assets into blockchain tokens. Now, what are the similarities? We have told mnemonic Tabish is a doll. Yes or no, everyone? Yes, logical also. You guys can remember Tabish is a doll. T for trading. Once you've created a token, trading is happening. Yes, second doll. D for diversification is there. Yes, O for opportunity, new opportunity is coming. Yes, L for liquidity, it is injecting. Yes or no, everyone? Simple. Now you guys can do it this way as well. Yes, for the company which is doing tokenization, they're getting liquidity, they're getting fund. For the investors, diversification is getting, new opportunity is getting, trading is also enabled. Yes or no, everyone? Yes, with this the entire chapter we have done, my dear students. Now if you want, you guys can have a look at the study material. Trust me, each and everything we have done, nothing we have left out. Yes or no? Introduction is basics, concept definition, okay, not needed. Features of securitization, did we do? Yes, boss, we did. Benefits of securitization for originator, for investor, did we do? Yes, boss, we did. Participants, did we do? Primary participants 1 2 3. Yes, secondary participants, yes, 1 2 3 4 5 6 we have done. Yes, mechanism, steps, yes or no, everyone? Perfect. Initial 4, subsequent 3, yes, 7 steps we have done. Then problems of securitization in India, yes, this also we have done. Securitization instruments, pass through certificate, pay through security, stripped security, we have done this. Yes, on the pricing of securitized instruments from the perspective of investor, YTM, yes, originator, he should be getting more. Yes, by, yes, giving the loan to the customers. Yes or no? Risk in securitization, I told, just read it once by yourselves. This also we have made it simple and we put it one time, you can read it. Tokenization, yes, blockchain, first meaning of blockchain is there. Yes, then features of blockchain. Yes, you initiate a transaction, broadcast to the network. Yes or no? Yes, it is validated. Yes, it is added as a block, added to existing block, complete. Additional points I told, not important, just a chart. Application of blockchain. Yes, GST has helped us in economy and healthcare. Yes or no? Then risk associated with blockchain, 4 pointers are there. Yes, then tokenization and securitization, that also we have done. Securitization in India, yes, a paragraph is there, that also we have put. The chapter is done. Each and everything we've done. I hope you guys have thoroughly enjoyed, my dear students. Now this video is for students who purchased the class, will be available in the app. For students who are watching it on free, yes, it will be available on YouTube as well. A lot of effort has gone behind to ensure that firstly you guys ignore theory, to ensure that theory becomes interesting, to ensure that you guys understand theory, to ensure that you guys remember theory. A lot of effort has gone in the background. If you have loved it, means I would really appreciate if you share it to all your friends. Now I'll tell you a very simple thing, my dear students. Okay. Now whatever efforts we are putting it on YouTube, now it is completely free for all of you guys. I am not even getting a rupee of return from that. And trust me, I have kept the monetization off. Yes, till date, that is how it is. That is how I want it to be. Because generally, when students are seeing, they're watching the videos, if monetization is on, there will be lots of ads coming in between. It will interrupt them during their studies. So, as a policy, we decided, first, let us keep the monetization off so that students can learn properly. So, whatever videos we are putting it on YouTube, monetization is off. So, you will never be finding a single ad in the middle of the videos. Okay. Yes. Now what will happen is when the monetization is off, by default the reach for that video is going to be less on YouTube. Sir, why is it, sir? Because understand a simple point, students. Say, for example, two people are there. Okay. Yes. Two people are your friends. Person is telling you, okay, yes, promote. Suppose he has come up with this firm. He is telling, Macha, if you're having any clients, refer to me for free based on friendship. Yes. Second person is there. He's also telling, Macha, if you're having any clients, refer to me, but I will pay you 10% of the client fees. If you get a client, whom will you refer to? To the second person, because he is giving you a commission. Yes or no? You're earning something. Clear? Now, what is YouTube? Is YouTube a platform for sharing videos? No. YouTube is an advertisement platform. YouTube is earning money from the videos. How? By running ads. Yes or no? Yes. When YouTube will run ads? Yes. When we will enable ads to be run? Yes. In my case, I am not enabling ads. Why? Because it is disturbing you guys. Yes, when ads are disabled means YouTube will not be giving a good reach. Why? What is the advantage YouTube will get by promoting your video? Anyways, YouTube is not earning anything. So it will not be giving a good reach. Okay, despite that, we have gone ahead and kept off the advertisement ad because we wanted to ensure that students learn. Okay, so it becomes your responsibility. You'll have to share it to all your friends if you have loved it, and I'm sure you will love it. You'll have to share it to all your friends and tell crazy video it is. Yes, we're having AFM practical concept. Yes, decoding videos for all the chapters. Yes, theory is there. So much more interesting, crazy content we'll be coming up with. If you have loved, please do put in your valuable comments. Do share it to all your friends as well. So that's all. See you guys some other day for some other session. Until then, keep studying, keep smiling, keep working hard, keep making your parents proud, and see you in the next session. Take care. Bye. Yes, everyone. So, hello, hi, namaskaram, and good morning, students. I hope you guys are having a crazy, amazing day. If not, let us make this a crazy, amazing day, my dear warriors. It is time for us to take our discussion forward, everyone. So, now we are going to proceed further to the next theory chapter, which is going to be startup finance. Again, simple, beautiful scoring chapter from your examination perspective. And if you see the trend analysis, every attempt, minimum 4 mark question compulsory has been there. Some attempts, 8 marks question have also been there. There are multiple attempts when 8 marks questions have come from this particular chapter. Again, very important chapter from your examination perspective. But trust me, it's a very simple chapter. Yes, securitization was slightly technical. This, trust me, is very simple. In this chapter, this entire chapter, we have bifurcated into three different buckets, three different segments. First, we'll understand the basics. Then we will try to understand about venture capital funds. Then we will try understanding about succession planning. It is once a startup becomes successful, they will start planning for the future. Who is going to be the next successor? So succession planning will also be done. Is this clear, everyone? So let us start with the chapter Startup Finance in 3, 2, 1. Let the maja begin, my dear students. Yes, everyone. Imagine. This is me. So imagine in a parallel universe, I am working in a corporate job. One day after a hectic job, I am coming back. I'm fully frustrated. I'm thinking I'll have to leave this job anytime soon. Yes, I'm stuck in traffic, but I didn't know what exactly to do. I'm planning, I want to leave this job, bro. This is so frustrating, but I didn't know what to do. I was coming back in my car. There was a lot of traffic for hours and hours and hours together. I am stuck in the traffic. Suddenly, I get an idea. Tan, tan, tan. Why don't we come up with cars that fly? That led to the concept of Maja flying cars. Just a fictional story. Imagine, I decided, why don't we come up with cars that can fly? Maja flying. It's crazy idea, right? So that led to the start of a new startup venture. So the very next day, I gave my resignation. We started with a new company called Maja Flying Cars. Yes or no, everyone? So what is going to be a startup? How do we raise fund for startup? Now understand the name of the chapter is not startup. It is a startup finance. How do we raise money for the startup is going to be the chapter. Now, using this simple story, this entire chapter, we will try navigating it through. Is this clear, everyone? So, shall we go ahead to the first point that we are having? Yes, sir. So, first point that we are having is some of the innovative ways to finance a startup. Oh. Now, we have started with our startup, Maja Flying Cars. In order to start our startup, start operations, we want money. Now, how do we get, where do we get money from? Sir, simple, sir. Yes, either raise equity or raise debt, sir. Now, understand, startup is still at its very initial stages. So, you cannot be raising equity in bulk in the form of IPO. You cannot be going for IPO. I'm just saying, okay, we are coming up with a concept called as Maja Flying Cars. They're asking, okay, How many cars you have already produced? I'm telling zero. I just have an idea. Whether anyone will give their equity? No, boss. It is very difficult to raise equity because you're already at the very initial stages. So then debt, sir, you go to bank, get a loan. Tell me, bank will give a loan directly? No. Bank wants a collateral. Yes. 9 out of 10 startups fail in India. So whether banks are willing to give loan for startup? No. Banks are telling, boss, this is very risky. I give housing loan, I know my money will be back. Or else at least I have the house as a mortgage. I give car loan, yes, I have car as a mortgage. Yes or no? Here, what is there? Just your idea is there. It may work, it may not work. So banks are not that willing to give loans to startups. So in that case, we'll have to look for some other means to fund our startup. This is going to be the first thing. So how a question will come in the examination? List some of the innovative ways to finance a startup. That could be the wording, or suggest some non-banking ways to fund a startup. Non-banking ways, not banking. Bank will not be giving us loan. So non-banking ways, how can we raise some fund for our startup? Each of the points we will first see, we will understand. Then accordingly, we'll try remembering that as well from the examination perspective. Pay attention, everyone. Every startup needs capital for growth and operation, but since bank rarely fund early stage ventures, yes, entrepreneurs mostly focus on innovative non-banking financial options. Non-banking options we are looking at. What all options are there? Very simple. Trust me, this is a chapter. Even if you study by yourself, you read by yourself, you will get to know. And notes beautifully we have designed so that revision becomes easy for you. First option is personal financing. Basically, whatever personal savings we are having, we are investing that. Say we started Maja Flying Cars. So initially we wanted some cash to start with the business. We wanted to do some basic research. Yes, come up with the basic prototype. Where do we get this money from? We went to bank. Bank are not giving. I had some savings, say 5 lakh rupees savings I had from the job. Yes, I use my personal savings to start my business. This is yes, personal finance. Is this clear, everyone? Personal financing. Look at the students. Very simple. Entrepreneurs should invest their own savings first. Whatever I have saved, that only I'm going to invest. Yes, as most investors are reluctant to fund a business if founder has no personal financial commitment. So what we are telling, firstly, initially we will not be getting anyone. So that is why we should be putting our personal savings. Secondly, even if investors are willing to come, say for example, you are the investor. You are telling, okay, I like your idea. I will put my 20 lakhs in the business. But tell me how much money you have put. You are the founder. How much money you have put? Suppose I'm telling I have put 0 rupees of mine. Tell me, am I having any commitment? Yes. Am I having any belief in my own business? If I had, yes. Investor is telling, you're the investor. You're telling, boss, if you have a belief in your startup, you should have put your own savings. You are not putting your money. You are putting only our money. So you will not be focused. Yes, you will just misuse the money. You will not be serious. Only if your money is at line, you will be more serious. So first put your money first. Is this clear, everyone? Example is personal savings. First point is over, personal financing. We are putting our personal savings. Next is going to be personal credit line. Here what we are using our personal credit line. As a person, we will be getting some credit. Say for example, 4 or 5 years I was in a job. I was earning reasonably well. Once you enter into a job, you start earning reasonably well. Yes, one category of people love you the most. Who are they? Credit card people. They'll call you. Sir, we have a credit card, 1 lakh limit. Sir, 2 lakh limit. Sir, 4 lakh limit. Sir, 5 lakh limit. Now, once you become CAs, CMAs, once you start earning, trust me, 2, 3 years, your credit card limit will reach 3 lakh, 4 lakh, 5 lakh. Now, imagine my credit card limit was 5 lakh. I quit my job, but still I'm having that credit card limit of 5 lakh. So initially for some time, if I want to fund, I can use my credit card, yes, come up with a prototype, try selling at the end of the month, yes, I can repay the funds. That can be done, yes or no, everyone. Or else I can go for a personal loan. Yes, I go to bank, I tell boss, we are Maja Flying Cars, we want to start a business. Yes, we want to come up with the concept of flying cars. Banker tells what nonsense business it is, I am not funding. Okay, I go to the next bank, HDFC Bank. I tell I am CA Tabish, I want a personal loan of 5 lakh rupees. He's asking why? I'm telling personal loan. Say for example, I want to get married. Imagine. I'm telling, he's telling, okay, you're a CA, you're having yes, financial statements, you file your ITR, you're having a good income, we will give you a personal loan. Bank is not giving you a loan for the business. But as a founder, if you're having good credibility, you can get your personal loan. So try getting a personal loan. Is this clear, everyone? This is the second thing. Personal credit line. Yes, they are based on entrepreneurs' personal credit worthiness, either credit card or personal loan. Is this clear, everyone? First, we'll understand everything. Okay. Then comes family and friends. I want to start my business. I don't have money. Who do I ask for? Then they tell me, students, yes, you want to start something new. You don't have money. Who do you ask for? You ask for your family. Yes, if your family is not supporting, you ask for your friends. Same thing it is telling, okay, boss, you're not getting money. Ask your family and friends. Okay, simple. Yes, they often fund you based on trust rather than the idea's viability. Yes, parents are the only people who will fund you, even if they know, okay, this idea is going to fail. Still, they believe in you. They want to make you happy. That is why they will give you the money. Yes or no? So, from family and friends also, you can raise the money. Is this clear, everyone? And trust me, whenever you are starting anything new, you will try using each of these things. Yes, I cleared my CA. Yes, initially, I'm telling you guys a real story. Initially, I had that dream that I have to get into teaching. But I cleared CA. Trust me, the financial situation at home was bad. Point number one, there was lots of loans, COVID had affected, all those things had happened. So I was in dual minds. Then my mom told, okay, yes, whatever loans are there, we'll take care of it. Don't worry. Yes, whatever is your dream, you go ahead with that. But in order to start with teaching, yes, we want a basic setup for teaching. We want, say, a good laptop. That time I was not even having a good laptop. So slowly, yes, initially, yes, my first laptop was the first thing I took on, EMI. Slowly on EMI I purchased, so that through that we initially started with the classes. Proper setup was also not there. Yes, basic webcam we got, through that we started the classes. And today, by God's grace, and your love and support, very, very grateful to be where we are today. Yes, everyone. So this is a beautiful journey. Every person who is starting something by himself has to go through. Yes, everyone. 3 points are over. Next comes peer-to-peer lending. Now, what is peer-to-peer lending? Group of people come together and they lend money for an interest. Is this clear, everyone? Now, a group of individuals pool money to lend to one another. Is often seen in small or community based groups that support members in their startup ventures. Simple example, understand students, peer to peer lending. These are generally community based groups, say in your respective, yes, religions or communities. Say, for example, generally it is famous in Marwadi communities, Jain communities. Mostly you see Marwadis, they are businessmen. Jains, yes, in the north, they are majorly businessmen. So they will be having their own community. In the community, every person will contribute some form. Simple example, imagine all of us, say 10 of us are there. 10 of us are from the same community or same locality. What we do is we pool funds. Say we tell everyone has to contribute 10,000, 10,000. We tell, okay, boss, 10 of us contribute 10,000, it becomes 1 lakh. So we pool this fund and keep. We tell anyone wants to start a startup or anyone wants an emergency. Yes, we will give this money as a loan, but at an interest. Imagine the interest is say 12% per annum. So pooled money of 1 lakh is available. I want to now start a new startup, Maja Flying Cars. For that, I want money. Yes, I approach them. I tell boss, this is going to be my plan. Yes, I want funding. Please do help me. Banks are not helping. They will tell you, okay, 1 lakh is there. We will give you 1 lakh, but you will have to pay us 15% interest. Generally, interest is going to be slightly higher than the interest charged by the bank. I tell, okay, because I want fund. They are also happy. Firstly, because they are helping a person from their community. Secondly, they are getting a higher interest rate. Is this clear, everyone? Perfect. This is a P2P lending, peer-to-peer lending. Yes, group of people come together, they pool the money. From the pooled money, they give loans, then interest rate. Is this clear? Generally, in communities, this would be there. In different places, different communities, you'd have seen. Yes, in different forms, slightly in different forms, you'd have seen at all levels. Yes or no? Yes, there could be some groups. Say, for example, employees group, friends group. Imagine all of you guys became CS. After that 5 years, you're earning good amount. You decided you are going to create a fund where every person is going to contribute, say, for example, 50,000 rupees. So 50,000 is too much, sir. Today it is too much. After 4 or 5 years, it will be a nominal thing. So everyone will contribute 50,000, 50,000 each. Yes, if any person is in need of funds, if any person is in emergency, if any person wants to start anything, they can withdraw money from this fund at an interest. Later on, they will repay it with interest. Yes, fund will anyways be available. This way things will work out. Is this clear, everyone? Yes. This is one thing. Community based groups will be there. One more thing which will be there is P2P platforms, peer to peer lending platforms will be there. You know Bharat Pay, Ashneer Grover, yes, he had come up with a concept called 12% club. That is, you are a person, you are having extra fund, you give them the fund, he will give you 12% interest. That was a famous concept. How he will give you 12% interest? He will pool money from people like us, from everyone. There is an app. Yes, they will pool money from everyone like us. They've got the corpus. Now, any person is in need of fund, they will give it to them at a higher interest rate. Then they will repay us 12 percentage. Yes or no, everyone? This is a concept. Look at this practical examples in India. Different apps which are there for P2P lending. One is FairSend. Yes, one more is Lendbox. Yes, one more is Quill Loans. Yes, Mint, 12% Club. All these things are working in the P2P lending segment. Don't want to explain much. If you guys want, you guys can do your research by yourselves. Simple. How will P2P lending work in case of app? Yes, here there is the connector, which is the application. This is me. I am telling I want a 5 lakh for my startup. So I make my application here. So they get to know that you want 5 lakhs. Now there are different investors who are waiting at different places. What is the benefit for the investor? Investor is getting slightly higher return. If he invests in bank FD, he'll be getting 7% only. Here they are promising 12%. Say one person is having 10,000, he will tell I will give 10,000. One person is having 25,000, he'll tell I will give 25,000. One person is having 50,000, he'll tell I'll give you 50,000. This way it will collect the money, give the money. Yes, periodically I'll have to keep paying interest. They will disburse it. Now, sir, what is the benefit for the platform? They will charge the platform fee, say 2%, 3%. Is this clear, everyone? Similar to bank, but in case of bank, one party is giving you the full loan. Here, P2P lending, yes, group of people are giving small, small loan. Is this clear, everyone? Yes. Shall we continue our discussion further? Yes. So, 4 points are over. Now comes the next point, which is going to be crowdfunding. What exactly is crowdfunding? Yes. We have come up with a crazy concept called Maja Flying Cars. I went to bank. Bank is not giving me money. I don't have any way to start up with my business. So what I do is, out of desperation, I post on Instagram that traffic is the biggest problem in the world. But guess what? I have a solution for that. Maja Flying Cars. This is the prototype of my business. In 1-2 years, this is the level at which we can operate it. But we are in need of funds. Yes, please do help us. Yes, if you can contribute 100 to 200 rupees, still 1 lakh people contribute, it will make a big difference. I post it. Yes, people share it. People start contributing. I get the money from that. I start my business. It has happened. You would have seen for community based help. Someone is, in what do you say? Someone is in dire health crisis. Someone is not keeping well. They are the sole bread earner for the family. You will find different platforms like Keto, Mila. They are raising fund, crowdfunding. From the crowd, they are raising the fund. Yes or no, everyone? Perfect. Crowdfunding. It involves taking small amount of money from a large number of people, typically through social media and online crowdfunding platforms. Is this clear, everyone? We are telling we are coming up with Maja Flankers. Please, whatever you can contribute, contribute. Now you will ask, sir, why will the crowd contribute? Different reasons could be there. Either reason number one is charity. Half a person, let him do something. If anything happens, it will be good for the country. Could be possible. Or the second reason could be equity. I will tell, I am not in a position currently to go for IPO, do all those things and list myself. You guys give me the money. In return, after 2 or 3 years, yes, I will be giving you guys a equity in my company. That could be possible. Or third, and the famous thing is payment in return for rewards or goods or services. Say, I am telling boss, every person, please try giving me 1 lakh rupees or 10,000 rupees. We'll keep a simple number, 10,000 rupees. In 1 year, we will come up with the Maja Flying Cars. Once we come up with the Maja Flying Cars, we will give you the preference to be the initial customers. With that, whatever 10,000 you have paid right now, is once our cars come into the market, you will have an opportunity purchase our cars at 50,000 discount. So it's okay, boss. Anyways, we are helping the person also. So 1 year, we believe in this concept. Once it comes into the market, I will be in a position to purchase the cars at 50,000 discount as well. Is this clear, everyone? These are the reasons why crowd will pay. Is this clear? more than what is there in the study material. I'm discussing it with you guys. Is this clear, everyone? This much is not needed, but still, once we are understanding, quickly let us try understanding these things as well. So crowdfunding example Keto Milap. Yes, why will the crowd fund? Either in return for equity or for reward, goods or services, or donation based. Is this clear, everyone? Okay, sir. So let us quickly try seeing what all we've seen. Personal financing, that is the personal savings, personal credit line, credit card, family and friends, peer-to-peer lending, crowdfunding. Then comes micro loans. Sir, what is micro loan? This is the small value loan given to the startups, usually at relative low interest. You would have heard something called as mudra loan. You would have heard something called as government has come up with a scheme for women entrepreneurs wherein they will be getting loan up to 1 lakh at 4-5% interest rate. These are micro loans. These are not big loans. Small loans which are given for startups, lower interest rate. This is going to be the concept of micro. Not very important, but still it is there. We have just given it one read. Okay, boss. Next comes vendor financing. This is a beautiful concept. Now, what is vendor financing? It is a form of financing where the company lends money to its customer so that he can buy the products from the company itself. Simple example I am giving. Now, imagine I am Indigo. Let us come here. Have we written it? No. Okay. Imagine I am Indigo. I am in the business of transportation of people through air. In order to transport people, I want flights. I am not having flights right now. So what I do, I go to Boeing International. They are the aeroplane manufacturer. I go and tell them, Boeing, please, I want to purchase your flights. They tell one flight costs 200 crore rupees, random number. Yes, Indigo tells, boss, we have just started our business. We really want to work. We have a crazy innovative idea, but right now I'm not having 200 crore rupees. Can you please help me out? Now, what he is the vendor, Boeing is the vendor, yes or no? What Boeing can do? One of the two things Boeing can do. Either Boeing will tell, boss, generally I will be giving 30 days credit. In 30 days, you make the payment. But because you are a startup, you are just starting it out. I will do one thing. I will give you a concession. You make payment after, say, 100 days. That is, vendor is giving you additional credit period. Is that a benefit? Yes, boss. I will get the flight. I can start my operations in 100 days. I can make payment. That is one option available. Yes or no, everyone? Perfect. Or else one more option Boeing will give you. Yes, Boeing will tell you, boss, you do one thing. Yes, I will not give you credit period, but I will arrange for finance. It is Boeing is telling, we are having our own finance wing. Say, generally you go to purchase cars. You go to, say, Maruti to purchase a car. They will give you a car. They will tell, boss, we are having our finance wing. If you are not having money, they will arrange a loan and give it to you. Yes or no? You go to a showroom to purchase, say, AC, etc., etc. They will tell you purchase an AC. You don't have money. Okay, we are having tie up with Bajaj. They will arrange finance for you. Yes or no? Vendor is arranging finance for you. So Boeing is telling, we are having our own finance wing as well. Yes, Boeing financing. Imagine. Yes, what they will do is, say, one aeroplane costs 100 crore. Yes, they will give you 100 crore. You cannot do party with that 100 crore. Using this 100 crore, you will pay Boeing. And then slowly, yes, the EMI, interest as well as principal, you can keep repaying to the financing company. Is this clear, everyone? This is going to be the vendor financing. Vendor is helping you finance your startup. How? Either he gives you additional credit period or he gives you a loan so that you can purchase the goods from me. Is this clear, everyone? Perfect. I hope this concept is clear. Very simple points we are having in this chapter. Yes, vendor financing. Yes, company is lending money to its customer for Boeing. Yes, Indigo is a customer. Company is giving money to its customer so that he can purchase the goods directly from the company. Is this clear, everyone? Yes. Next comes purchase order financing. This is one more beautiful concept. What is purchase order financing, students? Pay attention. Very simple. Okay, here we have kept it. Look at this. We are Maja flying cars. Okay. Now we got one big order from a customer. Imagine you are the customer. You place order for 10 Maja flying cars. I tell, okay, boss, in 1 month I will manufacture flying cars and give it. Happy, happy. I tell, can I get some advance? You're telling no. Once you manufacture the car, only then I'll give you the money because it's a new product. I do not believe you. I cannot. Now I know how to build a car. I know I can build a car, but I don't have money at all. Yes, I want money. I go to banks, etc., etc. They are not giving me money. Then there came a financial company. He will tell that, yes, I go to him, I tell, boss, I'm in badly need of funds. I've got an order already from a customer. I just want to produce goods. For that, I want to purchase my raw material. Please give me some money. Yes, he is telling, I do not believe you. I will not give you money directly. If I give you money directly, you will do party from that. But instead, what I will do, why you want money? Produce goods. For that purpose, to purchase raw material, you want money. Yes. What raw material you want to buy? I tell boss, two raw material I want to buy. Imagine. Firstly, I want to manufacture cars. For that, I want tires. From MRF, I have to purchase tires. Then I want steel. Say, for example, from Tata Steel, I want to purchase steel. Is this clear, everyone? So, what my financier will tell? Financier is telling, I will not make payment to you directly. Instead, you purchase goods from them. From MRF, you purchase tires. From Tata Steel, you purchase the Tata Steel. Yes. For them, directly against your purchase order, you are placing a purchase order against your purchase order. Payment, you don't worry, I will make payment. Yes or no? Financier is telling, I will not give you cash directly, but instead to your supplier, I will make payment. Now you are telling how many days you want. I am telling boss 30 days is sufficient. I will manufacture goods, receive money and pay you. So financier will directly make payment to the supplier. Supplier will give us the goods. Yes, I will manufacture the product, sell the product. I will receive the money. Once I receive the money, I will transfer, repay the loan with interest to the financier. Is this clear? Purchase order financing. The financier is telling, I will not pay you directly, but instead you purchase goods. Against your purchase order, I will make the payment. Is this clear, everyone? Yes. This concept is also over. Then we have the final concept, which is factoring of accounts receivable. So many times, multiple times, we would have heard this. Yes or no, everyone? Okay. What is factoring of accounts receivable? We are Maja flying cars. We got the order from the customer from for 10 Maja flying cars, 10 flying cars. We somehow arrange the resources. We manufacture the car. We sold the car. Now, customer is telling, generally, I am having 100 days credit period. I will make payment after 100 days only. I tell, okay. So much difficulty we got the customer, we cannot tell no to the customer. I tell, okay. But tell me, right now, I am in urgent need of funds. Imagine the transaction value is of 1 crore rupees. For 10 cars, we have quoted 1 crore. Okay. I will be receiving 1 crore. That will help me a lot, but I will receive 1 crore only after 100 days. I'm telling today itself I want 100, yes, 100 crore or some money at least. So what I will do, I will go to a factoring company. Yes, I will tell boss, this is the bill that I'm having. Yes, I have made a sale to my customer 100 crore, but I will receive after 100 days. I'm in urgent need of funds today. What factoring company will tell? Yes, factoring company will tell, today I will pay you 80 crore rupees. Take this. At the end of 100 days, once I receive the complete payment, yes, you pay me the interest as well as the factoring charges. Yes. Or else I will receive the money balance amount. They will pay. Is this clear, everyone? This is going to be factoring of accounts receivable. Basically, there is a factoring company. Yes, I would have made a sale to my customer. Yes, accounts receivable is there in the books of the business. Yes, we will sell the accounts receivable and receive front cash. So I need not have to wait for 100 days. Front cash I will be getting so that my working capital requirements are met. Is this clear, everyone? Yes, boss, something we've learned in Inter already. Yes, a startup is selling its accounts receivable to a factoring company, which pays most of the amount upfront, approximately 80-90%, and releases the balance on collection after reducing the interest charges. Is this clear, everyone? All these are the different innovative ways to finance a startup. Is this clear, everyone? Yes, sir. Now comes the important question, sir. How many we should remember for exam? Only 3 to 4 is sufficient. Can we try remembering 4? 4 marks question. For simple, sir. First one is going to be personal financing, personal saving. Next one is going to be personal credit line, personal credit card. Next comes P2P lending, peer-to-peer lending. Next is family and friends. 4 already we got. Yes or no? Then we are having purchase order financing, vendor financing, factoring accounts receivable, micro loans. So many are there. Simple it is. Yes or no, everyone? Perfect. Just a minute. Yes, everyone. So reasonably we can remember points, but still we have created a simple mnemonic for this. What is a simple mnemonic? So I was working in a job. I want to start my startup. That is the story with which I began. Yes or no, everyone. Now, once we have worked in a job for some few years, say 3 years, 5 years, once we are leaving our job, we will be getting our PF money, provident fund money. So what I am telling, yes, in order to fund my startup, I will initially use my provident fund, PF money. Yes. After that, after I've fully exhausted my PF money, then I will go to a venture capitalist. Venture capitalists are the big businessmen. Yes, big, yes, venture capital companies which will give money to the startup companies. Yes or no, everyone? What is the mnemonic? Yes, in order to start, in order to fund my startup, I will first use my PF money. After that, I will go to the venture capitalist. First, I will use my PF money, provident fund. Then I will go to the venture capitalist. So, what is this? Yes, PF, then venture capitalist, which is VC. PF, from P, what all points I am having? Try remembering, students, from P. 4 points are there. Firstly, from P, I am having personal financing. Next, I am having personal credit line. Next, I am having P2P lending. Next, I am having purchase order financing. Yes or no, everyone? 4 pointers. Okay. Then from F, I am having 2 points. What all I am having? Firstly, I am having friends and family, or family and friends. Yes. Next, I am having factoring of accounts receivable. Yes or no, everyone? Yes. Next, VC. From V, I am having vendor financing. Boeing International example I have given. Yes. From C, I am having crowdfunding. Yes or no, everyone? So altogether 1, 2, 3, 4, 5, 6, 7, 8. 8 points we have remembered. Is this clear, everyone? Without this also, you guys can remember. Just if you remember P also, you get 4 points. Personal financing, personal credit line, purchase order financing, and P2P lending. Is this clear, everyone? Oh, point number 1 is over. Now quickly we'll see in the question bank how questions are coming. Simple, look at this. Why do traditional lenders like bank hesitate to finance a startup? Because the risk is high. Yes, list out alternative finance options available. See how many times it has come. MTP, MTP, past exam, past exam, past exam, 3 times, 4 mark each. 4 innovative source of funding a startup. Non-banking financial sources. Yes or no? Personal financing is one of the innovative ways. Discuss any other 4 methods. Look at this. All 8 points, 8 to 9 points, you guys can be writing. Need not write all 8 to 9. 4 also, if you write, it is sufficient. Yes, write down the heading, just give one liner explanation, it is sufficient. Some places institute has just given the headings also. Is this clear? So if you just write heading and one liner explanation, more than sufficient. With this first point is done, done. Now let us go ahead to the second point, my dear students. The second point is meaning of startup as per Startup India initiative. Government is promoting startups in India by giving incentives, subsidies, tax benefit, loans at lower interest rate. For that, we should first try understanding what will qualify as a startup and what will not qualify as a startup. Which company can be called as a startup? Randomly, I start something. Can I call it as a startup? No, boss. Some condition have to be met. What all conditions should be met so that I can call my entity as a startup? Simple conditions in law you would have read. Otherwise, nevertheless, here let us read. From this also questions will be coming. Look at this, students. Beautifully, we have written it down in the form of pointers. First, an entity has to satisfy the following conditions to be recognized as a startup in India and avail the government benefits. Why I want to register as a startup in India? Because I want to get the government benefits. What all conditions should be there? Firstly, startup, it should be a new business. That means the period should be less than 10 years from the date of incorporation. First, the entity should be within 10 years from the date of incorporation. Okay, boss. It is a new entity. Yes, life is within 10 years from the date of incorporation. Condition number 1. With that, plus extra, how it should be registered? It should be registered in India either as a private limited company or a partnership firm or an LLP. Tell me, I have registered as an individual. As an individual, I'm carrying out my business. Can I call myself as a startup? No. I should either be a partnership firm or LLP or a private limited company. I have registered myself as a public limited company. Can I call myself as a startup? No. Yes. Government is saying, boss, public limited means we are a big company. You can't take the benefits of startup. Is this clear, everyone? Suppose I have registered myself as a trust. Can I call myself as a startup? No, boss. Trust is for charity purpose. Yes or no, everyone? Okay. Two conditions. To 10 years, either partnership or LLP or private limited. Next, turnover in any financial year. What is the third condition, students? Turnover in any financial year. Turnover condition. You should not be having a very high turnover. If you are having a very high turnover, again, Government is telling, why should I give you benefit? Turnover in any financial year since the date of incorporation should not exceed 100 crore. What is it? Yes, you've incorporated. Imagine we are currently in the 8th period. Turnover in any of the financial year should not have exceeded 100 crore. Is this clear, everyone? Okay. Three conditions we have put. What are the three conditions? Let us quickly scribble. Firstly, it's life less than or equal to 10 years from date of incorporation. Yes or no, everyone? Second, it should be registered in India, incorporated in India as a partnership or LLP or private company. Plus, turnover in any financial year should not exceed 100 crore. Yes or no, everyone? And then we have the final condition, that is the entity is focused on IIS. What is IIS? Innovation, improvement of product services, and having a scalable business model. Is this clear, everyone? Fourth condition is, yes, entity is focused on, yes, I want you guys also to scribble IIS. I stands for innovation, improvement of goods or services, having a scalable business model. So if these four conditions are fulfilled, any entity will be called as a startup. Yes, it has to register as a startup, and accordingly, it can start getting the benefits of Startup India initiatives. Is this clear, everyone? Four conditions. Okay, boss. Now, one more additional pointer is there, which is not a startup. If any entity is formed by splitting or reconstruction of existing business, it is not treated as a startup. Imagine I had a very successful business. Imagine we started Maja Flying Cars. Yes, crazy success it became. Imagine we have finished 15 years from the date of incorporation. Government has come up with a notification that for startups we are giving tax holidays, tax benefits, interest loans at lower interest rate. So many benefits we are giving. Yes, I had the desire. Yes, you can see greed, that I also want to get the benefit of Startup India, but boss, my turnover is exceeding 150 crore. So what I did is I reconstructed my business. I told boss, we are having Maja Flying Cars. In that, flying cars was also there, flying bike was also there. What I do, flying bike, I create a separate company called Maja Flying Bikes. Then I tell boss, this is a new company, Maja Flying Bike. Today itself I've incorporated. Turnover is not exceeding 100 crore. Please give me the benefit of Startup India. Government is telling, no. Modi ji is telling it is not that simple that you make a fool of us. Yes or no, everyone? If a business is formed by reconstructing, okay, or splitting an existing business, we will not treat it as a startup. Is this clear, everyone? For condition for an entity to become a startup, yes, its life is less than or equal to 10 years from date of incorporation, incorporated as a partnership or LLP or a private limited company. Yes, third condition, turnover in any of the financial year is does not exceed 100 crore. And the fourth condition, it is focused on IIS, innovation, improvement of products or services, on having a scalable business model. If it is formed by splitting or reconstruction of existing business, it is not a startup. Is this clear, everyone? Yes, sir. So quickly, let us have a look at the questions. Pay attention, everyone. Question number 2 was from the last topic itself. Peer-to-peer lending and crowdfunding are the same. Tell me, are they the same? No, boss. Peer-to-peer lending, group of people are coming together. They are lending. Crowdfunding, yes, crowd is funding. Why they are funding? Either in return for equity or for donation or in return for goods or services, rewards. Yes or no, everyone? Yes. And they are the traditional methods of funding. Are they the traditional methods? No, boss. Traditionally, what is a traditional method of funding? Go and get a bank loan. These are the modern methods of funding a startup. Firstly, no, I do not agree with the given statement. Then they've given an explanation. You guys can see it. It had come in the examination for 4 marks. Now comes question number 3. Multiple times it has come. RTP, past exam, past examination. Yes, as per GSR notification dated 19th February, what conditions an entity needs to satisfy in order to be a startup? What is a startup? Criteria to become a startup. All these things will, right? Yes, up to 10 years from the date of incorporation. Yes, registered either as a partnership firm or LLP. Yes, or partnership, yes or no, everyone? Yes, partnership firm, private company, LLP. Turnover does not exceed 100 crore, working towards IIS. Yes, if it is formed by splitting or reconstruction, it is not a startup. Is this clear? Now, one more question had come. Beautiful question had come in the examination. Pay attention, students. Nia Healthcare is a proprietary concern. Tell me, proprietary concern means a sole proprietor. The very wording that it is a proprietary concern. Tell me, can it be a startup? No, boss, it is not a startup. Because startup has to be either yes, partnership, LLP or private. Finish, story over. But still, let me read. Engaged in manufacture development of pharmaceutical products since the last 5 years. Yes, 5 years, that is okay. But still, boss, it is a proprietary. Scale up the business operation, increase the present turnover, which is hovering around 500 million. Okay, yes. How much is 500 million, students? Yes, 1 million is 10 lakh. 500 million. Yes, 1 million is 10 lakh, means 10 million is 1 crore. Yes, then 100 million is 10 crore, 500 million is 50 crore. Okay, fine. Yes, turnover condition is also met, but still no point. Chumma, we are just reading it. Is this clear, everyone? Proprietary concern. This very wording has told that it is not a startup. Okay. It decides to convert, the proprietor decides to convert his existing business into a private limited company. He also wants to get access to various tax benefit, etc., etc., whether it can be recognized as a startup. Yes, initiated by government of India. Tell me, is it a startup? No. Why it is no? Don't just write no, it is not a startup and come. Institute will also tell no, you are not eligible to become CA. Come after 4 months. First, we need to write the conditions to become a startup. As per government notification, yes, the following conditions should be met in order for an entity to become a startup. Yes, it is up to 10 years from the date of incorporation, plus partnership, private limited company, LLP, plus turnover in any financial year does not exceed 100 crore, plus it is formed for IIS, innovation, improvement and sustainable, what is a scalable business model. Yes or no, everyone? Tell me firstly, is it within 10 years from date of incorporation? Yes. Is it registered as a private or LLP or partnership? No. So it is not a startup. This is one red flag. Yes or no, everyone? Second red flag, we told any entity is formed by splitting or reconstruction can never be a startup. Tell me here what we have done. We have decided to convert my existing business into private limited company. So can it be a startup? No. Is this clear, everyone? This is the second red flag, because of which it is not going to be a startup. Is this clear, everyone? Okay. Question number 4 is also over. Now let us proceed further to the next point. 2 pointers are over, giving you guys a minute to let this sink in. Then we'll go ahead to the third point, which is going to be the concept of unicorn. Yes, everyone. So let us go ahead to the next point, which is going to be concept of unicorn. Now, what is unicorn? Unicorn is a new concept which is coined in US. Okay, unicorn, U for unicorn, U for US. Just remember this. Now, what is unicorn? Yes, unicorn is a private company whose valuation is crazy big, a very big company is a unicorn. Let us try seeing what all conditions has to be met. Yes, any startup is referred to as a unicorn if it has the following features. What are the features? Firstly, it should be a privately held startup. What is the condition? It should be a private company. Okay. The valuation of the startup reaches US dollar 1 billion. Sir, crazy, sir. How much should be the valuation? Valuation should be US dollar 1 billion. Don't tell in rupees. Now, previous one was a startup India. This is to be a startup in India. Tell me in India, which currency is there? Rupees. So here turnover was in terms of rupees. Yes or no, everyone? Here it is not turnover firstly, it is valuation of the business. What is the value of the business? Business valuation chapter we had studied. Valuation. Yes or no? Value of the startup is exceeding $1 billion. Unicorn US, it is going to be in terms of dollar. $1 billion is a valuation. Yes or no, everyone? Yes. Emphasis is on rarity of success. Yes, it is very rare for such a business to succeed. Yes or no? Zomato had come up with it. Such a concept was not there in India. It was rare that such a business can succeed. Yes, Ola, Uber had come. Till then, that concept was not there. It was a rare business model. Phone Pay had come. Yes or no, everyone? Yes. You had OYO rooms, etc., etc. Yes. Other common features include new ideas, disruptive innovation, etc., etc., etc. Is this clear, everyone? Yes. 3 to 4 pointers. Firstly, it should be a private company, plus valuation should exceed 1 billion dollar. Is this clear, everyone? Next, yes, focus is on rarity of the success. It is not easily becoming successful. It is a rare business model, rarity on success. And then we are having innovative idea, yes, disruptive innovation, use of technology, etc., etc. 3 to 4 pointers will have to be rated. Okay. Now some additional important pointers which we should be remembering. First, if valuation of a startup falls below $1 billion, then it can lose the status of unicorn. Yes, I hope you will be knowing what is a unicorn. Unicorn is a fictional, imaginary, yes, animal with one horn. It's a white color animal that is called a unicorn. Yes, or no, based on that, this name is termed. Yes, it is very unique. Yes, or not that easily found. Unicorn. Okay, now If a valuation of a startup falls below $1 billion, then it will lose the status of unicorn. Once it becomes a unicorn, is it going to be a unicorn forever? No, boss. It should be having a valuation of more than 1 billion. If its valuation falls below 1 billion, it will lose the status of this unicorn. Then, sir, subsequently, if its valuation goes above 1 billion, again it will become unicorn. Yes, sir. Can you give us some example? Yes, Byju's. Yes, Byju's reached its valuation of 1 billion. Look at this, everyone. Yes, it reached its valuation of 1 billion. Then it went up, 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 up. Yes, it reached all the way up to 22 billion. Then all frauds, everything got discovered. Yes, after that, almost 99% its valuation dropped. Now its valuation is not even 1 billion. Yes, it is in terms of some millions. Is this clear? Tell me, here it was a unicorn. Here also it was a unicorn. Once it fell below 1 billion, is it still a unicorn? No. If its valuation falls below 1 billion, it will lose the status of unicorn. Is this clear, everyone? Yes, important. Sometimes it may be tested for us. Okay. Next, what is the first unicorn in India? InMobi, an ad tech startup, became the first unicorn in India. This one point could be important. Institute has given a list of some 50, 60 unicorns, all unicorns every year, whichever it has become. Not important for us. Which was the first unicorn in India? A company called InMobi. What it was doing? It was an ad tech startup. Yes, advertisement based services it was providing. Okay. Then one more final point. A company which has attained valuation of more than $10 billion, it will be called as a decacorn. Is this clear? What is it, students? If the valuation is more than 10 billion, it will be called as a decacorn. Is this clear, everyone? Some simple, so many businesses you will be finding which have become a unicorn in India these days. Yes, take every big startup these days. Yes, Zomato, Swiggy, yes, PhonePe, yes, then you are having Ola, then what else you are having? Thread. All these are unicorns in India. Is this clear? OYO rooms, etc., etc. Is this clear, everyone? Simple. What is a unicorn? Yes, unicorn is a US term, global term it is. So everything will be in terms of dollars. Firstly, it is a private company. Valuation is more than $1 billion. Yes, rarity of success, and it is focusing on new idea, disruptive technology, and innovation. Okay, three conditions. So next, additional pointers. If valuation falls below 1 billion, it is not going to be unicorn. If the valuation is more than 10 billion, it can be called as a decacorn. Yes or no? Next, what is the first unicorn in India? InMobi is the first unicorn in India. Look at the students. Questions have come in the exam multiple times. It has come. RTP, RTP, MTP, MTP. Explain unicorn. Yes, mention the name of the startup which became India's first unicorn. Yes, unicorn. Yes, unicorn, unicorn. Is this clear, everyone? Here in one of the MTP, one more question is there. Who coined the term of unicorn? Not very important, but still you guys can see who coined the term of unicorn. It's in the study material, I guess it is there. Just a minute. Not important. Who will keep remembering the name of unicorn? Yes. Venture capitalist Aileen Lee first time coined the term unicorn. Is this clear, everyone? If you want, you guys can just write and keep this. Not very important, but still. Aileen Lee coined the term unicorn. Is this clear, everyone? Okay. If you want, you guys can just write and keep this. Okay. 3 pointers are over. Firstly, innovative ways to fund a startup. Next is what is a startup in as per Startup India scheme. Next, what is the concept of unicorn. Now we are going to the next point, which is why India has become a sustainable environment for startups. Startup is the big thing in India. In US, startups are successful. In India, also startups are successful. Yes, Institute is telling why startups are successful in India. Let us try understanding the reasons for that. Previously, we understood securitization as a concept was not that famous in India. Yes, why startup became successful? You guys tell me, students, why startup became successful? Couple of reasons could be there. Firstly, India is having a lot of young people, full of talent. Young people are there. Yes, they're having crazy ideas, innovation. The previous generation they've earned. Yes, our parents have earned stability. Now we want to get growth. We don't want to work under someone. We want to start something of our own. That could be a reason. Or people have graduated, they're not getting job. That is why they don't have an option. They start something by themselves. Yes or no, everyone. That could be a reason. Yes. So first point, pool of talent. Yes or no, everyone. India is having a large base of skilled graduates. Yes, who want to start their own ventures. Is this clear? So random yes question it is. Yes or no, generic question. But still we'll have to write the keywords. Next is cost-effective workforce. Yes, one of the best things that India is having is the population. One of the worst things India is having is the population. One of the best things India is having, that is also the population. Because of high population, we are having a very cost efficient workforce. Yes, the cost of labor is cheap in India. Because of that, we can get work from abroad, we can get it outsourced, we can get it done here. That way, so many startups have emerged. Yes or no? Because cost is cheap here. We can get the work done easily in India in a cheaper rate at a much more productivity. Yes or no? That is the second reason. Yes, India is having young and large workforce, making the labor cost relatively low. Okay, second reason. Next is increasing use of internet. Yes, really, yes. One of the biggest innovations in India, one of the biggest disruptions in India, even though we agree or not, was the introduction of Geo, my dear students. Yes, we like Mukesh Ambani, we don't like Mukesh Ambani. But India as a country has completely changed after Geo came into India. All these businesses, new ed startups, yes, Ola, Uber, PhonePe, Google Pay, edtech startups, everything, yes, has come only after Jio has entered India, because till then internet was very costly, so penetration was difficult. We could not enter into tier 2, tier 3 cities. Now every person everywhere is having internet. Because of that, so many startups are coming. Yes or no, everyone? Yes, increased use of internet. Next point that they're telling is technology. India is good in terms of technology, technological innovations. Because of that, so many technology based startups are coming to India. Just to my random, yes, throwing there. Yes or no, everyone? Still, we want to pass. We want marks. 4 marks are important for us. That is why we are reading. Don't worry, we will remember it also. Okay. Next is variety of funding options. In India, for startup, different funding options are available. We have told so many funding options: personal credit line, personal financing, purchase order financing, etc., etc. Because so many options are available to raise fund. Because of that, also people are getting into startups, because they will know somehow they will arrange the funds. Is this clear, everyone? Altogether, 5 points are there. Now, how do we remember this? Very simple, students. We just need to remember this thing. Yes. Why India is successful for startup? That is a question. Yes, because India is having three things. What all India is having? India is having people. Any doubt on that? No, boss. India is having a lot of people. Plus, India is good at technology. Yes. Is there any doubt in that? No, boss. India is good at technology. Plus, there are funding options also available. Tell me, students, why India is successful for startups? Three pointers. People are there, technology is there, funding options is there. Yes, when I'm telling people what all is there, firstly, we are having pool of talent. Yes, then I'm having cost effective workforce. Yes or no, everyone? Yes, when I'm telling technology, what is there? Obviously, technology is there. Yes or no, everyone? Next is there is increased use of internet. Yes, then when I'm talking about funding options, variety of funding options are available. Is this clear, everyone? Tell me why India is successful for startup. Three things. People is there, technology is there, funding options is there. People, yes, we are having, yes, access to pool of talent as well as cost effective workforce. Technology is there, as well as there is increased use of internet, and then we are having variety of funding options available. Is this clear, everyone? Okay, let us try seeing if a question has come. Okay, this is over. Yes, why India has become a sustainable environment for startup? Can come in the examination for 4 marks. Yes or no, everyone? Okay, you guys can be writing it. Till here, things are clear. Okay, giving you guys a minute to let this sink in. Then we have the next point, a beautiful point, interesting point, which is going to be pitch presentation. Yes, everyone. So the next point we are having is a pitch presentation. What exactly is pitch presentation? Say in future you come up with your own startup. Initially, you arrange fund by yourself. We have shown you guys innovative ways. Yes, personal financing, personal credit line, all those things you start. Now you want to raise a big funding. So you go to Shark Tank. You would have all heard Shark Tank India. It has become famous. It is there in all the languages, Hindi, Tamil, etc., etc. At least you would have heard what is Shark Tank India. You are a startup owner. You go there. You pitch your idea. You tell boss, this is the business that I do. Yes, this is the revenue that we have earned. I want this much extra funding. So there are big investors, sharks. Sharks means the big investors who are having a lot of money, who have already built big successful businesses, who are having a great crazy ideas about how the ecosystem will work. Yes, they will invest their money in your business. Sir, will they invest for free? No, they want a percentage of equity in your business. Is this clear? So this is talking about how should we do pitch presentation? How should we go and pitch our idea to the big investors? This is going to be the concept. Beautiful concept. Imagine, yes, this is me, Shark Tank India. Yes, these are all the big judges. If you would have seen Shark Tank India, you would have seen big judges. Yes, Anupam Mittal is there. Then you have Piyush Bansal. Then you have Aman Gupta. Yes, from Boat. Then you have Vinita, yes. So many big investors are there, yes or no? Big sharks, yes. Previously, we had Ashnir Grover also, yes. Then in the regional space, in Tamil also, I guess there is Shark Tank in Tamil also. I don't know in different languages if it is there or not, yes or no? So I go there, yes. I want to pitch about Maja flying cars, cars that fly, and I want to raise money from the investors. Yes, what is it that I should be doing? How should I tell about the business? Can I just randomly go and tell Macha? Yes, crazy business it is. Please give me money. Will they give? They will kick me out there itself. There is a structure for us to pitch our idea. You are pitching in your idea. You are telling your idea. There should be a proper structure. So, what is the structure? Actually, these are practical things which should be done, but Institute has given it. Yes, Institute is asking questions for 4 marks. We will write and we will receive 4 marks. Yes or no? Even though we know how to pitch ourselves, we don't know how to pitch ourselves. Yes, even in future, once you become a chartered accountant, you start your own practice or you get into job, you should be knowing how to pitch yourself, how to introduce yourself, how to, yes, market yourself. This is going to be an important skill, my dear students. Look at this. Pitch presentation is a short and brief presentation, not more than 20 minutes, that gives investors a quick overview of the startup and explains why they should be investing in a startup. Yes, what is pitch presentation doing? It is a quick and a brief presentation. It should not exceed 20 minutes, wherein we explain what our business is and why you should be investing in our business. We are giving investors an idea about what our business is doing and why they should be investing, what is their interest, what they will get if they're investing in the business. Is this clear, everyone? Yes, it is typically done through a PowerPoint. Sometimes it is done through PowerPoint, sometimes without PowerPoint also it is done, either during face-to-face meetings or online. Some points should be kept in mind while preparing a pitch presentation. Tell me, students, we go to pitch ourselves. Forget all these pointers which are written. Firstly, what we will have to be doing. Imagine we are Maja flying cars. Yes, what all pointers we should be keeping on the back of our mind when we are going and meeting our sharks. Firstly, I need to give an introduction about myself. Who am I? I am CA Tabish Hassan. I am a chartered accountant by profession, teacher by passion. Yes, one day I was doing my teaching. Yes, I was stuck in this traffic for long hours and hours and hours. My class got cancelled, so I was not in a position to reach the class on time. When suddenly an idea popped into my mind, why don't we come up with the concept of flying cars, which can beat traffic, zoom through the traffic, and make you reach your destination within a very short amount of time. So you come up with an introduction, yes or no, everyone, wherein first what you talk about yourself, your background, what is it that you have done, yes or no, everyone. Okay, first you give introduction about yourself, then you tell your team. You will tell, yes, who all are there in your team. We should not be getting a doubt. Okay, boss, you are a chartered accountant, you are a finance person. How did you come up with flying cars? You don't know technology, you don't know how to design cars only. How did you do that? I will tell. So me with my friend who has done his engineering from IIT Ahmedabad, whatever it is, IIT Mumbai. Yes, we together came up with this concept of flying cars, cars that fly, that zoom and make you reach your destination. Now, once I introduce my team, they get to know, okay, boss, they're having a good, strong background. Yes, they can design flying cars. Yes or no, everyone. Second thing, I will talk about the team. Third thing, I will talk about the problem. I've already talked about the problem. Yes, boss. We are stuck in this endless loop of traffic, just traveling for 1 kilometer to purchase a small thing. Feels like hours. And time is wasted, energy is drained out, and there is a lot of pollution, noise, disturbance, everything. This is a problem that everyone is facing, yes or no. Then we will come up with the solution. So what is the solution that we are having? Maja flying cars, cars that fly. Crazy, yes or no, everyone. Four pointers, first 4 pointers. First, we will give introduction about ourselves and our business. Then we will talk about our team. What all core competencies we are having in our team? Who all are the good people we are having in our team? Then we will talk about the problem. We will talk about the solution. First 4 pointers, are they clear? Will we forget, my dear students? No, sir. First, we'll talk introduction about yourself. Then you will tell about our team. Then we will talk about the problem. Then we will talk about the solution. Is this clear? Quickly, we can read. Look at this, students. Yes. Begin with a brief introduction about yourself and your startup. Keep it short. Highlight the key achievements that we have done and interesting facts to quote the investor's interest. Okay, you guys can write in your own language. Team, introduce the key people behind the startup. Yes, there only one or two people will be going. Well, who all key people are there who are working? What all are their core competencies, key skills that they're having, experience, achievements, how their background is helping in the business. I told I'm having a person from IIT Bombay. That means they'll get to know, okay, likewise he will be strong. Yes or no, everyone. Then problem. Clearly explain the problem your startup is solving. Every business ultimately is solving a problem. So what is the problem that was existing? how your startup is solving the problem. These two are going to be the most important things. Any business you do, what is the problem customer is facing? How can you solve the problem? Ultimately, this is what business is all about. What is the problem customer is facing? How can you solve the problem? Any business you take, Ola, yes, customer wants to travel, but booking a cab is difficult. Yes, cabs are expensive. Quality is not good. He will not come on time. Yes, all these are the problems. What is the solution? Ola. App based, we are providing, yes, cabs. Yes or no, everyone? Perfect. So, 4 pointers are over. Now, once we've told these basic things for them, they seem to be interested, but will they directly give their money? No, we'll have to tell some more things. What more things we'll have to be telling? We'll have to be telling the projections. They will ask, okay, boss, I will give you money. Tell me all these concept of Maja flying cars, all those things. Have you actually implemented or not? If so, have you sold it to customer or not? If you have sold, what is the turnover you have had? Yes or no? So I have to be showing them the projections, my balance sheet, yes, how many assets I'm having, my sales, my growth, all those things I'll have to be showing. Only then they will get the belief that okay, boss, whatever I'm telling is true. Yes or no, everyone. So projections I should be showing. And boss, this year, yes, 10 crore turnover I've done last year. This year, 20 crore turnover I've done. Next year, we will be planning to achieve 40 crore turnover. Then they'll think, oh, crazy. Business is doing good profits, good revenue. Then I will tell how much is a profit margin. What is a growth percentage? Yes, that is one thing. Projections I will tell. Next, I will talk about the competition. They will tell, okay, boss, we are interested to invest. But is there any other competitor who is doing in the same business? If yes, yes, how is your business different from them? We will tell boss, everyone else is just manufacturing cars which are going in the land. We are coming up with cars that can fly. So currently there is no competition. Or imagine if there is competition, I will tell their business is having these drawbacks, or we will not put it in a negative way, we will put it in a positive way, that our business is having these additional features which are not there anywhere else. That gives us the edge over our competitors. Yes or no? We will talk about our competition also. So look at this additional pointers. We will talk about projections, that is balance sheet, income statement, cash flow statement, all those things. Then we'll talk about competition. Yes, whether we are having competition, if so, how are we superior from our competition? We'll talk about the business model. How are we making money? That also we'll be talking about. Now, different business models could be there. Now, in this example also, Maja flying cars, different ways I can be earning money. Either option number one, I am manufacturing an entire car, I am selling it to normal customers. Okay, customer is coming, he wants to purchase a car, he will come to MFC, Maja Flying Cars. Yes, we are manufacturing and giving him the car. That could be one business model. We are manufacturing car. We are giving customers to, we are giving, yes, service or goods and service to the end customer, B2C. Or else we are operating in B2B model. Say Maruti is there, Maruti knows to manufacture car. Yes, we just have to convert it into flying cars. Say we are putting wings. Imagine technology. You don't know, just a random thing. Yes or no? We are telling, okay, this is how we are earning money. Could be possible, yes or no, everyone? What is going to be our business model? Then we will talk about financing. Yes, whether we have raised funding already. If so, how much funding we raised, at what valuation we raised. Now, how much more funding we want today, at what valuation we are expecting. All those things should also be discussed. Yes or no? If you would have seen an episode of Shark Tank India, you would have seen, yes, we want to raise 10 crores at 10 percentage valuation for 10 percentage of equity. Yes or no, everyone? All those things you would have heard. I don't want to stretch too much again. Yes or no, everyone? Okay. And then comes marketing sales. How much sales we have done? How do we plan to reach our product to a bigger market? Yes. And which all market we want to cover? All these points are included. So we'll tell, okay, boss, initially we have made a sale of 20 crore this year. Next year we want to double it. How? We will do more marketing. Point number one. We will do, yes, point to point marketing. Okay, direct marketing. Yes, we'll be doing advertisement. Point number three. We will go region wise. Every region we will cover. We will also try covering international boundaries. So all these things we'll be doing. Yes, all these pointers we should be explaining. Is this clear, everyone? Some 8-9 pointers are there. 4 is sufficient for exam. 4, I know, even in your sleep you will be remembering. Yes, first introduction, theme, problem, solution. This any given day you will be remembering. Add 1 or 2 more pointers. Yes, it will be complete. Is this clear, everyone? Okay. Now, the essence which is written inside, you guys read it once by yourselves. Is this clear, everyone? Now, in projections, startup should present a realistic financial projection to show the future direction of the business. Financial projection includes 3 basic documents: income statement, cash flow statement, as well as balance sheet. Is this clear, everyone? Sometimes on this, a separate 2 to 3 marks question can come. Yes, what all projections should be there? First, income statement, cash flow statement, balance sheet. Yes, for each of these things, that time you can write some more explanation. You guys know what to write in income statement, what all will come, what all will be there in balance sheet, what all should be written in cash flow statement. Not a big deal. Yes or no, everyone. Now, how do we remember this? Pay attention, everyone. Very simple. Altogether, some 8 to 9 points are there. We will remember it this way. Basic, in a pitch presentation, basic 4 points definitely should be there. What are the basic 4 points, my dear students? Tell me. Firstly, I will give an introduction about myself. I will talk about my team. I will talk about the problem. I will talk about the solution. Yes or no, everyone? 4 pointers compulsorily should be there. Additional, some more points should also be there. What all additional pointers? Yes, firstly, how do we do marketing? What are our projections or milestones? Yes, next, what is our competition? What is our business model? Have we raised additional finance? So, no, sir, how do we remember it, sir? Okay, I'll give you guys crazy mnemonic. Crazy mnemonic. Are we ready for some crazy mnemonic? Yes, sir. What is a crazy mnemonic? Yes, basics 4 pointers should be there. Yes, for a pitch presentation, basic 4 pointers should be there. With that, additional point is, yes, blue film of CM got leaked. Sir, which CM, sir? Which state CM, sir? Nah, fictional story. What is it, sir? What crazy, sir? Mnemonic Okay, don't think anything else. Blue film of CM got leaked. Is this clear, everyone? Blue film BF of CM is got leaked. Is this clear, everyone? Tell me, what is B? B stands for business model. Yes or no, everyone? Yes. F stands for financing. How much money we raise, how much we want to raise. Yes. C stands for competition. Yes. M stands for marketing. Yes. As well as milestones, which is basically projections. Is this clear, everyone? So if a question comes on pitch presentation, 4 pointers are sufficient, but we'll try writing at least 6 pointers properly. Yes or no? How do we remember? Pitch presentation, basically we are pitching in about our business roughly for 20 minutes, either yes, face to face or online, generally done through PPTs. Okay, what all we should be telling? Basic 4 pointers. Yes, introduction, theme, problem, solution. After that, we'll talk that yes, blue film of CM got leaked. Blue film, B stands for business model, F stands for financing. CM, C stands for competition. Whole competition is there. M stands for yes, milestones, as well as what was the next thing? Marketing. Is this clear, everyone? All 9 pointers we have remembered. Is this clear, everyone? Yes, I will try always to ensure that whenever I give mnemonic, it is a bit crazy, because if it's a normal thing, na, yes, best friend, etc., etc., you'll not be remembering it. I try making it slightly crazy so that okay, even though it feels so crazy, but you guys remember it, because that's the ultimate objective. Is this clear, everyone? So with this, speech presentation is also done. We have one final point in the first segment, basics, which is modes of financing for startups. Giving you guys a minute to let this sink in, then we'll go for the final discussion. But wait, before that, now see the question. Yes, list down the points to be kept in mind while doing a pitch presentation. MTP it had come 6 marks, 4 marks. RTP again it had come. Here they have just given the headings. Yes or no, everyone? And in financial projections, that is basically yes, income statement, cash flow statement, balance sheet. This much is not needed, but at least one liner if you write should be sufficient. Yes. Is this clear, everyone? Okay, this is also done. Giving you guys a minute, then after that we'll go to the last point. Yes, everyone, we have the final point in basics, which is modes of financing or sources of financing for a startup. There are three different modes for financing. First one is bootstrapping. Next one is angel investors. Next one is venture capital fund. Now, the first question that comes into your mind is, sir, we've already learned something like this, sir. Innovative ways to fund a startup. Now, that is different. This is different. Do not confuse the. Okay. Now, Institute has kept two separate segments. Confusing. Ultimately, everything is a means for raising money. How do you raise money? First, it is telling you are in the initial stages of starting a business. Nobody is willing to give you money. You are in the initial stages of starting a business. Nobody is willing to give you money. So you'll have to come up with some innovative ways to raise money. Yes, get your personal savings, put your personal savings, personal credit card, peer-to-peer lending, crowdfunding, etc., etc. Now you are telling, okay, you're slightly a big organization. As a strategy, as an organization for long term, you want to raise money. Three different modes are there in which you can be funding your startup. Yes, what all three different modes are there? Either you can go for bootstrapping. What is bootstrapping? In simple terms, you are telling boss, we will not raise money from anyone. We will keep our own money. Using that, we will build our startup. Or angel investors. We'll get money from the angel investors. Or we can get money from venture capital fund. Is this clear, everyone? Now, one very important thing for us in the examination, question will not give a direct question telling, yes, tell the modes for financing a startup. No. What question will ask? For 4 marks, explain bootstrapping will come for 4 marks. Explain angel investors will come for 4 marks. Explain venture capital fund. This will come for 4 marks. Is this clear, everyone? But all these three things are coming under the main umbrella, which is the modes of financing. Is this clear, everyone? First point is going to be bootstrapping. Bootstrapping, we are strapping from the boot, from the basic, we are building ourselves using our own money. Is this clear, everyone? What is bootstrapping? In simple terms, we are not raising funding from anyone. We are using our own money. Imagine I started a business, Maja Flying Cars. I'm telling boss, I'm not going to raise money from anyone. Anyone I raise money, they will ask a lot of equity. Yes, they will control, they will dominate. After a point in time, they will tell this is not how you should run the business, this is how you should be running the business. I don't want anyone's money. I will put in my own money. So, what I will do, I will initially use my personal savings. From that, I will start the business. Slowly, I will make some initial profits. That profit itself, I will reinvest in the business. I will get some growth. Again, I will reinvest. I will get some growth. Again, I will reinvest. I will get some growth. This way, I will grow my business so that I will ultimately ensure that complete control is with me. I am not giving the control to anyone. This is one strategy. Yes, so many big businesses have bootstrapped themselves. One of the most beautiful examples in India of a bootstrap company is Zerodha. You would have all heard of Zerodha. Yes, broking services it is providing. Yes, Nikhil Kamath, Nitin Kamath. Yes, it is a completely bootstrap company. They have not even raised 1 rupee from any investors. So even till today, they're having that peace of mind that whatever we are earning, it is ultimately for us. Because otherwise, once you raise money from venture capitalists, your life becomes hell, my dear students. They will put a lot of conditions. You're always under pressure to achieve, to overachieve. Yes, bootstrapping, simple. Whatever you're earning, for you it is. No need to tell anyone. This is clear, everyone. So look at this, everyone. One more example is Zoho. Zoho is a famous accounting software. It is also completely bootstrapped. Okay, look at this, students. Bootstrapping. It means starting and growing a business using personal finances or the operating revenue of the company. So we are starting the business, we are growing the business. How? Either I will use my personal finance, whatever my personal money I will put, or by using operating revenue of the company. Whatever revenue I earn, that only I will be reinvesting. Is this clear, everyone? Oh, personal finances, operating revenue. It encourages financial discipline and avoids wasteful spending, which is often caused by excess early funding. Generally, what happens if you get funding, it is not your money. That is the problem with most startups. They are getting somebody's money. They will think we will do that, we will do this. Here we will burn some money. That advertisement we will do. We will sponsor Indian team. Yes, we will sponsor for football also. That's the same thing Byju's did. It raised a lot of money from investors. It is not their money. They don't know what to do with the money. Randomly they did advertisement without even seeing whether there is a good product or not. Is there a product market fit or not? Whether customers are actually willing to buy or not, whether customers are happy or not, whether employees are happy or not. They just randomly did advertisement because it is not their money. Say, for example, tomorrow you just became a CA. Till then, every month, article chip stipend you are getting 3,000 rupee per month. Sir, why are you reminding us, sir? Yes or no? Okay. Then suddenly, next day, you come up with a startup. Yes. In 20 days of starting a startup, yes, a investor comes, he tells, I will give you 10 crore rupees. You invest in the business, you grow your business. Tell me what is the first thing you will do? You will purchase an iPhone. You will tell, if I have become a big startup owner right now, I want an iPhone. Was it needed? It was not needed, but still, you felt you got 10 crore, you want to do something, you will purchase a car to run the startup. Was it needed? No, you will still feel, no, it is needed for my personal branding, it is needed, important. So, we will do a lot of unnecessary spending when it is not our money. But once we slowly earn the money, so always remember, students, once we earn the money, now the best way to earn the money is the slow, long, sustainable way. You may be feeling, no, sir, quickly we should earn money. Trust me, the best way to earn money is the slow, long, sustainable way. Yes, once we've seen the downs of life, once we reach the ups of life, we will have that humility, we will have that gratitude. If you get money instantly, na, it will just build instant ego, instant disaster it will become. Okay, yes, coming out of the philosophy lane. So what will happen if it is your own money, slowly you've earned, you know value of every rupee. If you have just raised it from someone, they are just investing. You don't know the value, so you will unnecessarily spend. So what bootstrapping will do? It will build financial discipline and avoids wasteful spending. Okay, fine. So methods by which startup firm can bootstrap itself. Okay, boss, we decided that we are going to start our business by bootstrapping. Literally, maximum startups in India will be bootstrapped. Just say I started my own teaching journey, our teaching venture Think with Tabish, completely bootstrap. Initially, yes, with lot of difficulty, we purchased one laptop. That too, it was on installments. From there, we slowly started. Then slowly, we started building. Yes or no? Today, by God's grace and your love, always grateful for wherever we have reached. It's all because of your love, my dear students. Okay, now tell me, how can we bootstrap our entity? Three different techniques are given. Now, in reality, so many different ways could be there. Now, three different techniques are given. Understand what is the institute telling. Now, for a business, imagine we are Maja Flying Cars. Okay, yes, we want to bootstrap ourselves. That is, we don't want to raise money from anyone. But tell me, will I be having so much money with me? No. So, some strategy we should be doing. What all strategy? Firstly, we want to purchase raw material. Imagine we want to purchase tires from MRF. Yes or no, everyone? Okay. So, for this, what can be done? I am not having too much money because I am a bootstrap company. I am using my own fund. I don't have funding from others. I have just started with my business. So, what strategy it is telling is ask for trade credit. That is, ask for extended credit terms. Yes or no, everyone? Perfect. Say, for example, this is not MFC, this is MRF. We go to MRF tires. Yes, we purchase tires because we got an order from the customer. Yes, MRF tires will tell you, you will have to make payment in 30 days. Yes, I'm telling boss, 30 days is not possible. Please give me a credit period of 180 days. They will ask, why should we give? Okay, they're not willing to give me credit period. They'll tell normal credit period is 30 days only. Then we'll have to go meet their CFO or the person in charge, convince them, tell them our concept, tell them that we are a newly started organization, but we will be here for a long term. Okay, we are going to dominate in this space. Please do give us one help this time because we are just starting it out. Please give us, we will make payment promptly. We will have a long term business relationship, but please give us a credit period of 180 days. That is the first thing. When you are purchasing raw material, you are not having too much money. So, what you ask for? You ask for extra credit period. Is this clear? This is the first point. Trade credit. Is this clear? When a person is starting his business, suppliers are reluctant to give trade credit. They are telling you are a new entity. Why we should give? Yes, in such a situation, a well-crafted financial plan and convince the supplier for the trade credit. Communication skills becomes important here. In that case, we'll have to tell them properly, this is our plan. This is what we want to achieve. Please give us credit period, extra credit period. We will promptly pay and we'll have a long business relationship. So to convince them, communication skill becomes important. So my institute has given, we'll have to write it. Is this clear? First, when you're purchasing raw material, ask for trade credit. You purchase raw material, you got the tires, steel, etc. Now what you'll have to do, you'll have to convert your raw material into finished goods. Tell me, to convert your raw material into finished goods, what we want? We want machines. We are manufacturing cars. We want big machines. Purchase those big machines are very costly. And we are just starting our business using our own funding, our own money. Tell me, do we have so much money? No, boss. We are a bootstrap company. So what can be done? Question is telling, yes, institute is telling, go for leasing as a strategy. That is, we don't have so much money, yes, to purchase all machineries. So go for a renting of the machineries, leasing of the machineries, because it is cheap right now. Afterwards, if you are having money, that time you purchase. Yes or no, everyone? Startups prefer leasing equipment based instead of purchasing to avoid heavy upfront cost, etc., etc., etc. All these things are good. Is this clear, everyone? Even when I initially started with my teaching journey as well, I did not have any of the setups. I still remember it was the second phase of COVID, 2021. I had to record videos. Firstly, recording videos was a very new thing for me. I don't know how to speak just in front of a camera. Then finally, yes, I took a lot of courage that okay, was let us start. Then setup. We tried doing some normal setup at home using normal laptop. It was not working at all. Then in Mangalore, there was a distant friend of mine, not a friend of mine. Yes, my relative's friend. He was having a setup, a studio setup. So there we went. Yes, initially, he was very grateful, always grateful that he agreed to give his premises. We gave that premises for 10 days. He told Tabish, you take classes. I asked, how much should I be paying? He told, you take. You don't pay right now. Once you become successful, you pay. So there are few people who come in your life like angels. They'll help you out when you are absolutely nothing. So we'll all be having angels in our life. We should remember them always. Okay, yes, not deviating. So second point was leasing of machinery. Okay, so raw material we got it on trade credit. Yes, conversion. Yes, instead of buying the machine, we lease the machine. Now, yes, we had our customer. Yes, we sold it to the customer. Imagine Mr. X is a customer. Yes, we sold, yes, the flying cars to our customer. Yes or no, everyone? Imagine we sold 10 flying cars to the customer. He's telling, boss, everyone is giving me a credit period of 100 days. You also give me a credit period of 100 days. I have no option. Why? Otherwise, I will not be getting the customer. So I gave him a credit period of 100 days. But right now, I don't have money. I want to receive this money at the very earliest. Only based on that, I can produce more goods. So what will I try doing? Boss, I've already told, if I've made a sale, I am having accounts receivable. There is a strategy I can follow. What? I can sell it to the factoring company, factoring of accounts receivable. I can give it to factoring company. They will give some different amount, 70-80 percentage of the amount. Yes or no, everyone? Look at this factoring of accounts receivable. It is a financing method where business is selling its accounts receivable to a finance company, which also handles collection, etc. This reduces administration cost. Is this clear, everyone? Okay. Quickly, bootstrapping. Look at this. Let us see the chart. Bootstrapping, what we are doing, we are growing the business using our own personal finance or the operating revenue of the company. Two things. Yes, it will build financial discipline and avoids wasteful spending. How we can do bootstrapping in an organization? Three strategies institute has told. For raw material, get it on trade credit. Conversion, that is machine, don't purchase, instead go for leasing. Yes, you have sold, you are not receiving the money, factor your accounts receivable. Is this clear, everyone? Okay, look at the question bank. Yes, so many times, multiple times it has come in the examination. 3 marks, 4 marks, 4 marks. Individual attempts to found and build a company from the personal finance or from the operating revenue. What is this method called? Bootstrapping. Discuss any two methods for bootstrapping. We know how to discuss. What is a mode of financing called? When a person attempts to found and build a company from personal finances. Okay, what do you mean by bootstrapping? Yes, this complete explanation is there. You guys can read it once. Is this clear, everyone? Bootstrapping is done, done. We are going ahead to the next point, which is going to be angel investors. Now, what is angel investors? We are raising money, but from whom? But from angel investors. We are raising money. So, who are angel investors? They come in our life as angels. Say, initially we started with the concept of Maja flying cars. Yes, it is a new concept altogether. Nobody has heard of it. Nobody is even sure that this business model will succeed. So what I do, I want funding to start my business. I search looking for banks. Banks are not giving me money. I was frustrated. So I tried telling my relatives. I tell my dad, my mom, yes, there was a wealthy uncle. We'll all be having that one person who is wealthy plus having a good heart. He would have helped us a lot. So imagine there is a wealthy uncle of mine. Yes, he was kind hearted. Yes, he's always helped. He's always having a very good heart, but he is wealthy also. So I go to him, I tell, yes, uncle, I have this crazy idea of Maja flying cars. Yes, I know I can make it into a success, but I am really in need of funds. He will tell, don't worry. Will you work really hard? I tell, I will work really hard. Take this 10 lakh he gives me. Yes or no? I'm asking what should I give in return? He is telling, once your business becomes successful, give me 10% equity in it. This is angel investors. Is this clear, everyone? He did not see, yes, what my projections are, how much sale I'll be making. Yes, how my competitors are going to operate. No, he just saw me and my potential. Based on that, he has given me the money. That is an angel investor. Is this clear, everyone? So let us try seeing this. Yes, angel investors invest in small startups or entrepreneurs. They are generally among entrepreneurs, family and friends. Yes, look at this. They are investing in small startups. They are generally, from where will I be getting angels? Generally from my family and friends. Someone, okay, you've started a business, you get to know, okay, some person is there who is affluent, rich, kind hearted, who will support startups. You go there, you tell, he will give you the money. Yes or no, either from family or friends. Okay. Angel investor may provide either a one-time funding to start the business or a continuous funding. How funding can be given? Yes, my uncle is telling, now you take this 10 lakh, you start the business, get initial orders. Subsequently, you want more money, come to me. But start the business, get initial customers. After that, if growth is there, I will give you more. So either only one time money he will be giving, take this 10 lakhs, start the business, or continuous funding they will be promising. Is this clear, everyone? Okay, fine. Angel investors provide more favorable terms compared to other lenders as they invest mainly in the entrepreneurial idea, not just the business viability. Yes, this is a beautiful point, students. They will be providing more favorable terms. Say, yes, he is my own uncle. He is investing his money. As he looked at the business viability, is he telling how much sale it will make, how much growth it will make? how much my money will become? No. He is there just to help me. Yes or no, everyone? So they will be giving more favorable terms, more lenient terms. He'll tell, okay, take this 10 lakh. Okay, give me 10% equity, sufficient. If there are other people, they will ask for higher equity. Or if he is giving on credit, say interest, he will tell, okay, give me some 8% interest. Other people will be charging higher interest. So they will give more preferred terms, yes or no, more favorable terms for us, unlike other investors. Because they are investing mainly in the entrepreneur, not just the business viability. They know the person. They are believing in the person, not the business idea. Is this clear, everyone? Okay. They focus on helping startups take the first steps. Okay, all these things. Other names, all these names you should just see and keep it. Angel investors are also called as informal investors, angel funders, private investors, seed investors, or business angels. All these are different names. In the seed investors, you should be remembering. If question asks, give a short note on seed investors. The same thing we should be writing. Is this clear, everyone? Okay. They are affluent individuals who inject capital for startup in exchange for ownership, equity, or convertible debt. These are generally affluent individuals. Obviously, if they are giving money means they should be rich. Yes or no, everyone? Yes. Who are giving their money? Yes, in exchange for either equity or convertible debt. That is basically today it is debt. It will be convertible into equity. They are affluent individuals who are giving money for equity or convertible debt. Okay, fine. Angel investors typically use their own money, unlike venture capitalists. Yes, angel investors are giving their own money. Uncle is having his own money that he is giving. Yes, there is another structure called as venture capital fund, where what they will do, they will raise money from all the investors. That money they will give. Angel investors are not like that. They are having their own money. Their own money they are investing. Is this clear, everyone? Although angel investors are usually individuals, this is not needed. You guys can scratch it off. Yes, last, since early stage startups can fail, they may lose their entire investment. Therefore, look for defined exit strategy. Okay, because 99% of startups in India are failing. So angel investor is investing. He is willing to invest, but he wants a clear exit strategy. How do I exit? Either we will put a proper clause that after 5 years we will try going for IPO. That time we will exit, or else after 5 years, if business is not successful, the promoter will return the money at 8% interest, something of that sort. Exit clause will be given, because yes, the person who is investing is having a fear. He is helping you, but he wants his money back as well, right? So proper exit clause should be there. Is this clear, everyone? Yes. All these pointers I've written maximum pointers, because from these at least 4 we should be remembering for the examination. Let us quickly try seeing the students. Look at this. Yes, what is angel investors? Even if you just see this chart and go, it is sufficient. First, they're investing in small startups. They're generally from family and friends. Point number one. They provide either a one-time funding or continuous funding. Point number two. They're providing more favorable terms than venture capitalists, because they're believing in the entrepreneur, not the business viability. Third point. They are investing in the entrepreneur, not the business viability. Okay. These are affluent individuals, rich individuals. They are using their own money, not others' money, in exchange of equity or convertible. This much if we write, it is going to be sufficient. Look at this, multiple times it has come in the examination also. Angel investors examination 4 marks. Is this clear, everyone? Perfect. So this point is also clear. Now we have the final point, which is going to be venture capital fund. Giving you guys a minute. After that, we'll go ahead to venture capital fund, my dear students. Yes, everyone. Now we have the third point, which is going to be venture capital fund. We would have all heard of venture capital fund, venture capitalist, etc., etc. Now, what exactly is venture capital fund? It's basically, this is the venture capital fund. One drawing we have done. What we will do, we will pool money from investors. Yes, insurance companies are there, mutual fund companies are there, PF companies are there, affluent HNIs are there, high net worth individuals are there. They are having money. They want to invest in high growth startups, startups which give high growth, but they do not have the knowledge. They don't want to do the research. They just want to invest. So there are, yes, investors, high net worth individuals, insurance company, pension fund, mutual fund company. All these people invest their money in the mutual, yes, venture capital fund. Imagine we start our venture capital fund called Maja Capital. Is this clear? So first, what will venture capital fund do? It will pool money from investors. Who all investors can be? Either it can be insurance company, mutual fund, yes, PF companies, high net worth individuals. From them, we will pool the money. Now we are having pooled money. Yes, a big money we are having. Yes or no, everyone? From this, we will see for good growth oriented startups. Yes, startups which can have a crazy growth. We will search for those startups. We will invest in those startups in exchange of equity. Yes or no, everyone? Perfect. From this, whatever money we have collected, we will invest in the different startups. Say one startup we invest in EV tech giant. Yes, one more food delivery related app. one more AI learning related, etc. will be doing. Is this clear, everyone? Look at this, students. Yes, it is an investment vehicle. It pools money from investors. We are pooling money from investors and is professionally managed to invest in startups and high growth companies. Where are we investing the money? In startups as well as high growth companies. Yes, with a strong future potential. Is this clear, everyone? Generally, we will be asking for equity. Now, understand, students, whenever venture capitalists are investing their money, it comes with a high risk because startup, you don't know if it is going to be successful or not. But the return that they're going to get is also crazy high returns. Yes, they are not trying to convert 100 rupees into 120, 10%, 20% return. They're not seeing. Yes, they're seeing 50 times a return, 100 times a return, 500 times a return. That is going to be the return that they're going to be generating. Say, for example, there is a venture capital fund. 100 rupees they had. They invested 10, 10, 10, 10, 10, 10, 10, 10, 10, 10 in 10 different startups. They know that 8 startups are going to fail. But these 2 startups which are going to be successful, now, there they would have invested 10, 10 each. This 10 would have become 500. This 10 would have become 500 or 1000. So overall, the complete profit they will just pull off from these 2 investments. Is this clear, everyone? They are not looking to get 5%, 10%, 20% return. They are looking at, yes, 10 times, 10x, yes, 50x, 50 times, 100x, 100 times return. 1000x also they would have got. This is clear, everyone. Now, whenever the name venture capital fund comes, one of the biggest venture capital funds in the world is a company called Sequoia Capital. Okay, now where all they have invested? In India, they have invested in so many successful startups, some being Zomato, Oyo. Globally also, they have invested in Apple, Google, WhatsApp, Airbnb. Some of the biggest companies they've invested. They will be investing at the very initial stages when companies are small, bacha, nothing is there. From there, by the time they exit, their value, yes, value of the shares that they're holding would have become easily 100 times, 200 times, 500 times. Think of it, students. You're putting 1 rupee, you're getting 500 rupee. Crazy return, but crazy risk is also there. Is this clear, everyone? Yes, this is going to be venture capital fund. So venture capitalists generally, yes, they finance rapidly growing companies. They are going to invest in rapidly growing companies. Yes, they are purchasing equity shares. They are not investing for debt. They're not looking at that 5%, 10% interest rate. They're investing in equity shares. We want 10% equity of your company. Is this clear, everyone? They assist in development of new product. They're having experts in venture capital firm. They have invested in different segments. They know how the market operates. They're having connection. So they will help them in developing good goods or services, and they will add value to the company through active participation. Yes, venture capitalists are not just people who will just put money and go. They will actively participate. They will get to know what your business is doing. They will give you targets every quarter by quarter. They will see, they will monitor, they will tell, do this strategy, don't do that, this will work out, this will not work out. So actively they will guide you. Is this clear, everyone? They are not just giving you money, they are also giving you guidance. Is this clear? Because every time a yes founder is starting his new startup, now he doesn't know guidance, because this is something which is not taught in schools. He's just learning by himself. So these people have done it for multiple business, so they will give them the guidance. Is this clear, everyone? So basics of venture capital, this much is sufficient. Trust me, next entire unit is on venture capital fund. So many pointers we'll be discussing here. So quickly let us try seeing what is a venture capital fund. It is an investment vehicle. Basically, we are doing investment. How? We pool money from investors and we invest them in startups and high growth companies. Okay. Yes, venture capital fund, generally we are going to finance rapidly growing companies. Point number 1, we are going to purchase equity shares and we add value through actively participating. Is this clear? This is what we'll have to be writing. Look at this, students. Angel investors is over. Explain venture capital method. All these basics we can be writing. It has come in the examination for 4 marks. Is this clear, everyone? Okay. With this, the first phase, basics, is over, my dear students. What all we have discussed, quickly let us try seeing, pay attention. First one was innovative ways to finance a startup. We had seen, yes, first we use PF money, then we'll go for venture capitalist. PF, yes, then VC, yes or no, everyone? Yes, in the end we will revise, don't worry. Meaning of startup in India, yes, we have told meaning of unicorn. Unicorn is a global term in terms of US dollar. Why India is having a sustainable environment for startup? Yes, pitch presentation, what all points we should be remembering. And then modes of financing, bootstrapping we have discussed, angel investing we have discussed, venture capital fund also we have discussed. With this phase 1, basics is over. This is the biggest phase, my dear students. Now we are having the second phase, which is going to be venture capital fund. Yes, everyone, let us go ahead to the second segment. First segment basics is done. Second segment is going to be venture capital fund. From here also so many times questions have come. First one, we've understood what is a venture capital fund. It is an investment vehicle. What it does, it pulls money from individuals and it is professionally managed. It invests in startups, high growth startups in return for equity. Yes or no, everyone? First question which can come is characteristics of venture capital financing. Whatever questions comes on venture capital financing, first we'll write down the meaning of venture capital fund. After that, we'll go ahead. Characteristics of venture capital financing. What are the characteristics? Simple. Firstly, high risk. They are taking high risk. In exchange of high risk, they want a high return. Yes or no, everyone? So they are not looking at 5%, 10%. They are looking at, yes, 100 times, 200 times, 50 times return. So high risk, high return approach they are taking. Second, equity participation. They are taking so much risk. Are they happy with, yes, 10 percentage debt? No, they are looking for equity so that their, yes, value of the business, as and when the value of business increases, their proportionate value of the investment increases. So they are generally going for equity only, allowing them to participate in the management. Third point is long term horizon. Are they thinking of investing today for 1 month, 2 months? No, they are always thinking about long term. They are investing in a startup which is very small, a small tiny baby which is taking its initial steps, and they will help them all the way till it becomes a big giant, all the way goes up to IPO. Yes or no? So they, generally they're investing for long term, generally for 3 to 10 years. Okay, next is lack of liquidity. Tell me, you purchase, you invest in equity shares today, you purchase, you can sell tomorrow. You invest in a company as a venture capitalist. You invested, say for example, 50 crore rupees or 10 crore rupees as a venture capitalist for 10% equity. Tomorrow, can you sell it? No. Why? Firstly, the amount is huge. Secondly, there is no trading market, trading platform. In order for buy and sell to happen, there should be a trading platform. For shares, there is a platform. Yes, for venture capital, there is no platform. So it lacks liquidity. Yes or no? Yes, it is lacking liquidity. They are illiquid. Is this clear? Yes, everyone. So generally, how do we remember this simple point I've told? Venture capitalists will be giving me money. They will, but they will make life hell for the investors. Yes, HELL. HELL. H for high risk, E for equity participation, L for long term horizon, L for lack of liquidity. Is this clear, everyone? Look at this. Here we have written, yes, venture capitalist will give us the funds, but they will make life hell for us. Yes or no, everyone? H goes for high risk. Yes, E for equity participation. Yes, L for, yes, long term fund, long term investment horizon, and L for lack of liquidity. Yes or no, everyone? Perfect. First pointer is over. Now going ahead to the next pointer, which is advantages of bringing a venture capital fund. First, let us try understanding, then we will try remembering it also. Okay, what are the advantages of bringing a venture capitalist? Firstly, we are getting the funding right now. Yes or no, everyone? It injects a long-term equity finance. We are getting funding. We were in need of funding. They are giving us money. Point number one. Okay. Next, venture capitalist is a business partner sharing both risk and reward. Yes, they are coming in as equity partner, not as a debt. If you have raised debt, now we are having a burden. Periodically, interest we should pay. Say first period we did not perform well, still interest we have to be paying. They have come in as equity partners. They are our partners in both risk as well as reward. Reward is there, they will be there with us. Risk is there, that time also they will be there with us. Yes or no? Because they are contributing as equity hold. Second point. Third point, they will provide practical advice. Now tell me, I am a startup founder. Is for the first time I'm starting a business. I don't have much idea. They are venture capitalists. They've already invested in 100, 200, 500 companies. They are in this startup investment space for last 50 years. They know everything about the startup ecosystem, how a business model work, what will not work. If you want to advertisement, how to do, how not to do. If you want to go to IPO, how to go. They have literally practical advice of everything, every phase, every industry, every sector, every strategy they know. So we are getting their practical advice. We will ask, boss, this is a strategy we are thinking. Is it a good strategy, bad strategy? They'll tell, don't do this, do this. It's only because they're having that practical experience, hands-on experience of building so many big businesses. Yes or no, everyone? Okay. They're going to provide us practical advice. Third point. Don't worry, we'll remember. Yes. Next, they will also be having a network of contacts. Say, for example, we want to take this globally. Currently, we are manufacturing flying cars in India. We want to make it global. How do we make it global? I don't have idea at all. But don't worry, boss. If you're having a venture capitalist, he will be having network. If I tell boss we are planning to go global, he will tell if you want to start in US, meet this person. He will help you set up your initial plant so that you can start your initial small setup. From that, he will also help you get your initial few clients. Through that, you can start. They're having network throughout of clients, customers, suppliers, everything that will help us. And trust me, students, in today's world, the biggest value it is the network that we are having. Yes or no, everyone? So they're having a big network that will definitely help us. Yes or no, everyone? Okay, fine. Next, they will also provide additional round of funding. They will tell, boss, this is the initial funding. If you're growing further, you want additional round of funding, we will again give you additional round of funding. But we want extra equity portion that time. Yes or no? So we want extra round of funding, they will give that as well. And the final point is their experience in the process of preparing company for IPO. Ultimately, the dream of every startup is we start here, we will finally make it to IPO level. Because once it reaches IPO level, all investors, public will invest. Yes, we will be quoting it at a crazy premium. Yes, the founders will be making lot of money, hell lot of money. Yes, founders, venture capitalists, everyone, angel investors, they're waiting so that a company can go to IPO level. Is this clear? That is going to be a dream of every startup. Yes. Now, as a founder, startup founder, I have never listed my company. I've never made my company into IPO. I don't know what that process is, how we should do. Yes, how we should crack, how we should talk to investment manager, all those things. But was venture capitalists, they are doing it day in, day out. They know which investment banker to refer to, how exactly to list it. Yes, which trader to go for, all those things, they know the process. Yes or no? So that will also help us. Is this clear? These are the pointers. Now, has it come in the examination? Yes, boss, it has come in the examination. Now, how do we remember this? Simple, boss. We will remember it this way. Let me write it. Yes, what is the advantage of bringing venture capital firm? Yes, total 6 advantages are there. For exam 4, if we remember it is sufficient. We will remember it this way. Money wise, 3 advantages. Monetary wise. Non-monetary, 3 advantages. Sir, monetary wise, what are the advantages, sir? Yes, first advantage is they are going to give us the money right now. Yes or no? They are going to give us long-term equity. Long-term equity financing they will give. Yes, for long term, they are giving us money right now. Okay, that is first money wise advantage. Second advantage, money wise. Not today. In future, I want more money. They will give more money. Yes, they will also give additional round of funding. Yes, third point. Ultimately, as a startup, we want to go for IPO. That time we'll be raising money directly from the public. Yes, how to do IPO also they know. Yes, they will help us in IPO. These are the 3 points, money wise. Non-monetarily, apart from money also they are going to help you. How? Firstly, they will share your risk and rewards. They are coming in as equity holders. Share of risk and rewards. Then they have been in this industry for a long time, so they will give you good practical advice on what will work, what will not work. Practical advice. And the final thing is, yes, what was the final thing? They have a network of contacts. Yes or no, everyone? They are having a good network of. Simple, boss. 6 pointers we have understood. Yes or no, everyone? Perfect. Look at this. Yes. Money wise, long term equity finance. Yes. Additional round of funding, IPO. Non monetary, share risk reward, practical advice, network of 6 points. Vandana, then we have understood. Yes or no, everyone? Now let us have a look at the question bank. Basic characteristics of venture capital financing, help. Yes or no, everyone? Advantages of bringing venture capital fund. It has come in MTP, not yet come in examination. You never know, it can come in your examination as well. 6 pointers. Institute has just given it this way. What we'll do, we'll put these headings and one liner explanation will be putting it. Is this clear, everyone? Now comes the next point. Pay attention, everyone. Yes, which is going to be venture capital investment process. How will a venture capitalist invest? Till now, it has not been tested in the examination from 2018 till now, so it is slightly less important. But nevertheless, this is a chapter where every question has come. So you never know, it can come in your examination as well. Okay. Now, how will a venture capitalist invest? Is it that randomly they get to know that, okay, yes, I have started a, yes, flying car company. They will come, they will call me, Tabish, please give us an appointment. We want to invest in your company. No, it doesn't happen that way. There's a structured process. So how will it happen? First is going to be 6-step process. It is. We'll try understanding it quickly, students. First is a deal origination. Now venture capitalists are there. Imagine you are the venture capital firm. You guys are ultimately rich people. We are papa people. We are just serving you guys. Yes or no? Yes, I'm a startup founder. I've just started with Maja Flying Cars. You guys are rich people. You want to invest your money. Okay, you guys are the venture capital fund. You are having a lot of pooled money. You guys are having 100 crore. So you want to invest. So what you will do, you will try searching for possible investment opportunities. Yes, which will give you a good return, crazy return. So what you will do, yes, either you will try searching by yourself based on your contact, your network, or you will inform intermediaries. Sir, who are intermediaries? Either chartered accountants will inform, yes, or you will inform investment bankers that boss, I am looking to invest in some crazy growth related company. If you know any of them, sometimes they will specify also which industries they want to invest in. Say for example, you are the venture capitalist, you are telling boss, I want to invest in future mobility related startups which are solving mobility, traveling related problems, the business that we are in, or AI related startups. So you tell them, based on that, your intermediaries, chartered accountants, yes, or investment bankers, or any friends, if they know any of the firms which fall in this category, they will inform them. Yes, there is a chartered accountant in between. He tells me that boss, there is a crazy venture capital fund. They want to invest in mobility related startups. You are operating in the mobility related startup. Yes. So why don't you give your investment memorandum to them? What is an investment memorandum? It will contain all the details, yes, of our company. What is the business model? How much we have done? How much investment we want? Yes, that I will give to the CA. CA will present it to the venture capital company, to you guys. Is this clear, everyone? This is the first step. Deal is getting originated. We are originating, starting the deal. Look at this. Yes, this is the venture capital fund. This is the investment banker or chartered accountant. They will tell them that boss, I want to invest in mobility related startups. He tells boss, I know one company, Maja Flying Cars. He will come and tell me, boss, there is this investment company. Yes, venture capital fund company. Yes, you wanted funding, right? I tell, yes, I wanted funding. Yes, you do one thing, you present your investment memorandum. Give me your investment memorandum, I will give it to them. So I give my investment memorandum. Yes, he will forward it to the venture capital fund. If they are interested, they will call us to the next round. This is the first step. Deal is getting originated. Is this clear, everyone? Look at this. Venture capitalist deals are sourced either directly, either they will be knowing the, yes, possible investors, startup founders directly, or through intermediaries like chartered accountants, etc. It's based on the predefined criteria such as sector, stage, promoter, etc. They will give them criteria. We want in this sector only. We want companies turnover to be this much only, at least 10 crore. Yes, not more than 20 crore, etc. etc. Yes, we want this promoter only, etc. etc. So based on that, startup will submit a detailed investment memorandum. Yes, startup will give their investment memorandum wherein they will talk about their business and how much investment they want. Is this clear, everyone? Okay, this is the first point. Just a minute. Then comes the next point, which is going to be screening. What will happen in screening, students? Yes, I have given my investment memorandum about my company. Yes, just because I have submitted, will they come and invest? No, first they will screen. They're putting in their money, boss. And they know in startups, 95% of startups will fail. So they first want to do screening. Yes, is it a good business? Will it succeed? Is he a genuine candidate? Yes, will it work out? How much money we should be investing? What should be the valuation? All those initial screening they will do. Say for example, you go for a job interview, first round of screening they will be doing. Same thing will happen here as well. They're putting in their hard-earned money, boss. So they will do a screening. Okay. After deal is sourced, it is sent for screening to a senior level venture capital committee. To a senior level venture capital committee will be there. For them, it will go for screening. First round of screening is done. Then they will be calling the founder. First, they did first round of screening. Is it okay? After that, they call me for the interview. They call me, they tell, okay, present about your company. Then I will go, I will do my pitch presentation, tell everything about the company, the growth, the problem, the solution, the financing, everything. Yes or no, everyone. If they are convinced, they will go ahead, or else they will reject. Yes or no. It decides whether company should be shortlisted for further evaluation or not. Okay. So venture capital committee, they have done the initial screening. Then they called us for the interview. I presented everything about myself. Tell me, is it necessary that they should select? No, boss. But if they select, I will go to the next round. Yes or no? If I pass this screening, we will be going for the next round, which is due diligence. Now tell me, I've made some big bold claims that I've already made a sale of 25 crore in the last year. Tell me, I can tell anything in there. Is it necessary? You should be believing. No, boss. So once screening is done, yes, you guys did the screening. You guys were reasonably happy with the startup, the idea, the solution. But you wanted to check whether all the things that I'm telling are they true or not. It could be possible I'm just faking things. So will they directly invest money? No, they will do a due diligence first. They will appoint, yes, auditors to do the financial audit, financial due diligence, yes, legal due diligence, operational due diligence, taxation related due diligence. All those things you have learned in audit, yes or no, due diligence. Check whether the things that they've told, they've claimed, is it correct or not. They've told turnover is 25 crore. Check whether the turnover is there or chumma. They're just fabricating information. They're telling we will be having a growth of 50% year on year. Tell, yes, check, is it practical, achievable, sustainable? Check that. So due diligence will be done. Is this clear, everyone? After screening, we will verify the accuracy of company's information through due diligence. Who will do due diligence? Generally, external consultants. Consulting company will be there. We will get the due diligence done from them. Okay. For that cost, we should be incurring. Who will incur the cost? Tell me who is doing the investment? Venture capital fund. Who wants due diligence to be done? Venture capitalist. So who will be incurring the cost on due diligence? Venture capital fund will be incurring the cost. Yes or no? So generally, venture capital fund will be incurring the cost on due diligence. Generally, but sometimes it may be shared with the investee also. But sometimes what venture capital fund will do? Venture capital fund is telling, boss, we are doing a due diligence, but due diligence is going to cost us 10 lakh rupees. What I will do? Full 10 lakh I will not put. 50-50 we will do. 50% of the cost, 5 lakh. Yes, we will be putting from our end, but 5 lakh we want you also to contribute. I'm telling boss, I don't have money. They will tell, don't worry. Yes, once you select you, yes, from the money that we are going to give you, from that we will reduce and give it to you. Is this clear, everyone? So generally, venture capital fund, they will only incur the cost, but sometimes it is shared also. Is this clear, everyone? Okay. 3 steps are over. First one is deal origination. We are originating the deal. Then screening. We are seeing if it is okay. If it is okay, due diligence, whether every information told is right or not. Is this clear, everyone? This is before we select a firm. Tell me, students, before selection, 3 steps we are doing. First one is deal origination. Yes. Next one is screening. Yes. Next one is due diligence. Yes or no, everyone? Now we have selected. Due diligence is also done. Yes. Company has passed. Now venture capitalists have agreed. Yes. They have convinced that they want to invest in the company. Now after they have selected, 3 more steps are there. What are the 3 steps? Look at this. Next one is deal structuring. Now we will structure the deal in such a way that both the parties will win. Yes, they will tell, yes, boss, we are willing to invest 10 crore for a 10% equity. I will tell, no, no, boss, I want 10 crore for 5% equity. Then we will discuss, negotiate, and ultimately reach a level which is beneficial for both the parties. One thing, we will discuss the equity ratio. Then we'll discuss how much funding is required. Then we'll discuss the exit clause. Yes, at what level we are going to exit, what is going to be our plan of action, all those things we'll be doing. Yes, this is called as deal structuring. We will structure the investment deal in such a way that it is win-win for both the parties. So that both the parties will win. Yes, in many cases, convertible structure is also brought. Generally, equity or convertible structure is brought into place. Okay, fine. Now, one more point is there, which is going to be a tag along clause. Now, this has come separately in the examination for 3-4 months. Tag along clause. Now, what is a tag along clause? Look at this, students. In order to ensure a smooth exit, or this we will see in the end. In the end, after all 6 steps are over, we'll see tag along clause. Don't worry. That time we'll see it. Okay. Deal structuring is done. Yes, it should be win-win for both the parties. Next comes post-investment activity. Tell me one thing, students, whether venture capital fund, are they just investing money or are they actively participating in decision making? They're actively participating. How? They will appoint a nominee for the board. They will appoint a board of director. That person will participate in decision making, and they will ensure that, yes, quarterly you report to us. Yes, what was the projection target? What is the actual? Did we achieve? If not, why we did not achieve? What is going to be the plan of action for future? Yes, what all milestones are there? What we achieved, what we did not achieve, what all strategies we are planning to bring, everything. Yes, we will post investment, we will actively monitor, we will suggest, we will guide. Is this clear, everyone? Post investment activity, we are going to appoint a nominee on the board, yes, who will advise the company to follow strong MIS, etc., etc. We will have to regularly report the milestones. Is this clear, everyone? So after selection, what we have done? First one, deal structuring is done, so that it is win-win for both the parties. Post investment activity is done, and finally, yes, we will be discussing the exit plan. Tell me, venture capitalists, they are not investing forever. They just want to make a small baby big. Sir, what is this, sir? A startup which is at the small stage, until it becomes a big success, they will be there. Once it becomes a big success, it goes for IPO. They want to exit. So they will discuss the exit plan also. That is when we want to exit, at what point we want to exit. Generally, exit happens in one of the two ways. Yes, venture capitalists are telling, boss, we are investing the money. How we want exit? Either when the company goes for IPO, that time we will sell our shares. That is one option. Yes or no, everyone? Sell to third party, sell to a third party through IPO or private placement. Yes. Or else promoter buyback. In some cases, what will happen? Company did not become so big that it can go for IPO, but still it has made reasonable profits. So what venture capitalists are telling is, boss, promoters are there. I am the founder of the company. See, you invested money today. You've made it a big company. I'm telling I don't want to go for IPO because after that compliance is going to be high. There are going to be so many other things. We cannot be running the business peacefully the way we want to be doing. So what venture capital fund will tell? Okay, I give you an option that you can buy back the shares we are having at a premium. Say for example, they have invested 10 crore today. They're telling for every year, I want a 25% return. Based on that, say for example, 10 years. After that, you add that money and give me the money back. Is this clear, everyone? Two options will be given for exit plan. Either we will go for IPO or promoters only will be given an option to buy back at a premium. Now, why the second option is given for promoter? Sometimes promoters will be feeling that was subsequently in the long term, we only want the full country. Venture capital fund is telling, fine, we will give you the money. Ultimately, we are concerned with profit. Either we go for listing, from that we will make money. Else you give us a premium. We are happy with that. Anyone purchases, what is there for us? Is this clear, everyone? This is the exit plan. So look at this altogether 6 steps. Before selection, 3 steps. First is going to be deal origination, originating the deal. Then we are going to do the screening, checking. After that, okay, party is good. We will check if the data told is correct or not. Due diligence. Yes, after we've selected, next is going to be deal structuring. We will structure the deal in such a way that it is going to be win-win for both the parties. Then we will have post investment activity. What was it? Post investment activity, and then finally we have our exit. 6 pointers. This is how we will be remembering. Before selecting a company, 3 steps. After selecting a company, 3 steps. Is this clear, everyone? Okay. Now, yes, one very beautiful thing. Okay. Yes, a parallel, a synonym for this. 6 steps of investing through a venture capital fund. Venture capital investment process is 6 steps. Yes or no? And try understanding, students. Modern dating also goes through 6 steps. Sir, what is it, sir? Should I tell you? First step, you want to start your dating life. Yes, deal origination. You will first make up your mind that, boss, you are ready for dating. Yes, you will assume a dating application, say Bumble, Tinder, etc., or you go meet people. Deal origination, you are starting the deal. Yes or no? You are creating your profile, sir. Crazy, sir. We have to first clear, na, sir. After clearing, imagine. Okay, then after that comes screening. Just because you are seeing a person, will you directly go and date that person? No. You will screen. Yes, right swipe, left swipe, all those things you will do screening. Good, bad, good, bad. Yes or no? Assume one person you did a right swipe. For they also liked you. Does it mean that both of you guys start dating each other? No. You will go and meet them once. Yes or no, everyone? Yes, screening. You will go and meet them once. Yes. In the first meeting, they will tell all big, big, crazy things. Yes, I am that person. I am the greatest person alive. I am the kindest human being ever. Yes, even if a dog is crying, I feel bad for that. I am a humanist. I am a, yes, so many things they'll fake. Whether all of that is going to be true? No. What we will do? We'll do a due diligence also. We'll go stalk their Insta. Are they really the same person who they are pretending to be? How do they deal with other people? Due diligence also will be doing 3 steps. Yes, once we have done all these 3 things, okay, then comes the deal structuring. Yes, how are we going to structure the deal? Sir, what is this, sir? Previously it was not there, but in the modern relationship it is there. Different things can be there. Either you are entering into a relationship, or you're entering into a situationship, or you're entering into so many ships are there. Yes or no, everyone? Whatever the ship, you're structuring. Then comes post investment activity. Okay, after you have entered into a whatever ship, relationship, situationship, whatever ship, hell ship. Okay, yes, whether they are performing properly or not, daily basis. Good morning, baby. Good afternoon, baby. Did you have food? Come, we'll go. All those things will start. And then finally comes the last step, which no one will think about, but everyone will have on the back of their mind. What is it, sir? Exit plan. Yes, sir. We are boys, sir. We don't have an exit plan. Don't worry, you'll not have an exit plan. You will be given an exit. One day randomly you will wake up. Oh, you're blocked. Exit plan. Tata bye bye. Is this clear, everyone? So 6 steps. Is this clear? Just on a funny way. Yes. Now 6 steps we have known, we have understood, we have remembered. Now one more small point we should be knowing, which is a tag along clause. What is a tag along clause? To ensure a smooth exit, venture capital may put condition that promoter should also sell part of his or her stake along with the venture capital. Such a clause is called a tag along clause. Now understand, we are Maja flying cars. Imagine there is Sequoia Capital, which is the venture capital fund. Yes. They are currently investing, imagine, yes, randomly assume 40 crore for 40% equity. Is this clear, everyone? Perfect. They are willing to invest, but they are telling one condition I have. Subsequently, once it becomes successful, I will be selling my stake to a third party. Yes, when I'm selling my stake to the third party, I will anyway sell this 40 percentage to the third party. I want you also to sell 11 percentage of your stake to the third party. Yes, promoters, founders will tell why. Because when a third party wants to invest, they want to get a controlling stake. In controlling stake, they'll be getting only if they're having 51 percentage. So, yes, when I'm selling to a third party, yes, if third party is happy getting 40%, great. But suppose third party is Ambani. Ambani is telling I will purchase a company only if it becomes my subsidiary. At least 51% I want. Now, venture capital fund wants to sell his stake because he wants to get the money. But promoter is not selling his stake. Then it becomes a problem. So, before investment only, sometimes venture capitalists introduce a clause called a tag along. Tag along. That is, when I am selling, you should also be selling some portion of your stake so that together we can sell it to the third party so that we can make it lucrative for the third party to purchase. Is this clear, everyone? This is called a tag along clause. Sir, why will promoters agree? Otherwise, they will not be getting funding only. Simple. Yes, we are telling no, no, we do not agree for this. They will tell Tata bye. Is this clear, everyone? This is called as a tag along clause. Is this clear, everyone? Okay, fine. Now look at this, students. Advantages is over. Risk matrix we are yet to discuss. Stages. Okay, fine. Structure we have not yet discussed. Okay, in deal structuring, in many structures to facilitate exit, venture capitalists may put a tag along clause. What do you mean by that clause? And explain deal structuring and exit plan. So three things are there. First, we'll have to explain tag along clause. Then we'll have to explain deal structuring as well as exit plan. Is this clear, everyone? Okay, fine. Simple. It had come for 4 marks in the examination. Simple scoring only it is going to be. Now let us go ahead to the next point, which is going to be, yes, stages of venture capital funding as well as indicative risk matrix. Now, how venture capitalist will fund? The funding will happen in altogether 6 different stages, my dear students. What are the 6 different stages? First is called the seed money. Yes, I want you guys also to write. Yes, first stage is called the seed money. Then we will have the startup phase. Is this clear, everyone? Yes. Then we have first round. Then we have second round. Then we have third round. Then we have fourth round. Tell me, investment will happen in altogether 6 different stages. What are the stages called? First, initial small money they are giving just to see if the idea will work or not. It is called as a seed money. After that, we will go for the startup stage. After that, we have first round, second round, third round, as well as fourth round, or first stage, second stage, third stage, fourth stage. This also can be told. Is this clear, everyone? Now imagine, say, venture capital, Sequoia Capital is there. Sequoia Capital has agreed that 40 crore they are going to give me. Tell me, tomorrow morning itself, will they give me 40 crore? No. They know that if they give me 40 crore, yes, I will pack my bags, go to US or London, abscond India. So they will not give the complete money. They will tell, boss, in 6 phases, I will give you the money. What are the 6 phases? Initial phase is the seed money. Why is seed money given? It's just to support the idea. Say altogether 40 crore they have agreed to give. They will tell, first 20 lakh I will give you for seed money. That is, I just want, you are having an idea, you will come up with flying cars, good idea. Just prove me your idea. to support your idea, do your basic research. For that purpose, I'm giving you this 20 lakh. Do research, yes, come up with the findings. After that, if it is successful, we'll go for the next one. Is this clear, everyone? Seed money, just to support the idea, just to search, do your bit of research whether this idea will work or not. Just for that, we are having this first stage, seed money. Small money will be getting. Is this clear, everyone? Okay. Is this risky? Very risky. Why? Very good chances that the business will not be working out. Is this clear, everyone? Okay. Then comes the next phase, which is called the startup phase. Is in startup phase, why they are giving money? To come up with a prototype. Yes, this was to support the idea, to do the basic research. Yes, we did the research. Research was successful. We understood that we can come up with cars that can fly. So now, yes, investors, venture capital fund is telling, okay, boss, I will give you some more money. Imagine, say, 1 crore rupees. Come up with a prototype. Come up with a car which can actually fly. Don't start production, don't start selling, but come up with a product actually which you can be selling in the market. First prototype we should come up with. Is this clear? This is the second stage. Is this clear? First is seed money. Why? To support the idea. Then we are having startup to come up with a prototype. Is this clear, everyone? Yes. Next comes the first stage. This also we did. Prototype also we came up with. Prototype was good, looking fine. Yes. Now we want to start production. Yes or no, everyone? Yes. For that, they will give the first stage of funding. This is before the first stage, seed money and startup. Then they will give you the first stage of funding. Imagine they have given you, say, 10 crore. They're telling now you start commercial production. Yes or no, everyone? For commercial production. Yes, you purchase raw materials, purchase machinery, start manufacturing cars. For that, they are giving you first round of funding. Why are they giving first round of funding? To start commercial production. Is this clear, everyone? Okay, that also we did. Commercial production. Commercial production we started. Commercial production became a hit. Now once we start producing, we start selling. Tell me whether customers will immediately make payment. No, boss. Why? They're asking for credit, but we have to make payment to our suppliers. We want working capital. We want to pay for our employees, for raw material, etc., etc. For that, we are having second stage, which is going to be for working capital. Is this clear, everyone? Imagine we get additional 5 crore for working capital. Is this clear, everyone? Okay. First comes a seed stage. It is to support idea. Then comes a startup phase. Is to come up with a prototype. First round, first stage. Yes, it is to start commercial production. Second stage, once you've started, you want working capital for working capital. Is this clear, everyone? Yes. Third stage is for market expansion and mergers. Say, for example, we started with commercial manufacturing cars. We are manufacturing. We are doing good. Now we want to expand. Say we are into flying car division. We saw there is another company called MFB, Maja Flying Bike. They are manufacturing flying bike. We want to expand ourselves. So either we can only start manufacturing flying bikes, or else that company is there. We can just acquire that company. Yes or no? So we under one umbrella will be having flying bikes also, flying cars also, merger related decision. They will tell for that also we will give you some extra 10 crore. Is this clear, everyone? Yes, this is going to be the third stage. That also we did. That also became successful. And then finally we'll be having the fourth stage, last stage, which is to go for IPO. They will tell, okay, boss, you want to go for IPO, for listing, etc., etc. You want money for that also take some 5 crore. Is this clear? Altogether, 6 stages. Tell me, students, I want all our students to repeat it one time. First one is a seed stage to support an idea. Then is a startup stage. Yes, it is to come up with a prototype. Then comes the first stage. It is to start commercial production. Second stage for working capital. Third stage, it is for expansion as well as merger. Then comes fourth stage for going for IPO. Yes or no, everyone? This has come multiple times for exam. Look at this. First one is going to be seed money. Yes, it is to support an idea. Next is startup phase, to come up with a prototype. First stage, it is to start commercial production. Second stage, for working capital needs. Third stage, it is going to be for market expansion and acquisition. Fourth stage is to go for public issue, IPO. Yes or no? Now, with that, two more things are there. First is risk perception. How much risk is there? Tell me, students, initially when they're giving you the initial money, it is just to support the idea. I just made a claim that I can manufacture a car which flies. I don't even know how to do that. So tell me the risk is going to be extremely high. Yes or no? So here the risk is going to be very high. Okay. By the time we reach here, second stage, third stage, once second stage is over, we have started commercial manufacturing. Yes, production has started. We have started getting customers. Now we know what this business will work out. Then slowly in the third and fourth stage, third stage is just for expansion. Fourth stage, it is just small money to go for IPO. Here my risk will be slightly low. So initially the risk will be the highest. Slowly my risk will reduce. Yes or no? How have they given the keywords? Look at this. This way only we should be writing the keywords. Yes, seed money, the risk is extreme. Tell me extreme. When you're in extreme pain, you tell, extreme pain. Yes or no? Extreme risk. Then the next phase, risk is very high. Then it is high. Yes, in the second phase for working capital, that time also it is sufficiently high. Third phase for expansion, risk is not that high. It is medium risk. And the fourth stage, risk is low. Is this clear, everyone? There is no way we can do it. Only through repetition it will come. This is one such question. Trust me, when I was preparing for my examination, this was just a table. I saw who will remember this. All these years, everything nonsense is given. Who will remember this? Trust me, in my paper, when I gave my exams in Jan 21, whatever you think, this will not come. That will only come. Trust me, it came for 4 marks. Okay, and I was not even knowing. They told, okay, yes, come up with the risk return matrix, something they're given. I didn't even know what they're asking. Randomly, something I wrote and I came. I know I wouldn't have got the marks. Yes, I've made mistakes. I don't want you guys to be making the mistakes. Is this clear, everyone? 2-3 times it has come in the exam. If you're not believing me, see the students. RTP May 23, July 21 examination, May 2025 examination. 3 times it has come in the examination. I guess Jan 21 exam also it had come because I remember because I had given. I guess they've missed it while writing it here. Look at this, explain indicative risk matrix. They will give you this. You will have to tell seed money, startup, second stage, fourth stage. How much is the period? Risk perception for why they are giving the money. 4 marks. Okay, so we'll have to put in our efforts. Yes or no, everyone? Okay. So these are 3 things we have done. Yes or no, everyone? First, we have understood what is the name, why we are getting the money, what is the risk perception. Simple. Risk perception is first is extreme. Yes, then is very high, high, sufficiently high, medium, low. Yes or no, everyone? Perfect. Simple. Let us try remembering it this way. Yes, you're looking at your partner, your boyfriend, your girlfriend. Yes, how is their beauty? The first time you're seeing, you'll tell extremely beautiful. Tell me, students, extremely beautiful. Then you'll tell very highly beautiful. Then you'll tell highly beautiful. Then you'll tell sufficiently high. Then after some time, you'll try to get to know, okay, they're also a bit annoying. Then you'll medium only. Then in the end, by the time you're reaching the breakup, is that low? Yes or no, everyone? Yes. If it has just helped you to remember, it makes sense. As simple as that. Yes or no? Yes. Extreme is very high, high, sufficiently high, medium, low. Is this clear, everyone? Then comes the period. For how much period we are putting in the how much period the investment is locked. Tell me, seed money you're investing upfront, it will be locked for a very long period. Yes, startup you're investing later on, it will be locked for slightly lower period. Yes or no? Say for example, venture capitalist is investing today. This is the date of IPO. Yes, seed money they are giving here. So it is locked for the highest period, 7 to 10 years. Then, yes, startup phase. After that, they're investing. Tell me it will be locked for slightly lower period, say 5 to 9 years. Then, first phase, they're investing slightly afterwards. It is locked for slightly lower period, which is 3 to 7 years. Second stage, also, they're investing slightly later. It will be locked for 3 to 5 years. Third stage will be for 1 to 3 years. Fourth stage will also be for 1 to 3 years. Sir, this also should we remember? Yes, sir, we should remember. Now, how do we remember this? Sir, is there a way we can remember this? Yes, dear. Sir, how can we remember this? Okay, simple thing. We'll have to remember. All these are just random numbers. But we just tried coming up with a way through which we can just remember this. Look at this, students. Just feel this story that I'm going to tell you. Okay. You go attend a CA students conference. Institute conducts CA students conference every year. You go to attend the CA students conference as a student. You come across a person, a beautiful person, love at first sight. Tell me, students, love at the very first sight. Yes, you like her, she likes you. Yes, the vibes get matched. You guys speak, you guys just keep speaking. You guys just met at the lunch when you are just having lunch. You guys speak, you guys keep speaking. Then suddenly she tells, okay, it's time for me to leave. I'm in the organizing committee. Yes, but I really want to be in touch with you. You're telling, Zaz, I also want to be in touch. Yes, so she's telling, we'll do one thing. Yes, note down my phone number. Yes, you ping me on WhatsApp subsequently. Note down my number, you ping me on WhatsApp subsequently. Yes, you tell okay, you take your mobile phone. Your mobile phone is switched. Yes, your mobile phone gets switched off in the worst of the situations. At this point in time, your mobile phone is switched off. Tell me what to do, what to do, what to do. After really long time, you are liking a person, you're liking the vibe of a person. Crazy, the way you imagined in your dreams exactly that person. Either you can let go of the person because you don't have charge in your phone. She is willing to give her phone number also, or you can remember her phone number. What will you do? Tell me, students, what will you do? Sir, what is the use of this memory if you cannot remember the mobile number of our future wife or future husband? You'll tell, yes, she'll tell, your phone is switched off. How will you remember my number? We'll tell, what is the use of this brain if I cannot remember the mobile number of a beautiful girl like you? Tell me the number. Yes, I will remember till the last breath. Crazy things we do in love, yes or no? So she tells her number, note down my number. My number is 75. She tells it is very simple. It is 753311. Tell me, students, what is the number? 753311. Sir, only 6 digit. 6 digit number only, please. Tell me, everyone, her mobile number is 753311. Tell me, students, 753311. Tell me if you, yes, if someone asks you in your sleep, what is her mobile number? 753311. In your dreams, what is her number? 753311. Till the last breath, what is her number? 753311. Simple, from 7. Cristiano Ronaldo, Dhoni, Tala 7. From there it is going all odd numbers. 753311. Yes or no, everyone? Now try seeing how exactly it will work out. Pay attention, students. 6 stages. First one is a seed money. Next is a startup. Next is the first stage, second stage, third stage, fourth stage. Yes, how much is the time period? Tell me the mobile number. 753311. Is this clear, everyone? Now, against this, I need to be writing. Yes, one more thing. 7 is Cristiano Ronaldo's number. With that comes Messi. What is Messi's number? 10. Is this clear? After 10, what comes? 9. So, here the first two numbers are going to be 10 and 9. Is this clear, everyone? Next four numbers are very simple. Tell me here, how was the number? 7533. So, here the next numbers is going to be 7533. So, this much should we do to remember? If you want to write in the examination, this is the way out. Or else sit and by heart. Yes, I spend so much time to come up with something which will help you guys remember. Is this clear, everyone? Simple. You found a girl. Yes, you fell in love in the very first moment. You'll have to remember her number till the last breath. Tell me, what is her number? 753311. 753311. You will write down this. Now, 7 is Cristiano Ronaldo. With Cristiano Ronaldo comes Messi. 7 to 10. Yes or no? Now, 5. After 10 comes 9. Yes or no? Or here you can just remember 10 and 9. Okay. Then the next four digits are simple. It is the first four digits here are going to be the next four digits here. Is this clear, everyone? So, look at this. Seed is 7 to 10 years. 5 to 9 years. 5 to 9 years, 3 to 7 years, 3 to 5 years, 1 to 3 years, and 1 to 3 years. Is this clear? Some crazy things we are doing just to ensure that you guys remember it. Is this clear, everyone? Promised you guys that each and everything you'll be remembering. That is what I'm doing. Now, how will questions come? Sometimes question will give you, okay, fill the table. We will fill the table. Okay, boss, we can do this. Not a big deal. Yes, sometimes question will just tell you venture capital funding passes through various stages. Discuss the stages. Here they are only asking you for the stages. Seed money, startup, first round, second round, third round, fourth round. You just have to explain it. That years and everything is not needed. Is this clear, everyone? Whatever question comes, we know how to tackle it. Is this clear, everyone? With this concept is also over. Now it leaves us with the final point, which is structure of venture capital fund in India. With that, the second phase, venture capital, is going to be done. Yes, everyone, we have the final point, which is going to be structure of venture capital fund in India. Now, structure of venture capital fund, we are going to bifurcate into two. One is a domestic fund. Yes. Next is going to be offshore fund. Offshore fund, again, we can bifurcate into two. Offshore structure or unified structure. Sir, what exactly it is? Let us quickly try understanding, students. Quickly we'll try understanding. Very simple. Yes, domestic fund, offshore funds, unified fund. It depends on two major questions. Firstly, venture capital fund, are they putting their money? No, they will raise money from investors. Yes. So first question is, where am I raising my money from? Am I raising my money from domestic investors or from foreign investors? That is giving the name. Tell me domestic fund. Domestic fund. That means I am raising money from my domestic investors. Imagine I am a venture capital fund in India. I will raise money from the Indian investors. Yes or no, everyone? So domestic means we will be raising the money from domestic investors. Yes or no, everyone? Domestic investors. Offshore fund, boss, offshore. I am raising money from global investors, offshore. Yes, foreign investors. Yes or no? So, offshore means I am raising my money from foreign investors. Then I have unified. Both the people are coming together. That means domestic investors are also there. Yes, foreign investors are also there. Both these people are putting in the money. Yes or no, everyone? Unified means yes, domestic plus foreign investors. This is the main differentiating factors. Is this clear, everyone? Perfect. Now tell me, ultimately, the fund will be invested for a startup in India. We are discussing the structure of venture capital fund in India. That means ultimately, whatever be the fund, domestic fund, offshore fund, or unified, ultimately, where is the startup company located at? India. So they are investing in a startup which is situated in India. So ultimately, yes, investing in a startup situated in India. Is this clear, everyone? This is what we should be knowing. Beyond this process, also I'll be telling, but this is the most important. Domestic fund, domestic investors, they're investing in a investing in a startup in India. Yes, offshore structure, foreign investors, but boss, they're investing in a startup in India. Unified, domestic investors are also there, foreign investors are also there. They're coming together and they're investing in a startup in India. Is this clear, everyone? Fine. Now the process is there. Process pictorically I've tried explaining. Once we'll see pictorically, we'll read the explanation also. Coming to the domestic funds. Tell me, students, domestic means everything is happening in India. There is a venture capital fund in India. Tell me, in India, you want to create a venture capital fund. You can create it either in the form of a trust or a company. Only two structures are possible. Either you create it as a trust because they're just pooling in the money and they're just distributing it further, or as a company. Okay, venture capital fund is there in India, either in the form of a trust or a company. They want to raise money. Venture capitalists, are they putting their money? No, they will raise money. Domestic fund, from whom they will raise? From the domestic investors. From the Indian domestic investors, we will raise the money. Either it can be mutual fund company, high net worth individual, yes, or insurance company, etc., etc. But domestic investors, Indian investors only we are raising. Is this clear, everyone? Okay. We have raised the money. Now we are having the money. Tell me, randomly, all startups will we keep on investing? No, boss. We'll have to see which startups is good. For that, we will appoint an investment advisor. Who is an investment advisor? He will search and suggest us good investment opportunities wherein we can invest. Okay, we appointed an investment advisor. He comes, he does his research. He tells, boss, there is a crazy company called Maja Flying Cars. You invest in that. Yes. Now, what they will do? They will invest their money in a startup in India. Is this clear, everyone? This is going to be the structure. Firstly, there is a venture capital fund in India. Yes, it is incorporated either as a trust or a company. From whom it will be raising money? From the domestic Indian investors. Next, they will appoint an investment advisor. He will suggest good startups in which we can invest money. Yes, venture capital fund out of the pooled fund will invest in the startups in India. Look at this, everyone. Yes, they are raising fund domestically, that is within India. Okay, they've raised. They will create a separate domestic vehicle, special purpose vehicle for pooling of fund. Separate special purpose vehicle, venture capital fund we have created. Yes, it is created either as a trust or as a company. Okay, boss. Now we will appoint an investment advisor who will suggest, okay, based on that, we will invest in a startup in India. Is this clear, everyone? Okay, domestic structure is over. Then comes offshore fund. In that also two different structures can be there, offshore structure or unified structure. Offshore structure, let us try seeing. Now what we are doing is, foreign investors want to invest. Say for example, Maja Flying Cars is there. Foreign investors also want to invest. They are telling crazy concept it is. Now what they will first do? They will create a venture capital fund outside India because these are foreign investors. They would have created a venture capital fund outside India. Now understand practically, say venture capitalists, whenever they make a gain, the gain is going to be very big. Say they've invested 100 rupees. When they're removing the money, either it will be complete loss, or that 100 would have become 10,000, 1 lakh. It's 100 times, 500 times, 1,000 times returns they will be getting. So one of the biggest complications is when they are removing the money, it is the tax implications. So to reduce the tax implications, what they do, venture capital firms generally they register themselves in tax havens. Say Mauritius, yes. Say what is that, Cayman Islands, all those places they'll be registering themselves. Let us take the example of Mauritius. In Mauritius, we create a venture capital fund. Is this clear, everyone? Now, outside in foreign, if you have to create a venture capital fund, it can be formed either as a LLC or LP. LP means a limited partnership. LLC means a limited liability company. Is this clear, everyone? Foreign terms these are. Yes, basically a company or a LLP. Same thing only. LLP is called as LP, limited partnership. LLC is a limited liability company. Is this clear, everyone? So foreign, offshore, in a foreign country, we are going to create a venture capital fund, which is a separate special purpose vehicle. It is going to be incorporated either as a LLC or LP. Okay, boss. Tell me who is going to give the money. It is offshore structure, means foreign investors are going to give the money. Yes, foreign investors will pool their money. They will invest the money. Is this clear? Venture capital fund got the money. Now tell me whether venture capital will directly invest in every random companies. No. First, they will appoint an offshore manager. They are appointing a manager, telling, boss, you see, you decide, you select the best companies to make investment. There we will be investing. Okay. Offshore manager is appointed. Tell me, imagine the venture capital fund is in Mauritius. That means the manager is appointed here. Boss, we are operating in Mauritius. Our office is in Mauritius. So we'll be appointing a manager in Mauritius only. So we have appointed an offshore manager, a manager who is going to take care of all the investment decisions in Mauritius. Is this clear? He will take the final decision. Should we invest or not? Where to invest? Now, it is an offshore entity. They are going to invest in literally every countries of the world. Now tell me, offshore manager, is it possible for him to literally go to every country, do research of what all is trending, what all new businesses has come up? Yes, where we should invest, which company is good, which company is doing good, doing the due diligence, all those things. Is it possible? No. What they will do, they will appoint managers in every country. That means if he wants to invest in India, first they will appoint a manager in India. They will be appointing an investment advisor in India. What will an investment advisor do? He will search for startups in India which are doing good and give reference to the offshore manager. He will then see, is it actually a good company? Should we invest on? Is this clear, everyone? Investment advisor will search for startups, yes, in India and will give the report to the offshore manager. Yes, he will tell the company, okay, boss, this is a good opportunity. Let us invest in Maja Flying Cars. Ultimately, this venture capital fund will invest the money in the startups in India. Is this clear? This is how work will happen. Is this clear, everyone? Okay, let us quickly try seeing this offshore investment vehicle, either an LLC, limited liability company, or LP, limited partnership. If you want, you guys can this, right? This is a setup outside India. Okay, this directly investing in Indian companies, that is investing in Indian companies. How? Two more people will be there. Firstly, we will be having an offshore manager. He will be managing the funds, and an India-based investment advisor will be performing due diligence. Yes, in India, there will be an investment advisor who will search for companies, do due diligence, and accordingly report. Is this clear? This is going to be the structure. Now comes unified structure, basically a mix, wherein yes, Indian investors are also investing, global investors are also investing. Now, how will it happen? Practically, I'm explaining. This is not needed for examination. For exam, if you just remember this and write in your own language, also it is sufficient. But still, we are just doing it. Okay. What is unified structure? Outside India, in Mauritius, we are going to establish a venture capital fund. Basically, a mixture. It is offshore is also there. Outside also there is a venture capital fund. Yes, local is also getting added. We are unifying both. Is this clear, everyone? So yes, now in Maja Flying Cars, Indian investors are interested, foreign investors are also interested. Now, if I create a domestic fund, now only Indian investors can invest. If I create an offshore structure, now only foreign investors can invest. So I come up with a unified structure. How will it happen? Simple. Firstly, outside India, I will create a venture capital fund. Outside India, it has to be created either as a LLC or LP. Okay, boss. Now, foreign investors, they will invest in the venture capital fund. Is this clear, everyone? In Mauritius, we have set up a fund. Yes, foreign investors have invested. Tell me now. Yes, there is a venture capital fund outside India. Yes, they will appoint an offshore manager. Okay, boss. He will search for companies across the globe. In every country, he will appoint an investment advisor. Yes or no, everyone? Okay. They appoint an investment advisor in India. Yes. He will search for companies. He tells, boss, crazy company is there, which is Maja Flying Cars. Good company. You should be investing. He tells, okay, we are willing to invest. Is this clear, everyone? Yes, we wanted to invest directly in the startup in India. But wait, yes, in the meantime, Indian investors are also there. They are also interested to invest in Maja Flying Cars. So what we do, we create a new domestic venture capital fund. In India also, we create a domestic venture capital fund. Why? Because we want to raise money from the Indian investors. So now what will happen? What will happen? What will happen? Understand, there is a domestic venture capital fund. There is a venture capital fund in India. Yes, it will pool the money from where all? Firstly, from domestic investors, it will receive the money, as well as foreign investors also wanted to invest. Their money is also there. Their money will first come to this. Yes, here. From here, the complete pooled money will be going for the startups in India. Is this clear? This is how practically it will work. This much is not needed. For us, very simple. We will first tell, yes, in a foreign country, yes, we are going to establish a venture capital fund. It will be established either as a LLC or LP. Yes, foreign investors will invest in it. Yes, they will be appointing an offshore manager. Yes, locally also will create a trust. Their Indian investors will invest. Together, they'll be investing in the company. Is this clear, everyone? Look at this, everyone. It is used when both domestic and overseas investors want to participate. Yes, here overseas investors are investing through offshore vehicle. Offshore vehicle I have created, through that overseas investors are investing. Yes, offshore vehicle is investing into a locally managed trust. That offshore vehicle, it is not directly giving to the company. It will first put the money to the locally managed trust, local venture capital fund. From that, money is going to India. Is this clear, everyone? Now, this in case of Sequoia Capital, Sequoia Capital is having its global wing, Sequoia Capital LLC. Yes, it is having its Indian wing also, Sequoia Capital India. Yes. In the global LLC, global wing, global investors are there from different countries. Yes, Warren Buffett, Elon Musk, etc., etc. Yes. In the Sequoia Capital India, Indian investors are there. Okay. Say, for example, Sequoia wants to invest fund. Yes. Indian investors, Sequoia India is also interested. Sequoia Global, Sequoia Capital LLC is also interested. So what they will do is, from here, a portion of fund they will put here to Sequoia Capital India. From this, the money will be transferred to the start. Is this clear, everyone? Practically, I've explained. You guys will have to read it 1 or 2 times. With that, it is over. Simple. Domestic means investors are from India, investment is in India. Offshore means investors are from outside, investment is happening in India. Unified means investors are from outside also, India also, investment is happening in India. Is this clear, everyone? Okay. So with this concept is over. With this, the second unit, venture capital fund, is also done. Look at the students. Majorly, we had characteristics of venture capital fund. Yes, venture capitalists give help. Yes or no, everyone? Next, we had advantages. Next, we had venture capital investment process. Then we had seen stages of funding. Then we had seen structure of venture capital fund in India. Now we have one final point, which is going to be succession planning. Giving you guys a minute to let this sink in, then we'll take the discussion forward, my dear students. Yes, everyone, we now have the final point, which is going to be succession planning in business. We started with Maja Flying Cars. Initially, it started with just one person. Slowly, we grew, we expanded, we made it into an established company. Now we made it into a big company. It has gone for IPO. Now it's a very big company. Now we will be planning about succession. Yes, imagine I am the owner, managing director, CEO, everything and everything of the company. I've given 30, 35, 40 years. Now I've slowly become old. I will slowly start thinking, boss, it is now time that I hang up my boots. That is, I retire. I pass it on to the next generation who will take the company forward. Succession planning. We have started with a startup. Yes, once it becomes successful, we are thinking, boss, succession for future. It is not that just for one generation we want to do business. Yes, company goes on for perpetuity. So we are planning for future succession planning. Yes or no, everyone? Now, what is meaning of succession planning? It is the process of identifying key positions in an organization and preparing the people to take over those roles. We are identifying what are the key positions. Say there is a role of CEO, CFO, yes, say division manager, etc. These are the key roles, and we prepare the people so that once the CEO is about to leave, the next person can come and take it over from there. This is clear, everyone. Succession planning is very important. Yes, be it business or anywhere, succession planning is going to be important. Yes, different places. Firstly, in businesses, it will be used. Secondly, in sports also, it will be used. Say, for example, yes. Right now, you cannot be telling because Indian captaincy is so much split. You cannot be telling. But previously, yes, 2011 to 14 till 2014, MS Dhoni was the captain of Indian team across all the formats. When he was the captain itself, they had properly planned that if in case Dhoni is going to retire, Virat Kohli will take over. Succession planning after Dhoni, who Virat Kohli. They planned it well in advance so that yes, when the situation comes, they are ready already. Now, once Virat Kohli was there after 2021 or I guess 2022, after Virat Kohli, it is going to be Rohit Sharma. They had already planned it. It's because at one particular point in time, it is time to pass on the baton to the next person. That time, next who? Who will take over from here? Yes, that becomes important. Is this clear, everyone? So, similarly, in businesses also, in Apple, initially Steve Jobs was there. He was the face and everything of Apple. But once he left, there was a big vacuum which could not be filled. And trust me, even till date, that vacuum is still not being filled properly. Okay, they're still having that big name, but still that vacuum, the greatness, the precision, the aggression, the marketing that Steve Jobs did, Apple is not in a position to achieve even 10% of that right now. When Steve Jobs was there, Apple really meant innovation. Now it is just the brand name, nothing else. Is this clear, everyone? So that's the thing. Okay. So what is succession planning? We are identifying key position, preparing people to take over those roles. Okay, fine. Now, business succession strategy. Yes, when we are planning for succession, what is the strategy we should be doing? What are the steps we should be doing? 4 steps. Step number 1, evaluate key leadership positions. Now, look at this, students. Simple, I'm telling. We are in Maja Flying Cars. Yes, the role of CEO is right now vacant. Or I'm thinking in the next 6 months, I will retire from the business. So we'll have to plan for succession. Yes or no, everyone? First step, what we'll have to understand, evaluate key leadership position. Yes, which leadership position we want succession for the position of CEO of the company. Okay. Now, step number 2, map competencies required for the position. Yes, step number 2 will identify what all competencies is needed. Yes, person if he has to become CEO, what all competencies, skills we want him to be. Yes, we want him to be good at technical skills. Yes, be it regarding product design or marketing, etc., etc. He should be good in terms of soft skills. Yes, he should be good in terms of stress management. He should be having a good proven record. Yes, all these things are needed. So we'll see which all area is going to be vacant, what all skills are needed in a person who is going to take over that area. Okay. Then comes the third step, identify the competencies of the current workforce. We will see in the current workforce, current employees, is there anyone who is suitable who can take up that role? We will see this person, no, this person, no, this person, no, this person, no, this person, he is having the skills. Yes or no? We will identify if there is any person who is having the skill take up that role. Okay, fine, boss. Then comes the next step is bridge leader. Now, what is bridge leader? It is generally used in case of family run businesses. Tell me, Reliance is there. Yes, whatever Reliance is listed, whatever it is, ultimately Reliance is going to be controlled by Ambani's only. Yes or no? Is there any doubt in that? No, boss. It is their family business. They have started it. So now, right now, Mukesh Ambani is there. Imagine this simple situation. Yes, fictional story. Mukesh Ambani is there. Yes, Mukesh Ambani is having 3 kids. Yes, Akash Ambani, Anant Ambani, and I guess her name is Shreya Radhika. I am not very sure. 3 people are there. Is this clear, everyone? Imagine fictional story. Reliance is there. Right now, it is with Mukesh Ambani. Yes, Mukesh Ambani wants to ensure that ultimately Reliance will be with them only. Imagine the kids are very small. Sir, kids are big, sir. They have got married, sir. Their marriage went for 1 week, weeks and months together, sir. Imagine they are very small, 10-year-old kids there. And imagine that one day suddenly Mukesh Ambani faced a heart attack and he died. Imagine, imagine, imagine. Now we want to continue the business. We want to ensure that ultimately these people only take up the leadership role. Ultimately, these people only should become the CEO. But right now, these are kids, 10-year-old kids. They don't know where to do susu, where to do potty. Can you appoint them as CEOs? No. So for that bridge period, that is from today till the time these people become big, mature enough to take over the organization, we will appoint a bridge leader. Tell me, bridge leader is a leader who is appointed for the bridge period. That is, this is what Mukesh Ambani has built. This is what his son will take over from. Yes or no, son or daughter, whoever it is. For this bridge period, for this small period in between, wherein there is no one, for that period we will be appointing a leader. It is called as a bridge leader. Is this clear? It is generally used in family run businesses. So wherein for an interim period, okay, we are going to appoint a bridge leader. Is this clear, everyone? Okay. Now in this example, I have one recent example. I don't quite remember. You guys know Karishma Kapoor, famous actress. Her husband, I'm not quite getting his name. He died recently, 5-6 months back. He's having a famous automobile related company which is manufacturing automobile parts. I've invested in the company as well. Right now, I'm not getting the name. Okay, fine, leave it. Let's not get into that example. Is this clear, everyone? 4 steps. Identify key position roles. Yes, map the competencies required for that role. Yes, what all skills are required. Identify competencies in the workforce. What all skills are there in my workforce? And if it is there, okay, accordingly fulfill. In case of family run businesses, if there is a bridge in between, gap in between the existing as well as new generation, you will have to appoint a bridge leader. Is this clear, everyone? Okay, fine. Now comes the challenges in implementing succession planning. All these have come in the examination, my dear students, for 4 marks each. So that is why we are discussing it here. Challenges. What challenges are there when we are planning for succession? Okay, first important challenge. Founder mindset is different from corporate mindset. Tell me a very simple thing, students. Imagine you start up with your CFO. Today you guys are CA students, CMA students. You will become CAs, CMAs. You start up with your own firm. You start your own practice. Okay. You will sit, work properly, work tirelessly, work with your full energy, enthusiasm. There is an employee, corporate employee. Yes, there is an article. You also know. Yes, will he be having the same energy, same vigor, same enthusiasm? No. He's just telling boss, I am getting paid 3,000 per month. I will come at 10 o'clock, I will leave at 6 o'clock. Yes or no, everyone? The mindset of the founder and the employee will be different. Because of that, yes, boss, you want to appoint a person in your place, but he may not be having the same mindset as yours. Yes or no, everyone? Perfect. Same thing, the mindset that I am having. Yes, we have started with our own teaching venture, Think with Tabish. See, after 10, 20, 30 years, I want to pass it on. I appoint a new party. He will just think as a corporate employee. He has worked just as a corporate employee. He was just thinking, monthly salary I'm getting, how much work money I'm getting, that much work I should. But as a founder, you're not thinking. You are doing end to end because it is your business. It is your dream. It is your venture. Right? So the mindset is going to be different. This is the first challenge. Mindset is going to be different. Okay. Second, it is going to be premature for startups to implement business succession. Imagine we have started with Maja Flying Cars. Today I started. We have not even come up with our prototype. We don't even know if it will succeed or not. Today itself, I'm sitting and thinking, okay, yes, my successor is going to be this person. My son will succeed me in the business. No, this person is good. He will succeed me in the business. Is it making any sense? No, boss. It is a startup. You're at the initial stages. At least succeed, build something. Then you think about succession. Right now, why are you thinking about succession? You have not even succeeded. Is this clear, everyone? So if your startup is at the initial stages, you don't think boss. You think about making the start successful. Then talk about succeeding. Is this clear, everyone? Okay. It is going to be premature for startups. Third thing is founders are the face of startups, and in this absence, succession planning can become difficult. Understand, in most of the businesses, founders are the face of the startup. The moment I tell Reliance, we get the name, yes, Mukesh Ambani. The moment I tell Tesla, we get, yes, Elon Musk. The moment I tell Amazon, we get Jeff Bezos. The moment I tell Google, yes, so Google founders, Larry Page, I guess. Yes or no, everyone? The moment I tell Microsoft, we get Bill Gates. Yes, the moment in India, say for example, we are telling Ola, Bhavish Agarwal. We tell Lenskart, Piyush Bansal. We tell Boat, Aman Gupta. These are the face, they are the brand, they are the identity of the startup. Once they leave, if they leave, then sometimes the brand will lose its identity. The way previously Apple was associated with Steve Jobs. Apple meant Steve Jobs. Once Steve Jobs died, after that, it took quite some time within the organization for the employees to accept that, okay, this is a new leader, we should accept him, as well as for public outside to accept that, boss, we are having a new leader, because he was the complete face of the organization. That could be a challenge. Even though you want to plan for succession, But boss, founder is going to be face of the start. Based on his face, the entire startup is running. So if he is not there, now people may not easily accept. That is another challenge. Is this clear, everyone? Okay, 3 pointers we have discussed. Now let us try seeing questions, students. Look at this. Questions are there on that as well. Now, this also previously structure of venture capital funds in India, it has come in the exam. Domestic, offshore. Yes, tag along clause also I have explained already. Yes, yes, steps involved in business succession strategy, steps involved. Evaluate key leadership position, map the competencies required, identify competencies of the current workforce, and bring in a bridge leader. Okay, yes. Then we are having need for succession planning is okay, fine. Next point. Challenges, it has not yet come in the examination. Okay, till date it has not come in the exam. Doesn't mean that it may not come in the examination. Simple. Founder mindset is going to be different. Next is founders are going to be the phase. It may be premature. You have not yet succeeded, boss. Okay. Now we have the final thing, which is going to be need for succession planning. Why should we plan for succession? Why is there a need that we should make a plan for succession? Okay. Firstly, it is going to be risk mitigation. Because we want to reduce the risk. Say, for example, I am the CEO of Maja Flying Cars. Business is going great. Everything is crazy. Good. Tomorrow, suddenly, imagine I face a severe heart attack and I die. God, please God, for my father, I am the only first son. I'm not even married right now. Please God, save me. Imagine. Okay. Suddenly, now the vacancy of CEO has to be filled. Tell me in one day, can you appoint a new CEO? No, boss. It takes a good amount of time to sit, think, comprehend who can take the journey forward, who is having the skills, all those things. It will take a good amount of time. In the meantime, who will take decisions? Is the entire business will be disrupted? Yes or no? It will take a good amount of time, 6 months, 8 months, 12 months, 1 year, 2 year. Till then, who will take over the business? That becomes a very big problem. Yes or no, everyone? So to mitigate that risk, we should plan well in advance. That boss, if in case anything happens, okay, this guy will take it forward. Is this clear, everyone? Risk mitigation. Cause removal. What is cause removal? If a leader is removed due to negligence, fraud. Say for example, tomorrow business is going good only. Maja Flying Cars. I am the CEO. I am also doing good only. But imagine I committed a fraud. Imagine some serious fraud I committed. Imagine. It had happened in case of Phone Pay, not Phone Pay, Bharat Pay. Sneer Grover, yes, he was convicted of a fraud. He was removed suddenly. Yes, suddenly a key leadership position is removed. Who will take over that place? For that also, it is very important that we see key roles, we keep successors before itself, so that if in case a person is gone, either he dies or he is removed, we have a backup plan already. Succession planning is always called your backup plan. Is this clear, everyone? Cause removed. If they are removed due to negligence, fraud, etc., etc., in that case also we should be having a backup. Okay. Third is a talent pipeline. Say for example, you are the employee, you are doing very good. Okay. I am the CEO. If I tell boss, if anything happens to me, subsequently you are going to take it over. Yes. So that means from today itself, yes, so some people are telling, sir, today itself we'll start praying that, oh my God, please let this person die. Not that. Today itself, you will start acting like an owner. You will be more responsible. You will have that founder mindset. You will be loyal to the company. You will not leave the company. All those things will happen. Yes or no, everyone? It will help us to retain good talent because they know ultimately they're only going to succeed. Is this clear, everyone? Third point. First one is risk mitigation. If in case anything happens to the founder, next is cause removal. If the founder is removed due to fraud, in that case also we have a backup. Yes, it will help us to retain good talented people also. Next comes conflict resolution mechanism. Succession planning encourages open communication and helps resolve conflict in a transparent and structured manner. Say for example, there are two different people, both are good employees. We want to appoint a successor. Imagine I appoint person A as a successor. Person B will be having jealousy. He will tell, I am also equally good. I am performing better than him. Then why is it that you did not appoint me? Conflict will be there. So when we are appointing a successor, we will lay down in detail what all are the list of qualities we are looking. We are telling boss, he should be good technically, plus in terms of soft skill, management, yes, stress management, people management, he should be good. So if in case we appoint person A, we will tell boss, you are a good person, you are a valued asset to our organization, but in terms of stress management and people management, we wanted a person who can manage the people well. That is why we appointed. So in case conflicts come between people, oh, I should be appointed, I should be appointed. Generally, it happens in case of promotions throughout. Yes, if you are having a structured plan, why we are doing what we are doing, it becomes better. If you are having guidelines, it becomes better instead of randomly haphazardly selecting a person. Is this clear, everyone? And then comes aligning. Yes, in family-owned business, succession planning aligns leadership with the company's culture, vision, core values. Yes, simple example. Imagine there is a Marwadi or a Jain business. Simple example I'm telling. Marwadi business is there who are delivering food items. Simple example I'm giving you guys. Marwadis, Jains, they don't have generally non-veg. Okay, simple. Imagine they're having a delivery business, food delivery business like Zomato, wherein they are delivering food. But they were Marwadis, they were only delivering veg foods. That was their company's policy, that was their principle. Based on that only they were working. Okay, fine. Imagine in case of succession, they appointed another person. Yes, who is a non-Marwadi, who has non-veg, who eats non-veg morning, afternoon, night. We came up with a policy that was from today onwards, we are going to sell veg, non-veg, every kind of food. Boss, some businesses will be having some basic principles. If you are going against the principle, then the owners will not like that. Yes, the very reason why the business is established will go for a toss. So when we are appointing a successor, we should ensure that all the values that we are valuing, yes, with ours as well as the successor should align. Only then in the long term business will be doing good. Is this clear, everyone? This is the point. So we need to align, yes, the leader's vision, culture, values with the company's culture values. Is this clear, everyone? Yes, these are going to be the points. Now for this simple mnemonic we have created, look at the students. Yes, what we are basically doing in this. Yes, we are having a successor. We are adding him to cart. Basically, when you are purchasing, you see an item. Generally, girls do this. They see a top. It is good. They want to buy, but not right now. So what they'll do, they will add to cart and keep. Thinking someday, sometime, they will purchase it. Yes, boys also. They see girl on Instagram. They will like, but they know someday we will text her. Somewhere in the side it will be there. Add to cart. Yes or no, everyone. Just giving you guys a random example. So here, what we are doing, we want a successor. But today itself, are we appointing? No, boss. We are just adding him to the cart and keeping. Successor, we are adding him to the cart. That is going to be the mnemonic. Successor is added to the cart. CART is going to be our mnemonic. Tell me, students, what is going to be CART? C is going to be cause removal. Yes, if your CEO is removed suddenly because of fraud, negligence, in that case, we want a successor. Yes, conflict resolution mechanism. Yes, in case of conflict, how to resolve, we know. Okay. Yes, A, aligning, we are aligning the family's principles with the leadership principles, values. Okay, R is going to be, what is R? T, R and T, I'm not remembering right now. Okay, R is risk mitigation. Yes, I'm also ultimately human, risk mitigation. And for me, trust me, remembering theory is the hardest thing in the world for me. Don't tell, sir, for me also it is hard. You guys are students, you will have to remember, you will have to pass. I have passed my examination. Still, I'm remembering it for you guys. Trust me, as a student also, I have not done so much effort to remember. Okay, T is going to be talent pipeline. We'll be having a good talent pipeline. Is this clear, everyone? Yes, perfect. With this, steps is over. Need for succession planning. Yes, risk mitigation. All these things are over. With this, all questions are done, done, are done. With this, if a question comes from startup finance, we know that we are going to write it. We are going to score 4 out of 4, my dear students. With this chapter is also done, done, are done. Now we'll be having a final revision. Trust me, in 2 to 3 minutes, we'll finish off the entire chapter. Giving you guys a minute to let this sink in. Then we'll have the last rocket revision, my dear students. Yes, everyone, it is time for us to have a rocket revision of the chapter Startup Finance, everything together in the next 3 to 4 minutes. Startup Finance, the entire chapter, we've broken down into 3 different buckets. First one is basics, second one is venture capital fund, third one is succession planning. First one, basics. In that, the first question is innovative ways to fund a startup. That is the non-banking ways. I told you guys a simple mnemonic, simple story. Yes, I was an employee who was working in an organization. Yes, I wanted to start a startup called Maja Flying Car. So what I did, yes, initially I used my PF money. Then I went to the venture capitalist. So I'm having my mnemonic. Yes, PF, then VC. Yes, P stands for 4 P's are there. First one, personal financing. I will use my own money. Then personal credit line, personal loan or credit card I will be using. Third is going to be peer-to-peer lending. Fourth one is going to be purchase order financing. Peer-to-peer lending, a group of people come together. Yes, and lend money. It can either be based on community-based groups or based on P2P platforms. Yes or no? Purchase order financing. What is happening? Purchase order financing is, yes, there is a financing company. They will not give money to the startup. They will give money directly to the supplier to purchase raw materials. Is this clear, everyone? P is over. Then PF. From F, two things are there. First one is family and friends. They will give me the money, or factoring of accounts receivable. I've made a sale. Accounts receivable is there. I will give it to factoring company. They will give me 80% of the money upfront, balance after collection. Is this clear, everyone? Yes. Initially, I will use my PF money. Then I will go to venture capitalist. V. V stands for vendor financing. C stands for crowdfunding. Crowdfunding, I'm raising small money from big crowd, generally through social media. Is this clear? Vendor financing. My vendor is there. Supplier is there. Supplier is financing me the money directly. Example I had given, Boeing International. Indigo went to purchase a flight. One flight was 100 crore. I told I'm not having money, boss. Do something. They told I will only give you the financing option. Is this clear, everyone? Vendor is lending money to the customer. Example, Boeing International. Okay, this is done. Next comes meaning of startup in India to receive the government benefit. What is the meaning of startup in India? Simple condition. It should be within 10 years from the date of incorporation. Condition number one. Condition number two, it should be incorporated either as a partnership or as a LLP or as a private limited company. Okay. Condition number three, turnover in any of the financial year does not exceed 100 crore. Okay. Year should be 10, turnover should be 100 crore. And fourth condition, yes, it is focused on IIS. What is IIS? Innovation, improvement of goods or services, and scalable business model. Is this clear, everyone? Now, what is not a startup? If it is formed by splitting or reconstructing an existing business, it is not going to be a startup. Is this clear, everyone? Then comes meaning of unicorn. Unicorn. It is a global term. Yes, coined by, I guess, Altly or Atlee. Some name is there. You guys can just see it once. Okay, now what is a unicorn? Simple. It is a privately held startup, private company. Plus, valuation exceeds US dollar 1 billion. Valuation is exceeding US dollar 1 billion. Plus, focus is on rarity of success. It is not easily successful model. Yes, it is very rare that such business becomes successful. And there is a lot of innovation technology which is going behind that. New idea, disruptive innovation is there. Four conditions. Is this clear, everyone? Additional information. If at any point valuation falls below 1 billion, it will lose the status of unicorn. If the valuation goes above 10 billion, it will become a decacorn. What is the first unicorn in India? InMobi. Is this clear, everyone? Okay, fine. Third point is over. Now comes fourth point. Why India is having a sustainable environment for startups? Because India is having three things. India is having people, India is having technology, India is having variety of funding options. People, India is having a pool of talent, and India is having low cost workforce, cost effective workforce. Technology, India is having technology, India is having increased use of internet. Then funding options, India is having variety of funding options available. 5 points. Yes or no, everyone? Next comes pitch presentation. We are going to the investors and giving a brief idea about the company and why investors should invest. Generally, it is going to be up to a period of 20 minutes. Yes, generally it will be done through PPT, either face to face or online. What all pointers we should be having on the back of our mind? Simple. Basic 4 pointers we should be having. What are the basic 4 pointers? First, introduction, then about the team, then the problem, then the solution. Okay. Now, additional, this is a crazy mnemonic. Yes, blue film of CM got leaked. What is it? Crazy. Blue film of CM got leaked. B stands for business model. What is a business model? How do we raise money? How do we make money? Film. F stands for financing. How much money we already raise? How much money we want to raise right now? Okay, blue film of CM. C stands for competition. Who all are our competition? How are we better than the competition? Yes, M stands for marketing. What we are doing? Yes, milestones or projections. What are our milestones or projections? Basically, income statement, yes, balance sheet as well as cash flow statement. Is this clear, everyone? Yes, next comes different modes for financing a startup. Yes, bootstrapping, angel investor, venture capital. Bootstrapping, we are using own money. It is a method wherein we start and grow business using our personal finance or the operating revenue. Okay. Now, what is the advantage? It is encouraging financial decision. Yes, discipline. We will not make excessive unnecessary spending. Okay. Different methods for bootstrapping. Yes, in case of raw material, we'll ask, please, Macha, give me some trade credit. Okay. Conversion, machine, don't buy, get it on lease. Sold, accounts receivable is there. Sell it to factoring company, get cash. Is this clear, everyone? Trade credit, leasing, factoring of accounts receivable. Then comes angel investors. Yes, these are investors who are investing in small startups. And generally, angel investors are from my friends and family. Yes or no, everyone? Perfect. How they will give funding? Either they will give one time funding or they will give continuous funding. Yes, they will give more favorable terms. Yes, they are investing in the entrepreneur, not on the business viability. Yes or no, everyone? Yes, who are angel investors? These are generally affluent individuals, rich individuals who are using their own money, not like venture capitalists using others' money, in exchange of equity or convertible debt. Is this clear, everyone? Okay. Then comes venture capital fund. What is venture capital fund? It is investment vehicle. What they do, they will pool money from the investors. Okay, and it is a professionally managed, and they will be investing the money in high growth businesses and startups. In startups and high growth companies. Is this clear, everyone? Yes. Generally, what is happening in case of venture capital fund? Yes, they will generally finance rapidly growing companies and startups. Okay, they are going to purchase equity shares and they are going to add a value by actively participating. They are not just going to put money, they will actively take part in decision making as well. Is this clear, everyone? Then comes the second phase, which is going to be venture capital fund. In this, 4 to 5 questions are there. First one is characteristics of venture capital fund. We told venture capitalists are going to give us hell boss, HELL. H, yes, high risk, high return. They are putting high risk, but they want high return. E, equity participation. They are not happy with debt or something. They want equity. L, long term horizon. They are investing for the long term. And L is there is lack of liquidity. Is this clear, everyone? Then comes advantages of having venture capital fund. We've told, yes, money wise 3 advantages, non-monetary 3 advantages. Money wise, what is the advantage? Firstly, right now I want fund. They are giving me, yes or no, they are giving me long term equity funding. Okay. Second, in future, if I want funding, that also they will give. They will give additional round of funding also. Then finally, once we go for IPO, that time also they will help us. Yes, they will help us in going for IPO also. Now, non-monetary, what is the advantage? Advantage number one, they are not just giving me money in exchange of debt. They are sharing the risk as well as the rewards. Okay, risk as well as rewards. Then they're having a network of contacts that will help us grow. And then because they've guided so many people, they're having a good practical advice that they'll give us, which will help us grow. Is this clear, everyone? Third one comes venture capital investment process. We have told before we select a company, 3 steps. After we select a company, 3 steps. Before we select a company, first is deal origination. Venture capitalist, either directly or through intermediaries, CEO or investment banker, they will tell which sector they are looking to invest. Yes, intermediaries will look for startups, they will ask for investment memorandum. Yes, deal origination. Once a deal is originated, then what they will do? Screening they will do. Is it a good party or not? Initially, it will go to yes, senior level venture capital committee. After that, they will call you for the interview. Okay. Once the screening is done, they like you. Will they directly invest? No, boss. Due diligence they will be doing. Yes or no? They will check the accuracy of the records. Now, yes, they are going to appoint an external third party who will bear the cost, either venture capital fund or they are going to share the cost. Okay, once they have selected what they are going to do. First thing, once you have appointed, selected, okay, we want to invest. Deal structuring. Yes, they will structure the deal in such a way that it is going to be win-win for both the people. Yes, once they've structured the deal, then starts the post-investment activity. After investing, they will appoint a nominee on the board. Yes, he will guide, he will provide advice, he'll help the business to grow. Yes or no? And finally, they'll be having exit plan. Generally, exit plan is going to be either yes, sale to third party in the form of IPO or private placement to another yes venture capital fund or buyback by the promoters. Is this clear, everyone? Okay, fine. Now we are having different stages of venture capital funding. 6 stages are there. First is a seed fund. Yes, why we are giving seed fund? Yes, to support an idea. Then we are having startup phase. Why? To come up with a prototype. Yes, then we are having the first stage to start commercial production. Then we are having a second stage. Why are we having second stage? For working capital requirement. Then we are having a third stage. Why are we having third stage? For expansion and merging, purchasing other companies. Fourth stage is to go for IPO. Now, what is the risk? Yes, initially very high, extreme risk. Then very high risk, sufficiently high risk. Last two, risk is less because you're already established. So it is medium as well as low risk. Yes or no, everyone? Then the period, how do we remember the period I've told? Yes, there's a girl. Yes, you loved her like crazy in the very first meeting. You want to get her number. Your phone is switched off. Yes, you'll tell what is the point of this memory if this mind cannot remember the number of a beautiful girl like you. Tell me the number. She tells you the number 753311. Tell me, students, 753311. Against this, 7 Cristiano Ronaldo, with that comes Messi, 7 to 10. Yes or no, everyone? After 10 comes 9. Yes, 10 and 9 are the first two numbers. The next four numbers are simple. Here the first four numbers are 7533. Here also it is going to be 7533. That way only we are going to do it. We'll have to repeat it one or two times. Then comes the structure of venture capital fund in India. Either it is going to be a domestic fund or it is going to be an offshore fund. An offshore fund, offshore structure or unified structure. Domestic fund means we will raise money from domestic Indian investors. We will invest in a startup in India. Investors, we will invest in India. Unified means we will raise money from foreign investors also, Indian investors also, we will invest in India. Yes or no, everyone? Perfect. Domestic fund, we are raising money from domestic investors. For that, we will establish a special purpose investment vehicle. Is in India, it is going to be either a trust or a company. Yes. From that, yes, we are going to appoint an investment advisor and invest in startups in India. Okay, super. Offshore structure outside India, we are going to establish a venture capital fund outside India. It will be established either as an LLC or LP. Yes, limited liability company or a limited partnership. Okay. From whom we will raise money? From foreign investors we will raise money. Yes, there in that country, in Mauritius, we have raised set up a venture capital fund. We will appoint an offshore manager, yes or no, to manage to do investment planning. Offshore manager they appointed. Tell me, will he be having an idea of what all startups are there in India? No. So in every country, he will appoint an investment advisor. So in India, he will be appointing an investment advisor. He will see the companies based on that. We will be investing in India. Yes or no, everyone? Perfect. Unified structure. Outside India, yes, there is a venture capital fund. It is going to be either LLC or LP. Yes, there is going to be foreign investors. They will put the money. There is going to be offshore manager. He will appoint an investment advisor. Yes, they have found out the company they want to invest. But boss, local investors also want to invest. So here in India, we will create another trust. This trust in India will pool money from the domestic investors also, from the offshore fund also. This complete money will be investing in the company. Is this clear, everyone? Yes, domestic as well as overseas investors are participating. Yes, overseas investors are going to create an offshore vehicle. Okay, that offshore vehicle will directly invest in a locally managed trust. Yes, in a locally managed trust, domestic investors also going to invest. From that directly we are going to fund us. Is this clear, everyone? Then comes the final thing, which is succession planning. What is succession planning? We are identifying key positions in the organization and yes, prepare the people to take up those roles. Is this clear? Yes. What is business succession strategy or the steps? Four-step framework. Step number one, evaluate key leadership position. Which all positions are going to be important for the organization? CEO, CFO, divisional head, departmental head, etc. Business head. Okay. Next, map the competencies required. Yes, the person who is taking over these roles, what all skills he want. Okay. Yes. Third, identify competence of the current workforce. See if you are having existing employees who are having that. Yes, competence is already. If that's the case, no big deal at all. Yes. Then step four is bridge leader. In case yes, a key management person dies and it is a family-owned business, ultimately his son or daughter is only going to take over, but they are small. So for the interim period, we are going to appoint a bridge leader. Is this clear, everyone? Yes. Then comes challenges in succession planning. What are the challenges? Firstly, yes, the founder mindset is going to be different from a corporate mindset. Secondly, yes, founders are going to be the face. If they are not there, what to do? Thirdly, we have told, yes, what was the third point? Founder mindset. Second one is founders are the face. Third one is, yes, it is very initial stage for them to plan for the success. Boss, make your business successful. It is premature to plan for success. Is this clear, everyone? Then comes the need for succession planning. This is again going to be important. We have told successor is successfully added to the card. CAR. C stands for cause removed. If he is removed, we have a success. Yes, or again, C is conflict resolution. In case of conflict, we have proper guidelines on how to resolve this. Yes, A is aligning. We are aligning. Yes, the family's values with the successor values. Yes, R is risk mitigation. If something happens, we are having a successor already. T is a talent pipeline. We can retain good talented pipeline. Is this clear, everyone? So with this, the chapter of yes, startup finance we've understood in the most detailed way, and in the last 2-3 minutes we've revised. We are having one page chart. Trust me, you'll have to repeat it 2 times, 3 times, 4 times. Yes, 2 days before examination, on the day of examination, you go enter the examination center. Trust me, there is nothing that can stop from you scoring those 4 marks. That's all for today. See you guys in the next session. Until then, keep studying, keep smiling, keep working on, keep making your parents proud, and see you in the next session. Take care. Bye. Yes, everyone. So, hello, hi, namaskaram, and good morning, students. I hope you guys are having a crazy, amazing day. Not. Let us make this a crazy, amazing day, my dear warriors. It is time for us to take our theory discussion forward. We are now going ahead to the third chapter, which is going to be financial policy and corporate strategy. Chapter number 1 in our study material. Now, if you ask 99 out of 100 students, everyone will tell that this chapter is a nonsense. Why on earth this chapter is there? It is just looking like SM chumma time pass. It is waste. It is, yes, don't study. You won't understand anything. Some most faculties will also tell it is just like SM. You study it by yourself, but there is a reason why this chapter is there. You guys will become chartered accountants or CMAs. What all options are available? Either you can start your own practice or get into job in audit, taxation related domains, get into big fours, or else one more option available is you can get into industries. Imagine you get into an industry. What is the highest level you can reach? You can be a manager, a senior manager, associate, senior, deputy. Ultimately, what is the dream? Sir, ultimately, we can, if we work properly, if we have the skills, become a CFO of the organization. That is the highest level in finance, in industry, in a company, a person can achieve. Yes or no, everyone? Perfect. In this chapter, this entire chapter, we are going to see from a CFO's lens. Yes, the institute is telling you, yes, okay, boss, now you are preparing for CACMA examination, but in future you will become a big person. You will become a CFO. Once you become a CFO, yes, what is going to be your role, responsibility? Is it just preparing balance sheet? No, boss. That bacha accountant will also do. Is it just seeing taxation, whether it is complained or not? No. What all things CFO should be doing, that is what we are going to study in this chapter. Is this clear, everyone? So, with this small introduction, let us see. Through this lens, if we see this chapter, it becomes a very simple chapter, my dear students. Yes, it is a bit dry, but we'll ensure that we understand. Yes, we remember things. This is clear, everyone, the way we have done throughout. Yes, everyone. Now, imagine you. You guys cleared your CA examination, CMA examination. You become a chartered accountant, cost accountant. Yes, you got appointed as a CFO at the Reliance Industries Limited. Sir, crazy, sir. Yes, it could either be a boy or a girl. Yes or no, everyone. Now, what there is CEO Mukesh Ambani ji. Now, what is he telling? He is telling, boss, we will start with the new business. That is new segment. We are going to come up with a telecommunication business in the name of Geo. Yes. Strategy is something CEO will be telling. Now, what is it that CFO should be doing is what we are going to study in this chapter. Now, if you see the name, financial policy and corporate strategy. Sir, two random names, sir. What is the relationship? Why have they given this name? Every word has a story. Every name has a story behind it. Yes or no, everyone? So, what is the story this is trying to tell? Let us try quickly understanding. Simple. Pro tip for this chapter, always think you are the CFO of the organization. Everything becomes very simple. Now, corporate strategy is dealing with what we want to do. Simple example, Mukesh Ambani ji is there. Mukesh Ambani is telling us we are entering into telecommunication business. That is our strategy. We will enter into telecommunication business. We want to become market leader in telecommunication business. We will go through a penetration pricing. Initially, we'll keep a very small pricing. Slowly, we'll increase the pricing. We'll wipe out the competition. We'll become number one telecommunication player in the world. This is the corporate strategy. Yes or no, everyone? Strategy is dealing with what we want to do. What is it, students? Simple. Strategy is telling what we want to do. We want to start telecommunication business. We want to be market leaders in that. Is this clear, everyone? Yes, this is what the CEO is telling. Yes, what is going to be CFO's duty? CFO's duty is to ensure, is to check how do we do it. Say Mukesh Bhai Ambani is telling we are going to start with Geo. We will give free data. Now, in order to start telecommunication business, can I just simply randomly sit and start the business? No, boss. Too much capital I want, finance I want. I'll have to see, do I have the finance with me already? Retained earnings, is it there? Or else I have to raise fund. From where I should raise? Either from equity holders or debt or loan or preference. Where to raise the fund? It is a decision. Who will do that? How do I execute that? CFO will be taking care of that. Okay, how to invest? Say for example, big towers will have to invest. Should we put our own money? Should we get it on lease or rental? Yes, we want a place wherein we can be building our towers. Should we buy that land? Should we get it on rentals? Yes, which is better? Who will take that decision? CFO. Ultimately, we've earned money. Yes, we have raised money from our investors. We should be giving them some money. Yes, anyways, for debt holders, we have to pay interest. There is no option. Equity holders, should we pay dividend or should we retain that? All those decisions, who is going to take? CFO is going to take. Is this clear, everyone? So strategy means what we want to do. Yes, what is the financial policy trying to tell? How do we do it? How do we achieve that target? How do we achieve that strategy? That is relating to financial policy. Is this clear, everyone? So got the linkage between a corporate strategy and the financial policy. Corporate strategy is telling what we want to do. We want to start telecommunication business, become market leaders in telecommunication business. Financial policy is telling, yes, this is the strategy, boss. How do I achieve the strategy? To achieve any strategy, we want finance. So where do we get the money from? How do we invest? How much do we distribute? All those decisions is what financial policy CFO is going to take. Is this clear, everyone? So got the meaning of the name. Is every chapter is having an essence. This is the essence of this chapter. We are having a strategy. How do we achieve that strategy in terms of finance? Yes, how do we plan finance? How do we allocate finance? All those things we'll be studying in this chapter. Is this clear, everyone? Okay. Now comes the very first question that we are having, which is going to be the key financial decision, key decisions which a CFO has to be taking, finance related decision. Now imagine Reliance wants to enter into telecommunication business through Jio. What are the key financial decisions? Tell me, students, we have discussed it already. Imagine Mukesh Ambani is there. He is telling, boss, we are going to start with telecommunication business, Jio. Yes, he is telling, start with the business, make planning. Tell me, I am a CFO. Mukesh Ambani told we are going to start with Jio. We will be putting towers all across India in 10,000 different places, rural area, urban area. Yes, he is telling for the first 6 months we will give free data. He is telling we will spend a heavy amount on advertisement. For all those, funding is needed, money is needed. Who is going to take care? Who is going to see whether we have funding or not? It is going to be the CFO's responsibility to see if we have funding or not. Yes. If so, great. If not, we have to raise fund from where? Equity or debt. Which is better? What is the debt equity structure we should be maintaining? Yes or no, everyone? So the first question, okay, Mukesh Ambani told we are going to start with the Jio. First function, first duty is going to be get the money, to raise the money. Where do we get the money from? It is called as financing decision. Tell me, students, what is the name of the decision? Financing decision. Okay, boss, I want to take up a project. Where do I get my money from? Either I can get it in the form of equity, debt, or a mix of both. Tell me, what is the benefit of equity? Yes, they are owners. There is no fixed commitment. Yes, what is the benefit of debt? Only fixed interest you are paying. They do not become the owners. So you can take a mix of both. All those in basic CA inter you have been learning. Yes or no, everyone? Perfect. First decision is, how should I get the money? Okay, boss, I have raised the money. Some money from equity, some money from debt, some retained earnings, all those things was there. Now I have raised the money. What will I do with this money? Chumma, will I sit and count this money? No, boss. I have to invest this money in the projects. Yes or no, everyone? So the second decision we are going to take is going to be our investment decisions. Is this clear, everyone? Perfect. Investment decisions, we are deciding where we want to invest. Obviously, project should be giving me my required return. I will be having the overall cost of raising the fund. Project should give me more than that. IRR calculation, NPV calculation, all those calculations we'll be doing throughout. We have studied in SFM, AFM, yes or no? So not discussing much in detail. Okay, boss. So yes, starting point, we have raised money. Yes, financing decision. Now we have invested the money. Now we have invested the money. We have run the business. Yearly, we will be making some profit. Obviously, you're not doing it for charity. Okay, first year, second year, third year, we've made some profit. Now tell me, for my debt holders, periodically I should be paying interest. Is there any doubt in that? No, boss. For my equity holders, they are the owners of the company. But still, periodically, if we give them some dividend, they will be happy. So now we need to take a decision how much dividend we should be distributing. Yes or no, everyone? How much should we distribute? It is going to be the dividend decision. Is this clear, everyone? So now here, what all things we should be having on the back of our mind? If we give more dividend to our equity shareholders are happy because they are getting money. As against that, if we retain more of the money, we are having more money that I can use for growth. So the decision between how much I should distribute, how much I should retain. If I retain, I can grow further. So in the future, more profit will be there. Yes, more will be the share price. Or should I be distributing? Yes, if I'm retaining, am I having any better projects? All those decisions we should be taking. Okay. And then we have the final decision. Three decisions: financing decision, where should I get money? Investment, where should I invest money? Yes, dividend, how much should I be distributing? And then we have the final decision, which is going to be the portfolio decision. This is telling overall, yes, how does this business, yes, come together in the overall risk in terms of the portfolio we are having. Reliance is having multiple businesses. Say, for example, Reliance is having oil business, then it is into petroleum refining, yes or no, same business. Then they are into textile, jewelry. Now we have added telecommunication also. Overall, is it reducing the overall risk or is it increasing the overall risk? Is it giving me a better return? Is it not giving me a better return? Say, for example, imagine we are into a business which is adding my risk. Simple example I'm telling. We are into petroleum refining. Reliance is basically into petroleum refining. What it will do? It will import oil from Russia, from Middle East, etc. It will refine and sell it. Tell me, is there a huge dependence on the foreign parties? Yes, boss. Is there a high risk there? If they do not give, we cannot do anything. Perfect. Imagine we come up with another business idea. Say, for example, we tell we will start the manufacturing assembly of Apple phones in India. How are we going to do that? Yes, we will import components from China, assemble it in India and sell it. Tell me, here also I am having the same risk. What? I have to import first. Say, for example, something like COVID came. I cannot import. Yes, in this business also there is loss. In this business also there is loss. Yes or no, everyone? I am going to see the correlation between the two businesses. I am going to see as a portfolio, is it reducing the risk or increasing the risk? We've learned so much in portfolio chapter, so not discussing much here. Still given you an idea. So the fourth decision is going to be portfolio decision. Is this clear, everyone? So what are the four key financial decisions a CFO has to be taking? Four decisions. Tell me, students. First one is financing decisions. Where do we raise the money from? Equity or debt. Second one is investment decision. Where should I be investing the money? Here I will see NPV, IRR, etc. Dividend decision. How much I should distribute as dividend, how much I should reinvest, retain and reinvest. Fourth one is a portfolio decision. Overall, if I start this business in the overall portfolio of different businesses, how will it look? Is it reducing the overall risk or is it increasing the overall risk? Is it giving me better return or worse returns? Yes or no? How will it affect the overall performance and risk of the entire firm? This is the first thing a CFO has to be doing. Is this clear, everyone? Any doubt still here? No, boss. Giving you guys a minute to let this sink in, then we'll take the discussion forward, my dear students.
Yes, everyone. So we have finished the first thing, key financial decision. Okay. Institute, whenever the question is going to ask, explain key financial decisions or key decisions falling within the scope of financial strategy. I guess I have not downloaded the question bank. Question bank, you can see, you will be finding question number 1. Sometimes once a question had come this way, yes, one of the decisions an organization has to be taken is regarding the dividend distribution. That is, how much dividend has to be distributed and how much dividend should be reinvested in the business. Explain other financial decisions. One they have given, others we need to explain. We will write all the four. Is this clear, everyone? Okay, fine. Now comes the second thing, which is a strategy at the different hierarchy levels. In every organization, there are going to be different hierarchies. Let us take the example of Reliance. So at the top, yes, we have the corporate level. Below that, we have the business unit level. Below, we have the functional level. Very simple thing. We've learned multiple times. Yes, at the top, we have Mukesh Ambani. At the corporate level, yes or no, everyone? Perfect. What is the decision Mukesh Ambani will be taking? Tell me, imagine Mukesh Ambani is handling multiple businesses, petroleum, jewelry, yes, geo, financial services, so many things. Tell me, will he concern about, say, for example, in geo, currently we are purchasing a raw material, say they are into textile business. For textile business, currently they have seen a place in, imagine a city, imagine a tier 2 city. Okay, there the rental is say 1 lakh rupees per month. Will Mukesh Ambani call that person and tell, macha, 1 lakh is too much, macha, please make it 90,000? Will he concern about that? Boss, it is jujube halwa, small thing for him. He is not going to deal with that. Then what is the decision at the corporate level they are going to take? They are going to take a decision which business we should do. Should we start telecommunication business or not? Okay, should we start petroleum business or not? Should we start, say, for example, real estate business or not? Which business we should do? That is a decision corporate level will be taking. Is this clear, everyone? Okay. Mukesh Ambani took a decision. We are going to start with the telecommunication business, Jio, because that was one of the most historical moves. That is why I'm taking that example. Once he has taken that, now how do we carry out that telecommunication business? What all things we will be doing? How do we ensure that throughout we stay ahead of the competition? That who are going to do the next level, which is called the business unit level. Tell me, students, below the corporate level, we have the business unit level. Imagine there is the, yes, division head, yes, head of telecommunication division, head of Geo. What is his role? What is his responsibility? What is his strategy? Can he think and tell, Macha, Ambani, telecommunication is not a business. You do one thing, we'll start a real estate business. Crazy business it is. Is he there to tell that? No. He cannot tell which business to do. He is assigned with the business. His duty is, how do I ensure that I carry out this business in the best way possible, beat competition, and become number one in the business? Yes or no, everyone? That is what my business unit level will be doing. They will come up with the strategies, how to stay ahead of the competition, how should the overall pricing strategy be, how should the overall marketing strategy be, the overall vision for the business unit they will be doing. That is the second level. Tell me, students, at the top I am having the corporate level. What is corporate level thinking about? Which business should we operate in? Yes or no, everyone? Should we go for telecom, power, education? Which business? That is what corporate level Mukesh Ambani will be deciding. Mukesh Ambani decided we are going to start with the telecommunication business. Then he will appoint a business division head, business unit head. Yes or no, everyone? Then we'll have the business unit level strategy. What is their mindset? What is it that they are thinking about? Boss, we have been assigned with the business. How should we compete and win in this business? I will not think about other business. Telecom is the business I have been entrusted with. In this business, how do I compete with other players and how do I win in this business? That is what business unit level is going to think about. Yes or no, everyone? Perfect. Overall, what should be the pricing strategy? Should we adopt a penetration pricing, that is initially low pricing then high pricing, or should we go for a skimming pricing, that is initially high pricing, or should we go for premium pricing? What is the overall strategy relating to price? What is the overall marketing strategy? Yes, we will have to spend heavy on advertisement because we want to get a large number of crowd. All those strategy at the business unit level they will be deciding. Is this clear, everyone? Okay. Then comes the last level, which is the functional level. Say Mukesh Ambani told we are starting with telecom business. Business unit level they decided, yes, how we are going to proceed further with telecom industry. Yes, we will initially use 5G network. Yes, we are going to give high speed data at the lowest possible cost. We will have only one single price for the entire month. Initially 6 months we will give free. We will spend more on marketing. We will have a reach throughout entire nook and corner of India. All those things they decided. Now we are having functional level. Yes, in Geo, for every function, one person is assigned. For purchase, one person is assigned. What is his duty? To ensure that whatever things he is purchasing for Geo, he ensures that he purchases in the lowest possible cost. HR department, what is his duty? To ensure that whoever employee he is recruiting for Geo, they are the best employees. They are given with proper training. Yes or no, everyone? Yes, they are paid with proper salary, proper remuneration. Yes or no, everyone? Perfect. Similarly, say you are having marketing department. They are telling, yes, boss, our business unit has come up with a strategy that we want to spend good amount on marketing. Good marketing we should do so that it reaches. How do we do the marketing? What should be the idea? How should we implement? These people have come up with that ad. O Jio Dandanadan, O Jio Dandanadan. Yes or no, everyone? Tell me whether Mukesh Bhai will be sitting in the top, he will be composing song. Oh, come, let's come up with this crazy song, Jio Dandanadan, everyone will be happy. No. It is the last level. They will get into the implementation part. Yes. Corporate level is only putting the strategy. Is this clear, everyone? Okay, fine. Is this clear, everyone? So 3 levels are clear for us. First is a corporate level. What is corporate level doing? Which business we should operate? Then comes the business unit level. How should we compete and win in that business? Then comes the functional level, wherein every function, how do we do it in the best possible way? Is this clear, everyone? What should every department do to achieve the objective? That is how basically should we do the work. Is this clear, everyone? Okay. One more small point is there. With that, this concept will be over. Yes, the corporate level strategy. How should my corporate level strategy be? Yes, there is a simple shortcut mnemonic. Yes, corporate level strategy should be SAF, SAF. Sir, what exactly is SAF? Now, in Hindi, SAF means clean. SAF, Safai, you've heard this? No, sir, we have not heard. Okay, remember this. I am teaching you guys Hindi. SAF means clean. So, corporate level strategy should be SAF. It should be clean. Sir, what is this, sir? SAF. S for suitability, A for acceptability, F for feasibility. Sir, what is it, sir? Okay. At the corporate level, we have come up with a strategy. We should ensure that that strategy is suitable for the organization. It is acceptable to all the stakeholders. Yes, it is feasible for us. Sir, we did not understand, sir. Okay, simple example. We are Reliance. Mukesh Ambani came up with a strategy that we are going to start with Jio. Firstly, that strategy should be suitable to achieve the objectives. Tell me ultimately who are the shareholders, who are the owners of the company? Shareholders. What is the shareholders' objective? They want to earn money, they want to earn profit, they want to ensure that the market price of the shares increase. Yes or no, everyone? Perfect. So suitability is telling whether this strategy will actually help us to achieve our goals or not. Say for example, Reliance comes up with a new project wherein they are planning to come up with, yes, absolutely free orphanages, yes, for all, everywhere throughout India, absolutely free. Is it a great thing? Yes, boss, it is a great thing. But tell me, if you are a shareholder of Reliance, will you be happy with this strategy? No. Why? Because this strategy will not help you to increase your wealth. Yes or no, everyone? So the first question we are going to ask is, this strategy, is it suitable? Is it helping us to achieve our financial goals or not? Is this clear, everyone? Perfect. Okay. Simple business. Now look at this, students. Two simple contradictions I've given. Reliance at two different places. In case of Jio, they came up with 6 months free data, but after that they charged for the data. As against that, in case of Jio Hotstar, they came up with a policy that they're going to give free streaming of matches forever. Now why? Yes, here if they are giving free data forever, it is a bad strategy. But if they are giving free Hotstar streaming forever, it is still a good strategy. Why? Even if they give free data streaming, yes, they will be earning in the form of ad, so they can still be making money there. But if they give free data here, is there any other source for them to earn? No. So yes, we have come up with a strategy. Is it suitable for us to achieve our end goals, which is to make money or not? That is what we are going to see here. Is this clear? First one is suitability. Next one is acceptability. Is this a strategy acceptable to our stakeholders or not? Simple example. Yes, we are telling at the corporate level, boss, our shareholders want to earn money. They want the market price of the shares to increase. Let us do one thing. We are having a lot of money. We will start with ganja business. Ganja, ganja. Yes or no, everyone? Imagine Reliance decides. Will it help us make money? Yes. But is it acceptable to all the stakeholders? Whether shareholders are happy or not, whether government is happy or not, whether employees are happy or not, is it good for the society or not? No, boss, it is bad for the society. Yes or no? So is it acceptable? No, it is not acceptable. So our strategy should be in such a way that it is acceptable to our stakeholders. Is this clear, everyone? The final thing is going to be feasibility. That is, do we have the resources to implement? It could be possible you are having a crazy strategy, but you don't have the resources at all. Suppose tomorrow I am telling, what is Geo? I will come up with a better telecom business called Mio. Yes, crazy free data I will give forever. Yes, I have the strategy, I know the idea. But do I have that much money with me? No. So when we are coming up with a strategy, we should ensure that that strategy is suitable, that is, it will help us to achieve our goals, acceptable to the stakeholders, as well as feasible, that is, we are having the money with us. Is this clear, everyone? Yes or no, everyone? Perfect. Now one more simple example I'm giving to understand. Yes, SAF, suitable, acceptable, feasible. Simple. Imagine you are that 18-year, 19-year-old, yes, boy or girl. As an 18-year-old, 19-year-old boy or girl, what is your only dream in life? Sir, we want to do something through which we earn good money. Sir, good money means some 50 lakh per annum, 75 lakh per annum, 1 crore per annum. So you come up with a strategy. Yes, what is it that I want to do in my life so that I will earn money? Yes or no, everyone? Imagine, simple example I'm telling. First, you will come up with a strategy. First, you will see, is it suitable to achieve your goals? Imagine you decide you are going to do BCom. Only BCom, only BCom. Anything else with that? No. Are you planning to acquire additional skills with that? No. Just BCom you are planning to do. Tell me if just doing BCom will help you reach 250, 60 lakhs per annum package. No, not very likely. So tell me whether the strategy of doing BCom, is it suitable? No, it is not suitable. As against that, you decide to do CA. Tell me, doing CA also, will you be getting 50 lakhs per annum? Initially, no. But if you are having good practice, good exposure, probably 6-7 years down the line, you never know. Sir, you don't get, sir. Trust me, I've seen people who after 4 years of qualifying as CAs are earning 1 crore plus in corporates. Okay, it is not that jobs are not there, packages are not there, it is just that you don't have the skills. So acquiring skills is something which is in our hands. Okay, everyone. Okay, let's not get into that. So is it helping? Okay. Or say CA is also not helping. Say for example you come up with another strategy. Sir, we understood one thing, sir. Doing crazy Instagram reels gives us a lot of money. You just have to come in front of the camera, dance, do some crazy videos. Yes, some GRM videos. Get ready with me. Today we are going to get ready with me. Oh my God, this is the skin, this is the moisturizer, all those things you do. Yes. Will it help you to make money 50 lakh? Yes. So whether the strategy is suitable? Yes, it is suitable. Yes or no, everyone? Next comes acceptable. Is it acceptable for everyone? Tell me, you come up with a yes reel video, dance video, or you decide to become a full-time gamer. Is it acceptable to you? Could be acceptable. Is it acceptable to your parents? Parents will never accept it. Yes or no, everyone? So strategy should be acceptable to all the stakeholders. Thirdly, is it feasible? That is, do we have the money, resources, skilled required to do it? Say for example, I have never danced in my life. I have never come in front of the camera. I don't have the skills at all. So can I do it? No. Or whatever money is required to learn that skills, I don't have. So can I do that? No. Is this clear, everyone? So corporate level strategy should be SAF. S for suitable, A for acceptable, F for feasible. Is this clear, everyone? So quickly let us try seeing this. Look at this. 3 levels of strategy: corporate level, business level, functional level. You guys can read it once. Corporate level strategy. Now corporate level strategy will come for exam separately for 4 marks, or else all 3 levels of strategy put together will come for 4 marks. Corporate level strategy, it deals with deciding which business company should operate, which business we want to operate. Okay, and how we want to manage. It answers 3 key questions. Corporate level strategy should be SAF. Write down. Corporate level strategy should be SAF. SAF. S refers to suitability, A refers to acceptability, F refers to feasibility. Suitability, will it help us achieve the objectives? Acceptability, is it acceptable to the stakeholders on a financial as well as non-financial basis? Feasibility, do we have the required resources? Yes or no, everyone? Everything we have understood, we are just reading it right now. Yes or no, everyone? Business unit level strategy. Okay, we have selected the business. How do we compete and win in this business? Yes or no, everyone? How a strategic business unit, Geo, it is a business unit, will compete in the market. Yes, coordinate operations and get sustainable competitive advantage. Yes or no, everyone? Then comes functional level strategy. Every function, how do they do the work? Yes or no, everyone? Strategies at the departmental level, production, marketing, etc. It translates higher level strategies into specific action plan. Higher level, they've given a strategy. We want to become market leader in Geo. Yes, we convert that into specific action plan. So what all we need to be doing, we'll be doing it here. Is this clear, everyone? Perfect. Giving you guys a minute to let this sink in, then we'll take the discussion forward, my dear students. Yes, everyone, now we are proceeding to the third point, which is advanced role of CFO in various matters, including value creation. Here, what they are trying to tell is CFO's role has advanced. Tell me, we are going to become chartered accountant CFOs. We will enter into industries, start our job at the entry level, then slowly get promoted. Ultimately, what is going to be our intention? We want to become the CFO of the organization. Think of it, how crazy it is. Yes, imagine your name. Suppose I'm telling my name. Okay, CA Tabish Hassan, CFO at this company. Crazy, right? You also can become that. We'll have to just acquire the skills, be patient, learn properly. Okay. So you become a CFO. What is going to be your responsibility? Whether your responsibility is only pertaining to finance, that is, you raise money, you distribute dividends. Yes, you see whether the financial statements are correct or not, whether tax is paid or not. No. Typically, traditionally, only that much was a responsibility. But now, CFOs are seen as a partner in value creation. They are not just handling finance. They are not just handling where to raise the money, where should we invest. They are considered as a partner in value creation. Throughout the value chain, in all the strategies, CFOs should be there to ensure they give some value addition. That is what they are trying to tell here. And they've told specifically after COVID, post pandemic, so many changes have come with respect to how a role of CFO is perceived. Look at this, everyone. Traditionally, CFO focused only on shareholders' wealth maximization. Yes, however, due to globalization, technology, and post-pandemic environment, CFO's role has advanced, expanded, yes, to include governance, compliance, etc., etc. So, what all extra roles CFO is having now? finance related role anyways is there. What is CFO supposed to do? Take care of finance. That anyways is there. Apart from that, what all extra roles CFO is having, that is what we are going to study here. Is this clear, everyone? 4 pointers we are having. First one is risk management. He has to ensure that the overall risk of the business is managed. Second one is mergers acquisition. He has to help in mergers acquisition. Third one is ESG financing, environmental, social. Yes, then ESG, governance financing. Fourth one is going to be supply chain. So quickly let us try understanding, my dear students. So 4 extra roles institute is telling now CFO is having. What all extra roles? First one is risk management. Sir, what is risk management? CFO has to see, okay boss, you are the CFO, you know the strategy, you know how the execution is happening. You will have to see whether this strategy is adding risk or reducing risk, how exactly to minimize the risk. All those things will have to be seen. Simple example, imagine we decided we are going to manufacture phones. Geo decided we are going to manufacture phones. For that, whatever components we want, we decided we will import from China. That was our strategy because it is going to be cheap. Typically, CFO was only concerned with where do we get the items cheap. Okay, China, so let us go ahead with that. Then accordingly doing the finance part of it. Yes, keeping the money ready, ensuring that it is accounted properly, all those things. But now additionally, we should also see the risk of every business decision and strategy. Tell me, if you are importing from China, okay, cost wise it could be cheap. But imagine, say any war broke out between India and China. Will we still be getting the components? No. So whether the business can be disrupted, whether it can get disturbed, yes, boss. Say for example, something like COVID happens again. Because when COVID happened, it was a black swan event. Once in 100 years it has happened. Nobody had thought something like that will happen. But once it happened, now people are more cautious. Something like that can happen again. So they'll have to be careful. If something like COVID happens, will we still be in a position to import from China? No. So should we still go ahead with importing from China? Or if we are having a local supplier, even though it is slightly costlier, should we go ahead? Or at least some units we should get from the local supplier, so that in case of emergency we can get it from here. All those things to reduce the risk also CFO should be doing. Is this clear, everyone? One single example. One more example is regarding currency risk. Say for example, we have exported or imported, payment we are going to receive after 3 months. We are having a risk of currency appreciation or depreciation. Boss, CFO has to suggest that there is a risk. How do we hedge that risk? All that we have studied in Forex, that also CFO will be doing. Imagine data security and cyber risk. Imagine whatever data we are having as a telecom business, so much data we are having, it is not secure only. Anyone can easily hack that. So CFO is not just telling, okay, let us prepare balance sheet, financial statements. This risk is there, boss. If our data gets leaked, the data gets breached, it is going to be a biggest problem. Think how much data Geo is having. Yes. If it comes out, yes, what all bad implications could be there, how much penalty they'll have to be paying, all those things could be there. So regarding risk, managing the risk also CFO has to suggest. Is this clear, everyone? First point is regarding risk management. Second is regarding mergers and acquisitions. Now at the top level, CEO will always look at mergers as a fancy way just to grow the business. CFO should actually see whether this merger is actually needed or not. Is it actually adding value to us or not? Is it actually giving us synergy benefit or not? The amount that we are paying to the merger, is it too costly or is it reasonable? All those decisions we should be taking. Yes or no, everyone? Simple example I will give you. Byju's. Yes, the post-pandemic after 2021, Byju's went on aggressively acquiring every random company in the edtech space. Why? They wanted to grow. Ideally, the CFO should have warned them. Yes or no, everyone? Why? Understand, students. Yes, Byju Ravindran, every random edtech company is purchasing without seeing if it is actually adding value or not. They even acquired Whitehead Junior. Yes, a random, I don't want to tell anything because this video will be on YouTube. Yes, they acquired Whitehead Junior for 400 crore. A completely bogus company. Nothing was there in that company. 400 crore they paid, they purchased. Just during pandemic, that too using fake advertisement for 3-4 months, they existed. 400 crore they paid, it wasted. Yes or no, everyone? CEO will be emotional. He will only be thinking about growth. But CFO has to guide whether this merger is good or not. Do we have the resources or not? Will it add value to the organization or not? Yes or no, everyone? Yes, perfect. Third one is regarding ESG financing. ESG means environmental social governance. You would have at least heard this term somewhere, ESG. In FR you would have heard, in audit also you would have heard. Now what is this ESG financing all about? Tell me, students, previously the concept was very simple. What is the goal of the company? to earn profit. Yes or no, everyone? Now, the goal of the company has widened. We should be earning profit, but in the meantime, we should ensure that the planet is safe as well as the people are taken care of. Three P's. Yes or no, everyone? That is where my ESG financing comes into play. Previously, the only duty for a CFO is to ensure that somehow we earn maximum profit. You do a good business, bad business, doesn't matter. Say, for example, we are into manufacturing of a plant. At the end of it, pollution is happening. Okay, one option is you can invest a good amount of money, come up with a pollution control equipment, but you'll have to put a lot of money. Initial cash outflow is there. Because of this, additional cash inflow is not there. Your NPV will reduce. Or what do? Just leave it as it is. Anyways, it will get emitted into the environment. Previously, how CFOs would be taking decision? Boss, NPV is higher if we do not put the pollution control equipment. Let us not put the pollution control equipment. But boss, right now, the decision making has changed, because when people are perceiving a company, they are not just seeing how much profit it is making, they are seeing how much profit it is making, plus how is it contributing to the planet as well as people. So that should also be kept on the back of our mind. A simple typical example. Is this clear, everyone? Okay. So previously our objective was just to make profit. Now the objective is to make profit the right way, by ensuring that the planet is taken care of and the people are taken care of. Is this clear, everyone? This is going to be ESG financing. E means environmental. Simple example, you are emitting pollution. Even though you are earning profit, boss, you are going against the environment. Yes. S means social. People, society at large. Say, for example, you are getting employees, migrant workers from different countries, you are paying them very low wages and giving them extreme 16 17 hours working time, no life, putting them under extreme risk. Profit could be high, but boss, as a society, on a social level, you are disrupting the employee, you're disturbing their employee, you're wiping out a generation, they're just working. Yes or no, everyone? So as a social basis, it is going to be wrong. Third one is going to be regarding governance. Say, for example, you're doing some frauds, you're paying some bribes and getting some jobs done in an unethical way, even though you're earning high profit, but boss, on a governance level, it is wrong. So right now, CFO's duty is not just to ensure that we are preparing balance sheet, etc., etc., but on ESG financing also we should be seeing. I don't want to tell much on this, because trust me, there is a lot we can explain. Yes, green bond is there, so many things are there. Yes, modern things regarding ESG financing, we are just having 1-2 lines, it is sufficient. ESG financing, we have to raise money in such a way that we implement it in projects which will give us profit, but in the meantime take care of the planet as well as people. Is this clear, everyone? Perfect. Third point. And the fourth point is supply chain. Previously, CFO did not worry about supply chain. For that, there is a separate supply chain division. But boss, during COVID, what happened? So many businesses got disrupted because of supply chain. Imagine, we are a component manufacturer. We are a mobile assembly company. We are assembling all the parts. We are bringing the parts from China, Taiwan. We are assembling here, selling the mobile phones. Simple business, simple business. During COVID, it is not possible to import from China as well as Taiwan. Tell me, my entire business got disrupted. Tell me immediately, is it possible to look for a alternative supplier in India? No. So after the pandemic, the entire supply chain mechanism got disrupted, disturbed, halted. So now CFOs are thinking not just on financial level, they are also thinking in terms of supply chain. Boss, tomorrow if any unforeseen situation happens, what is it we'll be doing? Because in order to earn profit, we should be selling goods. In order to that, we should be getting our goods. Yes or no? Previously, decision making was very simple. Simple, students, I am telling, we are a mobile assembly company. We are assembling different parts. Either I can just bring 100 parts every time, or else today in bulk itself I can bring 1 lakh units. For us, bringing 100 units was cheaper. We had done EOQ calculation, total cost minimum, all those decisions we had taken. Just in time, everything we had implemented. But boss, COVID came. Now we are not getting goods only. We are not in a position to produce only. We are not in a position to sell only. But if you would have purchased in bulk, means we would have had the stock. Even though we had to incur higher cost, we will be having the stock. Yes, example number 2. Yes, we are importing from China, or we are getting from a local supplier. Local supplier is slightly costlier, but any point in time he will give it to us. If you are importing from China, if any disruption happens, any emergency happens, war breaks out, we will not be getting. So supply chain also, how to manage risk in the supply chain, ensure that we will get goods, we will have alternate suppliers, all those things also CFO has to be seeing. Is this clear everyone? Perfect. So altogether 4 additional roles CFO is having. What is it, students? First is risk management, next is mergers acquisition, next is ESG financing, next one is going to be supply chain. Is this clear everyone? Yes, we have a simple mnemonic for this. Yes, this is Mukesh Ambani, this is you, that is a CFO. We will tell boss, yes, the life of a CFO is a risky mess. Yes or no? He's getting too much money, but it is a risky mess life. Risky and a messy life. So many things he has to be handled. Yes or no, everyone? Tell me what is going to be the mnemonic. Life of a CFO is a risky mess. Life of a CFO is a risky mess. Tell me risky. First point we have is risk management. CFO should take care of risk management. Mess. M is mergers and acquisition. Yes, E is ESG financing. Yes, S is supply chain. Yes or no, everyone? Perfect. Quickly, let us have a look at this. Yes, first one is risk management. CFOs are responsible for overseeing the entire risk management framework of the organization. Mergers and acquisition. Yes, should we see? Because if error in mergers and acquisition happen, it will have serious consequences. If you are overpaying them, if you are not having resources to pay for that. Yes, Byju's, they have still not paid for Akash. Because of that litigation, everything is still going on. Yes or no? ESG financing. Yes, from traditional financing to sustainability focused ESG financing. You can write 1 or 2 lines on ESG financing. Supply chain, post pandemic disruptions. Yes, we'll have to ensure, yes, whether the supply chain options are viable for us. Long term viability, is it going to be there or not? Yes or no, everyone? 3 pointers we have discussed. Till here, is it clear, everyone? Perfect. Giving you guys a minute to let this sink in. Then we'll take the discussion forward, my dear students. Yes, everyone. Now we are having the 4th point, which is regarding sustainable growth. Now, what this topic is trying to tell is, as a CFO of the organization, we are looking at the finance. Yes, we are looking at the profits, the growth, all those things. Yes, Institute is telling, boss, we should always look at sustainable growth, not high growth. Sir, what is the difference? Simple example I will give you that will help you understand. Imagine there is a person who is very obese, very fat he is. He had a girlfriend, his girlfriend left him, dumped him. Suddenly he decided, boss, tomorrow onwards, I am going to transform my life. So for the next 30 days, he did not eat anything. Completely, he was just drinking water, protein bars, energy drinks. Yes, 6 hours he was working out. Yes, in 1 month, he lost 20 kgs. Tell me, is this a sustainable approach? No, boss. 1 month you lost. Yes, the moment you stop going to the gym, the moment you start eating, you will again gain back your weight. Yes or no, everyone? Yes, after 2 months, again you have become even bigger, even fatter. Yes, at your level, you have reached final, at least you have faced that issue in your life. Yes or no, everyone? Stomach, once it comes, it will never go away. Yes or no, everyone? Perfect. So, what is going to be our objective? It is not just immediate result, it should be sustainable. I want growth which can sustain for a long time. Is this clear, everyone? Perfect. Growth versus sustainable growth. Yes, shortcut is, okay, this is a shortcut. Now tell me, yes, growth. Yes, as an organization, yes, as people, generally we think we want high growth. But boss, always high growth is not good. What we want is, we want a sustainable growth. We want growth that can be sustained for a long period of time. Is this clear, everyone? Even though on a financial basis, if we are having high growth, yes, initially for our financial statements, balance sheet, P&L, it is good. But boss, if we cannot sustain it, there is no use. Is this clear, everyone? So it is telling, boss, yes, low growth is bad. If you are not growing only, there is no point of being in the business. You have to grow. But sometimes, in order to achieve a very high growth, we will apply shortcuts. We will do things which are unethical, because of which we cannot sustain that. What we want is, we want growth which can be sustained for a long period of time, because the intention is not just to make money today, it is to make continuously keep making money. Is this clear, everyone? Sustainable profit is what we want. Sustainable growth is what we want. Is this clear, everyone? Yes, in detail we will discuss about this later. But right now, yes, first thing is, what makes an organization sustainable? This comes for 4 marks. Okay, what makes an organization sustainable? Yes, now understand, 6 pointers are there. Yes, in order to make an organization sustainable, what all we should be having? Firstly, we should be having a clear strategic direction. Let us take the example of Reliance. Yes, what they had a clear strategic direction. We will come up with telecommunication, disrupt the market, give data at a very low cost, eliminate the players, thereby make money. Yes or no, everyone? First, in order to be sustainable, Yes, you should first have a clear direction for the next 10-15 years. What is it you want to do? Okay, clear strategic direction. Be able to continuously scan the environment and identify opportunities and risk. Yes, scan the environment, see the environment, okay, and identify opportunities. They scan the environment, they understood, boss, telecommunication business is there, currently they are charging high prices, we can enter here. Yes or no, everyone? Yes, in order to be sustainable, we should be having a clear strategic direction. We should scan the environment, identify opportunities. Once I've identified the opportunity, okay, telecom is a good opportunity. Tell me whether Ambani will be sitting and doing all the work himself. No. What we want? We firstly want the staff. In order to do the work, we want competent staff. With that, we want the infrastructure. We are having staff. There is no place for staff to work at all. There are no towers only. Is it going to happen? No, boss. So we want the infrastructure. What all infrastructure we want? Administrative and financial infrastructure. For administering the work, we want infrastructure. We want office space where people can work, as well as financial infrastructure. In order to implement the project, money we want. Yes or no, everyone? Perfect. So first two things are regarding strategy. We should be having a strategy, clear strategy, and scan environment to get the work. Then we have to do the work. For that, what all we want? We want competent staff, as well as, yes, we want infrastructure, which is administrative and financial infrastructure. Okay, once we have done the work, now two more things we want. Yes, next thing is demonstrate effectiveness and leverage further resources. Yes, as well as obtain community support. Tell me, students, we should be obtaining our community support. We should be getting support from the community. For that, we should be doing some good things for the community. Imagine, you would have all heard this in your locality. Yes, there is a person who is very rich, but everyone will tell he's a bad person. He will not be having community support. As against that, there is another person who is not that rich, but he's having a good community support because he's helping the community. So as a business organization, your focus is to make profit. But boss, you should be having good relationship with the community. You should help the community. Why? So that in future, if you are in need, community will also be helping you. Is this clear? If you are continuously polluting the environment, not paying taxes regularly, yes, ill-treating your employees, in that case, community will not support you. Is this clear, everyone? Okay. Get community support and show that demonstrative effectiveness and, yes, leverage, get further resources. Say, for example, we are having 100 employees. We take care of them properly. We want more employees. We'll be in a position to get more employees. We should be in a position to get more opportunities. Yes or no, everyone? So altogether, 6 points are there in order for an organization to be sustainable. Pure theory topic, but it is coming in the examination for 4 marks. So we'll have to be remembering. How do we remember? Simple shortcut I've created. In order for an organization to be sustainable, 3 things we should be doing. Firstly, we should be having a strategy. Then we should be doing the work. Chumma strategy is sufficient. No, we should be doing the work. Then we should be getting future work also. Just this sentence will help us remember the 6 points. Firstly, tell me, students, we should be having a strategy. That is, we should have a clear. Let me just push it slightly downwards. Yes, we should be having a clear defined strategy. Yes or no, everyone? First point, we should have a clear strategic direction. Okay, clear strategic direction. Then we should scan the environment and identify the opportunities. Yes or no, everyone? Two things. Yes, strategy related. Have a strategic direction, scan the environment, identify opportunities. Now we'll have to do the work. To do the work, first what we want? Employees. Yes, get competent staff. And then have the infrastructure. Yes or no, everyone? When I'm talking about infrastructure, it is administrative and financial infrastructure. Yes or no, everyone? Okay, boss, we have done the work. Just doing the work right now, is it sufficient? No, boss, we want a sustainable growth. Throughout, we need to keep getting work. That means in future also we should be getting work. Now, in future, in order to get work, we want more work. We should be in a position to leverage the resources. Yes or no, to get more work, more support. And we should be having the community support. Tell me, we should be having the community support so that we get more work and leverage the resources. Yes or no, everyone? Demonstrate effectiveness to leverage further resources. Further resources. Is this clear, everyone? So 6 points, this way we can be remembering. Is this clear, everyone? It comes in the examination, at least 4 we should be in a position to write. Is this clear, everyone? Okay, fine. Now once this is done, then comes the next point that we are having. All are pure dead theory topics. Still I will explain, ensure that we remember it. Is this clear? Reasonably. Next topic also comes for the examination, that is, what makes an organization financially sustainable? Now we have told, we have made the organization sustainable. Organization will sustain. Imagine you're having a strategy to become number one in geo, in telecommunication. Yes, you do the work. Okay, throughout you get community support. You will sustain, but just sustaining is not sufficient. You should be making money also in that time. Yes, for that, what extra things you should be doing? Now tell me, here anywhere did we talk about financial sustainability? No, we told we have to sustain the business. Yes, have a strategy, do the work properly, ensure that in future also you get work. But boss, if you don't earn profit only, on a financial level, will you sustain? No, boss. Sustaining is different, sustaining financially is different. Say for example, simple, I'm telling, you've cleared your CA examination, you become a chartered accountant. Yes, you start your practice, you do good work. Okay, you don't do any second quality work, you don't do frauds, good quality work you're doing, but you're doing it at a very small level. So can you sustain your business? You can sustain your business. Everyone is saying, ah, he's a nice person, but on a financial basis also you should be making money ultimately. So financially, in order to sustain, what all things we should be doing? Simple, small GGB pointers, theory pointers only. Simple, students. In order to be financially sustainable, what all we want? Firstly, we should be having more than one source of income. Just one source of income is not sufficient. More than one source of income you should be having. Yes or no, everyone? Yes. Simple. Imagine you've become a chartered accountant. Okay, you've got into a job. Yes, so from job you are getting a salary. With that, additional source of income should also be there. Say for example, you've invested, from that you're getting some returns. Could be possible. Or else in your free time, what you're doing is you're doing IT related work also. Yes, ITR filing, yes, audit related, internal audit related, etc work also you're doing. Okay, so you should be having more than one source of income. Why? If you're having only one source of income, if anything happens to this, you're under serious risk financially. So you should be having more than one source of income. Tell me, is it something that I should be explaining? No, boss. Second thing is, you should be having more than one way of generating the income. Boss, the same income you are generating, but there are more than one ways. Simple example I'll give you. I am teaching. Okay, so for me, what all sources of income is there? Firstly, I'm into teaching, that is one source of income. Next, we are having our practice firm, consultation firm in Muscat, that is a second source of income. Investment is there, etc. Now let me take teaching. This is one source of income. This also, I should be having different ways to earn this. Say for example, firstly, I do face-to-face classes. That is one way of generating teaching income. One more, I am having online live classes. That is one more way of generating the same income. One more, I am having recorded classes. That is another way of generating the same income. Same teaching only I'm doing, but three different ways I'm earning the income. Is this clear, everyone? Perfect. So we should be having more than one way of generating the same income. Say for example, telecommunication business. They are majorly earning money from data as well as call pack. Yes, first they can give the monthly pack, 349 rupees. Secondly, additional data you want, 50 rupees. Data only they're giving, but extra data, 50 rupees extra. Yes, more than one way to earn the same income. Is this clear, everyone? Perfect. Third thing, we should be having adequate financial systems. We should be having systems in place to see whether we are making money, how much money we are making, how much expenses we are having, how much profit we have made, how much growth we have made. We should be having systems. Otherwise, we won't know. Imagine there is an organization, they're having high turnover but high cost as well. If they do not have systems in place, even though turnover is high, growth is high, boss, if their cost is very high, yes, there is no cost control at all, randomly expenses are being incurred, they do not have systems to check how much cost is incurred at all, most of the times they'll be making losses also, just that they won't get to know about it. So we should be having financial systems which will track how much money I am making, am I making sufficient money or not, and all those things. In order to track, systems should be in place. Is this clear, everyone? Okay. Next thing is, we should be having a good public image. Why good public image? Obviously, if you are having a good public image, through that you can leverage that and accordingly be making more money. Simple, boss. Imagine there is a road construction work which is happening nearby. Okay, imagine you're a contractor. If you're having a good public image, you've done something good for the society, is it easy for you to get the contract? I mean, yes, on a operational level you will have to get the code, apply for that and all those things, but apart from that, if you get the code, yes, will the public support you to do the work? Yes, boss. Imagine you're a person who is the most corrupted. Yes, you do corruption, you still get that. Yes, people get to know. There is a chance that people may protest, people may tell we won't allow this person to get the work done. All those things can happen. So for that, in order to earn money also, you should be having a good public image. Yes. Or you can be telling you should not be having a bad public image. Yes or no, everyone? If you're not having a bad public image, it is fine. If you're having neutral image also, it is fine. Is this clear, everyone? Next thing is, we should be having financial autonomy. On a financial basis, we should be having that autonomy, independence. We should not be so much dependent on raising money always. Say for example, next 2-3 months, Simple example I'm giving is, imagine you've become CAs, you've started earning, imagine you lose your job. Next for 2-3 months, it will take for you to find a new job. Yes, for those 2-3 months, in order to survive, you should be having the emergency fund. It should not so happen that, okay, next day itself you want a job, otherwise you don't have even a single penny with you. So financial autonomy should be there. Disruptions can happen in the business, disturbances, risk can happen in the business. We should be having some financial autonomy, some backup, yes, independence, so that even in case of disruptions, yes, adverse movement, risk, we can manage that. Only then we can be financially independent. Is this clear, everyone? Okay, perfect. So look at this, students. Yes, for this also a simple shortcut I've kept. Yes, in order to be financially sustainable, if you have to be financially sustainable, means two things we should be doing. Firstly, we should earn money. Yes, with that, we should be having a good public image. Tell me, students, tell me. In order to be sustainable, we should be doing three things. What is it? First, have a strategy. With that, do the work, then get more work. Here, nowhere we have talked about money. We just want to sustain the business. But in order to make profit on a sustained basis, what all we should be doing? Yes, firstly, we should be doing money, earn money, as well as have a good public image. Tell me, earn money, 4 pointers we are having. What all are the 4 pointers? Firstly, have more than one source of income. Yes or no, everyone? Next one, more than one way of generating the same income. Yes. Third one, you've told we should be having financial systems in place to see whether we are making money or not. Fourth one, we should be having financial autonomy. If anything happens, risk occurs, we should be having that autonomy that we can sail through it. We have the emergency fund for that. Yes or no, everyone? And the final point is, we should be having a good public image. We are just trying to break it down so that we can remember it. Is this clear, everyone? Okay, fine. So look at this: more than one source of income, more than one way of generating the income, financial system, financial autonomy, good public image. These two are the questions multiple time. Either question will tell what makes an organization sustainable, just this they are asking, 4 marks. Or sometimes they will ask what makes an organization financially sustainable, just this, 4 marks. Or sometimes both of them together will come. Okay, for us, what is best? Whatever question comes, we will try writing both of them. 4 we will try remembering 4 is not going to be a big deal. Yes, logically we have understood, we will remember it also. Yes, 1 or 2 times we'll have to repeat, that's all. Is this clear, everyone? Now 1 or 2 more pointers are there. They are not very important from examination perspective, still they are there in the study material, so we'll quickly discuss them off. Next one is balancing financial goals vis-a-vis sustainable growth. I've told it is slightly less important, but it doesn't mean that it will not come in the examination. Is this clear, everyone? Okay, just a minute, let me put my iPad for charge. Yes, now what is this exactly all about? Balancing your financial goals vis-a-vis sustainable growth. Simple, I have explained this already. Yes, what is going to be your financial goals? Simple, I am telling you, students, you have 3 options available. One job gives you 20 lakh per annum salary. Next job gives you 50 lakh per annum salary. Next job gives you 2 crore per annum salary. On a financial level, which one you want to take? Sir, 2 crore per annum salary. Financial goal is simple. Wherever we make most money, that is the best for us. But boss, here it is telling, don't just see the financial goals. Yes, balance it with the sustainable growth. You should be in a position to sustain that for a long term. Simple example I'm giving. Imagine you're getting a 2 crore job, but the requirement is you should be working 16 hours a day, 7 days a week. Morning to night, you should be in office only. There is no life. 24/7 you should be available. Even if you're taking a day off, holiday, still the company calls you, you should be coming. Okay, imagine, yes, you are having 10 cups of coffee every day. You are under extreme stress. You are having lots of tablets, pills daily. You do not take care of your health at all, but you are earning 2 crore. Your personal life is messed up as hell. Or you're having a 30-40 lakh job, wherein even though money is slightly less, still you're having a good balanced life. Yes, right now, as articles, you are earning 6,000, 8,000. You'll tell, sir, anything happens, sir, 2 crore is best. But trust me, once you get into job, you will start earning. You will tell, boss, 40 lakh job was better. Is this clear, everyone? So what we want? Yes, financial goals is always concerned about having a high market growth. But boss, we need to balance it with the sustainable growth. My objective is not just high growth, it is a sustained growth. Okay, here we are telling, boss, throughout traditionally from kids, we know that we want high growth, we want high money. But here additional layer they are telling, we want sustainable growth. Is this clear, everyone? Yes, financial goals is very simple. Get a high growth. Yes, because if you are having a high growth, you will have a higher market share, higher profit. But boss, it could be possible you are earning only in the short period. We want to keep earning in the long, sustainable period. Is this clear, everyone? Here it is telling have a balanced, sustainable growth so that we can have a balanced, sustainable profit. For that, one of the beautiful examples also they've given, which is regarding oil company. Yes, imagine we are Indian Oil Corporation. Okay, it is an oil refining company. They are having petrol pumps throughout. Okay. If their only objective goal is to have high profit, they are telling boss in the next financial year we want to have high profit. Imagine in the year 2030 we should be having the highest profit. Very simple. You are having oil mines, dig, extract all the oil you are having, yes, sell, get a high growth. But tell me students, oil is limited. Yes, if you dig, extract everything, okay boss, next year you make a very high profit. Okay, next 3 4 5 years you do. But boss, oil is a limited resources. If you exhaust it fully, after that will you be in a position to do anything? No. So what we are telling is, yes, we want a good growth. Yes, we should not be having a low growth. If you're having a low growth means you're not doing anything. Yes or no, everyone? Low growth is bad. Yes, but sometimes high growth comes with a very high disadvantage. Yes, if that is the case, if you are having a high growth which is only for the short term, it is not good. We want a sustainable growth, a growth which we can sustain forever. This is what they're telling. Let us try quickly seeing students. Look at this. Sustainable growth helps firms to plan healthy long-term expansion. Just in the short term, yes, Byju's has done. Just in the short term, they wanted to grow big, become a big giant, raise their valuation, be seen as investors, venture capital funds as a good company. They kept on acquiring. In the short period, it made a good growth. But could they sustain it? No, boss. We want sustainable growth. Throughout, we want to sustain it. Is this clear? Sustainable growth helps firm to plan healthy long-term expansion. In a healthy way, we want to expand. In order to grow, we are raising too much funds on debt. Say for example, anything happens, your business proposal doesn't work out. You are now standing with a lot of leverage, lot of debt. You are not having money. Yes, still you'll have to be paying them interest. You are not having the money. Because of that, your entire business may be shut down. So we want healthy, long-term, sustainable growth. Is this clear, everyone? Okay. Now, conflict arises when growth strategies are not inconsistent with sustainable growth, leading to financial stress. If you are having high growth strategies which are not sustainable, in order to get growth, you are raising so much debt. You are not having the money to generate that income. You are not having the revenue to generate that money. Yes, in that case, it becomes a problem in the future. Even though in the short term, you can increase your top line, you can raise your valuation, but for the long term, it will not sustain. Is this clear, everyone? Yes, managers should balance the needs of current stakeholders as well as future stakeholders, especially when resources are limited. I've told you the example of oil companies, yes or no, fuel companies. Yes, resources are limited. Today itself, if you have extract everything, okay, this year you have made profit, but boss, you have to sustain also. That point they've explained here. Too fast or too slow growth is harmful. Therefore, we should be having a sustainable growth. Is this clear, everyone? Couple of pointers. You guys can read it 1 or 2 times. Not very important. Here, what we are telling, boss, our goal is not just having a high growth. We want a sustainable growth. Is this clear, everyone? You guys can read it one time. Then we have one more thing which is regarding sustainable growth rate. The calculation of sustainable growth rate. In practical, we have told sustainable growth rate. It is nothing but a retention ratio into return on equity. Yes, everyone, not explaining this. Yes, sometimes people call it as B into R also. Yes, about that they've explained here. Look at this, students, simple. Yes, what is sustainable growth rate? It is the maximum rate at which a firm can grow its sales without borrowing more money. Tell me, for this growth, am I borrowing more money? No, boss. I'm just using my retained earnings that I'm reinvesting and making money. Yes or no? I am not here to explain you guys about sustainable growth rate, the practical calculation. In practical area, so much time you've spent. Beautifully we have understood. But theory also, one question is there. What is a sustainable growth rate? How much we can grow without raising extra debt? That is, just by reinvesting my fund, how much I can be growing. Is this clear, everyone? Okay. It is a maximum rate at which company can grow its sales without borrowing further. Yes, after the firm has passed this rate, it must borrow funds in order to facilitate growth. Imagine I am retaining 60% of the funds and I am getting 15% return on the equity. Perfect. That means my sustainable growth is going to be 9%. So what does it mean? It means that every year 9% growth I can bring without borrowing further. But boss, I want a higher growth. Yes, there is a project I want to invest. For that will give me a higher growth. But boss, I'm not having the money. In that case, what I should be doing? I should be borrowing extra. Yes or no, everyone? Beyond sustainable growth, if I want a higher growth, means I will have to be borrowing extra money. Only then I can be achieving that growth in the sales. Is this clear, everyone? Okay. Yes, perfect. Beyond this, if I have to grow, means I'll have to be borrowing fund. It indicates the growth level that can be supported using internally generated fund. Here I'm using only my retained earnings. Yes or no, everyone? Perfect. Sustainable growth rate, it is return on equity into 1 minus dividend payout. 1 minus dividend payout is retention ratio. Retention ratio into the return on equity. Is this clear, everyone? Sustainable growth models assume that business wants to maintain a target capital structure. Debt equity structure will be same, is the assumption. Maintain a target dividend payout structure. Every year dividend payment, yes, percentage is going to be same. Yes, increase the sales as rapidly as market conditions allow. Suppose market is allowing us to increase sales at 20%. Good growth is there, we will all want to increase it by 20%. Is this clear, everyone? Yes, in that case, sustainable growth is calculated. Simple theory, one time you guys can read. Not very important, but it doesn't mean that it will not come. Just that on the last day before examination, you don't refer. Now, one or two time you read and you keep it. Yes, what is sustainable growth telling? Maximum how much sale we can grow without borrowing extra funds. Perfect. Point number one. Point number two, this is the maximum growth we can bring without borrowing extra funds. Extra growth, if you want, means we should be borrowing. Is this clear, everyone? Yes. Then comes third thing, formula we can be writing. Fourth thing, some assumptions. Firstly, my capital structure will be same. Secondly, my dividend payout structure will be same. Thirdly, how much ever sales we can grow, we want to grow that. Is this clear, everyone? Perfect. This point is also over. Now we have the final 2 points, my dear students. With this chapter is going to be done. Yes, everyone, quickly let us just see what all we have done. Firstly, we have seen the key financial decisions. Yes, how to get the money. Yes, financial decisions, financing, where to put the money, investment decision, how much should I distribute, dividend decision, and how does it act overall, which is going to be portfolio decision. Then we have seen strategy at different level, corporate level, business unit level, as well as the functional level. Then we have seen the advanced role of CFO. We told, yes, life of CFO is a risky mess, risky risk management. MES, M for mergers acquisition, E for ESG financing, S for supply chain. Yes or no, everyone? Then we have seen sustainable growth. In that 4 points we have seen, 2 points are important. Firstly, what makes organization sustainable? We told in order to be sustainable, we should have a strategy, plus we should do work, plus we should be in a position to get continuously work. Yes or no? Strategy, have a clear strategic direction, scan the environment for opportunities. To do the work, we should have competent staff as well as adequate infrastructure. To get future work, we should be getting community support, yes, as well as leverage further resources. Is this clear, everyone? Then we have told what makes organization financially sustainable. For that, we should be earning profit, earning money. 4 pointers are there. Plus have a good public image. To earn money, we have told more than one source of income, more than one way of generating the same income. Have financial system, have financial autonomy. 4 points. And then have a good public image. Is this clear, everyone? Now 2 more small pointers are there. With this chapter is going to be done. Yes, almost 8 out of 10 attempts, a 4-mark theory question will be there. Trust me, if it comes, when everyone else is going to randomly write some random stories, we will put the keywords. We will score 4 out of 4, my dear students. Is this clear? And once you come back after the examination, people who are watching it on YouTube, you'll have to come back and put crazy maja lecture it was. Yes or no, everyone? Okay, fine. Next comes interface of financial policy and strategic management. Sir, what exactly is it, sir? Yes, I've explained it already for you guys. Yes, they're telling interface of financial policy and strategic management. What is the relationship between my financial policy and the strategic management? Yes, they're telling both of them are linked. Sir, how is it, sir? Simple example, same example. Mukesh Ambani is there. Yes, he is at the corporate level. He will come up with the strategy, which business we want to enter. He is telling we will start with the business of geofinance. Is this clear, everyone? Yes, at the corporate level, we will come up with the strategy, what we want to do. We will start with the telecommunication business. Now tell me, what is the role of CFO? Yes, how do we achieve that? We want to start geo, yes, disrupt the market, become market leaders in a telecommunication business. How do we do that? Where do I get the money from? Financing decision. Yes, where do I invest? How much should I distribute? All those decisions, who is going to do? Yes, the CFO is going to do. So we are telling, boss, previously what we used to think is strategy is different, as well as financial planning is different. Now they're telling, boss, both are interlinked. Based on your strategy only, we will come up with a financial planning. So both of them are linked. This is what is telling the interface of strategic management and financial policy. Yes, whatever strategy you want to achieve, for that, how should you manage the finance? Yes or no, everyone? This is what it is trying to tell. Look at the students. Corporate level strategy is telling what we want to do, enter into telecommunication. For that, how do we do it is what my financial policy is telling. How do I raise the money? How do I invest the money? How much dividend I should be distributing? Yes or no? So both are not separate. Strategy as well as financial policy, they are not separate. They are interlinked. Based on your strategy only, financial policy will be coming. Is this clear, everyone? Okay. Now let us try reading this, students. It will make sense. Look at this. Let us keep the example of G only on the back of the mind. Look at this. The starting point of an organization is money, and the end point of the organization is also money. Crazy sentence. Yes, high level sentence. We will remember and we will write it. Yes, what they are telling, that boss, there is a business. Yes, what is the starting point and ending point of the business? Why are we starting the business, boss? Ultimately to make money. Yes or no, everyone? So the end point of the business is to make money. The starting point of the business is also money. Tell me, in order to start the business, can I just randomly start the business? No, boss. To start the business also I want money. And why am I starting the business? To make. Yes or no, everyone? So to start the business also I want money. Yes, the end goal of making the business is also to earn money. Is this clear, everyone? This is the first sentence we'll be writing. Okay, boss. But in order to make money, yes, in order to make money, what all we want? We want a strategy, clear strategy on how we are going to make money, what we are going to. Tell me, just having a strategy, is it going to be sufficient? No, boss. We should be having financial policy. How are we going to achieve that? Simple. Pani told we will enter into telecommunication business. That is a strategy. How we will enter, how we will get the money, where we will invest, how much we should distribute. With that, financial policy also becomes important. Yes or no, everyone? Yes. No strategy is possible without having a financial policy. Is this clear, everyone? Okay. So we are telling, okay, boss, yes, start point of a business, end point of a business is money. But in order to make money, we want a strategy. But tell me whether having just a strategy is sufficient. No, boss. With that, we should be having proper financial policy, financial planning. Okay, that is our domain. Now tell me, when it comes to financial policy, what all things we will be having? Majorly, three things we'll be having. Firstly, financing decision. Okay, Ambani is saying we will start with the geo telecommunication business. Firstly, where do I get the money from? Do I already have internally generated fund? Or should I raise extra equity? Or will I be going for the debt? That is the first decision in financing we'll be doing. Yes or no, everyone. Next one is going to be investment related decision. Okay, boss, how do I invest? Where all I should invest? Should I be investing or not? Is it giving me the required return or not? Third one is going to be dividend decision. How much dividend I should be distributing? Yes or no, everyone. These are going to be the next three pointers. Look at the students. First, the start point of organization, end point of organization is money. In order to earn money, yes, just a strategy is not sufficient. With the strategy, a proper financial planning is needed. Okay. In terms of financial planning, what all will come? Firstly, financing decision. How do I get the money? What all sources of finance I will be getting the money? What is going to be the capital structure? That is a debt equity ratio. Yes or no? Now, Institute has given in the form of a big paragraph. I've split it into pointers. I have not given headings, but these are the headings. If we know this explanation, anyways, we can get it. Yes or no? First, financing decision. Where do I get the money from? Yes, which all sources I will be getting? How much is going to be the mix? Is one thing we should be knowing. Okay. Second thing is investment decision. Where I should be investing? Is it giving me required return or not? That I should be knowing. Third thing is going to be financial policy. Sorry, dividend policy. How much dividend I should be distributing? Yes or no? And ultimately, they are telling a financial policy cannot be framed in isolation. Boss, we are working in the finance. Yes, my financial policy, financial planning, it cannot happen in isolation. It will work in relation to the strategy only. So both of them are interlinked. Is this clear, everyone? So there is a two-way relationship. This is what the question is telling. This has also come multiple times in the examination. Students don't have a framework at all. So that is why they won't be in a position to write. We have built a simple framework for you guys. Tell me, students, how do we tell? Simple. We will start with this sentence. Beautiful sentence. The starting point of an organization is money. The end point of an organization is also money. Okay, that is the first bullet we are going to write. Then we will write. In order to earn money, what all we want? Strategy we want. Tell me, just a strategy is it sufficient? No, boss. With a strategy, a proper financial plan, a proper financial policy is needed. That is going to be the second point we will. Now tell me, in terms of financial plan, financial policy, what all we want? Three things. First is a financing decision. That is which all sources I will be raising fund.
What is going to be the capital structure? Debt equity mix I should be knowing. Okay, third point is over. Next is investment decision. Where I will be investing, how much return I'm getting. Is it giving me positive NPV or not? What is IRR? I should be knowing. Okay, fourth point. Next comes a dividend decision. How much dividend I should distribute, how much I should retain. That decision also I should be taking. Then finally I will write. Therefore, my strategy and financial policy, yes, they are interlinked. They cannot work in isolation. So there is a two-way relationship. Yes or no? 6 points. Beautiful we have written. We have remembered. If it comes in examination, we'll be writing it as well. Look at the students in short and crisp. Start point and end point is money. To earn money, this is what we want. How do we arrange for finance? These three pointers will be writing. Therefore, both of them are interlinked. They do not work in isolation. Is this clear, everyone? Okay. Now we have one final point, my dear students, which is going to be financial planning. Giving you guys a minute. After that, we'll discuss this final point. Yes, everyone, we have the final point in this chapter, which is going to be financial planning. What is financial planning? Yes, we are telling we are planning our finances. What does it mean? We will be having some financial goals that we want to achieve. How do we achieve that? That is financial planning. Simple. Look at the students. It is a systematic process. It is a process of effectively managing the financial resources. We will be having some financial resources, money with us. How do I manage the resources? Using appropriate tools in order to achieve financial goals. So tell me, yes, I am having financial resources. How do I manage financial resources? Using the financial tools. Yes, if I do that, I will try to achieve my financial goals. This is what is my financial planning. Tell me, what is financial planning? It is a process to achieve our desired financial goals. How? By managing our financial resources by using financial tools. Okay. So components of financial planning, there are three components: financial resources, financial tools, financial goals. Look at this. Three components: financial resources, financial tools, financial goals. So financial planning means three things: financial resources, financial tools, financial goals. Is this clear, everyone? Sir, what are these three things, sir? Nothing we understood, sir. Okay, simple. Financial goals, what I want to achieve. Financial resource is telling what I have. Financial tools is telling how do I manage. Sir, can you give some examples, sir? Yes, sir. Simple example. You guys have done your articleship. Tell me, you are getting stipend in lakhs and lakhs of rupees, sir. What fun you are doing, sir? Maximum, some places 2,000, 3,000, sir. Maximum 8,000, 10,000 you are getting. Yes, sir. Let me assume that you guys are getting 10,000 rupees per month. You guys are staying away from your home. At least at one point in time, you would have stayed away. People who are staying away, they will relate to me. Yes, our only goal that time is to survive the entire month. Yes, once we enter into articleship, all of us somewhere have that mindset that boss, I should not be asking money from parents. Somehow I have to survive by myself. So our only goal is somehow I want to survive. I still remember when I was doing my articleship. Yes, in Bangalore, I used to get 7,000 rupees stipend. In that 7,000 rupees stipend in Bangalore, I used to survive the entire month. Every rupee that I'm going to spend was so planned, so calculated. Yes, 1,500 I'll be spending for room. Yes, we had a room at a concessional rate. Yes, at a Muslim hostel. It was some 8 kilometers away from the office, but still, it was cheap. I was going there. For food, how much I'll be spending? For petrol, how much I'll be spending? Yes, for class, every month I used to be saving 1,000. So everything was properly planned. So what is the financial goal you guys are having? Simple, boss. The only goal is I should survive the entire month without asking any money from the parents. Yes or no, everyone? Perfect. Goal is to survive the entire month. That is what I want to achieve. Yes, in order to survive the entire month, financial resources, what I have, how much money I have. Imagine every month you're getting a stipend of 10,000 rupees. So, financial resource, how much money you're having? 10,000 rupees you're having. So, using 10,000 rupees, I have to survive the entire. Yes or no? Financial resources, how much money you're having? 10,000. Using that, I should be survived the entire. Now tell me, randomly if you spend your money, 10,000 you're having, randomly you spend money, will you be in a position to survive the entire month? No, boss. Yes, you should use some tool. How do you manage this 10,000 so that you can survive the entire month? You will make a plan, a simple budget. Okay, boss, for travel, 2,000 rupees. For food, 3,000 rupees. For petrol, 1,000 rupees. For miscellaneous expense, 1,000 rupees. This way you will make a plan so that you can survive the entire month. Yes or no? You're using some tools. You will track the expenditure. Imagine you are tracking your expenditure so that you do not overspend. So this way you try managing. Yes or no, everyone? So this is what financial planning is all about. What is financial planning telling? boss, we want to achieve our financial goals. In order to achieve financial goals, how do I utilize the existing financial resources? By using financial tools. Is this clear, everyone? It is a process of managing financial resources using my financial tools so that I can achieve the financial goals. Tell me, what is financial resources? How much fund is available? What are the financial tools? Instruments which I'm using for planning. Yes, budgeting, ratio analysis, all those things, cash flow, yes, input, output, all those things. Financial goals, what is the goal I want to be achieving? Yes, one more example from the perspective of business, I will tell. Simple. Yes, we are having Geo. Yes, Geo's financial goal, it is to become number one in telecom. Is this clear, everyone? Can they just sit in the boardroom and tell boss we want to become number one in telecom? Will they become number one? No, boss. They have to start the project. For that, they want financial resources. Yes or no, everyone? Okay, financial resources. We want money. How much money we have? Yes, internally. How much I can raise from equity holders? How much I can raise from my debt holders? So total, how much money I will be having? That is the financial resources. Tell me how much ever money you have. If you don't manage it properly, if you overspend, if you don't budget, if you don't have a cost control, will you be in a position to achieve your goal? No, boss. You will need more and more fund. Yes or no, everyone? So we should be having financial tools. What all financial tools will be having? You will be doing capital budgeting decision, NPV, you will see, IRR, you will see. You will compare, yes, your cost with the benchmark cost, what others are incurring. All those decisions, cash flow related forecasting. Should I be paying now or should I be delaying the payment? Should I purchase or should I be getting it on rentals? All those tools I will be using to achieve my financial goal. Is this clear, everyone? Financial resource is what all resource I'm having, how much money I'm having. Yes, financial goal is what I want to achieve. Yes, randomly resources you're having. If you randomly utilize your resources, you'll never achieve. You should be having tools. You should use the tools properly. Decision making tools. That is what we've learned in the entire FM. Yes, the different tools. Yes or not, everyone? Perfect. This is going to be financial planning. Meaning we have understood, components we have understood. Now, one more thing is there. Outcome of financial planning, not very important. If I do financial planning, what will happen? Firstly, financial objectives I will be getting. I will be getting targets, what I want to do. Targets will be clear for me. Financial decision making, I will take my decisions which is in line with the financial goals. And then accordingly, I can financial performance measure. I can accordingly measure my performance. Simple example I am giving. As an articleship student, your goal is to survive the entire month. Yes or no, everyone? Perfect. So your goal was to survive the entire month without borrowing from friends or family. You should survive. For that, you will keep a financial objective, is objective target that you are not going to overspend money because you want to survive the entire month. That is your objective. You will not overspend the money. Then, yes, you will measure how much money you have spent. Have you overspent any unnecessary expenditure you have done? Okay. And then finally, you will be making a financial decision making. Yes, was it a good decision or a bad decision? Imagine, yes, a random weekend, your friends called you, come, let's go for a trip. The trip will cost 3,000, 4,000 rupees. You decided, boss, I badly want to go with my friends, but I don't have the funds. So you tell Macha, I am not available, I'm having work. You do all those things. Trust me, I've done a lot of these things during my articleship days. I wanted to go to the trip. I am free only, but I don't have the money. So what you will tell friend? Macha, I'm busy. Principal is not allowing on. Yes, sir. Some crazy things you've done in our lives. Yes. But trust me, students, one day will come in your life when yes, money will not be a very big thing for you. Yes, the basic things you are thinking a lot about right now at one point, it won't even make a difference. Like when I was doing articleship, yes, should I take an auto or not? Was a very big decision. No, we will go in bus only. Yes, we'll have to wait for some time, but it's fine. But right now, yes, should I take a auto or a bike or a car? Yes, or I'll have to travel, I'll have to take a flight. I don't think two times about it. Trust me, you'll also reach that phase. Okay? But yes, once you reach that phase, you look back at that old phase, you'll be proud of the person. You'll be proud of the story. Yes, we should be having that phase as well. So tell this is this phase of my life wherein I'm learning things. So take it that way. I will also have that one phase in my life wherein I need not have to worry about the price of the things that I'm purchasing. Work hard for that, but be proud of this phase of your life as well. Okay, only then you will be in a position to appreciate the other phase of life. Okay, coming back. So what all we will get if we do financial planning? Firstly, we will get objectives and targets. Yes, using the objectives, we will take decisions in line with the objectives, and accordingly we will measure have we achieved the objective or not. Is this clear, everyone? Chumma time pass, you guys can read it once. With this, the chapter is done. Every point we have discussed. Now in the study material there is one more point. called external funding requirement. Not very important, but a paragraph is there. If you guys want, you can see it. Till now, it has not come in the examination. Okay, boss. So with this, the entire chapter, financial policy and corporate strategy, is done. Giving you guys a minute. After that, we'll quickly revise in 2 minutes. We are having a half-page chart. Even though we have spent 1.5 hours, trust me, now onwards, 2 minutes is all it will take for you to revise this chapter, my dear students. Giving you guys a minute. After that, we'll have the revision. Yes, everyone, let us have a quick rocket revision of the chapter Financial Policy and Corporate Strategy in 3, 2, 1. Let the rocket revision begin, my dear students. In this entire chapter, we are thinking from the lens of a CFO. What all CFO has to be doing. First comes key financial decisions which a CFO has to be taking. Tell me what all financial decisions we should be taking. Firstly, from where we get the money from, financing decision. Second, where will we invest the money, investment decision. Thirdly, we've earned profit. How much should we distribute to our shareholders, which is a dividend decision. Overall is the portfolio decision. How does this decision fit in the overall portfolio? Is it increasing the risk, reducing the risk, increasing the return, reducing the risk, return? Yes or no, everyone? Financing decision. Yes, where am I getting the money from? Here we'll think about the mode of financing, equity or debt. Yes, as well as debt equity mix, how much percentage we should be having. Next comes investment decision. Where should we invest the money? For that, we will see NPV, IRR, etc. Next comes a dividend decision. How much we should distribute as a dividend versus how much we should be reinvesting. Next comes portfolio decision. How will this decision affect the overall return and risk of the portfolio? Is this clear, everyone? Next comes a strategy at different levels. We are having the corporate level, below that business unit level, below that functional level. Corporate level, we are taking a decision. Which business should we operate in? Geo. Business unit level is going to decide how will we compete and win in that business. Okay. Functional level is telling yes, every function, purchase, how can I do in the best way? Yes, production, how can I do in the best way? Marketing, how can I do in the best way? HR, how can I do in the best way? Yes or no? Extra point we had was corporate strategy should be SAF. S for suitable, A for acceptable, F for feasible. Look at this, everyone. Corporate level strategy, we decide which business company should operate in. Corporate level strategy should be SAF. SAF is our mnemonic, yes or no? S is suitable, it should be suitable to achieve our objectives, acceptable to stakeholders from a financial as well as non-financial perspective, feasible, yes, we should be having the resources to implement that. Is this clear, everyone? Business unit level strategy, how will the business unit compete and win in the business? Yes, functional level strategies, it is the strategies at every function, production, marketing, sale, etc, etc. Now comes the third thing, which is advanced role of CFO. Anyways, financial, yes, finance is one role of CFO, but boss, post-pandemic, we're having advanced role. What is the mnemonic for that? Yes, life of a CFO is a risky mess. Risk management we should be doing. MESS. M stands for mergers and acquisition. E stands for ESG financing. S stands for supply chain. Yes or no, everyone? Perfect. Then comes fourth one, which is sustainable growth. Yes, here two important questions are there. One is what makes an organization sustainable? Next is what makes an organization financially sustainable? What makes an organization sustainable? We had this simple shortcut. In order for an organization to be sustainable, three things we want. Firstly, we should be having a strategy. Second, we should be doing the work. Thirdly, we should be getting future work also. Firstly, strategy. We should have a clear strategic direction. Yes, we should be in a position to scan the environment and identify opportunities. Next, do work. Tell me to do the work. What all we want? Firstly, we want competent staff. Next, we want infrastructure, that is administration and financial infrastructure. Thirdly, we should be getting future work also. For that, tell me what is it that we want. Yes, firstly, yes, we should be having the community support. Then we should be in a position to yes show the effectiveness, demonstrate effectiveness so that we can leverage further resources. Yes or no, everyone? Perfect. Then comes what makes an organization financially sustainable. We told for an organization to be financially sustainable, two things we want. Firstly, we should make money, financially sustainable. Second, we should be having a good brand image also. Yes or no, everyone? Perfect. To earn money, four pointers were firstly, have more than one source of income, have more than one way of generating the same income. Thirdly, have financial systems so that I can see, am I actually making money, burning money, what is happening. Fourth, have financial autonomy so that in case of risk, 3 4 months emergency, we have a fund with us. Yes or no, everyone? And then, anyways, have a good public image. Is this clear? Then comes interface of financial policy and strategic management. Yes, I've told given you guys a beautiful framework. First, we will tell starting point of organization is money, ending point of organization is also money. Tell me, in order to earn money, what is needed? Strategy is needed. Yes, tell me whether just a strategy is sufficient. No, boss. With the strategy, proper financial planning, financial policy is important. That is the second point. Tell me, in financial planning, financial policy, what all will be doing? Three things. First is deciding the sources of fund. From where will I get the money? What is the debt equity ratio? Yes or no? Next is investment decision. Where will I invest? How much? Yes, return I will be getting IRR. Yes, sure. NPV, etc., etc. Third one is going to be dividend related decision. I can write two liners. Yes or no? Then finally, I will tell. Therefore, my financial policy and strategy are not two separate things. They are interlinked. Based on the strategy only, I will be coming up with a financial policy. So they are interlinked. They cannot work in isolation. Is this clear, everyone? Then comes the last point, which is financial planning. What is financial planning? I am having financial resources, money. How to manage your financial resources? By using financial tools. Why? Because we want to achieve the financial. Yes or no? How to manage financial resources by using financial tools so that we can achieve financial. There are three components of financial planning. First one is financial resources. It is the resources we are having. Financial tools which are used to take decision, as well as financial goals that we want to reach. If we do financial planning, what all outcome we will get? What we will get? Yes, firstly, we will get financial objectives. Targets will be clear. Yes, based on the target, better, easier decisions will be in a position to take. And accordingly, we'll be in a position to measure whether we have achieved our goal or not. Yes or no, everyone? With this chapter, financial policy and corporate strategy is done. See you in the next video for the next chapter, which is going to be risk management. Thank you so much, my dear students. Take care. Bye.
Yes, everyone. So, hello, hi, namaskaram, and good morning, students. I hope you guys are having a crazy, amazing day. If not, let us make this a crazy, amazing day, my dear warriors. We are going to take our discussion forward with respect to theory chapters. We've already covered three important theory chapters. First one was securitization, crazy chapter it was. Next one was startup finance. Then we've seen yesterday's chapter, which is going to be financial policy and corporate strategy. Now we are having the next important chapter with respect to theory. I've told in theory, four chapters are most important. Okay, 16 out of 16, or if not 12 out of 16, at least will be coming from these four chapters only. The fourth chapter is going to be risk management. Very simple chapter. Trust me, this is a chapter even if you study by yourself, you will get to know. And whatever is needed, we have incorporated in our notes. Yes, in just 3 pages, we have covered everything. Now, one very important thing with respect to this chapter is there are few things which institute is testing in the examination, which is not there in the study material. So because institute is testing in the examination, that also will have to be studying. Is this clear, everyone? Very simple. Don't worry, in the notes, everything, whatever is important for examination is covered. Okay. Yes, everyone. So let us try understanding. Yes, this entire chapter will be studying in three segments. First is basics. Second is classification of financial risk. Third is going to be value at risk. So let us begin with the first segment, which is basics. Every name is telling us a story. Risk management. What is this trying to tell? It is telling, boss, we started a business. Every organization, what is the objective why we are starting an organization, a business? Earn money to make profit. But boss, every organization will be having certain risks which we need to identify and we need to manage. Otherwise, your goal of making profit may be at risk. Is this clear, everyone? So, what is this intention of the chapter? Yes, it is telling, boss, you guys are going to be chartered accountants. You guys will be CFOs of the company. You guys will be in position to manage the affairs of the company. Yes, at one end of the spectrum, we are looking at the profit. Great. At the other end of the spectrum, we should look at the risk that is there in the business and try to manage the risk. Is this clear, everyone? Very simple point. So the first thing that the institute is asking is, what are the different types of risk faced in an organization? Trust me, even if you read once by yourselves, you will get to know it. What all different types of risk can be there in an organization? Tell me, students, imagine we come up with a business called Maja Flying Cars. This flying cars business we started, crazy business. Yes. What is our end goal? To make profit. But are there going to be risk? Yes, boss. What all risk can be there? Tell me, students. You guys tell me. Multiple risk can be there. First risk. In reality, multiple risk can be there. But for us in examination, only four are there. We will be remembering four. First risk is strategic risk. What is a strategic risk? It is the risk that my strategy is less effective. Simple example I am trying to give it to you guys. You enter the market. You enter the market. They wanted to penetrate the market. So they came up with the concept of free data as well as free talk time for the first 6 months. That was their strategy. What if the strategy doesn't work out? You came up with the strategy, it doesn't work out. That is called a strategic risk. Yes, it is a risk that your strategy is less effective. Because of that, your business doesn't work out. Sir, can you give some practical examples wherein the strategy didn't work out? Yes, boss. Nokia. Now, when Android was built, the first party Android contacted was Nokia, because that point in time, Nokia was the biggest player in the mobile industry. Android contacted Nokia. It told, boss, please switch to this operating system. Nokia told, no, we have our own Symbian operating system. We will go ahead with that. Yes, we don't want your operating system. We are having our own in-house operating system. We will not adapt to a new operating system. That was their strategy. We are having our own operating system. Why should we switch? Okay, we want to build our own, yes, separate platform. One strategy was wrong. Because of that, today Nokia is just a name in the history. Yes or no, everyone? Perfect. One more example is Kodak. Yes, you guys know right now we are having digital cameras, but before this, there was a generation when we used to be having film, yes, film or reel based cameras, wherein we had that black color film. That particular point in time, Kodak was the biggest player when it comes to cameras. Camera means Kodak. That is how the name was. But somewhere around 1975s, 1980s, the concept of digital camera got introduced. Kodak was the first player who got to know about digital cameras. But by then, they had already made a substantial infrastructure cost to develop the existing film-based cameras. So they decided, boss, we don't want to switch. We are Kodak, we are the market leader. However we do, that we only will operate. We don't want to switch to a new system. We will continue with our existing system. That was their strategy. They told, we will continue with the existing system itself. New players came, yes, Canon, Nikon, Sony, etc., etc. Kodak is now just a history, a name in the history. Yes or no, everyone? So, what is a strategic risk? It is a risk that a strategy that you implement, it is less effective. Is this clear, everyone? Okay, boss. It arises when a company's strategy becomes less effective, making it difficult to achieve its goal. My strategy itself is not good, so that is why I'm unable to achieve my goals, make profit. Is this clear, everyone? It can result from technological changes. Why my strategy is not good? Because technologically we are outdated, or new competitors have entered with better strategy, better pricing, or shifting in consumer customer preferences. Now customers preferences have changed, or cost pressures. Is this clear, everyone? Okay. One more example I'll give it to you guys for strategic risk. Imagine I've become a chartered accountant. Don't imagine, I've become a chartered accountant. I thought we will start an academy for teaching students for CA as well as CM. Different options could be there. Either I could have started with face-to-face classes, or I can start with online live recorded classes. Now tell me, at least at the final level, 70-80% students are opting for recorded classes only. Very few students are coming for face-to-face. Imagine I incurred substantial cost, build up a crazy infrastructure for face-to-face classes. Because my strategy was, boss, we are going to take face-to-face only. Online recorded is all nonsense. Students will not listen. They will put it at 2x. I tell. So I came up with face-to-face classes. Big infrastructure I had. No students only. Right? They wanted recorded. So your strategy of going ahead with face-to-face was less effective, not accepted by the customers. Is this clear, everyone? Okay. Example code. Next one is going to be compliance risk. Yes, tell me, one of the risk is your strategy is not good. Second risk is, okay, your strategy is good, but boss, you are not complying with rules and regulations. Imagine, yes, I became a CA. We started think with Tabish classes. Imagine we came up with online recorded classes itself. Strategy was good. We are having great number of students. But imagine the basic compliances we did not do. We had taken GST registration, but we were not paying GST. Assume. Don't tell sir is not paying GST. Assume story. Or we have incorporated as a company. Yes, yearly filings we have not done. ITR we have not filed. Yes, all those compliances which we had to do, we did not do. Tell me, yes, whether government will leave us, whether Nirmala Thai will leave us. No, boss. They will come with band baja bara. Yes, fine, penalty, interest, everything they will do. Yes, if they want, they will shut the organization also. That is another kind of risk. Even though your business is good, if you're not complying with rules and regulation, boss, they can come and shut down your business. Levy, yes, penalty, punishment, imprisonment, fine, interest, everything. Yes, for now, everyone. Yes, every business needs to comply with rules and regulation. Example, Companies Act, SEBI guidelines, etc. Yes, compliance risk arises when company is failing to comply with the laws. We are not complying with the laws. It may lead to penalties or imprisonment. Yes, there is no need to explain. Third one is operational risk. which is internal risk. What is this risk? Yes, it is a risk that we do not manage our operations properly. That is, there is no proper process, no proper people to take care of the operations. Sir, can you give a simple example? Yes, yes. Imagine we started with Think with Tabish classes. Strategy is very good. Students are liking the class. Appliances also we are doing. But I, as a faculty, I can only teach. There are some operational tasks which need to be done. Say, for example, dispatch of books. Whenever student is purchasing the class, the books have to be dispatched. Yes or no, everyone? One more example could be, say, technical support. They're installing the applications, they are unable to do that technical support. Imagine I don't have staff for that only. Or I have staff, they are not working properly. They are not trained at all. Tell me, yes, instead of AFM, they are sending FR books. Instead of AFM, they are sending CA intercosting books. They are sending CMA books. Will it make sense? No. Students are telling class is crazy, but was operations is not taken care of. We will purchase AFM books, they will be sending us some other subject books. Will they be happy? No, they will not be happy. Yes or no, everyone? So, what is operational risk? It is also called as internal risk. It is the risk that in the operations we are not doing properly. Yes, it is a risk of people and process. Either process is not right, process is right, but there are not right people to do the task. Yes or no, everyone? Look at this. It arises from internal failures of people or process in handling the day-to-day operations. For example, employee paying 1 lakh instead of 10,000 reflects both people and process failure. Simple. Yes. There was a bill of 10,000 rupees. We had to make a payment of 10,000 rupees. Instead of making payment of 10,000 on the check, the employee wrote 1 lakh. 1 lakh was debited. This is the example which institute has given. That is why I've kept it here. Okay. Yes. In today's day, these things will not happen maximum, but still they've given, we have kept it. Is this clear, everyone? Three risks we have understood. Simple. There is absolutely no need for me to even tell anything. But still, I'm trying to explain this. What all are the three risks, students? First one is strategic risk. Strategy is less effective. Next is compliance risk. You're not complying with rules, regulation. Is fine, penalty, imprisonment. All those things can happen. Third one is going to be operational risk. It is a risk of incorrect process or ineffective people as well as process problem. Yes or no, everyone? Final one is going to be financial risk. What is a financial risk? It is a risk, yes, wherein we are having a financial impact, money related impact. Yes, financial risk arises from unexpected changes in financial conditions. There is some unexpected changes in financial conditions which may bring us some financial losses. Sir, can you give an example? Very simple example. Imagine I have taken a loan at floating rate. 1 crore loan at floating rate. Sir, what is floating rate? IRRM chapter we have already told. Yes, interest rate keeps changing. Right now, the floating rate is 10 percentage. So on 1 crore, 10 percentage, 10 lakh every year I'm paying interest. Imagine tomorrow RBI increases the floating rate and makes it 12%. Tell me how much interest I should be paying. 1 crore into 12 percentage, 12 lakh interest I should be paying. I am paying more interest. It is a bigger burden for me. Yes or no, everyone? Financially, is it a loss for me? Yes. Can I measure it in terms of money? Yes, boss, I can measure it in terms of money. This is my financial risk. Financial risk means I can measure it in financial terms. I can measure it in terms of money. Strategic risk, I cannot measure it in terms of money. Yes, my strategy is bad. Because of that, how much is a loss? I don't get to know. I lose my market share. Otherwise, how much it would have been, now how much it is, I cannot do that calculation. But financial risk, I can compare it in terms of money. Yes or no? Yes. Originally, I had planned I will be paying 10 lakh interest, but now I'm paying 12 lakh interest, 2 lakh extra. Suppose change in the exchange rate. Imagine I've exported goods to a party in USA. 1 lakh dollar. When I exported, my exchange rate was $1 is equal to 90 rupees. So for every $1, I was receiving 90. That means for 1 lakh dollar, I will be receiving 90 lakh. Simple example. I hope basics of Forex at least you guys know. Now, after that, on the date of payment, $1 became 85. It means tell me how much only I'll be getting for every $1? 85. I thought I will be getting 90, but in real time getting 85 only. There is a loss of 5 rupee for $1. So total for 1 lakh dollar, it is going to be a loss of 5 lakh. Can I measure it in terms of rupees? Yes, boss. It is a financial risk. Is this clear, everyone? Now, in detail, financial risk we will be discussing in detail. Don't worry, that we'll discuss it subsequently. So point number 1 is over, which is the types of risk faced in an organization. Tell me, students, 4 different risks can be there. First one is a strategic risk. Your strategy is less effective. Second is compliance risk. You're not complying with rules and regulations. Third one is going to be internal risk or operational risk. You're not taking care of the operations, people, and process. Fourth one is going to be the financial risk. Is this clear, everyone? Yes, sir. Next question comes classification of financial risk. How do we classify financial risk? What all different types can be there? In financial risk also, they are telling multiple different types can be there. So let us try understanding the different types of financial risk, my dear students. Pay attention. Okay. Yes. Imagine. Yes, simple story I'm telling. Yes, we are a party from India. Yes, there is a party in US. Imagine we are manufacturing jackets. We have exported jackets to a party in US. Tell me what is the value of export? Dollar 1 lakh rupees. Is this clear, everyone? Payment we will be receiving in 3 months. Just using this example, we'll try understanding what all different financial risks can be there. Tell me, students, what all financial risk can be there? Yes. Customer came from USA. He told boss, I want this values. Yes. I exported the goods. He told I will be making payment after 3 months. What all risk can be there? Risk number one. He doesn't make payment only. Yes or no, everyone? Yes. Risk number one is going to be my counterparty risk. I sold goods to the party. He doesn't make payment only. Is it a risk? Yes, boss, it is a risk. So first one is going to be counterparty risk. It is a risk that my counterparty doesn't honor his obligation. After 3 months, he was supposed to pay me 1 lakh. He doesn't pay me. That is one risk. Yes or no? Or second risk is, okay, boss, he made the payment. Boss, today, on the day I made a sale, dollar one was equal to rupees 90. On the day I am receiving payment, dollar one is equal to 80 only. Yes or no, everyone? What is this? This is the exchange risk. That is, on the day of transaction, $1 was 90. So based on that, I should have received 90 lakh. But on the day he is making payment, $1 is equal to 85 only. So even though he is paying 1 lakh dollar, I am receiving 85 lakh only. Yes or no? There is a loss of 5 lakh. I can measure it in terms of money. But is it customer's problem? No, he is honoring his commitment. There is a change in the exchange rate. So it is called as my exchange risk. Is this clear, everyone? Or currency risk. There is adverse fluctuations in the exchange rate. Is this clear, everyone? Second risk is over. Then comes the third kind of risk. What is the third kind of risk? Yes. Imagine. Yes, that it is called the political risk or the currency risk. Sir, what is it, sir? Imagine on the day the party was supposed to make payment from USA. We have Shri Donald Trump. Yes, Donald Trump is telling you cannot be importing any goods from India. Even if you are importing goods from India, I will not allow you guys to make payment abroad. You cannot be making any payment with India, any transaction with India. The counterparty to whom I had exported goods, he was genuine. He wants to make payment, but right now he is unable to make payment. Why? Because there is a political disturbance. There is a change in the law which doesn't enable the transaction to occur or the payment to be received. Is this clear, everyone? This is called the political risk or the country risk. Because of that also I'll be incurring loss. Yes, everyone. It is the third one, which is going to be the political risk. Fourth one is going to be the interest rate risk. I've already explained. Imagine in order to export the goods, yes, I had to manufacture. I did not have cash. So what I did, I went to a local bank here. Imagine I borrowed 1 lakh rupees at floating rate. Yes, the day I borrowed my money, interest rate was 10%. So I was thinking 1 lakh into 10%, 10,000 interest I'll be paying. But on the day I am actually making payment, imagine my floating rate after a period, my interest rate increased and became 15%. So tell me how much interest I'll have to be paying? 15,000. Tell me, am I paying higher interest? Yes, boss. That means, yes, is it a financial loss? Yes, boss. So it is my interest rate risk. Is this clear, everyone? Four different types of losses can be there. Firstly, what is the first loss? Counterparty doesn't make payment only. Second one, counterparty wants to make payment, but the country is not allowing. Political government is not allowing. It is called the country risk or political risk. Third one, counterparty made the payment, but he was from other country. Exchange rate got changed. It is called the currency, yes, or the exchange risk. Yes or no, everyone. Fourth one is, okay, in order to sell the goods, yes, I had borrowed some money from the bank. I had taken it at floating rate. Now the interest rate is changing. Because of that, I'm incurring a loss. It is called my interest rate risk. Is this clear, everyone? Okay. Now, multiple things can be there. Yes, look at this quickly. I'll try explaining. Counterparty risk. It is a risk that my counterparty doesn't honor its obligation. What all can happen? In case of sale, I have sold goods. Imagine you are the customer. I sold goods to you. You did not make payment. Counterparty has defaulted. Or imagine I am the purchaser. You are the seller. I wanted to purchase. Imagine I wanted to purchase pen. You are manufacturing pen. I told I want to purchase 10,000 pen. You told I will give you in a week, but today give me advance. I made advance of 1 lakh rupees. You told after 1 week you come, I will give you.
After 1 week, you don't give me the goods sold. You block me. Possible? Quite possible. Yes or no, everyone? So in case of sale, I made a sale, counterparty did not make payment. In case of purchase, I paid in advance, counterparty doesn't give me the goods. All these are counterparty risk. Second one is going to be political risk. Yes, what is it? It is adverse action by government of host country which will bring a loss to the foreign investors. Generally, this one will come in case of a foreign company. Imagine we are Maja Flying Cars. We are incorporated in India. Okay. Now we were getting so many orders from customers in USA. So we thought, let us do one thing. Let us incorporate another branch of Maja Flying Cars in US. So we came up with Maja Flying Cars. Yes, LLC in US. Is this clear, everyone? Okay. We incorporated this. After that, we started selling goods. That time, government came up with the restrictions. Boss, if you are a foreign country, taxation rate, we are going to increase it to 70%. It is a risk for you. Or yes, USA government, Trump is telling, if you are a foreign company which is incorporated in US, then you cannot be, you make business, you earn profit, but you cannot repatriate your profit. You cannot send back your profit to India. Again, risk is there. Why on earth am I doing business there if I cannot send back the money here? Yes or no, everyone? All these are examples of political risk. Is this clear, everyone? Okay, fair. Political risk. Yes. Retrospective changes in tax. Suddenly, I opened my subsidiary there in USA. Suddenly, yes, government is telling retrospectively from back end, we are changing the taxation for the foreign companies. Political risk. Yes or no? Yes. Sir, will it happen, sir? It has happened. Sir, where, sir? In India. Sir, example, sir, Vodafone. If you guys remember, it's a big case study in direct taxation, but it was a foreign company. Yes, retrospectively, government changed the tax rates. All those big story, not getting into that. Yes or no? Or changes in the repatriation rules. Yes, they want to send back the money to India. They are not allowing. Or government is banning certain products or apps. Simple example. Yes, during COVID, yes, one of the biggest games was PUBG. Then there was TikTok. Yes, these are Chinese companies which had come to India. Yes, they had come to India telling, okay, boss, we will do crazy things here. Suddenly, government bans it. Tell me, they've put so much cost infrastructure. Is it good or bad? Is a different story altogether. They've put a lot of cost infrastructure, everything. Now, are they having the risk? Yes, boss. Are they incurring loss because of a action by the government? Yes, boss. It is called a political risk. Is this clear, everyone? Okay. Third one is going to be currency risk. I've already explained there is adverse movement in the exchange rate. Fourth one is interest rate risk. There is a change in the interest rate which is affecting the value of my assets and liabilities. Imagine I've invested. It is my asset. Yes, my floating rate reduces. I will be getting lower interest. Imagine I've borrowed. It is my liability. Floating rate has increased. I'll have to be paying a higher interest. Yes or no, everyone? Perfect. So quickly, let us have a look at this. Again, if it comes in the examination, means yes, very simple it is going to be. Classification of financial risk, counterparty risk. You guys read it once by yourselves. Political risk, interest rate risk, more than what is there itself, I've explained. Till here, whether things are clear? Perfect, everyone. Now we have the third point, which is evaluation of financial risk. Okay, boss, we are having financial risk. How do we evaluate financial risk? Evaluation of financial risk. It is telling how do we evaluate, how do I check financial risk? Financial risk is evaluated from the perspective of three people. First is from the perspective of stakeholders. What is financial risk for stakeholders? Second is from the perspective of the company itself. For the company, what is going to be financial risk? Third is from the perspective of government. From the government's perspective, what is going to be financial risk? So first, from stakeholders' perspective, company's perspective, government's perspective. From stakeholders' perspective, imagine for equity holders as well as lenders. For both it is same. Equity holders or lenders, both it is same. What is financial risk? Yes, high debt, which is also called as high gearing. Now imagine you're an investor at Maja Flying Cars. Okay, balance sheet of Maja Flying Cars look like this. There is equity share capital of 10 rupees. There is a debt of 90 rupees. That means 90% of the funds we have raised on debt. Yes, red flag number one. Red flag number two. Right now, after paying my interest, yes, the profit available, which is my yes EB interest earnings before interest and tax. No, EBT earnings before paying of taxation. It is just 1% of the revenue, very low. That means if my interest rate increases, boss, I will be going into loss.
Tell me, will you be interested in investing your hard-earned money, equity money, into such a company? No, boss. Why? There is a high financial risk there. Firstly, they've raised a high amount of debt. Because of that, fixed financial obligation is there. Point number one. Point number two, already their profit is very less. Anything adverse happens, next year sales reduces, cost increases, interest rate increases, boss, they will be in loss. Yes, things like this continue. If company goes for liquidation, first debt holders will come take away their money. We will not get anything in that. So what equity holders will tell, boss, this is not a good company. Yes or no? So for equity holders, what is financial risk? Any company which is having a higher proportion of debt, they will call it as a financial risk. They are telling, boss, it is risky for me to put my hard-earned money in such a company. Is this clear, everyone? Same is the story for lender. Imagine, yes, you are a lender. You are giving money, lending money. You are a bank. You want to lend money to me. My balance sheet looks like this. 10 rupees equity, 90 rupees debt. Already 90% debt is there. Will you be interested to give me more debt? No, boss, you will tell. Already there is a high gearing, high debt involved. Profit is very less. Anything happens, our money will be gone. We will not be paying. Yes or no, everyone? Yes, that is the point which is given here. Look at this. Stakeholders, for equity holders, high financial gearing, high debt increases risk because equity shareholders will be having the lowest priority in case of winding up. In case of lenders, for lenders also, high gearing raises the risk of default. Perfect. Tell me from company's point of view, what is financial risk? It is excessive borrowing or lending. Tell me, we are Maja Flying Cars. We have one of our customer who has purchased goods on credit. Till now, everything he has purchased on credit only. Normally, credit period is going to be of 90 days. He has asked for a credit period of 180 days. And in these 180 days, continuously he is purchasing. Suppose total 100 rupees of receivable is there. Accounts receivable, debtors. Yes or no? In that 95 rupees of accounts receivable is of this party alone. Tell me, there is a very high risk. If he doesn't pay, means what will company do? 95% of sale was for this person alone. Tell me, is there a high financial risk? Yes, boss, there is a high financial risk. Why? Because there is excessive borrowing by that one party. From our perspective, we have excessively lent money to the other party. Yes, lending and borrowing either can be in the literal terms, you are borrowing money, you are lending money, or you have sold goods on credit, you have purchased goods on credit. That will also mean financial risk. Look at this, everyone. From company's point of view, excessive borrowing or lending increases the financial risk. Is this clear, everyone? Excessively you borrowed from a party. That means you are now having a fear. How do you repay them? Yes, excessively you lent to a party, you're having a fear. What if he doesn't pay? That is from company's perspective. Is this clear? Now, from government's perspective, what is financial risk? Yes, from government's point of view, financial risk can be viewed as failure of any bank leading to spread of distrust among society at large. So, from government's point of view, what is financial risk? Failure of any bank is going to be financial risk. Tell me, how is a bank evaluating financial risk for government? What is a big loss? Imagine there is a bank. Simple example I'm giving. Yes, State Bank of India is there. Imagine, imaginary. SBI is there. You went to SBI. You put an FD of 10 lakh rupees. You could have put your hard-earned money anywhere else. You could have invested in equity, crypto, but you thought all of them are risky. Bank is riskless, risk-free. Even though you are getting 6-7% only, it is risk-free. So you opened an FD in SBI. Okay, you invested. It is your hard-earned 10 lakh rupees. You invested there. After 1 year, you got to know there is a big fraud in FDI. Because of that, all money was being taken away. Now, yes, the bank doesn't have even a single penny. Government is not also in a position to help it. So the bank is liquidating all the people who have invested their money. They are losing their money. In short, you are losing your money. What will happen to you? Yes, you will sit, you will cry, boss. You thought it is riskless, but still you are losing your money. Forget you. Yes, if this happens to any one bank, what will happen to people's psychology? They will lose trust from the banks. Yes or no, everyone? So in that case, what government has to do in order to maintain the trust people are having in the banks? Yes, government has to intervene. It has to interfere and ensure from the government money they paid so that people's trust is not broken. So what is government telling? What is the biggest loss for us? If any bank is committing a default, that is going to be the biggest loss for us. Yes or no, everyone? So from government's perspective, what is a financial loss? Government is telling, boss, all these banks are there, they should be making payment on time, or else people's trust will be broken. So in order to prevent that, we may have to be making payments. So that is going to be financial risk for the government. Is this clear, everyone? So this point question has not come yet, but you never know if in case a question comes for 4 marks. Yes, evaluate financial risk from the perspective of different stakeholders. You will first tell from stakeholders perspective, equity holders as well as lenders, then from company's point of view, then from government's point of view. Till here things are clear. Everyone give me a confirmation. Accordingly, we'll take our discussion forward, students. Yes, everyone, quickly let's have a look at the questions as well. Risk management first. Briefly explain compliance risk and operational risk. Types of risk faced by an organization. Compliance risk, we are not complying with rules and regulations. Operational risk. Yes, it is a risk in people as well as process. Same thing is given 1 lakh rupees, we are paying 10,000, all those things. Yes or no? Now, second question, this is a beautiful question. It had come in May 25 examination for 4 marks. Look at this. It is a practical application based question, students. Mr. PK imports raw material from China. He's importing raw material from China, processes them in India, okay, and manufactures finished goods which are then exported and sold in the American market. In this transaction, what all types of risk can be faced by Mr. PK? We just need to write any 4 random risk and accordingly leave it. Yes, what all risk can be there? Firstly, I can tell counterparty risk. Yes, I am importing. I made payment. He doesn't give me goods. Counterparty. I am exporting. I exported. He doesn't make payment. Counterparty risk. Point number one. Point number two. Foreign currency transaction is happening. That means currency risk could also be there. Yes or no, everyone? Perfect. Third point. Yes, foreign countries are involved. So I can bring in my country risk, political risk. Yes or no, everyone? Political. Yes, then randomly I will put randomly 1 or 2 more pointers I will try putting. Interest rate risk also I will put. Imagine I had borrowed money, yes, in order to fulfill the order. Yes, floating rate increase, that I can be putting. What more I can be putting? Compliance risk I can try writing. Yes, we are exporting some compliances we might have to be doing. If in case we don't do that, it could bring us risk as well. Yes or no, everyone? Operational, there is no need to put, I guess. Strategic also, it will not suit here. Then what else was there? Financial, we have put this 1, 2, 3, 4, 5 we have written. Look at this: currency risk, political risk, market risk, regulatory risk. Regulatory risk is basically the, yes, country specific risk. They have come up with change in the regulation. Market risk, demand for the finished products in the USA may fluctuate. Yes, this is one more thing which they have put. Boss, we have imported goods, but when you are exporting, there is no market at all. That could also be possible. Yes or no, everyone? Questions like these come randomly by our own. We can just write. When you're writing, try writing 1 extra point. If it is for 4 marks, write 5. So that even if 1 doesn't tally, you will be having other 4 pointers. Is this clear, everyone? Yes. This is all the questions that we had. Till now, evaluation of financial risk has not come yet. Is this clear, everyone? With this, the first bucket, basics, is over. What all we have studied? Firstly, types of risk. Then types of financial risk. Then we've seen evaluation of financial risk. Now, what we will be discussing is the second segment, which is the classification of financial risk. What is this, students? Understand, each of these risks we will be studying in more detail. Counterparty risk is there. Yes, counterparty risk itself we will study in more detail. Yes, how do we identify counterparty risk? How do we manage counterparty risk? Political risk, country risk is there. How do we identify? How do we manage? Interest rate risk, how do we identify? How do we manage? Currency risk, how do we identify? How do we manage? This way we are having the discussion. Trust me, yes, beautifully notes we have prepared. Even if you read it once by yourselves, it will be fine. And only one liner is there. Okay, but still, let us quickly read. Let us quickly try understanding. Pay attention. There is nothing much here. Firstly, counterparty risk. Tell me, students, what is counterparty risk? Risk that my counterparty fails to honor the obligation. You don't make payment. Okay, boss. Now, what all are there? Two things are there. Now, these things you will not be finding in the study material. It is not there in the study material. But in the past examinations, multiple times it has come. So that is why we've included this. Okay. So first one comes identification or assessment of risk. How do I identify counterparty risk? How do I get hint that counterparty risk can happen? Tell me, students, we will all be getting hints in life. Imagine you're facing a breakup. Imagine this is the day of breakup. It is not that this day suddenly a bomb will fall. Few days before itself, you'll slowly start getting some hint that okay, somewhere breakup is approaching. Yes or no, everyone? If you take action before itself, you are safe. Or else you'll face the breakup. You'll have to go through that entire stream of sitting, crying, all those things. Yes or no? Before itself, if you identify, if you rectify that, you never know, things could be better. Same thing is happening here. We are telling boss, risk is there. How do we identify it quickly? Point number one. Second is, once we have identified, how can we mitigate or manage the risk? How do we tackle it? Is this clear, everyone? Okay. First one comes, how do we identify counterparty risk? How do we identify counterparty risk, students? Couple of pointers question is telling. First one is failure to obtain the necessary resources to complete the transaction. Simple example I am giving. Imagine I am Maja Flying Cars. Okay. Yes, we are manufacturing flying cars. You are the customer. You came to me. You are telling, boss, after 1 week, I am getting married. Imagine. So I want flying car on the day of my marriage. I told boss, I will do it. Yes, 1 week you pay me the advance. I told you made payment of advance. Now, after 3 days, you are going. You go to the factory to see. Production of car has still not started. There is no raw material only with me. There is no employees also to work. Tell me, is it giving you a hint already? Yes, delivery will happen after 7 days. After seventh day, you will actually get to know will I deliver or not. But in the third day itself, you know that boss, resources to fulfill the transaction itself I am not having. I am not having raw material only. I am not having labor only. Tell me in 4 days what will he do? Yes or no? Are you getting a hint beforehand itself that this transaction will not get fulfilled? Yes, boss. This is the first hint. Failure to obtain necessary resources. We are not having resources only. How do we fulfill the honor? Is this clear, everyone? Second one comes regulatory restrictions from the government. What is the second point? Regulatory restrictions from the government. Okay, boss. You told after 1 week I want a flying car. I told okay, I will give you a flying car after 1 week. I started the work also. In the third day, government comes up with a rule. All flying cars are banned in India because of its adverse impact on the environment. Assume. Tell me, I want to fulfill my contract. I want to honor. Was government regulation has come, because of that I cannot do anything. Tell me, the moment the regulation comes itself, you will get to know, boss, even if this party wants to honor its contract, he is not in a position to do that. Yes or no, everyone? It is going to be the second way to identify. Third way to identify, it is hostile action by a foreign government. What is it, students? Hostile action by a foreign government. Third example, imagine you are getting married after a week. You wanted a flying car. You come to me, you approach me. I told, okay, boss, I will give you a flying car in 1 week. Imagine for a situation, you are a party from USA. You are residing in USA. Coming and telling, Tabish, I want a flying car in a week. I told, okay, boss, I will give you a flying car in a week. In USA, I will deliver. Okay, I manufacture flying car. I want to give you delivery. Suddenly, Trump comes up with a notification. All imports from India, we are banning. Yes, you cannot be importing anything from India. Tell me, I want to fulfill, but tell me, am I in a position to fulfill? No, boss. That is the third way for us to identify that, boss, counterparty will default. It is not that he wants to, but he is not having any option. Is this clear, everyone? Okay. Fourth one is let down by a third party, where the counterparty is being let down by a third party. Simple. You told after 1 week you are getting married, you want a flying car. I told, okay, I will. I placed order for tires with MRF. MRF people told that in 2 days they will give me the tires. I waited 2 days, I did not get tires. I waited 3 days, I did not get tires. I waited 5 days, I did not get tires. Yes, suddenly we got a news that yes, MRF has become insolvent. Imagine. That means tell me, I want to fulfill, but boss, I am being let down by a third party. For me, there is a third party, MRF, who is supposed to give me the raw material. He doesn't give me. How can I fulfill the contract? Yes or no, everyone? Which is the fourth way. Yes, fifth one is interparty has become insolvent. I am the counterparty, Maja Flying Cars. I myself became insolvent. I filed for bankruptcy. Tell me after that, will I be honoring the contract? No. These are different ways to identify counterparty risk. Yes or no, everyone? Now, if you'll have to just remember, this may be important for us. Yes, how do we identify counterparty risk? Yes. So, counterparty related 3 pointers we had. Government related 2 points we had. Yes or no, everyone? Perfect. Tell me, counterparty related, what all points we had? First one is failure to obtain necessary resources. Yes, I want you guys to do it. Yes, I'm not having resources only. How do I do this? Yes, let down by third party. My third party let me down. Yes, or counterparty became insolvent. Yes or no, everyone? And government related two things are there.
Firstly, change is being brought by my local government, regulatory change by the local government, or hostile action by the foreign government. Yes or no, everyone? It's regulatory change by the local government, hostile action by foreign government. Regulatory change by local government or hostile action by the foreign government. Yes or no, everyone? This is how we identify. Then comes how do we manage counterparty risk? How do we manage counterparty risk? First one is carry out due diligence before taking out the transaction. Imagine you want to purchase flying cars. Sorry. Yes. Before you place the order, carry out due diligence. See, in the past, how many times I have already, yes, delivered goods within 1 week. How many I have honored, how many I have cancelled. The moment you do it, you will get to know, boss, will I be getting my order or not? So carry out due diligence. Sorry. Randomly do not enter into a transaction with the counterparty. Is this clear, everyone? Carry out due diligence. So, second point is do not overcommit to a single entity. Yes, imagine I am selling goods, you are buying goods. Yes, I made extra sale. Yes, 90% of my sale I made to you, I made it on credit. Tell me if I'm having maximum exposure from one party, if he defaults means, boss, there is going to be high risk only. Obviously, do not overcommit, do not oversell on credit, or do not make an over advance payment. Sorry, suddenly what happened? Just a minute, students. Is this clear, everyone? Do not overcommit to a single entity. Yes or no? Do not oversell on credit to a single entity. Obviously, you will be under risk. Know your exposure limit. Suppose I am making a credit sale. I should know what is the maximum exposure risk I can take. Know that there is a risk that the party will not make payment. How much maximum risk I can take, that much only credit sale I will be paying. Okay, third point. Review your credit limits regularly. Okay, boss. Right now, whether the credit sale that I can be making, yes. Can I give more credit sale or less credit sale? Right now, yes, what is it? Periodically, I'll have to keep reviewing my credit limits, how much credit I can be giving, how much credit sale I can be doing. That limit every time you keep reviewing. Okay, fine. Fifth one, rapid action in case of default. If there is a default, take quick action. Do not wait. Take quick action to recover your money. Is this clear, everyone? This is how do we mitigate. Simple. What all we'll have to be doing before paying? First, do due diligence. Before, yes, making taking having any transaction with the counterparty. Yes. Next is know your credit limits and review your credit limits. Yes or no, everyone? Yes, these three things are going to be important. Do not overcome it. Firstly, what is it? Yes, do due diligence. Do not overcome it. Next, if in case you have given credit, know your exposure limit, review the credit limits regularly. If in case of default, take rapid action. Is this clear, everyone? Before entering transaction, yes, what is it? Do due diligence. Yes, and what was the second point? Do not overcome. Yes, once you have entered into a transaction, yes, know the exposure limits as well as yes, review the credit limits regularly. Yes, in case of default, take rapid action. Is this clear, everyone? Okay. Then comes a political risk, which is also called as country risk. Now, in this, let us quickly have a look at the question as well. Counterparty risk. Yes. How can a company identify and manage counterparty risk effectively? MTP. Past examination. Which type of risk covers the default by counterparty? Counterparty risk. List the ways to manage this type of risk. Is this clear, everyone? We will have to be writing down these things. Okay, fine, great, boss. Now coming back again, we are now having political risk or country risk. Tell me, students, what is political or country risk? It is a hostile action by a government of host country, especially for a foreign investor. Imagine we are Maja Flying Cars. Yes, we are from India. We opened a branch in USA. Suddenly they come up with a hostile action. They do something which will increase our risk. How do we identify accordingly? How do we manage? Quickly, let us try understanding. First, how do we identify? Yes, first, insistence on use of resident investors or local labor. Imagine we are Maja Flying Cars from India. We were doing good in India. Suddenly, we got so many customers from USA, so we thought we will open a branch in US. The moment we opened a branch in USA, we are about to start our work. Yes, the government, the rules and regulations are telling, boss, 90% of workforce should be from USA only. Yes, you cannot directly open a entity in USA. You want a resident investor, a person who is an investor, who is a resident from USA. That is already giving a indication that, boss, this country is trying to control you and your business operations. Yes or no, everyone? Perfect. So what is the first point? Insistence on the use of resident investors or local labor.
Second is restrictions on currency conversion. Yes, you want to convert your currency, they are putting restrictions. Yes, in a day, this much only you can convert all those things. Yes, you want to convert the currency either from dollar to rupees or from rupees to dollar. There are restrictions. You cannot freely do it. That again is giving you an indication that boss, government is bad here. Yes, at the earliest, escape from here. Yes or no? Yes. Third thing is going to be restriction on repatriation. You made business, you earned profit, you want to repatriate the profit back to India. They're telling you cannot repatriate the profit. Or every year 10% only you can repatriate. That is again giving you an indication that boss, there is a high level of political risk. Yes or no, everyone? Okay, look at this third one, restriction on repatriation. Next one is excessive government control over the prices. Government is excessively trying to control your prices. Say you are selling a flying car. Government is telling selling price of a flying car cannot exceed $50,000. It cannot be less than $45,000 also. Imagine. Or government is telling every flying car should be sold at $50,000 only. So I do not have the autonomy at all. Excessive control they are putting. Yes, in case of essential items, they will be putting prescribing pricing, it is fine. But in every item, they are trying to poke their nose. That is again giving you a indication that boss, politically, country-wise, it is bad. Yes or no, everyone? Okay. So what all different ways are there? Firstly, if they are continuously asking for resident investor or local labor. Secondly, yes, currency related. Currency conversion problem is there, repatriation problem is there. And then there is, if there is excessive control on the prices. Is this clear, everyone? Now, how do we assess if there is a high level of political risk, country risk or not? Political risk, country risk, both are used simultaneously, different names. Anything can come in the examination. Okay. Now, how do we assess? How do we check? This is identification. How do we assess? Organization can assess. Imagine we are an entity. Boss, we have established ourselves in USA. How do I understand? How do I assess, boss, if the political risk is high or low? How do I identify that? Boss, different ways are there. Look at this. Refer political rankings published by reputed business magazines. Reputed business magazines will be there. They will be ranking the countries based on their political stability. Yes, the support for the businesses, etc., etc. Ease of doing business rankings, etc., etc. Rankings will be there. Refer to that rankings, you will get an idea. If the ranking is low, you will get an idea that boss, government is not very good there. Is this clear, everyone? Yes, having a good government is very important, especially when you're investing abroad. Okay, yes, I don't want to tell much things. Okay, yes, discussion will go away from the topic, so that is why I'm restricting myself. Refer to political rank. Point number one, evaluate countries macroeconomic conditions. Yes, see how is countries macroeconomic conditions, economy as a whole, how is it performing. Yes, if economy as a whole is performing good or if it is performing bad, that will also give you an idea of how the country is doing. Simple example, imagine throughout the world economy is doing good. Yes, every country is growing at 7% every year. Just USA alone is growing at 2%. Multiple factors could be there, but that somewhere gives you an indication that boss, there is some problem with the government. They're doing some restrictions. They're not allowing trade to happen freely. Yes or no? That could be one way to assess country risk. Is this clear, everyone? Okay. Now, multiple reasons could be there why growth is different, but still I've just given you guys a hint on how do we assess. Okay, fine, boss. Next is analyze the stability and popularity of the current government. We will see how stable is the government. Always when investors are coming, now you would have heard, at least you would have heard, okay, yes, foreign investors are removing so much money from India. All those news you would have heard, especially if you are linked to stock market, you're investing or you're at least hearing news. Why? Because they feel at some point in time, if they feel that the government is going to be stable, they're not going to come up with random changes with respect to tax compliance, etc. They will be putting their money if they feel they will get a good return. If they feel, the foreign investors, they are pumping in a lot of money. If they feel that government is nonsense, randomly any morning they will come, they will change the regulations. They are not supporting us at all, even though we are putting so much money, we are investing so much money. They will not be interested. Yes or no, everyone? So first thing that people will see before they invest in a foreign country is they should be having a stable, popular government. So they will see how stable is the government and how popular. Are they popular? Are they having a good sentiments? Whether people, public is having a good sentiment towards them or a negative sentiment towards them. Is this clear, everyone? Yes. Next is seek advice from the home country's embassies. We will be having embassies. From them, we can seek advice. Imagine we are a company from India. We want to invest set up a branch in USA. We can go to the Indian embassy in USA. There is an Indian embassy. There we'll go and ask, okay, boss, how is the situation here? How are Indians being treated here? If Indians start a business entity there, how is it? Are they supportive? Will they be opposing? If in case of conflict, will they help us out? What is their mindset towards us? All those things we can identify. Yes or no, everyone? These are the pointers. Yes, obviously, dead theory it is 2, 3, 4 times we'll have to read and reasonably remember it. That's all we can be doing. Is this clear, everyone? Okay, fine, boss. Then comes the last thing. How do we manage or mitigate the risk? Boss, we are having country risk. How do we manage or mitigate the risk? Simple techniques are there. First one is local sourcing of raw materials and labor. Government is telling, boss, do not try importing much. We want you guys to be doing everything in US only. Okay, listen to them. Try bringing raw materials from US only. Don't try importing much. What if they impose restrictions? Okay, try using the local labor only so that there is no problem. Yes, do not try opposing the government. Yes or no? That's a simple thing. They're telling, yes, give opportunities for local people as well as local labor. You do that. Yes, locally get your raw material, use local labor. Okay, that is one way to manage your risk. Okay. Second way is enter into joint venture. They are having a problem because of foreign companies coming. You do one thing, you enter into a joint venture with a company of that country only, so that now you are no longer a foreign country, you are a joint venture. Simple example, yes, when Suzuki had entered India in 1980s, yes, either they wanted, they could have established a separate foreign company, but what they did, they chose to enter into a joint venture with Maruti. So that is how Maruti and Suzuki came. Yes or no, everyone? Yes, it was one way for them to manage the risk. Yes or no? They wanted to invest in India. They had a fear, boss, if government does something. So what they did, they took help of a local party as well. So they entered into a joint venture, Maruti Suzuki. Yes or no, everyone? Third one is local financing. Whatever money also you want, that money also raise it locally only, instead of raising it from your country and converting, you're having repatriation issues. Raise here only, distribute here only, so there is no problem. Fourth one is prior negotiations. You would have all heard these things. Yes. Tesla is coming to India. Elon Musk had a negotiation with, yes, Narendra Modi ji. Elon Musk had a negotiation with this chap, this state chief minister, all those things. What they are doing, they know in future government will create a problem. So before itself, they are negotiating, discussing, finalizing. Only after that they're investing. They're telling, boss, we are investing lump sum money, huge amount. So we cannot be at the mercy of the government. They want, they'll change the regulations, do anything. Before itself, we will negotiate. If they're okay, only then we'll invest. Is this clear, everyone? This is how we can manage. Tell me, students, what all things are there? Yes, two things is regarding, yes, two, three things is being going local. Firstly, go for local raw material as well as labor, local sourcing of raw material and labor. Second one is local financing. Third one is get a local party, that is enter into a joint venture. Yes, fourth one is have a prior negotiation. Yes or no, everyone? Yes, so we can be remembering it this way. Go local, 3 points, and then prior negotiation. Yes, local raw material as well as labor. Then we have local financing. Yes, then we have enter into JV, which is basically have a local partner. Yes or no, everyone? And then, yes, prior negotiation. Is this clear, everyone? Yes, the reason I'm telling is because these questions are coming in the examination. See the students. Identify the various actions by government by which risk can be identified. How do we assess based on the action of the government? Yes, everyone. Yes, look at this, everyone. Yes, this point we will be writing. Yes, how do we identify and how do we assess the risk? Yes, look at this. How do we identify? How do we assess? Both things will be coming together. Even if you remember 2, 3 points also, it is going to be sufficient. This one is regarding risk mitigation. Do we have a question on risk mitigation? No, this is currency risk. Okay, fine. This which is going to be the next point. Is this clear, everyone? Just 1, 2 times we'll have to be reading. That's all. Reasonably, we'll remember. We'll go and write in the examination. That's all. Is this clear, everyone? Okay, this point is also done. Done. Now we have the last thing, which is going to be currency risk, my dear students. Now, how do we identify currency risk? Simple. Yes, currency risk means there is adverse movement in the currency. How do we identify that? Imagine we are Maja flying cars. We are in India only. There is a party from USA. Imagine you are from USA.
You had ordered for a flying car. We told, boss, we will export. So today we exported the car. Payment, you told, after 3 months you'll be making the payment. I told, great. So I am having a risk, currency risk, exchange rate fluctuation risk. Okay. How do I identify? Was today my dollar one is equal to 90 rupees. After 3 months, how much will be the dollar? If dollar goes up, great. If dollar comes down, that is a problem. How do I identify if there is a risk in this or not? What all things can be there? Yes, government action. Suppose USA government takes a crazy action. They tell boss, we are not going to export anything at all. Any country wants to import goods, yes, export goods from us, we will be charging additional duty of 100%, all those nonsense that the government is doing right there. Okay, if they do that, we get to know that boss, the currency is going to fluctuate based on this decision. Either demand will increase or decrease. Both ways there is a risk for us. Yes or no, everyone? Okay. Or there is a change in government. Imagine tomorrow morning we had exported to US. Tomorrow morning there is a change in government only. Imagine something happened to Trump. Trump is not there. A new president gets elected there. There is a change in government altogether. Their policies will be different. Based on that, the exchange rate will change. So this is one more way for us to identify that, boss, there is going to be currency risk. Yes or no? Simple practical things. Boss, is currency risk, it is related with two countries. So whatever, yes, action government is taking, or if there is a change in the government, yes, my exchange rate will be changing. Okay, fine. Next comes nominal interest rate as well as inflation rate. Yes, so nominal interest rate as well as inflation rate. Sir, how will these affect? There is a chapter called Forex. There we have two theories, interest rate parity theory as well as purchasing power parity theory. Tell me, interest rate parity theory is based on the interest rate, nominal interest rate. Purchasing power parity theory is based on inflation rate. There we have discussed in detail, spent hours on how my interest rate is going to affect the currencies. Yes or no, everyone? Perfect. So these are going to affect my currencies. Then, yes, natural calamities or war. Say, for example, there is a war in USA. What will happen if there is a war in USA? Trade will reduce, demand for the currency will reduce. That means the currency will depreciate. Yes or no, everyone? If there is a war, it is an indication that, boss, there is a risk in the currency. Or there is a natural calamity. Imagine there was a flood throughout in US. Because of that, there was a big disaster, big loss. That means manufacturing will not happen, consumption will be halted, exports will be halted. Because of that, currency will be taking a hit. Yes or no, everyone? Yes, all these are different ways for us to identify currency risk. Is this clear, everyone? This has come multiple times in the examination, so it becomes very important that we repeat multiple times and remember this. Sir, how do we remember this? There is a simple shortcut for this. Look at this, students. How do we identify currency risk? Three things we should be seeing. What all three things? First is interest rate we'll be seeing. Because of interest rate, we'll get to know if my exchange rate, currency, is going to fluctuate or not. Second, we will see for calamities. Is there any calamities? Thirdly, we will see for government. Based on these three, we will get. Firstly, interest rate. Tell me what all we are having with respect to interest rate. Firstly, we have interest rate. Tell me, completely linked to interest rate. It was the inflation rate, purchasing power parity. Yes or no, everyone? Inflation rate. Yes. Next comes calamity. What all calamities can be there? Either there is a natural calamity, or we have a man-made calamity. What is man-made calamity? War. Yes or no, everyone? Yes. Then we are having government. What is there with respect to government? Yes. Adverse action by government. Yes. Change in government. Either government is taking an action or there is a change in the government. Yes or no, everyone? Action by government, or there is a change in the government. Is this clear, everyone? Perfect. 6 pointers we have. Now, how do we manage currency risk? Was one entire chapter Forex we've studied there. We told we are having currency risk. How do we manage currency risk? We've studied there. Forward, you can be going for. Future, you can be going for. Yes. Options, you can be going for. Yes or no, everyone? Money market cover, you can be going for. You can be going for home currency invoicing. In the home currency only, you can invoice. So many things are there. I need not even tell anything. Look at this. It's forward. Yes. Future, you can write. Currency options, you can be writing. Make invoice in your home currency only, money market hedging. You can write futures also. Is this clear, everyone? Perfect. So quickly let us have a look at a question. It's multiple times it has come in the examination. Parameters to identify currency risk, currency risk, currency risk, currency risk.
RTP, MTP, MTP. Look at this. Government action, nominal interest rate, all these 6 pointers are there. How do we hedge that? That also we have given. Is this clear, everyone? Perfect. Now, there is question 5A. It had come in the past exam for 4 marks. Look at this. List out 4 methods for identification and management of financial risk. What are the parameters to identify currency risk? Simple, boss. They are asking us what all different types of financial risk is there. Yes, this is a question which had come in the examination, poorly framed question. List out the 4 methods for identifying financial risk and management. They are asking different types of financial risk. Tell me, students, what all is there? Counterparty, political, interest rate, currency risk. First, we'll write down the names. Then, how do we identify currency risk? How to identify currency risk? 6 pointers are there. Interest related 2 points. Nominal interest rate, inflation rate. Next, calamity, natural calamity, man-made calamity, which is war, etc. Then we are having government. Yes, government action or there is a change in government. Yes or no, everyone? Perfect. This is also done, my dear students. With this, the second segment is also done. Okay. Now, small pointers are there. Yes, read it 1-2 times reasonably. Whatever we can remember, it is going to be sufficient. Not a big deal. Yes, if we repeat 1-2-3 times, 3 to 4 points easily will be remembering. That is sufficient. Is this clear, everyone? Now we are left with the last point, which is going to be war, which is value at risk. Yes, everyone, we are left with one final concept in this chapter, which is war, which is value at risk. Now, we are having practical concept calculation also based on war, that in the practical portions we have already covered. Now, coming to the theoretical discussion, sometimes a theory question will also be coming with respect to war. So, quickly let us try explaining and understanding war. What is war? Value at risk. Yes, war is trying to tell us one very simple thing. It is telling, boss, you are investing for the sake of earning profit. So your goal is to earn profit. But boss, is there a risk? Yes, boss, there is a risk. What is the risk? Risk is that I am not making profit, or the risk is that I will be incurring a loss. Yes or no? So you're investing, you're hopeful about the profit. But boss, you should be prepared for the loss as well. Yes or no? War is a measure which was introduced by JP Morgan Chase in order to measure the maximum loss. That is a small history. So what is war trying to tell? War is telling what is the maximum loss in the normal market conditions. Tell me, there can be some extreme conditions that you are ignoring. In the normal market conditions, what can be the maximum loss? That is what war is trying to tell us. We will give you one similar parallel from the real world. Imagine you are having a train to catch. Okay, today evening you are having a train or a flight or a bus to catch. So you immediately urgently book a cab. You sit in the cab. There is a lot of traffic. Perfect. Crazy. You are having a fear, boss, will I reach the railway station on time or not? What if the train goes and I don't reach? So you ask the driver, boss, maximum how much time it will take to reach the railway station? Forget maps. Maps is showing some time. Maximum, tell me, you have been in this area for a good amount of time. Maximum how much time it will take? He's saying, boss, in normal conditions, maximum time taken to reach the railway station is 1 hour. Maximum 1 hour will be taken. In 1 hour, we should be reaching. In normal conditions, what is normal conditions, sir? Sometimes there could be exceptions. Imagine there is a big destruction of road in between. There was a bridge midway, the bridge got destroyed. Nothing can be done. This was one of extreme situation. Imagine suddenly there was a big accident because of which the entire road got blocked. That is an extreme situation. But in normal situation, day to day, every day, what is happening is traffic will be slightly more or slightly less. Maximum time taken to reach the railway station is 1 hour. Is this clear, everyone? In normal situation, we are ignoring that exception. In the normal situation, maximum time taken is 1. Is this clear, everyone? Same thing we are telling here. In the normal market conditions, how much is the maximum loss that can happen? That is what war is trying to calculate. Is this clear, everyone? Imagine we are Maja Bank. Yes, bank will be having a separate trading division, which will be trading actively with respect to stocks. Perfect. They are having a trading portfolio of 100 crore. That is, bank has given them 100 crore, invest in stocks, earn returns and give it. Is this clear, everyone? Okay. Tell me, students, 100 crore portfolio is there. We have invested in stocks. We are asking the investment manager, boss, yes, what is the loss? Suppose we ask him how much is a war. He tells 1 day war at 99% confidence is 2 crore rupees. What is the interpretation? Let us try understanding, students. Imagine we have a bank which is having a trading portfolio of 100 crore, 100 crore they're investing in the market. We ask, what is the 1 day war? Yes, the manager tells 1 day war is 2 crore rupees at 99 percentage confidence. That means in the 99 percentage of the cases, the maximum loss, what is this? The maximum loss in 1 day is equal to 2 crore. We are not telling how much loss will happen. We are telling maximum how much loss can happen. Maximum 2 crore loss can happen in 1 day. In how much percentage cases? 99 percentage cases. We know in war we'll be using standard normal distribution table. Yes, throughout in your from your foundation days you have learned this standard normal distribution table. Yes, 99 percentage cases. That is here a small percentage we are removing. Generally, war is calculated either for 95 percentage confidence or 99 percentage confidence. 95 percentage confidence means 95 percentage of the times this is the maximum. 99 percentage confidence means 99 percentage of the times this is the maximum. Okay. Yes. Normal situation, extreme small situation we are ignoring. Is this clear, everyone? Yes. You will be knowing standard normal distribution table. Yes. Bell shaped curve. Yes. If I am taking 99 percentage means this is a 99 percentage. So we are telling in 99 percentage of the case, my maximum loss is going to be, yes, 1 crore or 2 crore, whatever is the number. Is this clear, everyone? Now let us try seeing, yes, what is the meaning of war? War is a measure of investment risk. We are investing to earn profit, but boss, can there be a loss? Yes. How much loss can be there? Yes. It estimates the maximum possible loss for a given period. Yes, under normal market conditions. What is it telling? How much can be the maximum loss for a given period in 1 day under the normal market conditions? Is this clear, everyone? It answers two key questions. What is the worst case scenario? How much will be the loss in the worst case scenario? Yes, we are telling I want 99 percentage confidence, 99 percentage of the times. Yes, what is the worst case scenario? What worst can happen? In that case, what is the loss? That is my war. Is this clear, everyone? Okay. Two things are there. First is applications of war. Next is going to be features of war. Firstly, applications of war. Yes, where all we can apply, use war. Tell me, students. Yes, in case of investment, in order to understand how much can be the maximum loss, I can be using war. I can use war to understand how much will be the maximum loss. Simple. Yes, it will help us to measure the maximum possible loss on a portfolio. Imagine I am having a portfolio of 1 crore. I calculate my war. Suppose my war comes to 1 lakh. So I will get to know, boss, maximum loss is going to be 1 lakh. Yes or no? Okay, fine. Next, it can be used as a benchmark for performance measurement of trading operations. There is a bank, Maja Bank. There is a trading division. They are trading actively in securities. Okay, perfect. Imagine we had given them 100 crore rupees to invest in the market. They invested 100 crore. In 1 year, they made a profit of 50 lakh rupees. Is this clear, everyone? Okay. Now, have they done a good performance or not? We want to measure the performance. One of the ways to measure the performance is calculate the return on the investment. Suppose 100 crore we've invested, in that 50 lakh only you've got. You see how much percentage return you've got. Based on that, you take a decision. But here, boss, you're only seeing the return perspective. You're not comparing the risk perspective. When you bring war, you will get the risk as well. Simple. Imagine we are telling in Maja Bank trading division, in 1 year they earned a profit of 50 lakh rupees. Calculate what is the 1 day war or a 7 day war. War can be calculated for different periods: 1 day, 5 days, 7 day, 30 day. Imagine the 7 day war is 2 crore rupees. Tell me, students, what is it telling? It is telling in one full year I earned a profit of 50 lakh. But boss, if in case a negative situation happens across the next 7 days, how much I can lose? 2 crores I can lose. Tell me, is it a good performance or a bad performance? Very pathetic performance. Yes or no? Throughout in 1 year, I just earned 50 lakh. But boss, if 7 days are bad for me, 2 crore I can lose. So my profit anyways will be wiped out. Additional 1.5 crore loss also will be incurring. Is it a good performance? No, it is a pathetic performance. Yes or no? So war will help us to measure the performance also. Okay, third, it helps in fixing risk limit for dealers in the treasury front office. In the bank, there is a trading division. Okay, boss, they are trading actively, they are taking positions. Yes, once we calculate war, suppose I am telling maximum loss for me should not exceed 2 crore. We will calculate, we will ensure the war reaches a level which is 2 crore, and accordingly we'll trade. That is, we are telling our traders, boss,
You do any transaction, you earn profit, great. Even if you're incurring loss, now your loss should not exceed 2 crore. So that way we will calculate war, we will set the war. Accordingly only we will be giving them fund for trading. Is this clear, everyone? Okay, fine. It assists the management in deciding the trading strategies. Even when we are setting the trading strategies also, we will keep war on the back of the mind. Yes, in trading strategies, one end we are seeing at profit, but boss at the other end, we will also have to see how much maximum loss can happen. Accordingly only, we will be coming up with the trading strategy. And finally, it acts as a tool for asset liability management, especially in case of banks. You guys can just read it once. Each of these points I can explain for hours together, but trust me, it is not needed. Is this clear, everyone? Applications, where all we are applying war. Mainly, we will be applying using war in banking and investment related companies. Is this clear, everyone? Why we are using war? Firstly, to understand maximum how much loss can be there. Secondly, to measure the performance, whether the performance is good or not. Thirdly, yes, to set risk limit. Beyond this, you should not be incurring loss. To set the risk limit, we can be using, as well as to set the trading strategies. What is going to be the strategy? We are not just going to see the positive side, we will also see the negative side and accordingly come up with a good strategy. Is this clear, everyone? Perfect. Then we are having features of war. Chumma time pass it is there, but questions are coming from this. Yes, firstly, they are telling what all components are used in calculation of war. That they are telling it as one feature. It is not a feature. Okay. Yes, but still they are telling what all we are using to calculate war. Three things we'll be using. First is time period. I've told, yes, war is generally calculated for 1 day, 5 days, 7 days, 30 days. So yes, what all will be using when calculating war, what all components will be there, time will be there. Second, confidence level will be there. Generally we'll be doing it either for 95% confidence or 99% confidence. Third one is going to be loss. So war ultimately tells me how much loss I will be making. Loss will generally be told either in percentage terms or in terms of amount. Is this clear, everyone? This is the components for calculating war. Next is statistical method. We are using, yes, standard deviation as well as standard normal distribution table. Yes, all those things we are using. So it is going to be a statistical method to calculate loss. It is not just randomly you're telling, tomorrow 1 crore loss will be there. It is a statistical method to calculate. Is this clear, everyone? Time horizon, it is calculated for a specific time horizon. We are using the concept of probability and it is a risk control tool. All these are just one-time readers. Is this clear, everyone? Yes, on this questions have come in the exam as well. Firstly, areas where concept of war can be applied, applications of war, multiple times it has come in the exam for 4 marks. Okay, we will first write meaning of war. Yes, it is a maximum loss that can happen in the normal market conditions. Yes, then we will write 3 to 4 applications of it. Then define value at risk as well as its features. This has also come in the examination. So look at this, everyone. It's perfect. So with this, the chapter risk management is done. I have not prepared the chart for this chapter because yes, all these pointers by default are very small. So I cannot save anything further by doing charts. So quickly let us have a look at these points. Risk management. It is telling organization will be facing risk. We should first identify the risk and manage the risk. First, basics. In that, the first question is different types of risk. First one we are having is a strategic risk. It is a risk that our strategy is less effective. Next is a compliance risk. It is a risk that we do not comply with rules and regulations, because of which we'll have to pay a heavy penalty, fine, imprisonment. Next is operational risk. Our operations are not in line. That is, the people process is not fine. And then comes a financial risk. Yes, risk because of which there is a financial impact. Tell me what all different types of financial risk can be there. Yes, boss. Imagine the simple example. You have exported goods to USA. You are yet to receive the payment. Counterparty risk, he doesn't make the payment. Second, currency risk, exchange rate is changing. Was you had borrowed, interest rate risk, yes or no? Fourth one is political country risk. They do not allow payment, yes or no? Everyone, okay. Then comes evaluation of financial risk from different people's perspective. From stakeholders' perspective, for equity holders, high debt means high financial risk. For lenders also, high debt means high financial risk. Then from company's point of view, what is company feeling? Company is feeling if I have excessively lent to one party or excessively borrowed from one party, that is going to be a high financial risk. From government's perspective, what is government telling? Boss, if any bank commits a fraud, it defaults in making payment, it will be a risk for us because government will then have to step in and ensure that investors' interests are protected. Yes or no, everyone? Perfect. Then comes classification of financial risk. This, yes, first one comes counterparty risk. How do we identify counterparty risk? How do we mitigate counterparty risk? Yes, to identify counterparty risk, altogether 5 pointers were there. We told, let us remember it this way. Yes, counterparty related 3 points, government related 2 points. Counterparty related. failure to obtain necessary resources by the counterparty. Counterparty is not having resources only to fulfill the transaction. He will not fulfill. Or let down by third party. Counterparty is third party. For him, a supplier, he did not give the goods. So obviously, counterparty can't do anything. Third one is counterparty has become insolvent. He has become insolvent. Obviously, he will not be honoring his contract. Then comes government related. Counterparty wants to fulfill. But boss, there is restriction by the local government, or there is a hostile action taken by the foreign government. Is this clear, everyone? Okay. Now, how do we manage this? Do due diligence. Do not overcommit to a single party. Know the exposure limits. Review the credit limit regularly, as well as in case of any adverse situations, take a rapid action. Is this clear, everyone? Okay. Then comes political risk, also called as country risk. First comes how do we identify and assess. Identification separate they've given, assessment separate they've given. Whatever question asked, we will write both of them. Now, how do we identify? Boss, foreign country government, they are continuously asking for local labor or local employees. This also we have told, yes or no, everyone? Yes, local, where is it? Okay, fine. Continuously asking for local investors or local labor. Yes, there is restrictions with respect to currency conversion. I cannot repatriate the profit back into India, and there is excessive government control over the prices. This is how we will identify. Now, how do we assess this? Check for political rankings. Yes, see the macroeconomic conditions, see the popularity of the government, as well as take help of the home country embassies. Is this clear, everyone? Now, once we've identified, how do we mitigate this? In order to mitigate this, listen to the government. They are telling, boss, take local raw material, local labor. Listen to that. Go for local raw material, local labor. Finance also, they are telling, go local only. Okay, local financing will be going for. Yes. Don't start by yourself. Enter into a joint venture, get a local investor also. Yes. Go local, 3 pointers. Local raw material, labor, local financing, enter into joint venture, which is local investor also you get. And then have a prior negotiation so that there is no disconnect. Is this clear, everyone? Okay. Then comes currency risk, which is adverse movement in the currency. How do we identify? This becomes very important. Multiple times it is tested in the examination. I have told currency risk means three things are there. One is interest rate, it is interest rate as well as inflation rate. Second is a calamity, either natural calamity or man-made calamity, which is war, etc. Next is government. Action is being taken by the government, or there is a change in the government. Is this clear, everyone? How do we mitigate? Forward, future, option, swap, yes, money market hedging, all those things we can be writing. Then comes war, value at risk. Meaning, what is war telling? It is telling what is the maximum loss which can happen in a period in the normal market conditions. Okay. Now, applications, where all we can be using war. Firstly, to measure the maximum loss which can happen in the portfolio. Based on that, it will help us to measure the performance, whether the performance is good or not. We can keep a risk limit. Beyond this, your loss should not go, to decide the trading strategies. 3 or 4 pointers we can be remembering. Next comes features of war. Yes, firstly, we'll tell what all components are there for calculation of war. Then we'll tell it is a statistical method. Statistics related to three things we can write. Firstly, we can tell it is a statistical method. Then we'll tell we will be using probability in this. Then we'll tell we will use normal curve also in this. Chuma we can write. Yes or no, everyone? Yes, time horizon we are taking, it is used for risk. Is this clear, everyone? Quickly, we've understood this. With this major 4 chapters for theory, we have completed, my dear students. 90% of the time, yes, 16 marks will be from these 4 chapters. If not 16, at least 12 marks will definitely be there. Good amount of time we have spent, more time than what generally anyone will be spending, because I know how important these concepts are from the examination perspective. I have not just read things, each and every point I've explained at every possible situation. We've ensured that we retain, we repeat, we give crazy mnemonic shortcuts to remember. And I hope you guys have thoroughly enjoyed this as well. We will be uploading this on YouTube as well, so that subsequently you can keep referring to it. People who are watching it on YouTube, if it has benefited you, means chumma you're coming, watching and going. No use. Please do like, share it, subscribe to the channel, and if it has added value, means please do put your valuable comments. It really means a lot. So that's all for this session. See you guys some other day for some other session. If you guys want me to upload videos on other topics as well, please do inform me. We will do it accordingly. That's all for today. See you guys some other day for some other session. Until then, keep studying, keep smiling, keep working hard, keep making your parents proud, and see you in the next session. Take care. Bye.